It's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday, hump day to you both.
Hello.
And the pumpkin theme, Halloween theme continues.
I have a lot of Halloween clothes. I'm going to wear them all this week.
I was going to say, do you have a full week's worth of...
I do. Even more astounding is I think I probably have a month's worth of Christmas sweaters.
Oh.
Do you have any ugly ones, though? Like, do you do the ugly Christmas sweater?
I mean, I still think that they're still serving at least something. Still
Yeah.
cute.
Serving.
Yes.
It's giving.
It is giving.
It's giving.
It is giving thanks. Like, let's not gloss over Thanksgiving.
You got that one. It's giving.
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 Because some people, after Friday, they go into full Christmas mode.
Yeah, I never understood that.
Like, I
What do you mean?
love Thanksgiving.
You go straight to, like, Santa, and you got the reindeer on the front lawn.
I give it a good week in advance,
Yeah.
you know.
If it's gonna be warm this weekend, I mean, why not? Like,
Yeah.
And then before the time change, then we're all screwed because we don't know what time it is.
Yeah, my wife and I were talking about that last night. I mean, because you mentioned it was going to be a really cold winter, which they say all the time. And last winter, I don't know if you remember, at least here in Chicago, we really had no snow, maybe like 2 days of
Sure.
snow. But it was bitter cold. I mean, it's always
Sure.
freaking cold here.
It's Chicago, Illinois.
Yeah. No, I get it. And you always get the, now with the daylight savings time coming soon, you'll get, real dark in the morning.
Oh yeah, we won't see the sun ever again.
Yeah. It's a hard time.
But do you go full Christmas mode, Nikki? Like, are you?
Yeah, you got your own. This is your first Christmas apartment stuff. Do you want some of my old Christmas stuff?
Why are boomers
No.
always trying to give away crap that
Yeah.
no one wants?
Old Christmas stuff, old Halloween stuff, old furniture is a good one
No,
too.
I don't want any of that. I don't.
Sure.
No.
You don't want like a gently used, half broken Santa leg? Or
Yeah,
something
no,
like that?
definitely not.
No?
I don't need any of that.
A Rudolph that won't quite inflate
It's just like,
his performance anxiety. Yeah, you need Cialis.
Yeah.
sure, come on.
Yeah, I don't know if I. Should I put a wreath like on
is
my
it
front
too
door?
soon?
Yeah, you
Or, like,
gotta do that. I mean,
Are you gonna do like a couple's Christmaka card?
Ooh.
No.
Why not?
No. That's not happening.
Why?
I have nobody to send it to,
Yes, you,
You
do.
poor bastard.
Yeah. Like,
You don't know your friends' addresses?
I mean,
Oh, come on. All your friends, most of them have kids now.
yeah.
And have,
Do like the J.C. Penney one, like where you
See,
get like.
I think
yeah.
that's so fun.
Yeah.
Yeah, and you guys can wear sweaters.
Okay.
If you want me to
yeah.
book it,
Why don't,
and
why
book
don't-
it up.
why don't you do a Halloween one? Like, dress up early, take a picture of that, and then just send it out in a blast email to all your friends or something like that.
Yeah, we could do it. I could do that for like the cherry bomb or something.
Yeah,
Send it out to all my
exactly.
friends.
Or at least, like, if you're not gonna send it out, at least make it Instagram official. Like,
Yeah.
put it on.
Yeah.
I don't really do.
Socials.
I'm not a big Instagram guy.
You have 10,000 followers on Twitter, man.
That's
Over
Twitter.
10,000.
Yeah. I don't really do the Instagram thing though.
Okay. I know.
He follows the Bill Caddy deny with pictures.
Yes. Yeah. I don't want the proof.
Yeah.
I didn't get that gene. He got that gene.
Yeah.
It usually skips a generation. He's got it.
Well, I don't know what's going on, but are Chicago sports good? Like Blackhawk, Connor Bedard had a hat trick.
Hat trick last night?
They won. They're winning. The Bulls are winning.
I know.
What's happening?
I know. Last night, so I get the updates on my phone about the Blackhawks.
Yeah, it was like 7-0 or 7-1 or something.
Crazy,
I don't know.
crazy. I don't know. It's looking good.
I haven't watched
Bedard,
any.
baby Bedard.
It's a long season.
Yeah.
Yeah, it's a long season. It's a long season. Jackrabbit starts a bad fuel economy.
Yeah.
So we'll see how it goes.
But I'm excited to see, where everything goes.
Who the Bears play this weekend? I can look. I should have asked.
God.
You knew.
I'm a little behind,
Okay, you're allowed. Well, you're working now. You're not used to it.
Bengals.
Yes.
Nice.
Yes.
Nice.
Bears minus 2.5. It's kind of scary.
Should be a close game.
Yeah.
Yeah.
See what happens.
That's not good. The Bengals are Not good.
Not good.
Not good.
Not good. Well, it's
We
in
need that
Cincinnati,
win.
so basically the Bears.
We need that win after losing
Yeah, we do.
the Ravens.
We do. We
Yeah.
can't.
Should not lost.
We can't be like last year where we were just 4-2 and then just kept losing.
Can't do that. Can't do that.
It's not going to be like
And the bad juju is back. There's all sorts of stuff about Caleb and Ben Johnson.
Oh no, the girls are fighting.
I mean, I think we all know the problem child of the two, but yeah, it doesn't.
Can't say it out loud.
Yeah,
Who?
Caleb,
I don't know.
very clearly a little bit of a prima donna, but
Most quarterbacks are.
yeah.
Most quarterbacks are. I mean, our quarterback was a prima donna, Hudson there. I'm just kidding.
Oh, way back when.
Way
Yeah.
back when.
He
I was
wasn't.
like, who?
No, he wasn't from I'm
No,
talking
he's
back
one of my buddies that from growing up. We're talking
Oh, so you're
Winnetka
shaming a
football.
child.
Yeah.
You're shaming a child. Got it.
Mm-hmm.
Got it. What'd you get up to last night, Nikki?
Nothing.
All right.
Hung out.
Just
yeah.
hung out?
Yeah.
No, it was not. Is pickleball tonight? No pickleball?
No, I played yesterday.
Okay.
Yeah.
How'd that
You did
go?
play pickleball yesterday, so you did do something. I was wondering if
Yes.
because you said your back's been hurting you.
We have to air all the dirty laundry.
Yeah,
Yeah, the back's been a little sore. A
Yeah.
little sore.
from carrying me
Yeah. I mean,
on the show.
this whole place.
Right,
on
oh,
my
the whole
back.
place, the whole place.
Yeah.
I'm sorry, I didn't mean to downplay it.
But yeah, played some pickleball yesterday. Didn't today or yesterday.
Sweet.
There you go.
Yeah.
That does suck when like something's going on. Like
Yeah,
it
you
throws
get a
your
little-
whole life out of whack. Like I'm sorry that you're going through
thank you.
through that pain. It does. It sucks. Like anyone who deals with pain
Yeah.
knows.
Yeah.
it's not-
Vinny's dealing with pain right now. It's 7:15. He needs to get up to get to a hockey practice. So
What's
They do
the
morning
over-under?
practice before the. Oof.
he has late start for school every Wednesday.
Because of the practice?
No, they just it's like school wide. They don't start until like 9:30 or something.
We will never
What?
keep up with China.
Yeah.
Late
I
start?
think I don't know if it's school wide or it's just the sophomores or something, and maybe each class has a different day or something. But every Wednesday he starts at 9:30, so they have
Wow.
practice in the morning. It's a tough one.
Man.
Huh.
Yeah, it's a tough one. That's a tough.
What's the over-under on him getting out the door and having all of his stuff for practice?
Oh no!
It's good?
Yeah, mom will make sure of that and stuff like that. He's getting him out of bed one time is the problem. He's got. You used to like to sleep. I like to sleep too. So
They've done a bunch of studies that it's just like it's such an anathema to have teenagers get up at the hour that they do. Like it's not optimal for the way that children's brains are still growing to have them start school so
it's
early.
not optimal for them to stay up until 1 o'clock in the morning playing video games either.
Those are also facts. Those are also facts.
I was waiting for the back in my day. We had to get up 2 hours early to walk to work to
Oh yeah, 10
Well,
miles
back in
uphill.
10
Each
miles
way.
uphill in the snow.
Each way.
Back in
yeah.
my day, my mom was already at work. I had to wake myself
Yeah.
up. Yes, you are 100%
That's right.
correct,
Yeah.
son. At 15 years old, you
I
kidding
did
me?
have to wake myself up because my parents were at work
Yeah,
because my dad was
too.
commuted to Michigan for
Yeah.
a little bit for work,
Yeah,
and my mom
yeah.
was at work, and I did have to wake myself up.
Yeah. Bill's good character. I haven't.
Yeah.
What
Right.
did you get up to last night? How's the flipper, by the way? Is it?
know what? It's
Are you
feeling-
doing physical therapy? You should do physical therapy. Don't look at me like that, but you should do physical therapy.
Yeah. Kind of in that age bracket, you know. You don't want to,
Anyone with an injury where you're not using a
Yeah,
whole
yeah.
side of your body for
What
a
do you mean?
while.
you know, you gotta be careful, you know. That breaks and then someone else breaks and then
I get-
all of a sudden you're a vegetable.
I'm not going to hop any more fences. I'm going to be all right, okay?
Hey,
It was a
guess
weak
who
moment.
learned a lesson?
It was a weak moment,
No, I'm just
okay?
saying, you know.
Guess who learned a lesson? No, but you should go to physical therapy though.
Yeah, I can't do it.
No, grip strength is like a super strong predictor of mortality, and like you should be able to, get your grip
The
strength
grip
back.
is fine. It's the bending. It's like a
there's exercises that you could do.
yeah.
that could help.
I'm working through it. I'm working.
No, you're not.
Yeah.
How? You
no,
gonna
I
rub
am. I
some
mean
dirt
it.
on it?
No, I really am. I'm working through it. Feels good. Feels good. Feels
All right.
good.
What'd you do last night, Ben?
Little tough. Again, another hockey practice. Just yeah. He got the pucks this week.
I don't know what that means.
That means he has to carry the pucks to and from practice.
Oh,
Oh, is that because he was the
Well, they
large-
usually
I like
they
that.
usually rotate
Oh,
like,
okay.
they'll rotate, but if somebody was in the penalty box or if somebody does something stupid during the game,
I like that.
they get
So it took them 2 weeks to do something stupid.
No, it's been 8 weeks or so of games. Well, 8 games or
Yeah. I don't hate that. Yeah,
He
make
got-
them
he got a-
accountable.
He got
Yeah.
an offsides. He was jawing with the other player and was standing basically offsides. So it cost us, getting the puck in the zone kind of thing.
Does he have what it like? Can
No.
his play back up his mouth? Like,
Yeah, because there's no consequences. I mean,
okay.
You just get the smelly glove rubbed in your face.
Oh.
yes, yeah.
don't-
Well, if you throw a punch, we had a kid who did that. It's a 3-game suspension. So the
Whoa.
consequences are big. So
Yeah.
the kids don't do it. I mean, they push and shove, and like they said, you get a glove in the face kind of thing.
Sure.
It's really funny the way they draw the line because these kids really do, push and shove themselves really good. And they'll get like a 2 and 10 or a 5-minute major. 2 and 10 means the player that had the infraction has to be in the box for 10 minutes.
Oh.
And then until there's a stop in the play. So you can lose a whole period of
Sure.
not playing. So they frown upon it. They stop it. But there's a lot of pushing and shoving going on. I don't know, just because these punches with a glove on is not really,
On skates.
On
Yeah.
skates is not really the most damaging
Yeah.
thing. I think the cross checking is probably more
Yeah.
damaging.
Oh, yeah.
But anyway, so he was in. So he's not very happy. He's not very happy.
how much do pucks weigh?
Well,
They're heavy.
Yeah, they're
Pucks are
heavy.
heavy.
Yeah,
Yeah.
he
That's
probably
what I-
has about 25 or 30 of them. You know what I mean?
Okay.
So it's just the stigma
bulky.
of
Yeah,
carrying.
being the
Yeah,
guy
sure.
carrying.
Everybody,
you're-
every club knows.
Sure, you're the puck
that,
bitch.
Yeah, exactly. Exactly. That's
Yeah.
exactly right. That's exactly
Yeah.
right. So that's what he has. Plus, you're carrying your jersey, the bag.
Yeah. Builds character, all right?
Does build character.
Yeah.
Does build character.
I mean, it sounds like have you seen how much crap the women we have to carry into this office? Like, it just seems like a regular.
You guys
day.
are preparing for a hockey game. Yeah, there's no doubt about
It's
it.
like, I have so much stuff, and
all women are
Right, that's
guilty
what I'm
of that.
saying, is like-
yeah, you got the largest bag.
Yes.
And then you ask, do you have an aspirin? You don't have one.
I have drugs in there. I have tons of stuff. My bag's like Mary Poppins. I have so much stuff in there. So
I'm sure you do. You're prepared. But normally, like I've asked Beth, you got any aspirin? No, sorry.
we have it in the kitchen. Our kitchen is well stocked.
yeah, we
I
got-
know,
we
but I'm
got-
lazy. Who wants
We got
to
good
buy?
drugs in there. Well, I get good drugs. Anyway, well, that's fine.
What about you? What did you do last night besides coordinate your outfit?
I know, right? I went to the gym last night, so it was upper body. And there's one guy at the gym, like he's
Are you doing a
massive.
CrossFit type thing? What do you do?
No, I just do strength training. I do strength training. I do upper, I do lower, and then I do a day that's like mixed and whatever. But then anyway, there's this guy. He's really this massive guy, and he doesn't say anything to anyone ever. But sometimes I get him to like kind of like chuckle at me because I'm just like ridiculous. But he had like a Teamsters shirt on one day. Like obviously, you don't want to mess with a
Right,
Teamster.
right.
But then yesterday, he had on a shirt, and the back of it said, "I identify as a threat. My pronouns are try and me." I was like, who's gonna mess with this guy?
That's funny.
But sometimes like if I like, cause he'll do the plate loaded bench press, like 4 plates each side, and he only stops here because there's not enough space to put
Sure.
more plates or whatever. But sometimes when I'm using it, I'll say to him, I was like, "You want me to take those 10s off of there?" And he'll sort of smile a little, and then he's just like, "Get out of here."
Go away, Nat.
He's like, "Get out of here, kid."
The Teamster / union peeps, they're no joke.
Yeah, no,
They're
I'm
no joke.
Right, yeah.
They protested outside of our my condo because we hired
oh yeah,
for a non-union workforce for our balconies.
Uh-oh.
And they gave us the big rat.
big rat.
Yeah,
I love
we
that.
had the big rat for
So
like
you have one of those outside your.
not now, but we did for like 2 weeks.
Oh, got it.
And they were out there with their
Yeah.
signs and stuff.
Yeah, I don't,
Yeah.
don't,
Yeah.
don't,
Yeah, pretty
don't mess
wild.
with the Teamsters,
Yeah.
man.
Yeah.
Hey, we got a great show for you today. We identify as a financial show.
As tasty.
It's tasty. We got a great show for you today on this wonderful Wednesday. Hope you get through the hump day, the middle of this week. A lot going on today at the top of the 8 o'clock hour. We have an options jive. The risks of buying leveraged ETFs. It seems like we are in an arms race as more firms are trying to have 3x and 5x ETFs. But with all the fun comes a lot of risk. So we're going to get into that at 8 o'clock. Then at 8:40, it is Wednesday. It's Assume the Position Wednesday. So we got What's Your Assumption? It's where the bats get trade ideas from viewers, and they have an underlying, but they also have a directional bias. Always fun because people have different stuff on their radar. So we're going to do viewer-submitted trades at 8:40. And then 9 o'clock, Jacob in the house, skinny on options math. 0 DTEs in the denominator. What?
Who? Well, we'll find out.
It's a good one. It's a good one.
Is that like the octagon, the denominator?
Kind of.
There you go.
Okay.
There you go.
There you go.
It goes to what we covered yesterday with the 0-day stuff on gamma and theta and like how those numbers kind of skew everything in your portfolio. So we kind of it was a great idea when I spoke with him about it, but it's basically as if you took the denominator out of the trade. So like all these numbers are really, really big because the denominator of time is kind of gone.
Okay.
Yes,
It'll be
it's a
good.
little bit of a continuation on what we did yesterday.
Yes. It'll be way above both of our heads.
Sure,
We'll be
sure.
answering emails
Same.
and laughing at the chat that the comments that come through, but it should be good.
Then we have live from the trade desk. We got Quentin and Ryan coming in. Quentin going to give his overview of the top trending tickers over at tastytrade, and Ryan going to give a little insight into Tasty Crypto on what is happening as we get through the final days of October. And of course, Liz and Jenny, 10 a.m., are going to be live from the floor of the SIBO. So tune in to catch the ladies live. They did a last call last night. So you're getting a little bit more Liz and Jenny on the network. Can't be mad at that, but it's always electric when the ladies are live. Also, programming note, Jamal and Mike Butler are going to be live from the SIBO starting Thursday, November 6th. So check that out.
My
And
work life really went up.
Will be posting today. It was so cute. They did an unboxing video. So the SIBO I posted it yesterday. The SIBO sent them their jackets, and so they got to unbox them. It was actually kind of a cool moment.
Yeah, my work wife really moving up in this world. You know?
Matt, do you remember when you got your first
out here
jacket?
grinding.
You are grinding.
He's going to the SIBO. Got a jacket now.
Going places.
They're not worthy. I texted them, both of them, that they're not worthy to wear the jacket.
Yeah.
You have to earn your jacket. You have to buy it with a seat lease. You can't be given it like they do. But
blood,
they're very
the sweat,
good-looking
and the
jackets.
tears.
I'm not gonna lie.
Yeah, those
Do you remember getting your first jacket though?
Do I remember getting my first jacket? Well, I mean, as a runner, you get a jacket too. It was actually the color of your.
Oh, it was orange?
Orange, yeah.
Oh,
it was
okay.
a horrible color for my complexion. And then when I became a market maker, well, I was orange too for a while, and then dark blue and light blue, which was much better for Kessler Asher Group.
That's cool.
What I was part of. Yeah, no, oh my God. When the day you get your badge, you go from, Johnny status, we kid you about the Johnny show and stuff that you used to do, and New Trader, you're a Johnny and stuff like that. But the day you get your badge, everything gets bigger on you. Even the crappy...
Whoa, hey. Hey.
Immediately, if not
it
sooner. Even
classy.
the crappy car you drive sounds better, 'cause
Yeah.
it's still the same stuff. But when the day you get your badge, it's just like when you get your trading account. The day you make your first trade, it's special.
That's cool.
Special. Yeah,
That's
very,
cool.
very cool.
Well, I love that we are doing more stuff with the SIBO, so thanking them for a wonderful partnership. But hey, in the meantime, and in between time, you guys want your daily dose? I got a crap ton of news today.
Cool.
Give me my theme music.
Our leading story, breaking news,
Breaking
across the wire. Our leading story, top story, jump in.
In today's headline,
This just in.
Breaking news.
All right, everybody. Today's a wonderful Wednesday. It is October the 29th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Are there any earnings today?
Oh my God! Today's the day you've been waiting for. I'll name just a couple of the top few, but you got Microsoft, Starbucks. That's not a top one, but Google, Meta, CMG, Master. There's a today.
Carvana, now, Melly, Starbucks,
Yeah,
eBay.
just check your positions. Make sure
Yeah.
it's not happening.
You've got them all. Yesterday, you had a lot of the fringe-ish players,
Sure.
but still big ones. We had BE yesterday, which I know you'll talk about. With
I didn't have no.
Boeing, Caterpillar,
Yeah.
EMPH. But this into tomorrow. This is
Super Bowl.
Super
And you got Fed meeting.
Put up my first headline. The Fed has rate cut plans and a bunch of other things on its plate this week. Obviously, the markets are assigning a nearly 100% probability that the Fed is going to approve a second consecutive quarter percentage point at the meeting this week. Let's talk bonds, because those are going to be in focus. 10-year Treasury yields below 4%.
Just under 119. They've been holding steady at the high end of their range here. It's all but a foregone conclusion that it's going to be a quarter percent. I guess it's going to be how they read into the language moving forward.
What's the expected move for the markets today?
Good question, because volatility has been expanding. I got a lot of emails about that yesterday. Volatility expanding, market going higher.
Right.
Do you think this is because I've always talked about how
Volatility expanding to VIX at 16.5.
Ooh,
Under
out,
16.5 still.
Look out, everybody.
Yes.
right, and you have to take that with the grain of salt. Like, how low can it go? But yesterday was a decent, strong day all day long, and volatility bid up all day long at market highs. You might say that that's kind of a bell time moment, but I said, you got Powell speaking, and you got every earnings that's going to move this market.
Sure.
Yeah.
Volatility couldn't go. You wouldn't think it would have gone much lower.
No.
If you could have bet unchanged to higher, I think you would have, versus unchanged to lower with all these events going on. The real question will be after these earnings come out, and a lot of them come out after the market closes today, so I would expect volatility to stay bid again today. It's only down about 8 cents. We'll see what it does for the day. The real question is, if you see volatility collapse huge today, then you've got a moonshot to 7,000.
We're 7,000 easily.
Hey, just real fast, because I got a ton of stuff I got to crank through. Japan's stock market hit a record high amid mixed trading in the region. Let's talk about the yen and some currencies real fast, because we got our Fed stuff today. The rest of the world looks to our data, even though our data is kind of incomplete because our government is shut down. But what are we doing in other currencies? In the yen, the euro, the pound?
I have positions on, I'm short the euro. Like, I'm long dollar across the board. I'm long the dollar against the Canadian dollar. I'm long.
It's been working. Euro's lower.
Yeah, the euro.
A little lower.
Yes. But, I mean.
Pound's actually down pretty good the last.
That's the biggest mover. I just got short the euro pound trade yesterday. Glenn mentioned that as kind of one that is at a. Those are two really highly correlated currencies, and it's at kind of an extreme there. So, using the tastyfx products for those. So, and that has gotten even more extreme than the extreme yesterday. So, an even better price if you are looking for something different.
A hedge fund called Holdco has emerged from relative obscurity to launch activist investor campaigns against 3 regional banks, Comerica, Eastern Bank, and First Interstate. The founders say that they are millennial upstarts that are bringing activism back to a sector. I love how these guys think they look so hard in this photo, but I'm like, this looks like an ad for H&R Block's tax services. They're like,
If you didn't file it on time.
Right.
This
I
is
was
what they
like,
send
I know
you.
they think they look so gangster in this photo, but I was like, they're just cutie patooties. But I did want to talk about regional bank index, because it did send the market skittering dramatically lower with that one news story, but then it came back. So, KRE, real fast.
Yeah, KRE was in the spotlight a couple of years ago. We haven't traded too much. It has an IV rank of 8, trading around, $61 would be a 10-cent uptick. Not too much to do in there, in my opinion, unless you have a directional bias. Markets are less than favorable. I mean, this is a $60 stock with dollar-wide markets.
Yeah.
No bueno.
The U.S. government announced a pact to build at least $80 billion worth of nuclear reactors in an agreement to meet the growing power demands caused by AI. That sent shares of CCJ up 23% yesterday. Kimco Corporation, I don't know if you've heard of it. if it
Yes.
has options. And
It does.
What your thoughts are.
Yeah, I trade it sort of frequently. I have an upside ratio spread here into that move. I'm like right at the
Yeah, CCG looks like it's
CCJ.
Sorry, CCJ. It looks like it's down about $1.50 or so, but it's been on a tear. I mean,
Yes.
yesterday, the day before was under $90, $86, trade up to 110. So a little pullback here to 105. I don't really consider.
I also stepped in front of BE, which is another one in the energy sector that had an earnings.
Yeah, I don't have the
trade, which
B
is
stories.
typically a bullish type trade. It just is going too far. It's 113 to 130.
Yeah.
This will be a new high.
It's a good spot, but volatility is going to expand, so it's not going to.
Right.
Because these stocks, or maybe it doesn't expand. It's good. It'll be interesting to see on the open.
It'll be interesting to see on the opening. 145% implied volatility in November, which you're short.
And if that comes into like 100, then this could be a really good
And your
spot.
December hangs in there at like 120 or something like that. It only goes down 10 vol points. It could be an interesting trade. On the opening, BE markets are going to be extremely wide.
They're going to be junk.
So I almost feel like if you have a BE position, that if you want to price it and put in at your price, go for it. But if you're going to look at the screen prices, you're not going to get great fills.
You don't put it. Do you have working orders in before the market opens?
No, I mean sometimes I'll in like a defined risk trade, like if I have an iron condor or a white iron condor on or something like that, I'll put something in. But before that, no. And on an earnings trade, never.
Yeah.
No. Or I shouldn't say that. I'll put something in if I think it's going to trade at $8 credit. I might put it in at $2 credit, just to or $12 credit, just to have it all queued up for the show.
Oh, and then you could,
So I could just cancel and replace
at a
it.
silly price.
At a silly price. Yeah. I would just cancel and replace it. If I was sitting at home, I wouldn't do it.
Yeah, but you're never trying to price something to get filled on the open.
No.
I agree.
Circle Internet Group announced the launch of a public testnet for something called ARC, which is an open layer 1 blockchain network designed to meet the needs of developers and companies bringing more economic activity on chain. The launch arrives with a broad-based engagement and collaboration from more than 100 companies across the financial and economic system. CRCL, we haven't talked about Circle in a while. So
Yeah, a hard to borrow stock. So, be careful with some of the pricing in here too. It's a decent rate, like an 8% borrow rate. It's not the 80% that you'll see, but calls and puts won't trade completely at parity. So you have to be calls and puts won't trade at put call parity, I should say. So be careful. Their earnings are November 12th. November markets are wide in there too, so you're probably going to use something with defined risk. This Circle has not kind of participated with the rest, so maybe there's something there. 35 IV rank.
Okay.
Yeah. Place your bets.
Circle.
Yeah.
It looks like it's unchanged, up tiny this morning.
Anything else happening in the Bitcoin world? I know Ryan will be on later to talk
He
about
will.
that.
A little bit softer. A little bit softer now. A little bit under.
Yeah, it sold off into the close yesterday. It sold off like $2,000 into the close, which was a little funky, and it was quick. It was quick too. 'Cause it usually is. It's one of the, specifically on the weekends, I key in on it more because it kind of gives you an idea of like the risk sentiment into the next week. But
You mean if it's weak over the weekend, it's people trying to take risk off kind of thing? If
Yeah.
it's bullish, if it's moving higher, it's kind of people are happy and with owning the risky.
So it's a little bit of a weird move into today because of FOMC and like all the big earnings and stuff like that. You see people kind of taking risk off. You're like, why?
Why?
Because all those things are bullish. Going straight to 7,000.
Of course.
Hey, real fast, Visa beat on quarterly street estimates and strong transaction volumes, and that could be an upbeat read on consumer spending habits. Global payments volume rose 9%, and Visa expects low double-digit growth in fiscal year 26 net revenue. I just wanted to sort of put this in because I didn't really think of Visa as a bellwether for the economy as a whole, but it makes sense. Because everyone has a Visa in their wallet.
Sure, in their entourage.
Yeah.
Visa actually down $2, $3, maybe, well inside the expected move. But MasterCard has earnings, so usually they run MasterCard basically unchanged this morning. Visa basically unchanged from yesterday, so maybe premium selling something in MasterCard today. IV rank at 30.
It's never one of the top earnings trades on my board.
Yeah.
Visa doesn't have the implied volatility there. 30 handle. It's just not, not as interesting. But nothing moves, so whatever you did.
For my next trick, I have never done anything like this before. In fact, I'm going to just get prepared here. I'm going to take some water.
Oh, wow. Okay.
I'm going to stretch. Gonna get into it because there was so much GD news yesterday about Nvidia. I am not joking when I say I have the most insane amount of stories about Nvidia today, but I'm going to go through them all. We're going to start at the top, and that is Nvidia is now close to $5 trillion market cap. The stock itself was up 5% yesterday, and it is on the verge of becoming the first company worth $5 trillion. Let that sink in.
I think it is this morning.
Okay.
207 is the mark.
So I'm going to see how fast I can do this. Let's go through all of these real fast, John, if you're willing to play. First, Nvidia announced they're going to build AI supercomputers for the U.S. Energy Department. They want to get back to China. I also announced that there's other partnership deals with the Department of Energy that sent AMD stock up yesterday. So yesterday, Nvidia announced they're part of now the government portfolio. Let's go to the next one here, John. Nvidia is taking $1 billion stake in Nokia. That sent Nokia shares up to a 10-year high, and the shares were up 22%. I didn't even know the Finnish company still traded, but Nvidia is
$30 billion company.
Yeah,
I had no clue.
I had no idea. So, okay, Nokia and Nvidia, they're gonna issue more than Nokia will issue more than 166 million new shares, and they will use the proceeds to fund their plans for AI and other general corporate purposes. Go to the next one. Nvidia teaming up with Palantir to go after corporate logistics businesses. What are we doing? I'm so tired. I'm not even done. What's Palantir doing?
Up about $1.
Okay.
At highs.
Okay.
Yeah, at highs, which it had not lagged. I mean,
it's been choppy.
Been choppy. It was choppy leading into this, as was Nvidia. Choppy to a little bit lower into this, $180. Now it's $207.
What's the IV?
in a couple in a week or so. Palantir's is 32 and Gesundheit, and Nvidia's around 22. Nvidia's earnings November 19th.
Ooh, what about Palantir's earnings?
Palantir.
Do they have them?
PLTR.
November 3rd.
Oh, okay. So coming up next week then.
Yep.
And then also, Nvidia announced they're partnering with Eli Lilly to build a supercomputer and an AI factory for drug discovery and development. The supercomputer will power the AI factory, a specialized computing infrastructure that will develop, train, and deploy AI models for drug discovery. Nvidia is also trying to work with other companies in the pharmaceutical space. But look, I was like, AI gets stuff wrong. Like, what if it prints like a wrong molecule in your drug or something, and then every time you sneeze, you have an orgasm? I'm just saying, like, what are we doing?
Is that better than the other way around?
I mean,
if you have an orgasm, then you sneeze.
What if you're at dinner with your parents?
What if you do it at the same time?
Yeah.
What are you doing in Lilly? LLY.
Yeah, always one of the leaders, and by leaders I mean like on my high option volume list. Oh, and I don't know how it makes the high option volume list because markets in there are quite wide. I mean, like $1.50, $2 wide. It is a $800 stock. I wish it would split and become an $80 or $160 stock or something like that. Make it a lot more tradable. It's always one of the ones that have one of the biggest moves. It's got an almost $50 expected move for the next 2 days, but it does have earnings coming October 30th, which is tomorrow morning.
Oh, so
Lilly, I would put off the radar if I was you. But Lilly's trading up $5.
And then Nvidia says they are partnering with Uber to develop a network of self-driving cars. The duo will build out 100,000 vehicles beginning in 2027 using Nvidia's Drive AGX Hyperion 10 platform. Okay. What are you doing in Uber?
Uber.
Nothing there
up about $2 or so. Uber's been chopping around.
Yeah.
We've been chopping around. Maybe something.
95 to 100.
Yeah.
We've traded in the last month.
Yeah.
We had a strangle there.
Yeah, for sure. Earnings November
off,
4th
though.
next week coming.
And then finally, I think I covered it all. Nvidia is teaming up with Lucid for true autonomous driving in future vehicles. So again, similar partnership like they're doing with Uber, but they're trying to bring level 4 autonomous driving that's akin to the Waymo robo-taxi to future Lucid vehicles. Not sure what Lucid stock is doing.
After the split, it's like $19 and change, which is
Okay.
$1.90. It was
Okay.
like $2.20, $2.30 or something like that. Everybody's trying to help Lucid. Nothing helps Lucid, it seems like. At least the stock. I don't know about the...
Are you surprised by this amount of news, by this amount of capital, by this amount of partnerships in NVIDIA? Like, where do you go in NVIDIA from here? That was the craziest thing I think I've ever done. I was just kept making slide after slide after slide. And
You go to 5 trillion.
I know.
That's what you do.
That's
You do
bonkers.
20 more and it's 6 trillion. So we're, keep going.
That's bonkers for one day. Like, pace yourself.
Yeah.
What do you do in NVIDIA? Like, what's the opportunity? Like,
We had a call diagonal. It's now $10 in the money. So it's a good trade.
Basically full. You don't.
I
It's almost
added-
like having a covered call. You did it to the bullish side. It has defined profitability, and you're there. So it's almost like take it off, and now what do you want to do?
Yeah. I put on a little downside crab trade yesterday for cheap.
Good.
So now I'm trying to hit both if we get a little bit of a pullback.
yeah.
God forbid we ever
Got
see
it.
a pullback.
Moving to other news, because there was other news yesterday. Microsoft and OpenAI finally reached a deal removing fundraising constraints. OpenAI is moving forward with their plan to move from a not-for-profit to a business that is for profit, and they announced their restructuring so they can likely go public and they can continue to finance Sam Altman's ambitious plans to develop data centers and cutting-edge technology. Microsoft holds a 27% stake in OpenAI, so there'll be a PBC. So
Microsoft $5.44 up around $2 or so. I mean, this is.
But it had that $20 move pre-market yesterday. It was
I mean, it was
move.
Yeah, it was $5.20.
it got leaked.
Yeah.
Yeah.
And you're not talking about a $400 million stock. You're talking about a $4 trillion stock.
Everything's going to be a trillion. Trillion here, trillion there. Who cares?
I want some.
Yeah.
Yeah, let's go.
Yeah.
So-
In other partnership news, like all my other partnership stuff was about Nvidia, but OpenAI announced a deal with PayPal, and that will become the first payment wallet in ChatGPT that sent shares of PayPal higher. Starting next year, PayPal buyers and sellers will be able to complete transactions through ChatGPT. Wow.
PayPal's a dog.
PayPal is a dog.
Dog with fleas.
Yeah.
Do you have a PayPal?
I'm
Do
sorry.
you have a PayPal account?
I believe my wife does. I don't think.
Probably Vinny does.
Yeah.
Sure,
I have
yes.
one, but I just never use it. Like, I don't see at any point to it. I feel like it's kind of in a weird middle ground of like, it's not as used as Venmo for like day-to-day stuff. And it's completely obsolete for shopping or anything else. You have a credit card, Visa, Apple
it's almost
Pay.
like an add-on.
I do like,
it's like almost
I do
in
like
like this
the
weird.
PayPal secure checkout for some sites because it has all your info.
Yeah.
And so it's like if it's a website that I'm not maybe quite sure of, I was like, I'll just do the PayPal checkout, so then I feel better. And
But it's all like connected to all your other payments.
I know, but
it's not
there's
like you
still
use.
there's still
Right.
protections though if I get scammed. I guess I don't know.
Yeah.
I mean, every credit card has protection, really. I mean,
Okay. But it's a one-click checkout though. That's what makes it.
Yeah, I get it.
Okay.
PayPal was languishing too, kind of chopping around there. It opened, it went from like 70 to 76, went up to like I think 79, which is close to its old highs in the 80s there before pulling back to 73. It's sitting there at 73 this morning. I agree with you. I think PayPal's a little bit of a lagger here. Seems like a decent premium selling proposition, but with defined risk. Ivy rank at 28.
Something that kind of got glossed over and just in the massive amount of Nvidia news that came out yesterday. Apple crossed the $4 trillion market cap threshold for the first time. Microsoft also reached $4 trillion and closed above that level. Like I said, Nvidia is close to 5. Apple reports their earnings after the close tomorrow. Microsoft reports earnings today after the close. So what are you going to do in
Apple at highs? I mean, what do you say about Apple? I mean, 269 and change. It was chopping around, but I mean, that was yesterday, like October 15th or something like that. It's to 29th. It's been up every day since then, going from 250 to 270. Again, a $4 trillion company moving at, $10, $20 is a big feat.
What are you going to do in Apple for earnings, Nikki?
I got a little. Oh wait, I don't have a position on here.
It's going to be. It's tomorrow after the market closes.
Sure.
Yeah.
We'll probably wait until tomorrow. IB ranking there's only 19. It's relatively low. If you remember talking on the show when Apple first came out, the monthly implied volatility was 40. It's now 28. It's really changed. I mean, the type of stock that it used to be, it doesn't move half as much as it used to move.
Yeah. We'll see. We'll see what happens today. I mean, you got a lot. I mean, the big earnings of Microsoft, Google.
Meta.
Yeah, Meta.
Yeah.
FOMC. We'll think about Apple tomorrow.
I'm so tired.
Yeah.
Poor little Snapchat trying to get some headlines. They are rolling out a new personalization and customization features for their subscription-based social media platform, Snapchat Plus. Did not know that there was a Snapchat Plus. They're trying to boost retention among their paying user base. The updates include expanding their AI-powered pet avatars, Bitmoji Pets, collaborative and group chat wallpapers, and adding to the suite of customization features. What is Snap doing?
What is Snap doing, son?
It's at lows.
I figured as much, but I was like,
$7 something cents. This is one where if you really want to pick your bottom, which I recommend you not doing, ladies and gentlemen, this would be one of those.
This is one where if you and I do this, I sold puts here as
the filters are still great on Snap. I don't use Snap, but I see some filters.
I'm not a big Snap guy, but
who is?
I'm not a big Snap
Me either.
guy.
Yeah, nor am I.
He does that stuff. The younger guys. I sold the 7-strike puts. This was my homage to the former man in this seat.
Oh, okay.
As a 40-cent put, you know, like that will take about 30 days to make about 10 cents.
Hey, you're in it for the love of the game.
Yes.
There you go.
Yeah. How low can it go?
Right.
Famous last words.
Right.
Here's a headline of a situation that's gonna happen. Trump Media and Technology Group, DJT, says they're gonna introduce prediction markets. What could go wrong? Through the Truth Social, through a partnership with Crypto.com, as the event-driven markets continue to make inroads. Look, they literally know the playbook. Like, how I'm not trying to joke, but I am kind of joking. But like, if you are literally the leader of the free world and you know things are going to happen, how can you run a prediction market when you know you're going to start some shit somewhere? Like,
so you predicted it's going to go in that direction. I mean,
right, but I'm saying, like, where there should be a wall. Like,
yes, 100% agree with you.
Yeah.
Should be a wall.
Stock isn't moving, so.
And I would say this about anyone who was in power. If the person in power wanted to also on the side start a prediction event business when they were literally driving all of the headlines.
Yeah, I agree with you. I
DJT, trade it, don't trade it.
What is it?
DJT?
I don't think I've looked at it. TJ.
No, D.
D. Well, that makes sense.
Yes, it's just DJT.
16 and change. I mean, it's been
on its butt.
Yeah.
It hasn't been like the mover. I mean, it moved during the election. And
Sure.
Ivy rank of 3, earnings November 4th.
Yeah.
Markets are okay-ish in here. I mean, maybe 10 cents wide. That's not the greatest markets, but again, it's $16 stock. So it won't cost a lot of money if you want to do something in there. I don't think I would, but
just be careful if you are going to do stuff in any prediction market. Just be careful.
Well, it's the news of the day, right?
Sure.
I mean, not just this. I mean, the DraftKings of the world are getting into or trying to get into the financials are trying to get into the DraftKings world.
Sure.
It's the soup du jour.
I pulled this story just for both of you. You're welcome. Margot Robbie is rumored to be playing Patrick Bateman in a gender-swapped American Psycho. What are we doing? I mean, I love her as an actress. I love Barbie. Like, I loved it.
Yeah.
Great, iconic performance.
Wolf of Wall Street.
But she's being eyed to play a female version of the sociopathic psychopath.
American Psycho is a good movie.
It's a classic.
I read the book.
Really?
Yeah, Bret Easton Ellis. He's a great writer.
Look at you.
Also wrote Less
look
Than
at her
Zero.
flexing
Yes,
on us.
books.
Yeah,
books.
seriously.
Read the book, son?
I can't remember the last time I read a book, which is really sad to say,
That's
but
sad.
you have definitely not read a book in...
No, I have a grandson now. I've been reading books.
No.
Reading more books than you are.
Mama in the pajamas.
Yeah.
The Giving Tree.
Oh,
Yeah.
that's nice. I love Shel Silverstein.
Yeah.
Anyway, the nothing is quite set in stone yet, but
It's a good beginning.
The movie was released in 2001, and putting a female killer in it would, put a different spin on things. So we will see.
Not a lot of female
Serial
psychopaths.
killers?
I mean, you guys are whacked out.
Well, they're all...
Okay, nope.
Right. No, you guys are whacked out, sure.
Hey.
Whoa, hey.
Serial killers,
No.
right? I mean, there's not a lot
No.
of serial killers.
Yeah.
That are mostly
Yes.
it's a male-dominated
Yes,
field.
you were
Yes.
absolutely right. Yes.
Okay.
Hey, finally today for my viral video, getting in the holiday spirit. This is the
So we go real far. You guys are just consistently.
Yeah.
sure.
Yeah.
Sure.
Never mind.
Getting in the Halloween spirit. This is the greatest idea for a costume. This lady kills it. I'm gonna just let this video play. Watch this.
Fergie. When Fergie, just botched that.
The national anthem.
yeah.
I think it was at the All-Star game.
That's A+ for creativity.
A+ for creativity. I give it.
Not really all that practical though, because you got to
Thank
carry
you.
the microphone around the whole
yeah.
time.
I think she could make it work.
Yeah.
I just thought it was funny because when Liz said her daughter was going to sing the national anthem and she could do it in any style, and I was like, please, I will give her $20 if she does it like Fergie. But her daughter is actually talented and she can sing. So
Yes, she can. She can.
what's coming up next, Pat?
We're going to take a quick 90-second break as even the S&Ps sit up 14, about 9 handles off of their highs, about 16 handles off of the lows. Let's call them pretty much mid-priced for a small-ish move last night. We'll take a quick 90-second break and come back, talk about that, and confirm and send your emails after this.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
Son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. So far, an extension of yesterday. Even the S&Ps up 16.5, about 7 handles, like I said, off of their highs. Relatively small move here today, but at new highs. NASDAQ up 102. Russell is the lagger of the group, not at highs, down $1.40. And the Dow up 92. Would be a new closing high if we get here. So if we stay here, so we'll see that volatility in by 11 cents. You'll see here yesterday a big green candle to the upside. I think it's to be expected with Microsoft, Google, Meta, Carvana, CMG, and a bunch of other earnings. Plus Jay Powell talking today. Volatility staying bid at all-time lows for this session here. This monthly low here. Expected move on the E-mini S&Ps pre-market. $33. Now, you remember from yesterday, we had a $18, we've been having $18 expected moves around this time, just after the opening, somewhere between $16 and $20. You got $33, reflecting what's going to happen at 1 o'clock Central Standard Time when Jay Powell speaks.
I think you're going to have a choppy day. But volatility is going to stay bid. You know, so it's going to be like, I don't know if today is a 0-day SPX trade, just because we've been trying to manage them really quickly, like for 10, 15, 20%.
Putting them on somewhere between 8:30 and 9, close to 8:45 and 9-ish.
And trying to be out by,
45 minutes
11
later.
or
an hour later sometimes.
I don't think you're getting that today because you have so much coming up. You have FOMC, you have all the earnings after the close today. I think even if you get the chop fest, it's still going to stay bid, around that 20 or 30 delta, which is usually where we're selling our premium. So I think today we haven't done an SPX trade in a little while, but I think
in a couple of days. That's my fault. I need to remind you.
Yeah.
Some more markets to look at here. Bonds would be the ones that are in play, really just going sideways to higher, trading just under 119. I think it's all status quo with this 0.25%, and the bond market's reflecting that. The IV rank of 5 is reflecting it also, although you did get a little bit of an uptick in volatility the last couple of days because of the FOMC meeting. Bitcoin down 500 to just under 114. Middle to lower end of its last 48 hours or so, well above the 110 area where it had languished a couple of days ago. Ethereum down 21, basically doing the same as Bitcoin. Oil unchanged at 60 and change. Ivy rank at 28, decent in there. Gold back up over 4,000. 4,038 up $55. That's about a an almost 1.5% move, 1 3/8% move. Silver doing its silver thing more than gold, up 2.25%. That's $1.06 in silver. You would expect volatility to expand in both of those if they continue to go higher. Net gas down 7 cents. A big fall in net gas over the last week or so, from 4.1 down to 3.8, just under 3.8 right now. That's a 2% move. Some of the earnings, some big moves here, Nikki. BE is the largest mover so far. It's come down a little bit, 130. That's up $17. I saw it up like $20, $25, $22 or so. Boeing was up early. It was down later on. It's down right now, about $2, well inside the expected move there. I saw Caterpillar up 20 and then up 25. Right now, it looks like it's up 30, 32, 33.
Yeah.
Caterpillar, big move to the upside. It is a $500 stock. ENPH is the last one I'll quote for you. $33. That's the only one that's really down. Boeing's down small, but ENPH down around $3.50 to $4. Dollar doing good against most currencies.
Yes. I got long the franc or the U.S. dollar against the franc yesterday.
Using the FX platform.
Using the FX product that I think I'm going to hold it just to see what happens with FOMC. Maybe get a little dollar strength here.
Yeah.
Maybe. Yeah. Why not?
Yeah.
So.
Trading is small enough, right?
Yeah. Yeah. So we'll check on those a little later today. But yeah, couple good earnings. It looks like I'm going to make some money in Verizon. I might be the first person ever. VZ. I did a covered call there. It had earnings this morning.
I recommended that. Yeah, $41. Stock's up about $2 or so.
Stock at lows. I just bought stock. I sold the weekly 40 strike call. It's a not sexy trade at all.
No. But with a $40 stock, you're not using a lot of buying power. It's at lows.
Sold the call at 50 cents.
High implied volatility. Ivy rank at 39. It's going to collapse. I would think that monthly implied volatility. You did it in November, right?
No, I did it in the weekly.
Oh,
this was like a all or nothing trade. I mean, you could have just bought the call spread, but people like trading stock. So
yeah, absolutely. And if the market's on those 40 calls is what you did, right?
Mm-hmm.
If the market's on the 40 calls, since they'll be in the money by $1 and change, it might be a little bit wider. You could just go and buy the 40 puts and just lock in your profits there. Since you have a covered call, you long stock, your short call, your call is in the money. You got 2 days to go, so maybe those 40 puts are going to have a tighter penny wide, 2 cent, 3 cent wide market.
It's a good call.
Again, it's going to cost you another commission. I'm not trying to get you to pay another commission there, but if it saves you if you can get filled for argument's sakes
at 10 cents,
and you can get filled here, at 5 cents net, it saves you a nickel, 4 cents with the commission.
It's a good point. That's a good point. I was thinking if it didn't go in the money, I would just roll this as like a cover call, and we could look at it
if you have a Verizon opinion. Yeah. The world is your oyster when you have profitable trades.
Yeah.
Cool. Next thing that we're going to do here is go to Confirm and Send Wednesday, October 29th. It's getting scary out there. Halloween soon.
Spooky season coming up.
Season is upon us.
All right.
First question, please. What factors usually drive the VIX lower, even when markets aren't moving higher?
So when you got like inside moves is kind of what they're looking at here. You typically see volatility as a reflection of the expected move. That's exactly what it is. Sure. So if markets aren't moving in a big way outside of what is expected in either direction, you tend to see volatility contract, and that's what you would expect. Even on an inside down move, you can see volatility contract if that move is less than what volatility is projecting, because that's an inside move. Volatility is a reflection of the expectation for price movement, and if it's inside, it's going to or likely to contract.
Yeah, all good points. What factors usually drive the VIX lower even when markets aren't moving lower? like you said, I mean, it's basically a product of what's going on in the market. The opposite of that is we usually have larger moves in volatility when we have clustered lower as we have recently. So something to look at. The other side of this coin is all I'm presenting.
And volatility, like into, to speak to what yesterday's VIX looked like, where we had a little bit of a bid in volatility, you have a lot going on this week. I mean, there's people trading the tails on both sides, and that can lead to an increase in volatility. I mean, that's not a shock that into FOMC and all these big earnings and the news events and the $5 trillion in Nvidia and all the stuff around that. It's not a shock that people are speculating on both upside and downside and willing to pay up for that, which leads to a higher volatility in the VIX.
Next question, please.
Can you explain the psychology of why traders close winners too early but let losers run?
Because it's hindsight?
Yeah.
No. That's what it is, because I don't know how far a loser is going to keep going. And I don't know how far a winner is going to keep going.
Yeah. But that's because you have there's no cap to what you're trading.
Right, there's no cap. So if you had a price target on each one of these, then you could say you close your winners at the same prices, all things being equal, as you do your losers. Yeah. When you're let's just call it a strangle, because that's what most people talk about when they send these emails. I don't have a loss target. Now, we've done the research with 3 times the amount of credit you receive. Could be a place where you start thinking about getting stopped out, a mental stop out on your position. But you're never going to make 3 times as much as you sell it for, because that's the whole game. We sell it for a lot less than the risks that we're taking because we have a higher probability of success. So we manage them earlier. So we hope to have 4, 5, 6, 8 positive trades, depending on what your probability of success is when you put the trade on, and 1 or 2 losers out of 10, because you have an 80 to 75% pop on the positions that you're putting on. 1 or 2 losers, you hope those losers are a lot less than those gains. That's the whole game.
Yeah.
So your losses are going to be a little bit larger than you're hoping to get rid of that outlier move. How do you avoid that outlier move? Earnings with defined risk or some other type of defined risk type trade for earnings. Other than that, the market itself, especially if you stay in ETF type products or larger cap products or products that have really deep liquid markets, the outlier move is muted. I mean, it's not really there.
For sure. I think this kind of goes to the first part of what you were talking about of just having hindsight look backs at these trades. And when you have something that has unlimited upside or for the argument's sake, unlimited downside, if you're just like long stock, it's easy to be in hindsight and say, oh, I should have held my Nvidia.
Sure.
But do you close after a 5x or a 2x or a 10x or a 20x? I mean, that's hard to do in practice. With our trading, it's easier because we're capped at how much we can make on most of our trades. And so it's easy to say, you know what, I made a lot on this trade. I'm out. I'm going to find the next opportunity. With, just long Nvidia, it's really hard to hold that after a 2x, a 3x, a 4x, a 5x, a 10x in such a short period of time. The people that do that, that's great. It's probably not their full batch of stock. No. You don't just put 1,000 in and watch it go to 100,000 and don't take anything off the table.
100% agree. Good job out of you.
Next one, please. I've heard you say that risk-free returns don't exist, but with 5% yields on T-bills, doesn't that challenge the idea? I think this goes to the...
Well, it's not 5 anymore. It's closer to 4.
Yeah. But there's always a risk because you have an opportunity risk. So there's always something that you're missing out on. If you are parking cash in T-bills, you aren't participating in Nvidia. There's a spread there. There's always a risk. There's always a risk in everything.
Sure, but if you're in a S-Gov or a BIL, there's slight market move intra-month, but you're going to get your 4% return. For sure. That's a risk-free rate of return that you can get.
You don't have downside, but there is risk to that trade because that money, there's always a risk and reward. There is no thing that is just that is just risk-free. Because if you're in T-bills at 5%,
if
and
bonds go lower, that rate is going to go higher. You have risk. You'll make your 4 or 5%, whatever you say, but they're paying.
Yeah, but there's an opportunity cost. Is a bigger risk than.
That's right.
Than, if you're sitting in a savings account and you missed a 30% or 50% or 500% rally in the markets, you are. That money is a big spread. That's a big spread.
Yes.
And so there's always an opportunity cost.
Yes, but and I'm gonna flip this over and talk about the opportunity of the risk-free rate of return. Like if you have a portfolio margin type account and you're using significantly less buying power in your normal positions that you have, and you have, let's say, portfolio margin is 175,000, 150,000, something like that. You have $250,000, and you're in a regular margin account, you'd be using, 30, 40, 50%, let's just use big numbers, of your buying power. Now you're using, 25%, 30% less of your buying power. That leaves a lot more money sitting doing nothing. You put that into an S-Gov or a BIL, and I'm just mentioning two, there are a plethora of other ones that you can use that are risk-free returns.
Sure.
Just by getting portfolio margin, you can take that extra 100 grand or something like that and get 4%, which is what they're paying right now for 4.25% on that 100 grand while you're just sitting there and having the same amount of positions. You didn't change anything in your overall portfolio. You didn't trade more. It doesn't cost you anything of a portfolio margin. That's the kind of thing that I think the background of this question really is. Next question, please. Is it me?
Sure.
Okay. Do you think volatility in mega cap stocks can actually fall too low to justify selling options?
I don't think so. I mean, I think you're always going to have higher volatility in something like Apple or an Nvidia or Tesla compared to SPY itself. So you're always going to have there's always going to be a spread of that volatility. So it's going to be, there's going to be premium to be had there. And I think just from a liquidity standpoint, if you're not trading these, the rest of the market is probably not tradable, and so I think, you limit size, or maybe you change what you're trading. You do diagonal spreads, calendar spreads, something like that. But I'm always going to have positions in the top 5 to 10, 20 stocks.
Yeah. I mean, here, we just talked about opportunity cost just a moment ago. This would be another one. Like, do I look at, and I'm just going to throw out a name, it's not realistic. Do I look at a Google with a 20% or 20 IVR, or do I go into an Nvidia with a 40 IVR? I might look to go into Nvidia before I went into that other stock with a 20. That's really what I'm looking at. Like, is it optimal to use my money someplace else that I have a similar type position, or even, a similar type assumption on the stock, selling premium? Would it be better to go there? And I think it would be better to go to the latter, the one with the higher IV rank than the lower IV rank. I think that just makes a little bit common sense. Does that mean I can't have positions in both of them? Yeah, I certainly could. Maybe I use something with defined risk in the lower IVR stock, and then maybe something with undefined risk in the higher IVR stock. That's the way I would play it. Even the S&P is catching a small little bit here, up 18. The Russell, which was red all morning, is actually up small, 80 cents. Volatility still in by 10 cents. Bonds 118.29. I do have to mention something that my Taiwanese sources has said. Today will be the 5th time the Fed have cut rates with the SPX at all-time high. In all prior instances, the index was higher 12 months later. That doesn't mean we couldn't have a lot of chop in between there. You're just taking a time frame. But the average return has been 20%, and the worst has been 15%. Now, I don't know if that means we fall 20% from here and then go 20% higher a year later, or we don't fall at all and we just go up 20% stable. Who knows? But a good thing to know. Usually, when you're cutting interest rates, that's a bullish thing for the market. And I don't think that's surprising to anyone. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next? An option jive. We're talking about
good one.
Yeah, risk on leveraged ETFs. So I got a lot of emails the last couple of days since the market's been moving in all-time highs. Let's leverage up here. Maybe we go into these leveraged ETFs without using more size.
And they got them all coming into play now. There's like 40 or 50 new ones that just came on board the last week. So
Jeff,
Pretty good. Yep.
let's take a quick 90-second break and get to that right after this.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch tastylive because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's option jive.
It is time for an option jive. Nikki, with even the S&Ps up 17. Go.
Option drive. Let's do it.
Why
leverage?
Go ahead.
Yeah, leverage ETFs. Why leverage ETFs struggle over time. What do you think about these leverage ETFs? You ever trade them?
No.
A couple times here and there?
A couple of times here and there over the centuries, decades that I've been trading, but never the first thing I look at. Probably if I've looked at them, it was something from a confirm and send question.
What's your assumption? Yeah, for sure. Yeah, I think these are definitely on the secondary tier of our trading, especially on like a day-to-day basis. You want to take a short-term hedge, these will help, and you could definitely trade them that way, but definitely not a long-term position here. So let's get into it here. So while stocks keep setting records, another corner of the trading world is quietly exploding. Leveraged ETFs, there's been a ton of new ETFs launching, 2x leverage on single name stocks, 3x leverage.
Almost a crowded field now, right?
Oh, I mean, there's more ETFs than stocks in the stock market. So there's more.
Oh, that's crazy.
There's more ETFs now, not just leverage ETFs, but in general ETFs.
In its totality.
Than there are single name equities. So I mean, it's a good gig. If you're the bank, you take a 0.5%, to make these junky products.
Sure.
And
it's a good gig if you can.
And people parked 120 billion, So in just a decade, their assets have grown to over 120 billion in these leverage products. Much of that growth began after 2020 as investors saw amplified exposure to a strong market recovery. So, these worked in COVID, so people are kind of hanging on to them, keep using them. So, but let's take a look at some of these and just kind of dissect what's really going on here. So next slide here, small group of funds dominate the space. So products like TQQQ, SOXL, and SPXL, a lot of these these three are kind of the top traded, track the broad-based indices such as the NASDAQ and the S&P 500, and they give you a 2x to 3x daily exposure to price movements in these stocks or in these ETFs. So, that sounds amazing when markets are up 30%. Why wouldn't you want 3x that?
Sure. You'd be almost 100%, right?
Most are bullish products, and they're intended for short-term trading and account for a majority of the leverage ETF assets. There are bearish ones. SQQQ is one for the short NASDAQ. Those charts, you'll see there's a ton of drag to them because of just how they're structured. And we're going to get into that more here.
Now, some people in IRA accounts, obviously not at Tasty, that can't get short options, call options, use these ETFs as a way of doing that. And then I see it. Then I see its viability, in a small way. Go ahead. You can always make a strategy that gets you short, but whatever.
Yes. Next slide here. Since 2022, a new category has emerged. These are the leverage single stock ETFs. So now you have not only leverage to the S&P 500, but you can do single names like Tesla and Nvidia and MicroStrategy. They've quickly grown to about 40 billion in assets, representing roughly 1/3 of all leverage equity ETFs. So a ton of these. On the next slide here, if we jump to that, leverage single stocks. Stock ETFs are most active in areas tied to technology, AI, and digital assets. These are high volatility. You get these leverage products are typically on things that have relatively high implied volatility. Here's some of the more well-known products here. Tesla and Nvidia remain the most traded, while new funds are experimenting with covered calls or structured strategies, which are, I don't know if they're attracting more sophisticated traders because a lot of us know how to do this ourselves. We want to do a covered call on Nvidia. But it definitely looks really awesome to get these big fat dividends and, all these things that are incorporated into these ETFs. But there's certainly some things to keep in mind with these, which we'll get to as we move on here. And that's just a list of a bunch of the bullish ones. There are bearish ones to these too. But why would anybody do that in this market?
That doesn't work.
Everybody
knows that.
But these all track day-to-day price movements to whatever the leverage is, or some of these with the covered calls are a little bit more unique. Getting on to the next slide here, the concept is straightforward. A 2x leverage ETF should move twice as much as the underlying stock in a single day. For example, if the stock rises 5%, the ETF should rise 10%. This daily leverage can produce attractive short-term gains, but it introduces significant long-term risk. Here's just a comparison of Tesla's daily price moves and average price moves. And then you can see Tesla, TSLL on the other side here. It gives you an idea of just like kind of the distribution of these price movements. And we'll get to that on kind of the next slide here if we move to slide 6. In practice, the results often differ from expectations. For instance, Tesla stock rose about 22% this year, yet its 2x leverage ETF fell about 7% even after the dividends. And that's because the moves, and we're going to dig into this more, are not dependent on the long-term move, right? So the stock being up 20% doesn't mean that the ETF that tracks at 2x is going to be up 40%.
It's so misleading because you would think if you were looking at it that's exactly the way it would be, or that's what you would want with the amount of buying power and everything else that you're using here and the risk that you take.
but it's based on the day-to-day moves. So if you have slow moves or grinding moves or really big downside moves that are then kind of stair-stepped higher, you're not going to
never get back to even.
You could never get back to even.
I mean, you can, but it's so freaking hard.
Yeah, the stock has to be significantly higher. So you're really relying on short-term big moves if you're trading these products. So getting on to the next slide here, leverage ETFs are designed to deliver 2 to 3x a daily return of their underlying index, not long-term performance. So these are meant to be and are built for day trading, short-term trading, 1 week maybe if you want to do that sort of thing, binary events. These are not like buy and hold assets. Even the cover call ones you're going to see are not really buy and hold because there's a lot of drag to it. There's a lot of redemption and rebalancing, and a lot of these products are swap based. So there's fees there and there's management fees. A lot of these really, really do underperform. So each day the fund resets its exposure, compounding gains and losses separately. This is why these products don't match to the actual underlying itself. Understanding this daily reset is essential to knowing why results diverge over time. Basically, every day you're realizing that move. If you are holding it long term, so you're getting 1% today, 2%, 2% today, down 10%, and then now you need to make 20% on the next move to get back to even.
Even, right.
You need to double whatever your downside is.
Make $1 million, spend $1 million, you're down $1 million.
Yes.
Really what it comes down to.
Yes. So next slide here, this is kind of an example, and this doesn't look that horrible, but you do this, this is a 3-day look.
Yes.
You do this for 300 days and you're at zero.
Houston, we got a problem.
Yeah, so daily compounding means that volatility can quietly erode returns. In markets with frequent ups and downs, its volatility decay causes leveraged ETFs to underperform even when the underlying index ends up higher. This phenomenon is also called drag. And so on the left side here, you look at Tesla returns, down 3%, then up 6%, you're 6.3%, you're back to flat, you're back to 100. So you're net zero after the 3 days. On the right side, the 2x leverage, you're down 6%, and then you're up 12.6%. You're still down 10 cents, which is 5% or 50 basis points on the initial $20 stock price. So you're flat on Tesla, but you're down 50 basis points, and that's after 3 days.
Right.
So if you do that 100 times, you're down to zero. Your investment is zero, but Tesla might be at whatever the same starting price is after that, 100 days. And so this is the effect of the drag, and really the fact that the downside moves when the asset gets smaller, the upside moves from there are less of an effect on, it takes you more to get back to even than it does on the down. The down moves are bigger than the up.
Yep.
With these leverage ETFs.
Well said.
So the next slide here, leverage ETFs and leverage single stock ETFs are designed for short-term trading, often just hours or days. These are really just like short-term hedges. Like to your example, if you're in an IRA account and you're a little bit spooked by the earnings and FOMC today, and you want to hedge, you go and buy some SQQQ. Like that will hedge you for this week to some degree.
Sure.
Market goes down and you're going to make money there. If you think that in the next 12 months, there's going to be a 50% drawdown in the NASDAQ, the SQQQ is probably not going to work for you unless it happens in the next month.
That's right.
If it happens 8 months from now and you've been holding SQQQ this whole time, you probably don't make any money.
You don't make any money.
Yeah.
I mean, it'll be very hard pressed to make any money.
Yes. So, that's a big problem here. So leverage works only in steady, one-directional rallies where gains build up on themselves over time. One of the classic examples is kind of the Volmageddon experience that we had in 2017. XIV volatility was down basically every day for 2 years, and it was free money. And people were like, "Why are you not trading this? why this is every day volatility's down 10 ticks. This thing goes up $2. It's every single day. And then all of a sudden you have that one pop in volatility and those products go to zero. And that's a little bit of a different situation, but these leverage products, that's how they work. You want the stock or whatever it's tracking to grind higher, and you just have to keep in mind that, that 10 or 20% down move wipes out all of whatever that up move was.
So once again, it's about timing.
It's about timing, of course. So the next slide here, slide 10. So across these major leverage single stock ETFs, and we're looking at like just the 2x onlys here, almost none of them consistently achieve their intended multiple over time. That is not a surprise. I mean, these products don't intend to track long-term performance. They are built for 1, 2, 3 day type moves and performances. When outperformance does occur, it is typically short-lived and driven temporarily by market conditions rather than sustained compounding gains. So these are due to, high volatility and big moves in one direction. They're not because there's like an investable thing here. Yep. This is just a short-term trade. And so you can see a lot of these, just owning whatever the asset was is better over a long period of time.
Last one, take away.
So the last one, and then we'll get to the open here. So leverage ETFs are designed for short-term strategies, not buy and hold investing. And when you're trading the options here, you should also keep this in mind too, because the volatility on these options is going to be a multiple of the multiple. So if you're looking at a 2x leverage ETF, the options are going to trade to a volatility of 2 or 3x the actual asset itself. So it's not like buying, like leveraging on the leverage is going to be very expensive. And a lot of those, you really need, if you're buying calls on TQQQ,
you need that move today.
You need the 3x move. You can't really get the 2x move because they're priced for that. So daily resets and volatility make long-term tracking of these products really unreliable. And of course, you got to have proper risk management, and clear time horizons are critical here when you're trading these instruments. You can't buy and hold these. I know that even a TQQQ in the last couple years has looked really great. And that's really because the downside moves are shorter lived than the V bottom upside moves. And that's really what you need. If we grind it higher back to flat, you'd be stuck in the mud and it would stink.
Even though you were eventually correct.
Yeah, even though you're eventually correct. So you need if you don't get the V bottom, you're dead in the water.
Now, this smile as a dad, very happy with your performance here today. So good job out of you.
Thank
you. Really did great. We're going to take a quick 90-second break.
That was nice. That was cute.
Come back right after this with the opening bell next. It's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
are back, son, and we've got less than a minute here before the market opens. Even the S&Ps have been holding steady since we've been on the show for the last hour and a half, up around 17. NASDAQ up around 97. Russell unchanged, down 1 or 2. And the Dow 121 up. That's the way it's been all morning. Volatility's been down 10 cents. That's the way it's been all morning. Bonds have been hanging out at 118.30. That's the way it's been all morning. Bitcoin actually catching a bid here, small, $500 or $600 to 114.250. Ethereum catching a small little bid also. Oil catching a small little bid. It was under 60 this morning. It's 60.38 right now at the higher end of its range. Gold up $50, has been sitting there for most of the morning that I've been watching. Silver up almost a full $1, 96 cents. Just off of its high, it's been sitting there. Some of the earnings trades, BE was the biggest mover to the upside, 126 now, only up 13. It was
There's our ding.
Up 22 pre-market. Yes. We'll see how the rest of the market moves here. Even the S&Ps up 14. No dings out of you for the moment here on some of these earnings trades. They're going to be wide markets. I think BE up 16 now is probably better for you than up, 25. 13 was probably even better than 16.
Yeah, and it'll be interesting to see if volatility comes in a little bit there. I know we were looking at November implied volatility of about 145, 46%.
And these markets are $2 wide.
So you can't do anything.
There.
Yeah, you can't.
$3 wide. Yeah.
You can't touch those. So that'll be interesting to see if volatility kind of comes in there. That would help my position for sure.
Greatly,
yes.
Bigly even.
Bigly. Mm-hmm. I am picking up a little bit of short delta in AMD and Micron, so I got a little bit of that. That's squeezing me a little bit here.
Mm-hmm.
But nothing really crazy sticking out to me here.
That's okay. You're allowed.
That Verizon trade, do I just take that off for $100?
Sure, why not? What were you looking to make in
Yeah, you got
Verizon?
15 cents
Let's
more
go
than
to
me.
that and try to explain what I was looking at before. You're in the 2-day options. You're long stock, short the 40 calls, right?
Yeah.
So you have whatever the put is left. Because where's your risk? Let's think about it. You long stock, short the 40 calls. The stock goes down to 39. You're down $1 plus whatever you sold the 40 calls for. So your risk is at the 40 strike. If you were able to buy these 40 puts at 10 cents, it would be just like doing this at sell stock by call. You could do it at 39.80, or 39.88. So if you could do this at 39.90, or you can buy the puts at 10 cents, or if you buy the puts at 15 cents, it would be like doing this at 39.85. Got out of it at 39.86.
That makes a $100 profit there.
Beautiful.
So, nice one.
Good job. Good job out of you.
Speaking of BE, the numbers haven't changed yet, but volatility and the stock, the stock's basically where it is, but volatility is certainly coming in on that position.
Talking about BE?
In BE.
Yeah.
So I'm going to put what do you think about putting the spread on this position, so I have a crab trade, so I'm long December call that's right at the money, a couple dollars in the money. And I'm short the 150s against it that are on, that are about a 40 delta right now. If you get volatility to come in a little bit, my net delta on this position is going to get actually more long because volatility in November probably contracts a little bit. So this will, the spread on this, the credit, should get bigger if volatility contracts.
I would say you would have...
From where we're at. So it's now marked at $6, $6.25.
Yep.
What do you think about putting a $7.25 in there or $7?
No problem with that.
We'll put a $7 credit in there, and if it gets filled and the stock is sitting here at 125 to 130, we'll know that volatility came in pretty bigly.
Pretty bigly indeed, yes.
Pretty bigly.
That's exactly what you should.
I might get filled on this. I don't know. 640 is the mid price. We'll see. That'll be an interesting one there.
Most definitely. Even the S&P's hanging up 18. Let's see what the rest of the market is doing here. The Dow Caterpillar up $49. That's what's propelling the
49?
Dow up 50 now, which is almost a 10% move, well outside the expected move on Caterpillar. That's what's helping the Dow here. When you look at the Dow stocks, the majority of them are lower, but you've got Caterpillar up almost $50, Apple up 70 cents, Microsoft, which has earnings after the close, up 50 cents. Apple has more earnings tomorrow, the 30th after the close.
Yeah, these numbers have just gotten. I mean,
stocks have gotten big, and the numbers have gotten. I mean, that really is.
Yeah.
High option volume list. BE up $14, helping your position.
That was just a junky call that I closed in end phase. I did a cheap call diagonal spread there. I'm out about $150 on it, but it's now just a lotto ticket. I just closed out of the IBIT calls. Kind of scalped them a little bit into this move. So you got a little bit of a pullback yesterday on the close in Bitcoin. And I've been leaning long, and I sold those calls against it. I think I did that like this week.
Yeah, I believe you did.
On the 27th. So I sold them at a couple at $1.36. I'm at like $1.34 average. They're more. I closed them at 99 cents. So I took I had 3 of them. So I took like $100. I scalped $100 out of them. If we get a little bit of an up move and volatility, you typically see volatility expand. I'll sell them out again and just kind of scalp them there. I don't mind having the
rinse and repeat, right?
Yeah. If we're gonna have a risk on at the end of the day today, which I think is what's gonna happen, I think Bitcoin goes higher, and so that maybe that saves me 50 or 60 cents a contract, in the spread, which is $1 per, because I took 40 cents of profit out of them, 35, whatever it is.
Very good, my friend. Good job out of you. Look at you.
Let's see. Anything else I have here?
Let's take a look at some of the laggers in the market here.
God, Nvidia, 210 up $10.
Another $10. I mean, what was it, up $20 yesterday? Unbelievable.
It's over 5 trillion now. I think 207 was the 5 trillion mark. So it's like
I believe you to be correct.
5.1.
Unbelievable.
I saw something that was like, I think $10 is 200 billion in Nvidia.
Oh, every $10.
Every $10 is about 200 billion.
Right, and that number's only going to get bigger as it gets bigger too.
Yeah, unbelievable.
Crazy. No doubt about it. What else we got here, son? Let's take a look.
I wish I had something that was like moving, a ton for me.
Boeing for earnings is down $8 and change. Oracle is down $5. ENPH, which you just closed, down $4. UNH down $2. PayPal down $1 and change. Tesla down $1 and change. Even the S&Ps are holding steady. I know you said no 0 day. Let's take a look at what /ES is giving us for the 0 days. It's hanging in there, 32 and a half on the expected move for the E-mini S&P.
I'm going to do the same thing on my ETH calls. So on ETH A, so I sold these at a $1.13 average, let's say, $1.14. They're marked at 73 cents. So that's scalping like 40, 50 cents out of each of them, just to take it off and lean a little bit long into this down move.
Why not? Right? I mean,
yeah.
Why not?
I mean, it keeps a little bit of, gives you a little bit of, this is a way to get long without adding risk.
This is right.
Like you want to buy the dip.
Getting out of something.
Yeah, getting out of short delta and managing a winner is putting long delta on because you're closing those calls. So, I'm just kind of massaging the position. B only up 10 now, which is, my position is fine. It's basically a scratch right now, but I really needed it to be at like 125, 130 and that tail volatility to come in. They're keeping that juice in there.
They are keeping that juice in there, and you would expect that, right? I mean, on the tails, I'm not going to make it cheap for you, right?
Well, if you look at the change column, the 150 calls in November are basically unchanged. I mean, they've moved, $1 maybe into a $10 move in the stock. So it tells you that volatility is remaining bid. Ivy ranks 67, so it's coming in, but not a ton.
Very good, my friend. You know what else is coming into the show? What's your assumption? Where we're going to look at viewer emails, looking at stocks. So let's take a look at that. We got even the S&Ps with a $2 range so far. Not any big movement there.
The trade ideas from our peeps have been
great.
Chef's kiss.
They have been great.
Awesome.
They've been real good and real good. And your IBIT, getting out of your IBIT, Bitcoin down 500. So you massage the position that way. Good job out of you. We'll take a quick 90-second break and come back. We got more Tasty Live with What's Your Assumption next. This is Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters. We are back, son. You know what that means. Time for a little bit more Tasty Live. That's right, with What's Your Assumption? Here we go.
I'm gonna roll.
S&P's up 19.
I'm gonna roll up puts in Shopify. I have a strangle there.
Uh-oh.
I'm not gonna be super aggressive here because the stock has just gone straight up. Mm-hmm. So I got the 150, 170 strangle now. I just rolled up the from the 140 to the 150 puts. I probably should have done this yesterday, but to be completely honest, I have not been looking at that one. And the BE trade, it's back to 127, so we're getting closer to kind of where we got.
Yeah, it's up.
We need volatility to come in there.
You need volatility to come in. We were talking about what volatility would do in B, and it doesn't look like at this moment it's really come in that much.
Yeah, tiny.
Front month is still 146. Back month still 129.
Yeah.
You look at the NOV positions here. The markets are too wide in here too. Son, you look at these positions, and they're
stink.
260. They're horrible.
Yeah. Cool.
All right.
Let's do it. What's your assumption? Trade ideas from you, the viewer. We got some from Reddit too. Our Reddit trades have been freaking bangers. VST, that short put. That was a good one.
Very nice.
First one here. Let's do it. CRM, Jerome in Miami. CRM currently down $2. This is one of the dogs. It is in the Dow too. So it's dog of the Dow.
Yes, it is. Yes.
Bullish short term, assuming CRM will pop off with now earnings. So now ServiceNow has earnings today after the close, I believe. Yes.
It does. You
And
are right.
that's a much less tradable underlying $922 stock. So, a little bit wider markets there.
Mm-hmm.
So you're bullish CRM, buy the CRM 265 calls straight up for this week.
Wow.
Home in Miami.
Wow, they're testing you.
Wow.
265 is the stock at 250, and he wants to buy it for this week. Let's just look at the math here. If you look at the 9-day, December 2nd is earnings, but if you look at the 9-day options here, the 265s are a 20 delta. Markets are a little wide in here too, $1.46 to $1.78. So you'd be paying $1, let's just call it $1.60 for something here. If you looked at the 55-60 call spread, which is out of the money.
But they want to do this for this week.
Well, I'm going
265 calls are 40 cents. They want to put 40 cents on it.
Oh, they want to go to the complete 2-day options.
How about this? I think we can play into this.
You want to play it to the upside. We don't have a problem with this.
Yeah. A little bit more strategically. What about if we sell the 240 put in November, the monthly, 23 days?
Okay.
So it's about a 30 delta put, right?
Okay.
So you're directional. You're certainly directional.
Yeah, I'm putting it up here on the screen. Go ahead.
You think we pop on the now earnings, so maybe you buy the 255, 260 call spread in the weekly for this week.
Oh, for
so
this
you give up $1. Yeah, so you do this. It's a stupid.
Yeah, it's a stupid.
It's
just because you're long, and not because you're long.
The Super Bowl is what we should call it, but once upon a time we called it the stupid because you're doubling up.
If you were doing short, it would be a stupid. What call spread do you want to buy?
You buy the 255, 260 call spread in the weekly, and you pay $1 for that, or around $1, right?
You're selling the
$40.35.
255
for the call spread.
Oh, for the call
spread.
Yeah,
you give up $1.
You're paying $259.
Yeah. I can jump to my platform here to just kind of show what this risk profile looks like. So
sure, why don't you do that? That's good.
You essentially you're selling this put to finance buying this $5 wide call spread, and it plays into Jerome's assumption that 265 is a lotto ticket. You want to buy the lotto ticket for 40 cents, no problem. Go for it.
You do have unlimited upside, but this is their assumption.
Yes.
I mean, I don't have the same assumption as them, so I'm trying to make something a little bit more strategic that fits their bullishness.
So if it happens, we will certainly, participate in Jerome's assumption here.
Yes.
This way, if you're wrong, Jerome, we've got a little more time to be right here. We're selling premium down at lows. Volatility is relatively high. There's no earnings coming up until after the expiration. So it's kind of just we're with you.
Yeah.
But with a little bit,
A little bit of a caveat.
Yeah. I put that in 10 cents above the mid price and got filled. So if you are doing that trade, I did it at 265. You probably can get 275.
Yeah, I mean,
maybe
the natural bid, natural offer is about 60 cents wide. So I don't know where you're going to get filled in this, but 265 is where you got filled.
That's 10 cents above the mid price now is at 262. It was 255, but it's going to move. You got $1.
I would go in, listen, you have time at home to do this. Go in at, you credit higher, 280, 285, and just walk it down until you get filled and play beat the Nick.
Yes.
So that is credit you receive, the better you did this trade.
Yeah. And we will no longer call it the stupid. We will call it the Super Bowl.
Super Bowl it is.
Stupid is mean.
Stupid is
stupid. We're not mean.
We're not mean. That's right.
All right. 1 for 1. We're with you, Jerome.
Mm-hmm.
Next one here.
And that was Jerome Powell, by the way. did that for you. Gold bullish, GLD. What do you want to do here? Gold has rallied. I hope you did this yesterday. It's up already 1%. $4 on GLD/GC, up 37 bucks. What do you want to do?
So this is from, I'm going to say Chris on Reddit. Put credit spread. They're looking at
Cristo. He's
Cristo.
probably Greek.
Oh, yeah, there you go. Cristo.
Yeah, Cristo.
Put credit spread, 251, 246. So you're selling a $5 wide put spread. Short strike is around the 30 delta. Okay, risk for a smaller count with around a 70% pop. You had a great idea into the move today. You got a little bit of an up move today in gold. Gold up about 1%. We're above that 4,000 handle. Definitely a smaller sized account trade. I like it. Had a decent pullback after the rocket move up. Might be a nice buy the dip. Stay with the overall trend. I like it. I think if you're in a smaller size account, this is certainly something you can look at. It obviously stinks at the stock that gold is up, or GLD is up $4, gold up, a little over 1%. You don't want to, you wish it was lower.
I do.
Into this.
I do.
But I can play into that. I currently have a little bit of upside long delta here with a crab trade, where I sold some premium in November against long delta and long premium in December. What do you think about adding a little diagonal spread here to kind of play into this?
You could do that.
I was thinking like maybe
I wish you did it yesterday.
Yes,
which we were in a segment yesterday. It's not Cristo's fault.
Yes. Just because you got some call skew here.
I like it.
I'm thinking like the 380 in December, and then you sell the 395 against it in November. You do the whole package about it's $6.48 debit, and it gets you about 22 long deltas, which is kind of similar to what your delta would be if you were selling the 30 delta put or around there.
Mm-hmm.
You like it?
I like it.
Bless it.
I like it. I give it my blessings.
Yeah, good. Oh, 649. We're in.
Ooh, beautiful.
And this will hedge us against your junky iron condor that you put us in.
That's become a bastardized iron.
I mean, your roles.
Sell the top, but buy the top, sell the bottom. I told you I'm the world's worst.
It's a new regime. You could take some directional exposure sometimes.
You think so?
Yeah, you can.
So?
It's okay. This market moves fast. Sometimes you get bailed out. You got to have some direction.
Yeah. Thanks for the hindsight. I appreciate it. Nobody's a better hindsight trader than you. Actually, I met a better hindsight trader than you, but I'm not going to mention him right now.
Next trade here. CMG, what a dog this thing is.
What a dog.
Have you looked at CMG?
CMG has not participated in anything.
Anything. It's dead. After
ID
the
rank
split.
of 67 is good. It has earnings after the market closes today.
I think this was a bad split. This was too much of a split. You got to be at the 100 mark. The 100 mark is the sweet spot where you can get some volatility in those options, where it's tradable. I think here, I think it was a 50-1 split they did. Because I think it was like $300 or $3,000, $4,000 stock at one point.
Horrible.
I think it was a 50.
But lower since the split.
Something like that. Stock hasn't moved, and you don't have the gamma aspect to it. It's just like, so bullish CMG. Okay, this is Kevin, Charlottesville. Price back to 2023 levels, due for a rally. CMG
it's due.
Earnings after the close today.
Yes. What do you think here?
What do you think about?
Unlike gold, this has not had a move that's going to change your opinion here.
So, what do you think about a little bit of a wheel strategy here? You got earnings after the close today. It's a $40 stock. It's a pig.
Mm-hmm.
It's kind of like Verizon. Like we traded Verizon, long stock. If you're bullish here and you think, you know what, I'll buy it if we're at lows again. 52-week low is 38 and change, 38.30. You say I'm gonna buy it there.
Okay.
You could sell the 39 strike put for this week.
2 days to go.
Trades at $1.
Expected move is $3.30. It's trading at 40.5. Let's say you're halfway between the move.
Yeah.
You're getting a credit of around $1 and change. So if it moves lower with 2 days to go, how much premium is going to be left in that put? Not a lot, 50, 70 cents, something like that. So you're looking at straight. Yeah, I don't hate it. You got to
take stock, and if it goes lower, you can take stock. You sell the at the money call, and you say, okay, we get back to 40, we're out.
All right. Your brother would be happy that you're making this trade. He's a big Chipotle fanboy. I'm not a fan, but
I'm not a big fan of Chipotle either. I mean, I think you go to a local Mexican spot and get some real food.
Yeah.
This is
no bueno, as
we're gonna get filled at
my friends would say.
115 here. All right, we're gonna sell a 39 put. We got filled at 116. We'll hold that through the end of the week to wheel into that. Show that whole process too.
Very good. All right.
Assuming it goes down, I'm hoping it goes up. Because then I don't have to do anything.
Showing you love.
CMG, we're in. Short put.
Awesome.
Potential wheel.
Even the S&Ps near their highs up 22.
Cancel crash. LE, is that's not lean hogs, it's cattle, I think. Yes, live cattle. They were limit down for 2 days.
Yeah, this is not. If I'm going to trade a commodity, and I stink as the world's worst commodity trader, I am not going into lean a live cattle here, as it is one of the biggest. It's like going into nat gas as opposed to oil.
Wasn't Pete in the live cat? Didn't he do a stint in the live cattle pits? I know he's been around in like all of the.
It's like live cattle. What do they call those? Cow pies. He was everywhere, all over the city. And he was like one of those.
Isn't there some trade where you do the
Widowmaker?
No, the Widowmaker. No, but with live cattle, like you trade like soybeans as the feed or something. One of them, or corn.
There's the crush. You can do soybean meal versus
meal, but then you do it with the hogs and the live cattle.
Yes. Pete would do all of those things to us. Not
Yeah, we're gonna have to bring him back for that. Speaking of, I hear Lil Birdie saying that Closing the Gap Futures edition might be back on some capacity.
I love it.
Soon.
I love it. That'd be awesome.
CME. So we'll see. Teresa in Switzerland, we are gonna pass on these. It's just a little bit past our brain power.
Mm-hmm.
Next slide.
So
we're gonna pass on the lean hogs, or on the live cattle. I'm sorry. Roblox. All right. Bullish. Ooh. Roberto, south side of Chicago and the Netherlands, because they're certainly not the same places. Those two places, big difference.
No.
October 31st. So we're going Halloween, spooky season. Earnings play, selling the 30 Delta puts expiring end of the week. Ooh.
Oof.
What do you think about this?
Oof. Roblox. I don't know. $132 stock. Great IV rank in here.
The 2-day 30 Delta puts. Have you looked at them yet? Don't look. What do you think?
Say again?
The 30 Delta puts in the 2-day.
Oh my God, I wouldn't know how to price them. What's the monthly implied volatility in there? Can you give me that?
Oh, you got the monthly is about 90%.
What's the implied volatility there? Like
in the 2 days
or something?
230% implied volatility.
Oh my God, these puts are going to be $8, $7, $7.50, $8.
$5 at the 30. Yeah, $5-6.
2 days?
2 days to go.
What strike?
Like the 120 puts.
Oh, 120. I thought you said 130. Sorry.
No.
Sorry. 130s are $8.68,
$8.90.
Yeah.
But if you look at like in the monthly, they're $8. I mean, you're right.
Yeah, unbelievable.
What do you think here?
Expected move of $19 over the next 2 days. I don't love Roblox that much.
Yeah, this one's spooky.
I mean, if they're bullish on this, right?
Yeah.
I mean, so if you're you want to go into November with the earnings coming out tomorrow?
I think they want to do the October 31st.
October 31st. October 31st would be the 2 days. I think if you do like a put ratio spread, you might be able to do something there. You got a $20 expected move that brings you into the teens at least.
Mm-hmm.
So like the 120, and again, markets are going to be wide in here. The 120,
115.
Yeah, I was going to say 120, 114 even, but 120, 115, something like that.
Yeah.
Maybe. I mean,
I kind of like that.
119, 114, you can get over $1 for it. Again, you're going to have to be selective with your pricing in here. Markets are 50, 60 cents wide. You're going to hate yourself being stuck in this one. It's going to be a nice trade for you for a long time.
I know. But that's the fun of it. You got to,
Yes, yeah.
I put it in at 175, and
What are you doing? What strike?
I'm doing the 120, 115 put ratio spread in the 2-day.
Got it. Markets are 60. Yeah, mid price is probably pretty close.
I think I'll be at 150.
$1.45 probably. If I had to guess.
I'm gonna go down to 150 and let it sit, and that's my price.
That's my price. I'm sticking to it.
Yep. No fill there. We'll let you know if we get filled on that one. But thank you,
All
Roberto.
Right. Awesome.
Next one, please.
Next one.
ETH A, neutral, November, Mike in Salem. No directional bias, strangle. I would say if you don't have a position on, I would start with this, or maybe sell put, or do a meteor put to further out of the money call. You have call skew in both ETH A and IBIT, and I lean long, so that's my bias here. I am long and locked and loaded. I just closed out the calls on both ETH A and IBIT this morning. That's my position. I'm not going to add any more to it. I'm pretty full.
Very good. Volatility staying bid here. That is something that we talked about earlier this morning. We also talked about not doing the 0-day. 0-day in SPX now 33.5. So that's actually expanded into this move, relatively $10 move in even the S&P. So I think a good no trade there, and also a good call on volatility staying bid throughout the day.
Yeah. Where are we at on our B? Oh, now the stock's up. Now they're pumping vol into that. In BE. It's up 22, 135. So gotta sit. I still got that $7 order in. We'll see.
Okie dokie.
All right, next one, please. Amazon bearish. Come on. Chief in the East on Reddit. October 31st. How about an Amazon call calendar spread? I put on
that.
So they put on the 227.5 short call for the 31st, which is this week, and then long the 230 call. You're basically flat delta because you're selling a closer. You probably did this when the stock was a little bit lower, but typically with calendar spreads or diagonal spreads, you want to be at the strike or further out of the money because you want it. This is sort of like a non-directional trade. I wouldn't even put bearish or bullish here. Like a calendar spread or a diagonal spread, when we set them up, they're directional with at least a small amount of delta. If you're doing a calendar spread, you go to the 40 delta for the long option and you sell that same strike in the shorter duration, you're going to net out 10 to 15 deltas. So you're slightly long delta. You want to move towards that strike. So you're kind of all over the place here.
You are kind of all over the place here.
Yeah, this is one of the trades where you probably do this for a small credit even, because your risk is really that embedded 2.5 point spread that you have, as opposed to the calendar spread, which you probably do for like a $2 debit. You have the $2 inversion or spread there. Yep. You're all over the place here.
You're all over the place here.
Back to this. I don't know if I'm going to lean bearish here. I have an upside play here. I did like an upside calendarized ratio, aka the crab trade. So I'm long the 230 call in December. I'm short 2 of the October 31st 240. So it's a call ratio, but you have shorter dated short premium. That spread is basically unchanged. I'm out about 40 cents into this move, but that's going to change quickly with earnings coming up here. It's going to be, it could be a big swing here.
Big swing one way or the other, yes.
Yeah, I mean, your risk is above like 245, a new high. Man, do we add to this? I feel like Amazon has not had the same participation.
Not at all. Amazon earnings come out tomorrow after the close. You actually could wait if you're looking for an earnings trade. I think you have enough position. If you want to wait, you can wait.
No, we're not waiting. What's your assumption? We're slinging
it. It hasn't participated.
And we don't have a ton of
position.
position.
It went from like 215 to 230. It's not at its highs of 240 and change.
Yeah, but when you look at like Microsoft, that's up 200%.
No argument. No argument.
Yeah, then don't.
No argument.
Don't argue with me. I think we do maybe we sell some premium here. You want to sell put here?
Okay. You're the young gun. You want to sell puts in here? Sure.
That's scary.
I'd rather do a put spread.
Oh, what are you at?
Why don't you do a diagonal spread? You like those?
Yeah, I have.
That doesn't give you that tail risk of that Amazon can give you. It won't give you the instant gratification or as much instant gratification as you would like.
I think I want to sell the 210 puts. November 21st. So you get a little bit of duration here.
Okay, I love it.
About a 20 delta. I have the upside play with the crab trade. It has a little bit of upside risk, but I think this is where we're going to go. We need some. I don't have a lot of short premium on.
No, you don't.
325.
Very good. Very good.
All right. Next one, please.
You can always sell a call against that eventually if you wanted to. You can always roll it out. You did the 23 days. If you get in trouble, you can take it from November to December.
No problem.
You know, you're not like stuck in a position on like the 1 days.
Yes.
That you're kind of in it to win it kind of thing.
Starbucks, Austin, in Boise, S-Bucks, has gone pretty much nowhere.
Pretty much nowhere.
Earnings play, thinking about long earnings diagonal, want to sell the front month calls, but what's the best back month to buy? I typically go to the 50-day just because it's a little bit lower implied volatility, but you could do either one. I mean, it depends on how much capital you want to put out there too. Right. I mean, the cheaper, the shorter dated options are going to be cheaper. So, you want to pay $2 instead of $4, you go to the November expiration. In terms of the decision-making here is mostly about the short option. Where do you put that? And I usually go somewhere around the expected move.
That's right.
So let's call it the 90 strike. You sell it at $1. You want to go out to December and buy like the 85. It trades at $3.12. So your max risk is $3.12. You probably got about $2 of potential upside if you get to a 95 strike. If you go nowhere or go a little bit lower, your short-term risk is probably about $1. Like you risk $1 to make $2.
Yep.
And it's a roughly 50-50 shot on entry, but you've got $1 of extrinsic value that goes away at the end of the week. So if you get a non-move, you're probably up $20-50.
Correct.
All right, so let's do it. We'll do the 85-90. So we're going to December, buying the 85, and then going to the 90 in the 2-day. I also have another one that I've had on, just to give you some context. I did the 90-85, and we could view this on the market snapshot. I did the 90-85 when the stock was at 86.
So the snapshot, explain what it is. It really shows you where you put on these adjustments in the position, correct?
Yes. So you click. So this is, I just popped this window out. This is the order chains. You right click on your order here and you go to the view market snapshot. It'll pop out this window that gives you an idea of where your trades were at that time. So you can look at underlying price, IV rank, all sorts of metrics. So volatility has expanded a little bit going into earnings, not a shock. Stock is down about $2 on from when I put that trade on, which doesn't sound like a lot, but on an $80 stock, it's a pretty decent move. I mean,
sure.
Today the stock's down $1. It's a little over 1%. It's down 2-3%. There's my Roblox. Ooh, God, and I got price improved. That's scary.
You got price improved on an order that was sitting there, right?
That was sitting there at $1.50. That's spooky. They're like, oh, this guy's a Johnny. So I'm only out
because Roblox is unchanged now, up 27 cents.
Yes. So I'm out about 40 cents on a $2 or $3 down move in Starbucks over that period of time. It just tells you about, the extrinsic value decay that you're getting from that shorter dated option. Got caught with that Roblox fill. I will get that one through. So I'm gonna put this on. I'm trying to get filled at like 318, 19, something like that.
Even the S&P's up 17. They just had their biggest move lower of 10 handles over the last couple of days.
Are you scared? Do you need me to hold you?
Not yet. Volatility up 8 cents. Russell
got price improved by 10 cents on that trade. And that has long delta.
Right. It has
into an up move. which means they're pumping some vol.
They are pumping vol, right, in 230% volatility.
Yeah, it means going to 260.
You have almost a $20 expected move in there, which brings you down to 121, 122 in Roblox. That's what you're talking about, right?
Yes.
Let's put this up. Let's just show you what you did here. So you got $20 expected move here with the stock at 132. Let's just round up. Your break even on this trade is $5 plus the credit you receive, which brings you down to 110 plus the $1.60, which brings you 108.5. We'll just round, which is just about the expected move. That's why you have an almost 85% pop. So I like the trade, the way it sits.
Yeah.
The price improvement just means that there was one side of that had a customer order that you were able to get filled on. The other side was able to hit the bid or take the offer. That's what it came down to.
Very nice.
Beautiful.
Next trade here. QQQ, OK Avocado. This is from Reddit as well. Bullish November.
Everybody's bullish at highs. Everybody.
Well, they gave us VST and Nvidia, which have both been home runs.
Who did VST yesterday for his
OK Avocado.
Who did VST yesterday?
Oh, you did.
That's right.
Intraday. You did it with a diagonal spread. I like to see this new you. You're glowing.
Bought the low in VST.
Happier.
In an hour, we made $200. I took it. I think the trade would be up.
You ever made $200 before? Before that?
Never
before that, you'd have to brag.
Before I met you, son.
Brag about the 20 cents, the 10 cents, 15 cents.
You're giving another $2 on that trade today with VST up another $6 or $7.
Too many Mag 7 earnings this week, bullish most. So using QQQ, diagonal spread with Ivy low, sell the November 7th, 650 call, and then you're buying the 240 call. So you're doing a call diagonal spread. I like this. I've got some long delta across the board. So if you don't have any long delta and your assumption is that we're going up, which I am of that assumption, I think you put this trade on, but I'm pretty good here. And I use the Qs as my short delta, and I get long delta in the single name stocks because I want the convexity of a Microsoft earnings.
Sure.
And the downside protection of the ETF itself, where it's lower volatility, where it's cheaper to play the downside versus, Microsoft, where you have those tail upside moves. So
it's cheaper to keep her.
Yes. So I'm gonna pass on this one, but I'm with you, and I will participate if this plays out.
Beautiful.
Next one, please. Thank you, OK Avocado. Charles Stewart. Okay, this is another Reddit question. Google or Meta, Google/Meta, they don't know. Short term, waiting for for Fed Chairman Jay Powell to go. Pow! I want a nice fat volatility run up after the Fed announces so I can sell credit spreads on Google and Meta for earnings today. Both of them have had nice 10-point IV drops historically the day after the announcement. So you're kind of playing for the volatility to stay bid. Ideally, Google and Meta being up, and then you're going to sell some premium here. I don't hate that idea. I just can't do it right now because I got to wait for those moves.
I agree.
Google, I have basically flat delta. I have long delta in Meta. So I'm with you. If this happens, I will think of you, Charles Stewart, and I will put those trades on.
I will have you in my dreams,
I will mention you, Charles Stewart. And on Reddit, I will post them if we do it tomorrow. If we get these moves, I will call you out. You got it, Charles Stewart.
I love it. I love it. Good job out of you. How many did we get there?
We got a ton. I don't know if there we go.
Okay, we got a crackerjack team.
Yeah. They're a little off on this. I mean, John gets like that applause is for you, John. You did good. Not a
participation profile.
Yeah, you get a participation trophy.
It's all Kai.
Oh, Kai.
Damn.
Kai on the,
You're there, Kai. You're there. The diagonal spread, the QQQ, we're with you on that assumption. So I will give it a check mark. So we got 9 of 10. We passed on the live cattle. That one's just, a little. I don't need to blow up this account with the live cattle trade. So
good job out of you. Good job out of everybody at home for those trades.
Yes.
We love it. Even the S&P's up 16, NASDAQ up 125, Russell down $1.10, small move in the Russell, Dow up almost 200, volatility up 12, bonds are down 6 to 118.28. We'll take a quick gold up $48. We'll take a quick 90-second break and come back. We got more Tasty Live after this with the skinny on options. Matt, my man Jacob next is Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nigga, we are back, son. You know what that means. Time for a little bit more Tasty Live with this man, Jacob, the skinny on options math. What's up, Jacob?
Good morning. Not so much is up. How about you two? Oh my gosh, the soundboard.
You're welcome. We're better now that you're here, my friend.
You never got that before, Jacob.
No, truly, though that's new technology.
It's a friendly regime here. Applauses.
The laugh track too.
Yeah, the laugh track, the like we get those. Yeah,
we give you everything.
We really need Tasty Live to be filmed in front of a live studio audience. That's what's missing.
Oh,
we've done that once. It was great. I think we did that at a money show. Yeah. It was a lot of fun. A lot of fun.
Yeah.
You get any hecklers?
No.
Oh, that's good.
No. Not at all.
No.
I guess our peeps are nice.
Well-behaved
viewers
we have.
Mm-hmm.
Yeah.
Mm-hmm.
Yeah. They're all shy.
Yeah.
No. I mean, most people who write in to us, I know you're doing live studio words was the question. You know, we have the same positions that they have on, and if it's not working for them, it's definitely not working for me, and probably, larger than you. So they're sympathetic. We want to know, like, what can we do to mitigate, not hey, you stink kind of thing, because we know we stink. So it makes it easy.
Yeah, that's we know we stink is the new tagline of the network.
Yes, that's right. Uh-huh.
But we're getting better.
We're getting better.
We're getting better.
We're learning.
We've learned.
We're showering sometimes.
Yes.
Yes, for sure.
Oh dear.
What do you got for us, my friend?
Let's talk about math. Today, what we want to get into is just one of the clear ways to see why the 0DT market is so wild and different.
Okay.
Is the fact that it violates one of those rules that everyone gets taught in grade school, which is you're not supposed to divide by zero.
Yes.
But in the formula that show up, there's a lot of time until expiration terms where we denote it with a tau or a capital T minus little t, and that term goes to 0, and sometimes it's in the denominator. And pretty much those are the features which are going to like get really wild at expiration. So I sort of wanted to run through them. We'll look at the Black-Scholes formula. We'll think about how Brownian motion applies to this whole thing. But the general idea is we're going to like dial in on how the 0 DTEs or just the right as expiration approaches blows things up because it sticks zeros in the denominator. Or occasionally it doesn't. It's called residue analysis is the very fancy term for what we're doing today. But it's largely just calculus 1.
I passed that one, just so you know, calculus 1.
Nice.
And 2.
You remember L'Hopital's rule?
I don't remember any of this. I don't remember. I feel like I just repressed all that stuff. You know, those days. It's back there. Yeah. It's back there somewhere. All I know is this world. This last like 10, 15 years. I've been trained well.
Last 10, 15 seconds. You're like a goldfish.
That too, 10, 15 seconds, yeah. Past that, like the dead zone is like between 3 days and like a week. Like I don't remember that stuff, you know. After that,
you
like
have a spot on memory for all the wrongs you were dealt as a small child.
Yes, exactly. Yeah, it's his fault, no doubt.
Yeah.
Everything
that's
is
what
my
keeps
fault.
it fresh in your mind. The reminder right in your face.
Exactly.
All right. Yes. So let's be a little more specific. Go forward one. Yeah. Right. Everyone learns in grade school not to divide by 0, but as expiration approaches, that is exactly what is happening. Thankfully, calculus. Oh, that 0 over 0 got moved out of place. But calculus is the tool mathematicians turn to when it comes to figure out what is a 0 over 0. Right. You're not supposed to divide by 0. If you divide a positive number by 0, you get infinity. Is a very sloppy way of looking at it, but has more validity to it than some teachers like to put on their exams. So a lot of people just put minus whatever, but it's not the wrongest thing someone can say. So the Black-Scholes model isn't exactly accurate, but we've gone over a number of times sort of why it's useful. And so while we don't think its formula are precisely true, we can look at them for sort of where they blow up or shrink or fall to 0 and get a good idea about when that really happens. That those aren't like idiosyncrasies of the Black-Scholes model. Those are real features of the market that it captures. It's the specific numbers that it outputs that might be wrong, but like the general shape of the things that it implies are pretty accurate. And so we'll use these formula to let us get an idea about what's going to happen. Let's go forward.
Whoa, look at this. You got a nice little... You're really zooming in here now.
Whoa.
Yeah.
I like what you did
this
here.
is an animation to demonstrate Brownian scaling. This is a thing I've mentioned a few times, but we have a sort of pictorial thing, which is that if you take a constant that's not 0, and you scale down the Brownian motion, right? Divide by 1 over c its size, but speed it up by c squared. So it's right, the time factor has the c squared feature. This is called Brownian scaling. What you get is something that's distributed almost exactly the same. So like you can think of that if c is a big number, that means that you're shrinking it down, but speeding it up, and you get the same thing at the end. Or, and this is more what we're doing today, we're taking c to be a small number. So we're blowing it up, but slowing it down. And those also come out the same. This like fractal self-similarity property means that as we zoom in, nothing really changes about the shapes of the paths. The things we expect to find are there. And while, like we say, the Black-Scholes model isn't exactly true, Brownian motions don't precisely explain things, it still should be continuous martingales. Continuous martingales are time changes of Brownian motion, which means that on a very small scale, right? While volatility isn't constant, over a small amount of time, you can think of it as being relatively constant. And in that sense, it means that on a short time scale, Brownian motion is a pretty good model. So this sort of shows you how to blow things up and shrink them down for all the c's that are not equal 0. But at actual 0, we're going to need to zoom in further than this infinite zooming animation that I have. So let's go forward, and we'll start on that process. We'll start with delta. So delta is our most fundamental Greek. It tells us, our sensitivity to the underlying price. And we see that the actual Black-Scholes formula for it has a bunch of complications sort of all bundled inside this normal distribution, this normal cumulative distribution function. So that's the probability that a standard normal random variable is below the number inside the parentheses. And that number inside the parentheses is sort of big and messy and includes a couple of taus being the time to expiration. So the key thing here is that the numerator also has a tau in it, but only on one of the two terms. So if that left-hand term isn't 0, right, which means that we're either out of the money or in the money, so that S and K are not equal, so that log of S over K isn't 0, then that right term, the sigma squared tau, that's going to 0, and the log term is going to dominate. So now we have log over something going to 0, means that it's going to either plus infinity or minus infinity, which is to say that and the probability of a normal random variable being less than minus infinity is 0. If it being the probability of it being less than positive infinity is 1, and that's where we get the fact that for out of the money options you always get zero delta near expiration, and for in the money options you always get 1. But the tricky business comes right at the money, because right at the money that log term is also 0, and now we've got a tau over square root tau. Tau over square root tau is square root tau.
Have you been to Tao restaurant? It's awesome. By the way, there's one in Vegas. There's another one in New York. I don't know if it's still open. That was great.
No. This is the Greek T, Tao. We use T to represent time, and Tau represents backwards. Is time until expiration, so it's backwards time, right? Because it ticks down instead of ticking up. But other than that, it's about the same. But so what we get there is that it's going to the normal distribution, cumulative distribution function at 0, which is exactly half. Which is to say that you get this effect where out of the money options go to 0, delta goes to 0. In the money options, delta goes to 1 or 100, depending on how you phrase these things. And then right at the money goes to 0.5 or 50 deltas. And then this also tells you what's going on with gamma, because delta has to do this discontinuous jump, right? 0, half, 1. And discontinuous functions aren't differentiable, but right before it reaches the discontinuity, it's a very steep version of that. And that means that its derivatives are also very steep. And gamma does this thing. Actually, 2 slides will have an animation where I can talk about what gamma is doing. But what gamma is doing is it has this S shape to it, and it really spikes close to at the money, but not quite at the money until right expiration, where the 2 spikes crash into each other. And everything explodes and is nice infinity and positive infinities. But so those are deltas, and this is the key feature here is that we've got this sigma square root tau in the denominator, but inside the normal distribution function, which means that you don't get minus infinity and positive infinity, you just get zeros and ones.
Okay.
And let's go forward now. We'll do theta next. So the full Black-Scholes formula for theta is this kind of very cumbersome looking 3 terms, pluses and minuses. Those are for puts and calls. But we can simplify it a pretty good deal if we recognize the fact that near expiration, we don't care about the risk-free rate or the dividend rate. Those are going to not matter that much. So we'll set R and Q to be 0, and we can drop a couple of these terms out of this sort of messy function. What we're left with is this sort of funny thing, which has an exponential of negative 1 over the square of a tau. It's that same term from delta from before. But then it's got this other square root of tau just in the denominator of the whole thing. So now we can sort of see what happens, right? If we make tau small, the denominator is getting small. It's got square root of tau in it, which means the whole thing is getting big. And that top term is staying relatively bounded. The exponential is doing that for you, while tau is small but not super small, which means that theta gets big, right? Which is to say what we know, which is that the 0 DT options at market open have a lot of theta in them, right? They have to lose all of their value between now and expiration, or all of their extrinsic value between now and expiration, which means that their theta has to be essentially their entire value. But as we approach expiration, we get this thing where theta gets to be very small, or tau gets to be very small. And now we get, again, the question of, is S over K 1, less than 1, or greater than 1? Because that determines if the log of it is 0, less than 0, or greater than 0. And that, again, matters for whether or not this other term gets to play a role. Because if it's exactly 0, then the whole thing gets to play a role, and the theta explodes. But everything else, you've got this negative exponential square term that's going to 0 much faster than the denominator goes to 0. Even though we have 0 over 0, the top 0 is way smaller for very small taus. For people taking their Calculus 1 at home right now, this is a great thing to do L'Hopital's rule. It's the end of October. You've probably covered it. You've done limits. You've been working L'Hopital's rules examples for several weeks now. It's perfect. Take theta as tau goes to 0 and divide into the 3 regimes of in the money, out of the money, and at the money. And what happens there is that the theta actually goes to zero away from the money, right? Because those already lost all their value. But right at the money, it's blowing up. Except right next to the money, it blows up. Right at the money, it also falls to zero in the last few moments, because just there's no value left in any of the options 30 seconds before expiration. So there isn't really anything left for theta to do. Let's look forward. Got another animation on the next slide.
Okay.
So this is, I keep talking about like at the money, close to at the money, out of the money. And it's important to remember that concept itself needs to be flexible with the amount of time left, because you really want to think about it in terms of how many expected moves out of the money is an option, not how many dollars out of the money. Because, right, what we have here is a shrinking normal distribution. So if we think that the returns between now and expiration are going to be normally distributed, that normal distribution has a standard deviation. That standard deviation is the expected move. That expected move includes a square root of time term. And so what happens is that the normal distribution gets tighter and tighter and tighter. So that like red line that represents, starts off as a pretty close to the money strike, rapidly becomes essentially an almost completely out of the money strike as the normal distribution tightens in and it becomes in the wings. So this is what's really key to doing these things, is you don't want to consider your options in terms of like dollar amounts out of the money. You do need to consider dollar amounts for your width of your wings, because that determines your risk. But in terms of like the probabilistic features, dollar amounts are always going to be misleading. What you always want to do is try to translate everything into multiples of the expected move. And that way you can be more flexible about which expirations you're considering, right? If you consider a 1 expected move strike on a 45 DTE option, on a 1 DTE option, on a leap, those are all going to have very similar probabilistic features. Whereas like $50 out of the money is going to be entirely different on those two things, right? It's essentially a zero delta on today's options, and it's relatively modest on it's relatively close to the money on a leap. So the point here is that you need to be able to contextualize what is the zero, right? Because the expected move is also going to zero as we approach the expiration. Yeah.
We're quiet because we haven't found anything wrong with what you've said, so you're okay. You really are talking about delta
I do
change here, right?
Fact checking me like this.
Yeah.
But I think overall, I mean, what you're getting at is just with shorter dated options, the values that you're seeing are very binary. Like the $100 in theta on a 0-day option is way, way, way different than $100 of theta on a 40-day option. And you have to kind of look at the Greeks in that context if you are trading in these 0-day or very short-term options. And that's across the board with all of your Greeks, from delta to theta to gamma, volatility. If you have a 50 delta option that's in short term, it's going to 0 or 100 in the next 2 hours. Your overall delta can be way less in the span of an hour than what it was, previous.
And your gamma is going to be insane.
Yeah,
that's the real key. Is because your delta is so unstable for these really close to the money, really close to expiration options. That unstable delta means that the gamma is just out of this world high.
Yes.
Yeah,
which is part of the reason that
which means you can go from like
level,
zero.
The BPR requirement for zeros is kind of crazy, because like you're not going to get a 20% move in SPY in a day.
Right.
Yeah.
It's also not that crazy, because really a lot of the models and theory and like risk management tools that you would want to rely on become a lot less usable. And so just essentially what it does is it just forces all short-term trades must be defined risk because of the way the regulations play out. And that, while not necessarily the best motivated, turns out to be a pretty good idea.
Yeah.
Yeah, and that's why your delta will go from, 0, 10, 15, 20 to 80, 90, 100, in a blink of an eye, or really just the movement in the stock. And you have to be really sensitive to what the stock price is. Like delta becomes, it's absolute, of course, but on 0-day, 1 day, just outside the money could be 0, just in the money could be 100. You know, you gotta be very careful with.
Well, you can get caught if you're trying to like manage your
gamma
portfolio.
scalping that from positive or negative.
Well, and if you're not taking that into account, that your numbers are skewed, and you're like, oh well, I have too much long delta, I have to reduce delta, and you roll down.
Especially if
calls.
you're beta weighting it against all your other positions.
Yeah, and you're rolling down calls 45 days out, and then all of a sudden you flip from very long delta to very short delta because your at the money SPX put spread goes from in the money to out of the money. I mean that can change it hugely.
All right, we got a feature request for the platform now. We'd like to be able to separate out our 0 DT, like a 1 DT position, so that they don't count into our portfolio theta and beta deltas and stuff. Those should just all be like viewed separately, because if you try to include them, then the numbers stop meaning anything because they become so wild.
Right.
Very good. I was expecting you to give me the Tom. That's a great idea.
Let me look into it.
Let me look into it.
Let me look in. So as expiration approaches, the models tell us to expect many aspects of the options to accelerate. Despite the unreality of a pure Black-Scholes model, you can use the Black-Scholes formula along with the L'Hopital rule to anticipate how things are going to go. That out of the money and the options are going to rapidly approach their intrinsic values, and at the money options are going to be the most wild things that you can possibly be trading, right? Just selling, buying and selling at the money options right next to expiration is the most juice that there is. As a trader, I think that you roughly have 3 choices about how to deal with this, right? There's sort of the traditional close your positions early and don't worry about it at all, not your problem. There's accept that expiration is going to come, go get some coffee and, smoke a cigarette and see what happens. Or stay incredibly attentive to your platform, right? Manage your trades really closely and watch out for, make sure that their deltas, right? Don't look at your portfolio. You need to manage them on a per position basis and really stay there on the thing. And any of those 3 options are, in an efficient market, totally valid choices, but you need to be conscious about which one you're choosing.
Very good job out of you, my friend. What can I add? Not too much. So I'm going to let you go. You did a great job. We're going to take a quick 90-second break. I checked all your work while you were doing this. You did a great job. I thought there was a mistake.
Yeah, it's important.
Mistake or two there, but I was able to see that there was no mistake. We'll take a quick 90-second break. No mistake. We got Quentin and Ryan coming in after this from the trade desk. This is Tasty Live. Good job.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live. We've got this man in the house. My man Ryan, what are you doing first up?
I know, they switched it up on me today.
Good job out of you. You're number one seed.
Climbing the ladder, Tony.
Climbing the corporate ladder.
No, you're at the top. Come on.
Oh, there we go. See, that's what I like to hear.
Top. We're
Stool, maybe.
No. We're at the bottom. The bats, they stay at the bottom. Working man.
Not true.
I'm working it, boss. I'm working it. How you been, Ryan?
I'm good, man. How are you doing?
Good. Better than this crypto Uptober's doing.
No. We added to the October today because we took off our short calls. We scalped out the short calls, so we got even.
Markets are dynamic.
We're so freaking ready. We still got 3 days left of October. 4 days, right? 3.
30 days has September, April, June.
2 days, including today. 3 days.
That's correct.
3 days. We got 3 days.
But currently flat to lower October.
Yeah.
Yes.
Which is okay. It's not like
okay. I kid you. I mean, I make calls all day long. I mean, I had a gold position on.
Yeah.
The only position
His
I
calls
have on that's
stink.
a loser. It's the only thing
I might have to change
every freaking day. I might close it and take the loss just so he can't mention it.
I might have to just change the password on this account because having him have access, it's too much of the old regime in there, and it's just not good.
The old regime?
Yeah.
Oh,
Wow.
Ooh.
Very little love. That's okay. That's bound to happen.
That's all right.
That's all right. It's a proud moment when it happens. That means the young gun is going out on his own. It's good.
Yeah.
It's good.
Yeah, don't like lions like.
He's
kill
been
their
on fire
parents
lately.
afterwards?
We'll wait.
Yeah.
That happens to us.
I am due for some pain. It has been. It's been too smooth the sailing for me. Yeah.
It has been.
Yeah.
It has been. Anyway, what do you got for us today, Ryan? I apologize. We digress.
No apology necessary. Guys, I got some updated expected moves. I mean, nothing has really changed. We're waiting for the Fed to come out and tell us they're going to cut interest rates by 25 basis points. And
the non-event event.
Else. The non-event event, I think it's 100% probability, almost zero probability of a 50 basis point cut. That would seem extreme, but I guess we've got to hear what Powell and gang have to say during the press conference. But as you know, kind of quiet ahead of those events historically.
Yes.
So not much of a change to our expected moves here. One thing I will point out, ETH vol up a little bit. So those IV ranks are trending higher on a short-term basis, but implied back up over 70%. Bitcoin expected move for the week on a 7-day kind of forward basis here has come in a little bit, 106, 120 or so on the upside. ETH, same thing here. It's been about a $400 expected move, 4,400 about, and 36 on the downside. Solana, SUI, XRP. XRP range has been trending a little bit higher here, so you got a higher low in that expected move, and you have a higher high. Generally kind of a bullish sign there. But we shall see. I mean, it all depends on what's the market reaction. We've talked about how positively correlated and just how strong those correlations have been between all risk assets, really, whether, equities, crypto, tech stocks, crypto. We'll see how things move after this announcement. And as we were talking about earlier, before the show started, I think the bigger catalyst here potentially for price action one way or the other is whatever comes out of the U.S.-China trade talks. It could be positive, it could be negative, but I think that's really the catalyst for more volatility, at least in realized terms here.
And that's Thursday.
Specifically in crypto.
So that's another thing that's on the docket for this week. This week is action-packed.
Yeah, and again, volatility unchanged here, 1860 on the overall market, not in the crypto market, and the expected move has not changed. 9:43 in the morning Central Standard Time. Expected move is still $33 on the daily with the 0-day option. So hasn't moved or actually expanded a little bit. So you're getting paid for time going by.
Yeah.
Not getting paid for volatility contraction.
What do you make of the spot up, vol up right now in the S&P?
Nothing. With everything like he just mentioned, and you've got Microsoft and Google and Meta and all of them coming out with earnings, and JPAL talking at volatility at historic lows or monthly lows at the very least. It had no place to go. What you're looking at here is, are we going to get, a humongous contraction after this, or is the market going to sell off and volatility not move?
Yeah.
That, and then you're going to get the opposite of what you have right now. Market sells off. Now, if the market sells off 90 handles, volatility is going to move. It's going to go up. If the market sells off 20, 30 handles, it might not move or move as much as you would think. And then you're going to get market down, volatility not down or not up as much as you would expect. Does that mean we're going to go higher? So right now, I think volatility, and I love keying on /VX as a daily move because that's what it is. But with so much background noise, you have to discount it right now. The S&P's up 11, though.
I concur with that thought. And I think, you've had... it's not a shock to see people kind of going out on the tails into what this week has with FOMC, China stuff. You've got all these big earnings. And I think on both tails. Like, I think in general, this is a kind of hated rally, a hated market. Everybody's been kind of like bearish the whole time about everything. And so I think this week, with all the things that are happening, you got people that have not participated that are now looking for, tail upside, convexity, the bubbly stuff, the bubbly play. And then you also have people that have ridden this wave that are like, okay, these numbers are huge. You have all
BE's
this.
it was up $30 just a moment.
Yeah.
Nvidia's up another $10.
But and you're seeing that kind of convexity in single names and not really in the ETFs. The market's moving higher and is performing well. But you're looking at Nvidia.
We were 69.52 on the E-mini S&Ps. I mean, you're basically on the other side of hitting 7,000. You were closer to 7,000 than you were 6,000.
Yeah, but you got $500 billion in Nvidia overnight. That's up like 5, 6, 7, 10%.
That's really been it, right? I mean, you look at market breadth, and it's just a handful of stocks. I don't know if you read into that as that cause for concern or not.
I saw yesterday was like the worst breadth in like 10 years or something.
I know, but that could stay.
But it doesn't matter because half the market is 7 stocks. So it doesn't, you could have the other 60 be down 1%. And if the top 7 are up 5%, we're net positive. That's what it is. That's the market.
We haven't seen this move yet in Bitcoin.
Yes.
And I have a trade idea for you.
Let's do it.
A little bit of a flyer, and then we can look at a couple data points. But what I find interesting here is we talked about using the ETFs as a way to get some levered exposure to prices. We talked about how you can calculate the equivalent per share value of the ETF given the approximate price that you're looking for on the crypto side. So 3,500 ETH was our example. What I'm looking at right now, guys, is going into November, looking at the 75 strike IBIT call option.
Okay.
It was trading about 55 cents, I believe, yesterday, 50 cents or so. It's probably closer to 40 cents right now. I know we don't typically go out there and buy premium, but it's tough to argue there's a lot of premium in these options if you do see some of these catalysts play out to the upside. That's a $130,000 Bitcoin price, which would be a new all-time high, but it's just about $4,000 to $5,000 off of the old all-time high. This isn't a Bitcoin's going to $500,000 in 2 weeks trade. This is, could you retake all-time highs? Is it relatively cheap to have that on? I would argue yes. And then what's interesting about it too is you look at on per strike basis, all of those vols as you go farther up, I mean, they're all priced around the same level, and you look at, they're all about 15-cent options.
Yeah.
And so you could probably get this down to 25 cents or so, and you could have maybe a 10 plus, 15 plus wide spread. But I like just having some upside here, knowing that, maybe there is a bit of a surprise, positive surprise, out of the FOMC, out of this China development, out of the government reopening. We'll see.
Do you think even into the... So this is kind of... the 75 play is obviously it's a 10 delta, 11 delta, so it's a low probability. But you look at this as a tradable event. You get a $10,000 move or a $5,000 move. This is a 2 or 3x option, or more.
Yeah, this to me is just really cheap upside. Another way you could view this market is through Polymarket, and you look at some of the prediction or contract markets, and it's super cheap right now to bet on something, in my opinion, that has a much higher probability than
the market's
10%,
giving it.
You know,
Yeah,
it's an interesting bet.
Yes, so there's like
good pot odds.
Yeah, a pot odds bet. Okay, so you like the 75s.
That would just be the $130,000 Bitcoin equivalent, and that to me seems like an area where you'd have to obviously hit and break through the old all-time high, but that just seems like kind of where you could go.
Yeah, but if you get
you have 23 days, I think.
Yeah, you get a $2,000 or $3,000 move here. Like you go back, like even if you look at this option the other day, hold on here. So this was trading, just yesterday was at about 60 cents, was like kind of the higher end of where it's trading.
Yeah.
That's on a $2,000 down move is a 50% increase in the value of this option. And that's because of the upside volatility and the gamma that you have in this. This is certainly not only just a play for new all-time highs, but this is like a trade where, you get a sudden pop and this option can go, up 50%.
Yeah.
Yeah, you're basically betting on the idea that vol at 43%
is
relative
low
to these catalysts and what could happen, right? And even if you look at that in terms of the range, it's a 24 IV rank if I use the Deribit volatility from the global options marketplace for Bitcoin for the spot price. And so I just think that's kind of cheap. It could get cheaper, of course.
Yeah.
But given that you do have some semi-binary outcomes or you have potential catalysts in the market, that to me is kind of interesting. It's like the game was priced a certain way, and now we just, people are kind of overlooking the fact that there's a couple of star players that are injured. Maybe the other team could win. I just think that the odds are a little bit better than maybe what the market's pricing in, and that 10 delta option changes if Bitcoin goes back to 116, which it was at like yesterday.
Yeah,
right.
So we know this stuff can move. It's just an expression on the vol. But that said, guys, really quickly,
He's in.
I'm in. 41 cents.
Don't sell past the close.
Yeah.
Really quickly before we wrap up, just a view of what we typically have seen post FOMC announcements, and we have the mean and the median on a 1 day. As you might expect, cuts are typically bullish.
Money printer go burr.
Hikes have been bearish, and a little bit of a mixed view here with holds. And then if you look at this on a 7-day basis, 1 week later, we've got returns that are, following cuts are closer to 4%. So you could get some movement here, obviously.
Yeah, but is it a buy the rumor, sell the news kind of thing? Because we've had those kind of moves already.
Yeah.
That's the $64,000 question.
We will see.
Good job out of you, my friend. As Bitcoin goes under 113, I make you completely responsible. Who is our next trade desk person? My man Quentin, what's up?
Fellas, how's it going? Apologize for my tardiness, but
Ryan was long-winded, but
you
he
get
really
stuck
came up with some
at
good
the
stuff.
real work. Sometimes you get stuck doing our actual job.
How is the desk?
So it's
he
good.
interesting?
A little quiet today before the announcement.
Yeah, quiet before the storm.
30 minutes after the announcement, it'll get really, really busy.
So you got to eat
All
lunch
the way
early
into the
today.
close.
Oh, yeah.
Yeah. With
And then all the way into the close, it'll get.
Yeah, no late lunches today.
What is lunch today? You wouldn't know because you're never here.
We got Bari sandwiches.
Bari, ooh, that's a good one.
Yeah.
No. You enjoy your half day. Okay.
Well,
I'll carry the load. That's why my back hurts.
For the Fed, how are you guys trading this move? Because we've seen this after the market tripped over itself. Now the market's just been skyrocketing up the past.
Apprehensively optimistic.
Yeah.
I'm not.
Yeah, so
I think some stocks have got exhausted.
Yeah.
But I am not short any of them.
Yeah, no.
Like I said about a week and a half ago, I'm going to miss the top. But I've been kind of riding the wave here on the rest of the market. So I'm going to miss the top. I'm going to give back some sort of chunk of change that's been making money to this. I'm going to miss the top. Usually I'm preemptive. I'm not preemptive this time.
I think we're 7,000.
You think so?
Oh, yeah.
I
It's
mean,
a tough
The stars have
one.
aligned. I've been saying it all week.
Yeah, you got a $30 expected move for today. For the week, you've got an $80 expected move. That brings you over. Volatility has expanded. As we've gone higher, volatility has expanded.
Yeah, which is rare.
So it's not a bold, and I'm talking about the E-mini S&Ps, not SPX at this moment. I mean, it's a bold call. It's not an unreasonable call with the expected move being all to one side which we've had. So, how do you say now's the day? You could have said yesterday was the day before was the day before that was the day.
Mm-hmm.
Yeah, well, Nikki, I would like to
have
push
reduced my
back
units,
against
though.
the 7,000 a bit. So if you look at what the market expects for the rate cut, it's 99%, 25 basis points.
Yeah.
Everyone knows
it's coming.
So, do you still think, even though the market's already gone up, you don't think it's baked in yet, or you think it's gonna keep shooting up? I mean, I'm just a natural contrarian.
Yeah.
It's tough to fade this entire time. It's been tough to fade.
Yeah. I just don't see it be. Every time we have an FOMC meeting, we know the probabilities because we're in the market, and every single time we have a huge move.
Right.
So, I just think we're there. It's the market is full on FOMO. You got all the earnings coming out today and tomorrow. I don't think there's going to be anything spooky in any of those earnings.
Yeah.
And that's the market. And so
I actually think volatility is going to stay bid. It's unchanged right now.
For sure.
I think volatility is going to stay bid.
Yeah, yesterday market was up, and then volatility was up too.
Even into tomorrow, because we've got more earnings coming tomorrow after the close. Too, so, yeah.
Yeah. Maybe it's a buy the rumor, sell the news. I mean, that's what makes a market.
Maybe it is, but I'm going to miss it.
Yeah. Yeah.
I'll react.
I'm not.
I'm gonna try
I
to
will
react.
react.
I'm gonna
Yes.
miss it.
But
Yeah.
I just don't. I don't see what's taking this.
I like
this
fading
down.
the first move after the FOMC meeting. That historically has done well for us. So if we go lower, it might be an easier pull to get long for some people than it will be if we go higher. But for me, I think it's
sure, because every dip is bought. I mean,
every single dip is.
Yeah, if you got 100, here's the litmus test. Because if on the Fed we're down 100 points on the E-minis, are you buying that dip?
I mean, with the way the market's gone, it's tough not to. Of course, personally, I would not buy the dip. I would probably.
Oh, give me a freaking break. That's what I'm saying is everybody's been waiting for the $500 down move, the 10% correction or whatever. Everybody's been waiting for that. We had a 2 or 3% move the other week, and everybody was like, nope, I'm not doing it. And now here we are. We're 5% higher from there. So it's like everybody wants this big move to the downside, and you're just not getting. I don't think you get.
I mean, when we see those small moves to the downside, I mean, to me that's like a way to sell a little bit of premium, but I don't want to get too bullish deltas on a single red candle, even though it's worked.
You're a young guy.
It's not my
zoom
style.
out. Zoom out on the chart. Go to the monthly, 10-year monthly, Quentin.
Yeah.
Okay.
I mean, red candles are just a glitch in the system. That's
even
what we
see
joke
them.
about on the desk. We'll be like, it's a bad mark.
Yeah,
red
it's
candles
bad
is a bad mark.
Yeah. We just got the color wrong.
Yeah, I mean, it's a tough market to fade. I think after our conversation just now, I might have to take a shot to the downside.
Okay. That's what makes a market.
We'll say, not trade advice. If you take the opposite of me, you'll probably be successful.
In all seriousness, we can have these opinions, and our trades, while we can lean long, it's not binary.
No, it's subject to change, and you've taken off some long delta.
Yeah, but when you're selling puts in Amazon out of the money,
yes.
If Amazon goes down, I'm not dead. It's not a binary move.
You're going to be down money on it.
You're going to be down money, but you have dynamic delta across your portfolio. So although you're long down,
that position limit stock.
Yeah, it's not like I'm betting the house on 7,000 today. We're positioned. We have,
so you can take
dynamic
a
delta.
high probability shot. You could sell the call spread at 7,000.
Yeah.
And then if it goes there, and
our options have options.
Butterfly, yeah. Options have options.
Options have options.
Yeah. Yeah, exactly. And so
give us your list, my man.
Yeah.
Of course.
Yeah, he's got to get out of here.
No, I got Liz and Jenny, right?
I know. But you got to get home.
I apologize. Top 20 symbols going through the system in their IVR. At number 1, we've got PayPal, 28, Tesla, 19, SoFi, 23, Nvidia, 27, UNH, 24, GLD 60, Microsoft 36, UPS 19, AMD 54, Amazon 42, CCJ 81, Apple 21, Meta 35, Netflix 16, iBit 48, Intel 49, Avgo 29, Google 46, Palantir 35, and Wolf with a U 22.
Good job out of you, my friend. My production team needs a couple of seconds here to get us zoomed over to Liz and Jenny. So we're
live from the SIBO.
Live from the SIBO. We're going to take a quick 90-second break and come back. Even the S&P's up 12. NASDAQ just went green, up 4. Dow actually caught a bid, up 223. NASDAQ
Russell up 4.
Basically unchanged from where it's been all day. 94, 97, up. We'll be back in 90 seconds. It's Tasty Live.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Wednesday edition of the Liz and Jenny Show. My name is Liz Dierking. The beautiful brunette to the left of me is Jenny Andrews. And it's loud here today. But we do have to go. We would be remiss. We have another shout out today because I got my wrong side. I got my pin back. We're wearing pink. On Wednesdays, we wear pink for breast cancer.
Yes. And for Esmeralda, breast cancer survivor, one of the wives of the guys on the floor here. So we've got our pink on today. You can really call us Pinky Descadero today.
That's Pinky Tuscadero. You slap twice and go like that. That's not a pink lady. Pinky Tuscadero, for those of you who are new, is from where? Come on, you can do this.
Happy Days?
Good job. I got it. It was the Fonz's girlfriend, Pinky Tuscadero. So, but we're doing it for breast cancer.
It is, it's busy down here today. There's not, SPOOs are up 13. They've been since 9 o'clock, up 20, and up 10, up 13.
Yeah.
A tight range, pretty tight range.
But you'll notice Vol is keeping its wings up a little bit today because we've got the FOMC. And I'm just going to, that's how Ilya and Chris say it, so that's what I'm going to do. The FOMC, FOMC minutes or meeting or the whatever.
Numbers coming out later today. That's at 1, and after the close, we have a lot of earnings. Woo! So honestly, I think VIX is going to keep its wings up today, tomorrow, because we've got so many earnings coming out today and tomorrow.
We do.
It's busy. We're busy.
Today's got the only ones, the big ones tomorrow are Apple and Amazon. There's a handful of them, but there's so many big ones that the other ones are kind of fringe players.
Right. Yes.
Yeah.
Yes. So besides earnings, besides the FOMC, we have
good job on the FOMC.
We have an amazing study from Jacob. This is actually part 2 of the Impatient Bull study. So we've got part 2 of the Impatient Bull study. It's a great one. I had never seen Liz more excited than I saw her this morning.
Oh, on the train, I ran to her. It was like in slow motion, running to her on the train.
Chariots of Fire was playing in the background. She was running to me and said, "Did you open Jacob's study?"
And her answer is always no, not until I get on the train.
Not yet. I read it on the train. I read it on the train.
And I do love it because I look at it like a menu and I look at it from 2 different angles, and we'll talk a little bit more about it when we get into it, but it's a real good one. Now, I want people to realize we did one last week. It was just tagged a little odd. It was called Narrow Wings. We're putting a little bit of aspects of that in there. That's still in there, but this is number 2 of Impatient Bulls.
But this is different, and every week, we teams Jacob, we send him a message. This is what we're looking for, Jacob. So we put some additional tweaks on his back testing for this one, and the results are pretty amazing.
Shocking. But I'm glad, because what I love about what Jacob is doing for us, number 1, he's super smart. Number 2, they're building on each other. None of these are standalone.
No. The studies, yes. They all build on each other. But sure, someone could watch one study and start doing a trade without going back and watching the other ones.
No, because they're not packaged like that. But what he's doing right now, if somebody wanted to understand, we're packaging them together so it's very digestible now.
Right.
Yes.
So we've got that. We have What's Your Assumption? And we have...
a hot dog eating contest. Sausage.
Hold on.
Sausage eating contest.
Let's go to the platform. Or not the platform. Let's go to Twitter. So here's our friend Dave. He's a market maker here on the SIBO floor.
I went to high school with him, by the way. Just a little FYI.
He was walking by with this plate of sausages, and Liz and I... walking by with a plate of sausages, and Liz and I said...
No, he offered us one. We said no thank you.
No thank you. No thank you. There must be a sausage eating contest going on, because in our day we've seen many eating contests.
Many eating contests. Many. And drinking contests. Not alcohol. Milk.
Gallons of milk. What?
I'm telling you, the craziest thing that I ever saw, and I did not do this. I was a floor official at the time. But when they made that poor kid hold an empty box above his head all day long. Remember that? Were you there for that? You probably weren't.
I mean, I think...
Because I was a floor official, you were already gone.
I think the drinking the milk is worse.
I don't know, because this kid, he was a totally in shape kid, and it's an empty box. And they're like, can you hold that above your head all day long? And he's like, yeah, I can do it. And he held it above his head. And so, I'm talking, it's like 250. This poor kid's arms are shaking like this. It's an empty box. There was so much money exchanged on this trading floor, it wasn't even funny. Whether he was going to make it or not make it. Not for him, but exchanged.
Oh, I get it.
He made it. A floor official, and it wasn't Gary, and it wasn't Jeff, came by. The kid was going to make $1,000 and fined him $1,001 because it was such a ruckus on the trading floor with him shaking.
To me, that's it's kind of like, I don't want to compare it to fraternity hazing, but a little bit. I get the fine. That poor
the kid was going to get $1,000. He was happy to be doing it.
He was happy to be holding it.
Yeah.
Which floor official to find him $1,000?
I cannot say it out loud. I do not want to give that floor official a bad name, but I will tell you, it was none of the ones that you saw here today, including myself.
Well, I'm telling you, the worst were the milk chugging contests that would go on upstairs.
Well, that was Joe Bob.
And those never ended well.
No.
Never ended well.
Visually, I can still see it.
Yeah, not good. So we'll see what happens today. I'm glad we're out of here. Our show runs 10 to 11, and I'm glad we're going to be out of here at 11 before those sausages kick in.
Agreed. Summer sausages,
oh my gosh,
that's correct.
All right. So that's what's happening on the pit. And it's loud today, but that's what's going on.
I like it. I like that it's loud. I like when they get a little crazy.
Up 13. Now, in our account, we did 2 earnings trades yesterday. We did an earnings calendar in Boeing. Exactly what we wanted to happen happened. We did the 217 earnings calendar in Boeing. Boeing dropped $5 to 218.20. Is right by our strike. This should be a winner. Are you surprised it's not?
No, because Vol's keeping his wings up.
Yeah, so
that's why it's not a winner. So I say we just close our earnings trades. I really do.
No, I was going to leave this. It's right there. It's right where we want it to be. Look at that 217. It's worth $3.25. Could be worth $0 at the end of the week. I think we wait to get some money out of this trade.
It's fine. You're in charge today.
All we paid was $1.40. So you paid $1.40. What we wanted to happen happened. It went to 217. We didn't make any money on this. I think we just leave it.
The only reason, and I'm fine with that. I'm absolutely fine with your decision because I'm not going to. But the only reason is the FOMC meeting, which could move the market huge in one direction or the other.
Yeah.
That's the only reason I said that. Otherwise, if we didn't have that today, I'd be like, whatever.
It pains me to close an earnings trade that did what we wanted it to do and it didn't make money.
I know. I hear you.
So I'm in charge of the platform today, so I'm going to choose to leave it.
You can do whatever you want.
I'm willing to risk that $1.40.
Look at me. I'm not like, well, yeah. I'm like, I'm fine.
Close that Boeing trade.
I mean, usually if the cameras aren't on, I do threaten her with the knuckle sandwich.
In our old studio, when we used to sit at Oprah's old desk, she had a stick that she would poke me with under the table.
I did. But now we're on camera, so I can't.
Okay, then we had one other earnings trade.
Etsy. Etsy, you're going in the wrong direction. There you go.
Etsy. And that
is a full loss.
Yeah, that we did a bullish diagonal. Etsy's down 488. Now, for me, if I do one of these diagonals, I give myself two choices. I paid $308 for it. I knew the risk. I've got my long for 9 more days. I leave it. That's choice one.
Option A.
Option A. It's worth 63 cents. I could close it and then buy like a at the money wrapped around call debit spread and use that 63 cents to give myself a better probability, but I would have capped gains on it.
Yeah.
That's option 2. Those are actually my only 2 options.
Okay, so I do
for the 63 cents. I don't
think the FOMC does throw things. How much can you buy the short option back for?
2 cents.
Buy that back, because the same reason I want to close Boeing is the reason that I would say maybe leave this, is because anything can happen today.
Okay, we buy that back for 3 cents.
And then let it roll.
And then let it ride.
Can you do me one quick favor too? I would rather answer this email via this than somewhere else. Can you pop out the side and go to Nike?
Sure. I'm trying to pay 3 cents. Let's go. Put my bid up there.
Hit it. Put it up.
Hit it. Where's my bid?
Are you trying to sell it for 3 cents? Because you got a 3 cent offer.
Buy. Buy it.
You're trying to buy it for 2 cents.
So, okay, you want me to
just leave it.
You want me to see Nike?
Just leave it. Just pop out the side. I just want to go to our Nike. I just want to answer this. And this is from Lisa. So you can see we put a zebra in one day and our GTC hit the next day. I need to be very clear. She's like, why'd you put a stop in for a Nike? This is to take profits.
It wasn't a stop loss.
It was not a stop loss. I was fine taking profits. And is Nike back down? I'm glad we took our well, no, Nike would have gone. It was a bullet. It was a
it's okay, but we paid $587 for this put zebra. You can see it on the right side here. Yep. And then we put in an order to sell for $687. Just take $100. That's
$100 overnight. So it was an order to take profits, not a stop loss. I needed to be crystal clear on that.
So I'm going to just go to my orders, all symbols today.
Nothing.
Filled, working. There's my Etsy.
Yeah, but we didn't get filled on anything yet. I'm watching you today, Jenny.
Okay, there is one thing we could take off today. Pepsi.
Pepsi?
Yeah, Pepsi. We had sold 19 days ago. 19 days ago, we sold a call spread in Pepsi, and I think this is the first day that it's really even worth looking at. But sold it for $204. We made $92 on it. It's trading $114.
Yeah, get the heck out of there.
19 days ago, I don't even know what this came from, where this came from.
Don't look a gift horse in the mouth and just hit the close button.
Closing this. 116 debit. Okay, so we're working closing that Pepsi call spread.
We're not getting filled on anything. It's kind of crazy.
Since we're trying to take a win, I'll penny it up to 120.
Yeah, you should. When you're closing something for a win, you will.
Oh, we're out.
Good.
So we did get out.
Okay, push that out on your side.
I'll push that out.
See live trading from the SIBO, and watch this. As soon as she pushes it out, I will do it on this side. This is how teamwork makes the dream work, Jenny Andrews, and then show it in our the follow trader page.
So then here we are, our Pepsi bought vertical that bought it back to close. So you can see if it's an opening trade, closing trade, goes right here. And let's see what Shark Jeep's up to.
That's what I'm saying. So this is Sahil's dad, right?
Yeah.
Shark.
Yeah. Sold option.
And I love that I wanted to check our work to make sure that he was in under Shark Jeep. That's why we call him Shark. Shark Jeep.
Shark Jeep. Yeah. He's amazing. He's ahead of the game. He had a self-driving car before self-driving cars were a thing.
And he drove us to the airport.
He's like, watch this, girls. No hands.
Hands on the wheel.
And we were sitting in the back seat like, maybe.
Oh, no, you were in the back seat. I was in the front seat. I was like, should I grab the wheel? Should I not grab the wheel?
Okay, so that's out.
Yeah, he didn't drive us like he was our driver. We didn't both get in the back seat. He was in the driver's seat. I sat with him.
But this was years ago. This had to be 10 years ago. It was before the Tesla self-driving vehicles. It was before the Waymos.
How old do you think Sahil was? Sahil was probably...
Oh, Sahil was probably 10.
10, yeah.
Yeah, he was probably 10. Okay, so back to our positions here. I don't think we have anything else to manage, although we could take off gold in a quick... So the puts we sold yesterday.
So it's an iron flat. We did the whole thing, right?
Oh, okay. So honestly, that's up 27, 37, 47, almost $50 overnight because the loss that you see here is coming from the stock.
Yeah,
so,
take that off. He gone.
Right?
Yeah.
Let me take a look.
It was a big lizard-esque position.
Right.
And we did it on last call.
Oh yeah, we did it yesterday, $246.
Yeah.
So we collected almost $7, and we could buy it back for $6.60, $40 for sure, overnight.
Do you remember Toy Story? My husband and I quote this line all the time when they're about to sell themselves. Somebody's about to be sold at the garage sale, and it's like $50 ain't bad.
Overnight that trade was very little.
Yeah, that's not bad.
Okay, so that's closed. All right, we've got a busy day. We are going to take live tweets. I'm going to pop into Twitter just to take a look at the list of earnings we have today. Meta, Microsoft, Google, CMG, CNVA.
Carvana.
I don't think I thought Carvana was CRVA.
Hold on, I will.
Now, Melly, Starbucks, Lilly, Merck. Is that Comcast?
No, CVNA is Carvana.
Oh, it is?
Yeah.
No, C what?
CVNA is Carvana.
Okay, and this says CNVA, just a typo. It's all right, Bob. Don't worry about it.
Bob. Just kidding. We appreciate everything you do. Thank you so much.
Roblox, AAP. There's a lot. There's a lot going on today.
Yeah.
So to Liz's point, Vol's going to keep its wings up.
Yeah, and then it will tomorrow too. Apple, Amazon, Coin, Reddit, and then I don't want to read the rest of them.
I know. Yeah, busy.
No, we appreciate Bob. Thank you so much. Look at that handsome double in the corner, Bob. I love his profile picture.
I know.
Yeah.
And Eric put on some SPX, 6 tranches. I did a trade today. Liz did a trade today. We're both testing it. She did the 50 delta. I did the 30 delta.
Yeah, we're springboarding off of our study because we're on the train at 9:05. So
we put it on. SPOOs are up 20. SPOOs are only up 12 now. So I don't think we're out.
No, we're not.
No.
You don't think? I know. I can see it.
And here's Jackie. Look at this. Out of his meta position. So made $5,000. Great. That's
pretty good.
Great work, Jackie.
It is an exciting time ahead. This is going to be an exciting earnings.
Yeah, this week.
Did you see all the new? We were talking about it on last call. Nvidia.
I saw.
It's just like news. Nvidia is the first time it's a $5 trillion company.
Did you see something else? Oh, look, here comes Mikey.
Yeah, Pinky Tuscadero.
I would have put it at a 10 delta that I could use a Pinky Tuscadero reference twice.
Yes.
Yeah.
Pinky Tuscadero. Love it.
Cute. Oh, and here's Eric. Not done for the day, but I didn't have what it takes for the FOMC ride.
I get
it. I took a 250. Yeah, you know what? And here's what I love about this. Our viewers are honest with each other. They're not just posting their wins. So here's Eric saying, took a $250 loss today. Yeah, with the FOMC later, I can see why.
I mean, honestly, I would manage earnings trades. Now, I'm not saying you did something different, but it's a different day, right? Vol keeps its wings up. The market might move wildly.
And I almost think this is a perfect segue into our study.
Wait, can we see what the SPX move is for the cycle before we go there?
Because Eric, our study today from Jacob is about taking losses on these SPX trades.
Yeah, it is.
Yeah. So we're gonna jump. We're gonna jump into that in a minute.
Let's see what the expected move for the cycle in SPX is, if that's okay.
For the day.
For the day.
SPX expected move for the day 32.75.
So 32.75. That's the volatility. The VIX is pricing in a $32.75 move today.
Yeah.
Now we've been as high as up 21 already.
Right. We'll see what happens. It's gonna be wild. Are we gonna be off the train? We'll be just getting off the train.
Yeah, that's usually when it happens.
Just getting off the train. Our conductor will take more requests. Yesterday we asked him if we thought gold was at a recent bottom and would bounce back up. He said yes, it did.
Can we call him the Sage Trade Conductor?
He'll take any
request. We should tell him today that he was right.
Oh, I know.
Short-term bottom.
Okay, are you ready for the study?
I am ready. Let's hit it.
Here we go. All right, we are here live in the SPX pit. These 0 DTs are trading like crazy.
Jenny, it is with a heavy heart. You have the wrong study up.
0 DTE put spreads. Oh man, we're gonna have to start.
Hold please. Can we please go full screen? Jenny's gonna need a minute. So
let me pull up the right study.
So yes, you have the one from last week.
Let me change it. It
is with a heavy heart that I say that Jenny, you don't usually make a lot of mistakes, but that's okay. You're forgiven.
The wrong
I'll tell you what's going on the trading floor while that's happening. SPOOs are only up 12. Like I said, I like the low hum, but they've been a little bit louder than they normally are on days like this. So, and that has to do, I believe, with the FOMC. I hope you can hear the yelling.
Hang on, give me a minute.
Yeah, she's doing a great job, ladies and gentlemen. Nothing like a live show on the fly. Sold? Somebody selling something? So while we're here, I just want to do a couple of hand signals because this means sold, this means buy them.
I know, they were cute. You know, it was very exciting thing happened yesterday. And I saw a Facebook reel on it. Mike and Jamal are going to be live from the SIBO starting
November 6th.
Next Thursday. I think it's next Thursday. They're going to be here on Thursdays.
Matching coats. They want to be like us. Buy to be like us.
They got a box delivered.
And they were doing the hand signals, or they were trying to do the hand signals.
Yes, they got a box delivered. It was a big
cute.
reveal. They opened it up. They got their jackets. They put their jackets on. And Mike was so cute, pretending to be a trader, doing the hand signals. It was cute watching them put on their jackets.
It was.
Yeah. So next Thursday, they'll be here from 11 to 12, live from the SIBO.
Yeah. So we're Tasty Live's got a big presence on the SIBO floor. Okay.
All right. Are you ready to jump into this week's Zero DT study list?
Yes, I am, Jenny Andrews. Yes, I am. All right, we can go back full screen. Thanks, Jack.
Okay, here we are. This is part 2, Impatient Bulls selling Zero DTE put spreads. The first one was a big hit. Lots of people loved it. We've got lots of emails on it. So this is part 2.
And our plan is to package these. We'll put them out on Twitter together. So once this comes and hits YouTube, we'll put them together. So this is part 2. We're springboarding off of it.
Okay.
So, ready?
Yes. All right. At Tasty, we often like to avoid a directional bias and have focused our previous Zero DT research on delta neutral trades.
The steady upward movement in SPX, however, is leading us to look more closely into being bullish in these extremely liquid markets.
This week, let's continue our analysis on selling Zero DT put spreads, examining different exit mechanics to mimic our traditional capturing profits when trading 45 to 21 DTEs.
Yep.
Okay, so here's the study. Using over 2.5 years of data in Zero DT SPX options collected every 10 minutes.
I mean, and this is what our studies always are. Consider the results from selling one $10 wide put spread every day at 9 a.m., give or take 5 minutes.
Explored a range of profit targets from 10% to 50%. Contrasted results for traders who left all positions, win or lose, at noon, and those who were willing to stay in until close looking for their profit target. So basically,
this is the key sentence here.
Put the trade on at around 9 a.m., give or take 5 minutes, and you put in your closing order to take profits. But if they don't close, if you don't hit your win, then you close the trade at noon or you let it go to expiration. That's what we're comparing. What's better? Closing it at noon if you never hit your profit target, or letting it go till expiration?
Yeah, so and what I love is you can kind of go camera 1, camera 2 with them. You can do the results next to each other, which is great. So we examine the total number of winning trades, the total profits and losses, and the maximum drawdown. The maximum drawdown is the largest amount someone could have lost following these mechanics every day, starting at an unlucky time in the study. So the maximum drawdown looks a little bit bigger than if you put a 1 lot on. Right. Because
so
it's a string of
It's a string of if you started at an unlucky time and today it was a loser and tomorrow it was a loser and the next day was a loser. So we'll clarify that maximum drawdown when we get into the slides.
For sure.
All trades were assumed to exercise at mid-price. All times are Chicago-based.
Okay.
So if you get into the study results, this is looking at selling a 50 delta put spread, short 50 delta, $10 wide put spread, and we're looking at closing it at 10%, 20%, 25, 35, or 50. He really dove deep into the results here.
So a $10 wide put spread, at 9 o'clock, a $10 wide put spread using the 50 delta would be between $3.20 and $4, no matter what. Basically, right?
At the 50 delta.
At the 50 delta. So $10 wide. All of these are $10 wide. Everything we're doing is $10 wide. So just keep that in mind. You got a higher volatility. You'll get a little bit more. It's wrapped around there.
This morning with the VIX at 16, this 50 delta $10 wide put spread was 380.
385. I got filled with 385 at 803. I'm sorry, 903.
903. Again, Chicago times. Market opens, bell rings at 8:30. We wait till about 9 o'clock.
We have to sit on our hands. We're shaking in the train.
Watching it from 8:48 till 9 o'clock. So at 9:03, let's put this on $10 wide with the short 50 delta. You collected 385.
385. That's
so
correct.
If it's a $10 wide and you're collecting 385, your risk is only, you're looking at $615 in risk. So when you see this max drawdown, and you're only taking $615 in risk, that's if you have multiple losses in a row.
Yes. And so we kind of know, and this is what's great about having these kind of packaged together, is when I do that, I'm not taking 10%. I take 10% if I do both sides. If I'm looking at just puts, I want a larger collection. So my wheelhouse has been about 35%.
And I agree with that. Mine has been about 35% too. And if you look at these results, now this is if you close the trade at noon. This is, you put in your closing order to take profits.
I have not been doing that. And this is why I ran at you on the train, because I do think that this is a game changer for me. Closing it at noon versus letting it go.
Right. Our other studies have been letting them go. Either you get filled and you take your profits or you let it go. And as people, I think as people start to scale up, or as I start to scale up and do more of these than just a couple contracts, I start to think the natives are restless, folks. The natives are restless. So as you start to increase your size on these trades, you start to look at your risk, right? So if your risk is $600, but you're not doing one of these, you're doing 5 of those, and you're looking at your risk, you start to think, well, should I close this at a certain point if it hits, so I don't let it go to max loss? If things aren't working, should I take this off so I don't hit that max loss?
So hit the next one though. So I want to be able to compare the numbers next to each other. Okay. So we asked for this, closing at noon.
Okay, so this is exiting at noon, and I would say focus on, and you say you close at 35%, and I think that's fair. I think
that's what I have been doing, but I don't close it at noon.
You don't close it at noon.
That's what I'm saying. If you go to the next one,
this is the same exact trade, but just letting it go till the end of the day. If it never closes for a win, and your average P&L is 63.92, closed at 35%, and win rate's 84%.
Yes. Now I don't want people to get into the weeds, because all these are profitable, right? So if you look at this one, if you sell the 50 delta short strike, every single average P&L trade is profitable, right?
Right.
But we're just trying to, every little bit, every inch. Remember I said this at RMC, every little bit in this market counts, where you guys are quiet. Every little bit that you do can move your needle farther in your trading. So that's all we're doing right here, is looking at little bits, moving inch by inch.
Right. So if you put this on at 9 a.m. and put in your GTC to take 35% and let it go, fine. Your average P&L over time is 63.92 per trade, and your win percent is 84%. And I'm going to go back a slide, you close it at noon if it didn't work out, your average P&L jumps to 73.83, and your win percent jumps to 91%. So I like the big jump in the win percent. I like that higher win percent.
Once again, menu. My very excitement came from that last line, where I think I'm changing, and I'm looking at it from a lens of a very small account, because I've got children that I have I'm planning on doing this with, right? So if I look at that last column, you put this on, you mechanically close it at noon, and your drawdown is the lowest, and your P&L per trade is the highest.
Oh, if you're the lowest max drawdown is if you're waiting for 50%, and those are great numbers too.
Yes.
The average P&L per trade 82.92, win rate's a little lower.
So you have to look at this like a menu. If somebody's willing to risk a little bit more, maybe you want the 95%. It's fine. These are all very viable trades, and it was very exciting to see these results.
So we're going to now take a look at the same information, but using a 30 delta put spread.
Yes.
So going to the short strike at a 30 delta and making this a $10 wide spread. I put this on at 9 a.m., maybe it was 9:03, and I collected 185. So 185 on a $10 wide. So if you're collecting 185 on a $10 wide, your risk is $815. Instead of $615, $815.
Yes.
But that's I typically do the 30 deltas. I like to give myself a little bit of room, and I like the higher win percent.
And look at the win percentage is higher across the board on the 30 delta strike. So, but what we're actually comparing today is exiting at noon versus not exiting at noon. We've gone through all that in the past. Whether you're a 50 delta girl or a 30 delta girl, it doesn't matter.
So I think with these narrower put spreads, and if you're just doing one side, you need a higher percentage. You can't go for the 10%. You need to wait for a higher.
Yeah, that's kind of been cleared.
You have to go for a higher percentage. So if we're just going to compare the 35%, if I close this at noon, if it doesn't work out, my win percent is 95 and my average P&L is 57.92. That's exiting the trade at noon if it doesn't work out. If I let it go to the end of the day, my win rate falls to 92% and my average P&L falls to 41. So I think this study...
Everybody's still a winner. So if you can't get to it, if something happens and you're incapacitated at noon, you're going to be okay.
Well, and I said to Liz earlier today, wouldn't it be great if there was a way we could just set it up to go on every day? Hey, at 9 a.m., sell the automated 30 delta put and buy the put $10 wide. then set an order for 35% profit target, and at noon, if it didn't close it. You could kick back, relax, and the trade would be getting on.
Isn't it Ron Patel? Set it and forget it.
Set it and forget it. So maybe there's a way. Hopefully that's coming in the future.
Yeah. So it was pretty eye-opening to me when I was looking at these results. I do because you're not going to take a max profit. Now I'm going to give you mine right now. So I put on the trade. Collected 385. I'm looking at about an $80 loser right now. Now that would be not locking in $600 loss if it stays right around here at noon. So that's why the drawdowns are a little bit less. And if it doesn't hit my profit target, I might be a 50%. I might be a noon closer.
We put it on almost the high of the day today. So
I did yesterday too, and mine closed at about 130.
Oh, it did.
Yes.
So if today's a little odd because we have the FOMC, I will close mine. I think I'll close mine at noon if it didn't hit. And honestly,
you need the pop. With these, you need the pop up. We're not saying that you don't need the market to be up on the day. You need a pop up before noon. Pop.
So if mine doesn't close before noon, I'm gonna follow these rules, and the difference is pretty big. So if you look at this and you go across the board, average P&L exiting at noon, 40, 48, 57, 69 versus 24, 29, 41, 53. There's a big jump in your average P&L by closing the trade if it didn't work out by noon.
Yeah, and like I said, my biggest eye line was the drawdown, closing it at noon with 50%.
Yeah. So, all right, you ready for the takeaways?
I'm ready.
The typical reason to lock in profits early is to help maintain a high proportion of winning trades.
But as SPX climbed from 38.35 to 66.44, the vast majority of short puts were winners, regardless of management, especially with out-of-the-money trades.
As a result, being more patient and waiting for larger profits generally was more profitable. In particular, taking profits at 10% and exiting losers at noon was the only way we found to unsuccessfully sell zero DTE. So looking for 10% is not enough if you're just selling at 10.
If you're just selling the put spread, when you combine them both together, 10% was the winner. So keep that in mind.
Both sides.
Of both sides.
Well, the iron fly.
When you have an iron fly, 10% is what you're looking for, and that's in past.
And you could find that in old studies.
Yeah,
sure.
In terms of downside risk, as measured by maximum drawdown, there was not a consistent pattern. Lower profit targets are better at avoiding serial losers, but bigger winners mean it takes fewer of them to make up the loss.
While the larger credits from two-sided trades make taking smaller percentages appealing, with directional trades, it may be best to be a bit more patient, looking for a bigger percent.
I love it.
We're kind of hanging our hats on that 35%. It's just been what we've been doing. It's kind of
like I said. Now, when I look at this, I might go 50%. I'm going to go 50% in noon. I'm going to be more aggressive.
If you look for the highest average P&L, the highest average P&L is at that 50 delta put spread, selling the 50 delta put, making a $10 rate spread, and closing it at 50%.
It's got the highest P&L and the lowest drawdown across the board.
Highest P&L, lowest drawdown. Now, if someone wants to hang their hat on the highest win percent, the highest win percent
is going to be 20%.
Here at this 30 delta spread. You've got a 97% win rate.
And $40 isn't.
No, that's
not bad.
$40 a day, nothing to shake a stick at. And this is for one lot $10 white spread.
So keep in mind, there's something for everybody. There's something for everybody. Risk tolerance and account size.
All right, that was another good SPX study, part 2 of Impatient Bulls.
Part 2 of Impatient Bulls. Thank you very much. All right, Jenny. So let's jump back in the platform.
Sure. Here we go. Back in the platform. Spoos up 11. Nothing's really changed.
It's so funny because they've been so loud, and then you could hear a pin drop while we were doing that. Which I do like the ebbs and flows.
I think they like to listen to it. Honestly, they are the traders back here. They are interested. They're
our friends. Dave Ludden and I went to high school together, like I said. So, yeah.
When they see, Jack Tucker, Blue Wackdo, when they see those guys up on Twitter, they're interested in what they're doing.
Yeah. Yeah, they are.
All right. Nothing. As far as big movers and shakers, what is...
So I do want to jump into Twitter. Did we do that already? Make sure we get to everybody.
Oh, here. Okay, so let me see. Let me update Twitter. Here, Ashvin.
I did see Ajit tried to send us something, but we're not seeing it, so resend it.
Well, Ajit, welcome back. Welcome back, Ajit.
We missed you.
Send it on Twitter. Include the hashtag LIZJNY. We've got Ashvin coming in. I've completely changed my zero DT trades to naked MES puts and calls.
I like it.
That way I can simply roll to the next day and try it again while collecting more premium. I think this is a better strategy. Just be careful. You've got a naked option on. I know MES is... is a smaller product. But
Finn is so clear of the concept, and you know what? That's what's great. Is this is what it suits him. He wants to be able to have something to do. You can roll that. To his point, you can roll to the following day.
This reminds me of a viewer that was a rising star, and he did naked. I want to say he did the naked options in GC. Do you remember that? He was doing the weekly, and he would say if it didn't work out, he would roll it.
Yeah.
We looked at that. He was doing Monday, Wednesday, Friday. Yeah. Monday, Wednesday, Friday in GC, and he would just, if it didn't work out, he would roll it. Now, we would try that, and we made spreads out of it because we didn't want the naked options in GC. But, yeah, naked options, if you can roll them and take in a credit and roll them and take in a credit unless it gets too far away from you.
You got to see what's happening. Hippie's doing like karate kicks behind you.
He's exercising. I'm sure that's his chiropractor. I'm sure his chiropractor sent him those exercises.
But I don't mind it, Ashvin. I really don't. Now, I'm just going to give my 2 cents why I'm very excited about the SPX 0DTE. And I look at it from a lens, like I said, of my kids. There's zero risk overnight.
No risk overnight.
No,
if you're rolling something, you've got the risk overnight.
And you watch Blue Wackadoo and Jack Tucker, and they're like done for the day. And then you see Blue Wackadoo fishing, like, you know what I mean? So when you take it, when you put it on, the risk is completely eliminated at night, which I do
nice.
like.
That is nice. Okay, Frank posted. This came from YouTube. Buy 2 times. He's looking at a zebra, so sure.
But I don't know what this is.
And look at this symbol. He's from YouTube, I'm guessing. Buy 2 December 320 calls. Oh, you mean what symbol?
What symbol is it?
What symbol? What's trading around 320?
That being said, I glanced here to try to find it. We are attempting to get Jack Tucker to do a Rising Star segment with us. We're on it. We're attempting. We want Jack Tucker.
We do. I think the issue is he has a full-time job.
Yeah.
He has a full-time job. So if he took the day off to come on our show, then they might know he's trading during the day while he's supposed to be working.
Yeah, G, put the hashtag LIZJNY. Yes, and that's why. But we're in communications with them. We're hopefully going to get something in the books.
Okay, so we don't know the symbol here, but 320, 345.
Wait.
It's something that's trading 345.
Could it be CoreWeave?
It's got to be 345 because in a zebra you sell the at the money. So it's CoreWeave 345?
I don't know. I'm just looking at the chat. Could it be CoreWeave?
Oh. No. CoreWeave's 137.
No.
But what I could do is go to the watch list, sort by price.
Frank will tell us within Frank, tell us what symbol it is.
And find something that's 345 GLD. I think it might be GLD.
Fine, let's go to GLD.
I mean, I know GLD is 368, but that's the closest thing I could find here to 345.
GLD, call zebra in December.
Unless, I don't know what else it could be. I don't know what else is 345.
That's okay, just go to GLD.
Okay, all right, back to GLD. If I went to December and I put this on Delta, honestly, I wasn't sure how the Delta would go in GLD. Sometimes when something has a very big call skew, you'll see the Deltas, you got to go further out of the money to get a 50 Delta. But you would sell a 50 Delta, buy 270 Deltas, and it's going to be expensive, zebra in gold. $3,200.
They're in December. And so let's take a look. Let's go backwards through this because this practice can go through with anything, right?
You can do a zebra in anything.
So this is $3,200. So this is, you have a stock replacement strategy through December. I'm going to talk about pros and cons of doing it so far out. Pro is you won't lose that much because your even if it goes down, your longs become the at the monies have so much extrinsic value if it goes down.
Although the word of warning with gold is if gold starts coming down, vol's not expanding, vol's usually contracting. So it works a little differently than a regular zebra when you have those 2 longs lower. When the stock goes down, the vol expands and the lower strike gets more extrinsic value. In gold, I don't know if that would happen. I do see I can make this cheaper. I know the mechanics are sell 150 Delta, buy 270 Deltas. What we're trying to do is wash extrinsic value. So I can see here, if I'm collecting 1225, I could actually move it. I'll move it where I'm going to collect the most extrinsic value here, 1280, and cut that in half is 640. So all I need to do is find a put that's trading for around 640. So I can bring this all the way up to the 358.
And that's just you understanding how to create
the math
a zebra.
of it.
Yeah, the math of it.
So it's 2,500 instead of 3,200.
Okay, $2,500. Now, if you went out and bought 100 shares of GLD, and I just attempted to throw this into my son's account because it is not portfolio margin, it's $18,429
for 100 shares.
He does not have sufficient funds. I'm just going to put that out there, but that's what the price is. So no matter what you do with a zebra, you're controlling 100 shares, and you can show that on the curve view.
Well, we have a lot of other gold positions, but
we only have the 2 lot of stock. Didn't you get out of it already?
Oh, did I fill it? I don't know if I filled.
Just take that one off.
Okay, I'll go to our analysis page. I'll take off all of our other positions.
It's just the 2 lot of stock.
No, we didn't get filled on anything else yet. I take that all off, and then here's the zebra.
There's your zebra.
There's your zebra. Your risk is capped, $2,400, but you've got 100 shares. You can control 100 shares of gold.
And so this is, like I said, I've said this before, and I know you're going to email me. When I want stock in my IRA, I use this because this is in a margin account to $18,000. In an IRA, it would hold me $36,000 to control 100 shares of gold.
Versus
in an IRA, I can do it for $2,400 or whatever that is. Yeah.
I'm just curious because you said I know they're going to email me. What are their questions?
They always ask about how much capital I use in zebras in my IRA, and I look at it totally different. I can't say that. I don't look at this like, oh, I want to allot X amount in gold. I just say if I want to be in a stock, and then they say, what is your profit potential here? I go, and then my response is a question. What would you do if you were long this stock?
Right. In a year, if in a cash secured account or an IRA, if you bought 100 shares of gold, it's $36,000. Liz is not going to take that $36,000 and divide it by 2,500 and do that many multiples of a zebra. She's not going to say like, okay, well, if I'm going to spend $36,000 on 100 shares of gold, I'm going to spend $36,000 on multiple zebras. That's not really how it works. She's just putting it in to use less capital, not equal capital.
Correct.
Can you imagine?
I'm doing it to use less, not more.
Right.
So we do love the zebras. Jenny and I came up with this because we wanted a 1-for-1 stock replacement that did not use less capital.
That picked up basically we want to start making money 1-for-1 where the stock is. That's the whole concept of not giving up any extrinsic value. If you instead of this, if you just bought a call, I'm going to delete this short call and make this just a 1 lot here. Can I do that? Can I make that quantity 1? So here, if I just bought a call, I'm paying $1,800. I'm spending less money. But you see how the stock has to go up so far before I break even.
Yeah.
That's what we tried to avoid when creating that zebra.
Yes, it's washing extrinsic value where something would pick up 1-for-1. So, okay. I want to go back. We still don't know. Everybody's trying to guess what stock.
Well,
people are saying Microsoft, but it's not Microsoft. Thank you, Frank, because Microsoft is $537.
Oh, yeah.
We got as close as we could. We went with gold.
Okay. It's all right. I think, do you want to jump into what's your assumption?
Let's see. Yeah, we should. It's 10:40. We can jump into it. I'll keep an eye on Twitter.
All right, let's go full screen for a minute, if you don't mind, Jack, because I'm going to rearrange my platform.
Jack is
here.
on the trigger.
Oh, I know.
One of these days we got to get Jack on camera.
Yeah.
We've had Matthew and Steve. We've never had Jack.
I know. Yeah. Next week, Jack. Next week.
Some people don't like to get in front of the camera, though. Like a lot of these traders won't stand in front of the camera, but they don't know what they're being recorded.
You won't remember this probably because we've been on air since 2011, and now it's 2025.
Correct. All your data is facts.
But do you remember how it felt for like the first 3 months of our show?
Oh yeah, almost puking on the side of the road. Sure do.
Yeah, so for the first 3 months we were on air, we were my stomach hurt every day.
Well, and because we were traders, like we're true traders. Like you're looking at two people that stood back there. I was there forever.
We're not newscasters. We didn't get a degree in journalism or broadcast. We were traders. We've been...
No, and then remember our producer would take that bunny and be like, look at the bunny, because
oh
I kept being like...
I wanted to throw that bunny at him.
I think I did.
We'd be like, Jenny, look at the camera, look at the camera. And Matthew still has to do that for me today.
Matthew still goes like this to us. And we love it, Matthew. We appreciate it every single time.
So it is nerve-wracking, I guess, to be on air. I'll never forget when my daughter was in the hospital for 5 days and I had to leave. And Tom's daughter, Case, came in and she did the show in my place. And she was young, and
she was so nervous. And I remember just being like, I will never let you fail.
Yeah, and she was great. She was great. But it's hard. It's hard to hop in the seat if you haven't been on air.
Yeah.
Like
now it's an old hat. Now we forget people are watching.
Right. Now we don't. You say sometimes. Like I said, I've given up on life. Came in yesterday, sweatsuit. My neighbors thought I was going to a yoga class. I saw my neighbor Pam. She's like, "You going for yoga?" No, going to work. Going on the show.
Live show.
All right, are you ready for What's Your Assumption?
Let's do it. Okay, we can pop back in, Jack. Thank you.
All right, here we go. What's your assumption?
They're playing the music right now as we speak. I can hear it.
We went through What's Your Assumption ahead of time and removed things with earnings because we're going to be on last call today. So we're going to be looking at earnings trades on last call.
If you didn't get enough of us today, you can tune in at 2:30 to see more.
I know. All right, CRM.
I'm just going to put this in. I'm coming in hot for last call today. So it might be you and Tim for a couple minutes. We'll see. I'll be there.
There's nothing I'd like more than some alone time with Tim Knight.
We do have Tim Knight, and he is graciously agreed to give it a trial basis to come. If we can give him symbols, you can send us symbols, and we can send them to him too.
Yes, right.
He needs a handful because he wants a handful of them and not necessarily a particular
Certainly.
symbol.
Email me, Jenny, Jenny, @tastylive.com.
It's Jenny.
Yeah, it's not J-N-Y. It's Jenny @tastylive.com or Liz, L-I-Z, @tastylive.com. You can email us symbols that you would like Tim Knight to take a look at and get his opinion.
Well, but he's not going to promise anything. Like, it's just he's going to look at them and say that sometimes the charts work, sometimes they don't.
Yeah, we're giving him symbols, and he's going to see if there's anything that jumps out at him.
Correct.
We might give him 10 symbols, and maybe he'll come back with 2 or 3. Correct. There goes Mr. Hollywood.
You can't see him when we're not on full screen.
No, I know.
No, that's okay.
That's all right. Okay, CRM bullish short term. This is from Jerome in Miami.
Okay.
I assume CRM will pop off now earnings. Buy CRM 265 calls straight up.
Oh, let's take a look. So this is good because he's bullish short term for this week. Now, we usually don't do zebras short term, but you can really eliminate all extrinsic value by that.
Yeah, but then you could lose more if you're wrong than just like buying one call.
No, but I just want to walk through.
Yeah.
Because if it is short term, a lot of times we do one call.
But, okay, he says pop on earnings. Earnings are December 2nd. Let me look at this. I assume CRM will pop off now.
Pop off now earnings. I don't know what that means.
Buy CRM 265 calls straight up for this week. Now, earnings are
but you know
December
what, though?
2nd.
So I'm just going to say, they're probably thinking maybe pop off means go
someone
down.
else's or someone else's earnings. Or,
yeah, but the CRM could pop off on somebody else's earnings. They want straight up for the week. That's it. So 265 calls? Did he say 265 calls? Go back to that.
265 calls.
Okay, so let's go. We don't buy out of the money calls.
Well, I want to see, was it just there? It was there.
Yeah.
You know what, Liz? There are people who do. There are people.
They're 30 cents. Let's buy
That's what I mean.
Buy 10.
There are people who do. They're 39 cents. When you say buy calls to me, I'm going to go and look at okay, this 245 call, I'm giving up $1.24.
Yeah.
Okay, maybe I'll do that and I'll pay $775. That's what I would do if I'm going to buy a call. I don't know about you.
No. That's exactly what we do, and I think it's because we came from the floor. In the fact that I don't want to pay that extrinsic value. In this, you want to pay as little extrinsic value as possible. If you buy the 265 call, nothing wrong with this. If your assumption comes to fruition, you will make money. You're only risking $30 for it if you buy one lot. But CRM in the next week has to go from 251
in 2 days.
to 265 before you don't lose money.
So if CRM went to 270, that 265 call would be worth $500 at expiration. Whereas if mine picks up, $1 away from here and we go from 250 to 270, well, I'd make $2,000 minus the 100.
So in the words of Dr. Jim, for every gimme there is a gotcha.
But I don't mind this at all. I'm actually. I'm with you, Miami. Maybe I'll go buy this CRM call.
Here's what I do like. So I don't mind buying the CRM call, and they think they're buying the 265. But what you could do is wash extrinsic value. You're going to make less money, but you could buy that 45 and sell. Yeah, and you can make it as wide or as narrow as you want. If you think it's going up, you can buy the 245 and sell the 260.
So
you're paying very little for it.
For the 245, 260?
Yeah, you're still going to make a lot of money if it goes up.
It's still $7.
But there's very little extrinsic value is what I was going to say.
But if I'm paying $7,
I want that.
I'm going to buy that.
I want the unlimited
profit potential.
Unlimited. Because when you buy a call, it's unlimited.
If I don't want to spend too much, I'll what like Liz said, watch extrinsic value. If I buy that 250 call, I'm giving up 250 in extrinsic value, and then I'm getting the 230 on this 255. So this is only $230. I can make 270.
Yeah. So what we like to do is kind of cap our gains, but give ourselves a high probability of success, because guess what happens? If CRM doesn't move, we don't lose.
But if he thinks it's popping all the way to 265 or 270, you could do, what's interesting? You could do like kind of like a crab.
A diagonal.
Yeah, you could do a diagonal. Let's see how much that would be. 9-day diagonal. It's not cheap.
No, it's not going to be cheap.
And you're not getting anything for that 2-day.
Because they don't have earnings. We've done the earnings diagonals before.
Honestly, if I had to put in a bullish trade, I'm just buying that 247. Or the 245.
It's what's your assumption? Hit it. Go 247. Make it cheaper.
247?
Yeah.
$6. Well, now we're giving up $1.75.
They think it's going to 260.
And we could do like a delta buster, honestly, where here we buy a call spread, $5 right call spread, and sell a put spread to pay for it.
Then you make
still
$500.
Paying.
Just buy the call.
We're gonna give up. I think on the heels of 3 winning trades yesterday, like we made enough yesterday to cover the cost of this. That's why we're saying we'll spend $600.
And this isn't earnings. This is just what's your assumption. They said it's going to go. They're buying the 260s. Let's chip this.
All right, 615. It's breaking the rules a little bit, but the rules are.
There are no rules.
Next, that was a long time on number 1. But I deleted the earnings trades. We'll get to those in last call today. LE, I think, is lean hogs or
it's
cattle, live cattle.
I don't know why they have to be lean hogs or live cattle. I don't want a skinny fat cattle.
I guess you want a lean hog because you don't want a lot of fat in it, right?
Well, this is a live cattle.
I don't know. Teresa, this is from Teresa from Switzerland. LE, let's take a look. She's bullish. All I know is she's bullish. Bullish on LE. LE. Live cattle.
Okay, just on a side note, what movie is The Rules Are There Are No Rules from?
License to Drive.
No! But I do like your conviction in answering it that quickly.
I thought for sure. What is it?
Grease.
Oh.
It's from Cha-Cha.
Oh my gosh. And I'm never gonna win this battle, Mikey. Never. LE live cattle. All right. Oh, I think HE is lean hogs.
Yeah,
right?
that's what I'm saying. LE is
HE is lean hogs.
I keep telling you that's we're getting live cattle.
All
not
right,
lean hogs.
live cattle.
They're not dead.
She's bullish. It had a big move down. Oh, but it's up almost 3% today. It had a big move down this week, making a move back up. Bullish. I'd probably just do a put spread here. 225, 220.
I just want to see.
$5 wide is like a $20 wide.
Yeah, so button that up a bit.
Huh. That's big.
There's no IV rank?
So a $3 wide is like a $1,200
How about you just do a $1 wide and call it a day? I just want to see what it is.
A $1 wide is a $400. Is $400.
Okay.
I want more than $80.
I do too. But what I do like about this, I'm going to give you my pros here.
Make 190, risk 610.
You're risking 610. It's only using 190 because these are futures options. Yeah, go for it.
Okay. We're collecting 0.45 credit. That's equivalent to $190. This spread looks like it's 225, 223, but that's really $800 wide in the lean live cattle.
It's not lean. They're just live.
Live cattle.
They might be a little bit porky. We're not sure. They're live.
All right, and we're shipping that.
Okay.
And it's working. We're not filled yet. Okay. Ooh, Starbucks.
Oh, we wanted to do this one because we're going to do it early, right? So
yeah, we have so many to do later. We did leave one.
So Starbucks, this is Austin from Boise, Idaho, thinking about a long earnings diagonal. We've been doing these for earnings. I want to sell the front month calls. What is the best back month to buy? Well, you're going to get two different answers from two different people because we'll go near term, next term. How do you do next? Remember you
near next, mid far.
Yeah. So that would, because there was only
near
4
next, mid far. That was when there was you
only
had
4
months.
expiration cycles. Yes.
Now you got dailies.
Now you
got you need a measuring tape.
An inch by inch.
Yeah, centimeters for the dailies.
Yeah, because it was 4 expiration cycles. That's why as soon as we said it.
When you were trading with someone, that's how they knew what cycle. Like if I'm trading with January,
those were like a leap. You'd be out far.
Yeah, and if I'm going to fully extend my arm, then they know.
375 days out.
All right, let's take a look at Starbucks. A bullish diagonal.
Okay, so we've been setting up our earnings diagonals, and like I said, I know that the boys did this earlier. We do it a little bit differently because we like to pay less.
Now, the 2-day, I like to get at least around about $1. So the 90 is $1.12, the 91's 95 cents.
That's fine.
And I'm happy with that. That gives me a little more profit potential.
But you do, to your point, you want to make sure you're getting something for the one you're selling. You don't want it to be like, oh, I'm getting 20 cents. That's not worth it.
That's why I knew in CRM it wasn't going to work, because when we saw those options, they were like 50, 60 cents. It wasn't going to give us enough off to
for
help.
a spread. Yeah.
Now, if you go to Nove and you buy this 84, you're paying only $309, $84.91 at $6 wide. That's not terrible.
Yes, it's not bad.
No, it's not bad. That's $6 wide for $309 or $5 wide for $260. Either way, you're paying half the width. But that's going all the way out to the 23-day.
I mean, we like to go and make it as cheap as we can, especially if you're bullish on earnings. Because you know what, Jenny? I know we looked at that. You can always reestablish it.
So if you go to the 9-day, 2-day, it's not that much different.
And go out farther.
I think you have to compare. So, all right, the 84.91 in the 9-day, 2 days, 274. So 274. And then if you go the 2-day, 23-day, it's 309. You're only paying like 30 cents more.
Yeah, so in that case, you'd want the durational.
But if it's $1.50 more, $2 more,
right,
then it's almost a case by case basis.
Agreed. Let's ship this one. I like 309.
309. 309 shipped. That's an earnings diagonal, but our long option is further out in time, and if it goes down, we might make an adjustment to it.
Well, if it goes down, we can also sell the next month
right
against our longs.
Okay, I'm going to try to get filled on the Starbucks.
Can you do me a favor and just see what you've
push
gotten
some
filled on?
trades out?
Because I haven't been pushing anything out.
Okay. All right, so activity, all symbols today. Today, Pepsi, we closed that call spread.
Okay, that's the only one I've got in there. Everything else isn't pushed.
Etsy, all we did was buy back our short in hopes that we have some massive rally today.
Ooh. Okay.
Well, we were filled in live cattle.
Live cattle.
Sold a put spread.
Okay.
And in Starbucks, we just put on a bullish earnings diagonal.
Perfect. So those are all to the follow page if you'd like to check my work.
Okay.
They want us to keep talking about the follow page.
And we were not filled on CRM yet, which
I don't want to pay up that much for.
No, we're not.
Looking at that wrong, 616 to 660.
We're not going to pay up for that. And honestly, maybe it is just kind of, I don't, if it goes down, the whole market's going to move today, one way or the other. So I don't know. So maybe we shouldn't put in that CRM.
If we get filled, we get filled. I'm not penning it up to 663.
No, I'm having second thoughts on it. Because $600 is a lot.
It's a lot.
If we lose $600 on CRM, I feel like to get in the game on CRM, but have a little bit of skin in the game, but not too much, we just do a call spread.
Yeah.
I mean,
I'd like to be in, so we'll do what's your assumption for the week. Ship it.
I feel like we shouldn't risk $600, and we said the other day we didn't want to risk more than $300 on the earnings diagonals.
Within CRM.
Yeah. Oh yeah.
We were only doing that because it's what's your assumption. This was somebody else's assumption.
Yeah.
And they think it's going to pop too.
Now, some people will say, give yourself more time. Give yourself more time than 2 days. But I'll tell you, if you're doing a wrapped around debit spread,
they're all the same price.
If you give yourself more time and it goes up tomorrow or the next day, you're not going to be able to take it off for a win. You almost have to do, if you do these shorter term, you'll get full profit on it sooner.
Well, and in the way that options are priced, that if you price this, so it's instant gratification. In the 2 day, it will be profitable if it's there, but they will be priced the same way. You could go to the December and you wrap it around the at the monies, and it's going to be 50% the width of the strikes. It's just not going to be full profit if it goes up.
Right. So we were talking about this today. We have some stocks that we own and we put wide put spreads against the stock. It has some protection.
For defense, right.
For defense, right? Those stocks have gone down. Like I have it in Etsy, or in what else? I've got it in Oklo. I've got some put spreads against some long stock, and you're not going to get anywhere close to full profit out of those put spreads until they're close to expiring. So they don't help as much. Like with Etsy down today, 550. I'm losing almost full amount on my long shares of stock, even though I have those put spreads. They're not going to kick in until they're close to expiring.
Until close to, and very close
Yeah.
to, not even, I mean, even if you had them in the 2-day, some of mine are in the 2-day and they're not full profits yet because the volatility is high right now.
So
okay, Jenny, it is 57. You've got to go back to Twitter because Mikey, I cannot. I would be remiss if I didn't. No, go tap down.
Happy Hump Day, ladies. Circling back on this, since we are almost done with October, I would like to sell with Tom's money that Jenny does Sober October.
Full Sober October.
No, I was on vacation, Mikey.
I know. Both Mikey and I sold it.
No, it didn't last. It didn't last.
I knew that because she texted me being like, there was no drink service on the plane.
Yes, my flight home. No, the seatbelt light on the whole time. No drink service.
Yeah, she was very angry.
Didn't.
So yes, Mikey, you know that I know that you know that I know that when she says stuff like this, it's not going to last. Yeah.
What is? I wanted to see what was. Okay, then we had that one. What was the dog video? Oh, that was Blue Wackadoo.
Oh, Blue Wackadoo. I love it. Back and forth, back and forth.
Yeah.
All right, Jenny, we are done for the day. We are cutting into OTC Live, Option Trading Concepts Live.
Okay, everybody, thank you for tuning in. You can see us later today. We'll be on at 2:30 on Last Call.
And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny Show.
See you later today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on tastytrade. Genius loves company.
everyone? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Glenn, the one and only Glenn Freiberger from tastyFX. Glenn,
sorry, Jamal.
Yes, Jamal is out. Immediate applause. Look at that. That's how much the people love you.
Why, thank you. Pleasure to be here. How are we doing?
Great to have you. We didn't talk about this, but we both have the black thermal on.
Yep.
It must have been a, subconscious thought. Like we're doing the show together. We got to wear the same clothes.
Exactly.
That's how it always happens, right?
And, not to make it weird, but I think we have the same thinking about these kind of shirts. You're like, oh, it's, nice enough, but you can roll the sleeves up. It's a little on the tighter side.
Yeah.
Show people the traps. That's what you were thinking, right?
Traps that we've been working on, yeah.
Exactly.
Yeah. There are days where I just go into the gym and only do shrugs and then leave.
It makes it.
I don't know about you.
It makes it a lot. Yeah, it makes it a lot funnier when you have your office gym and it's just your coworkers in there and they see you
What's up?
come in.
Yeah.
Hype yourself up. Who's the man? You're the man.
Yeah.
Who's the man?
Grab the hundreds, just rip a few trap shrugs, and that's it.
And then get out of there.
Yeah, quick and easy.
Very nice.
But yes, it is that season, getting a little colder. People are dressing more comfortable, It is what it is. But
I'm here for it.
Yeah, E-minis, NASDAQ, kind of flat. They were up a little bit higher today. It feels like it's a waiting game here. We've got some interesting stuff today. We actually have, believe it or not, a Fed decision.
Dun, dun, dun.
It's going to be crazy. Although the decision, 97.8% chance that we get a 25 basis point cut. I think the market is waiting to see what is said because the October 29th cut has been in the high 90% probability for a 25 basis point cut. But December, we are getting, every single day that I look at this, the FedWatch tool, we're getting increased probabilities that we only get one cut this year. So a week ago, it was a 4.4% chance that we stay at 37540 after this cut today is announced. One day, yesterday, was 9.1%.
Yep.
And now today, we're looking at 14.6%.
14? That's higher than even when I last checked it. Yeah, I mean, that's where I think the surprise could come. Even when we started cutting in September, markets, headlines, everyone was already looking towards 2026. What we won't get this time is one of their summary documents that shows, everyone's dart on a board. And so here there might be, more speculation on is there any clear signal for the immediate future, because it won't be as written in the stars for the next 12 months or so, even though that's really what's interesting. I would be surprised as if they were to take out this rate cut. But I mean, in terms of setup, it wouldn't be all that surprising to say, Powell would say his favorite words, we'll wait and see. No data coming in, so hard to be data dependent.
Yep. No data, wait and see.
But should be a good one. Yeah.
What a job.
Yeah, it's pretty good.
Yeah.
Class dismissed.
But yeah, we'll see what happens. I mean, it comes at an ominous time though, because we get the decision today at 1 o'clock.
Yep.
And it just so happens that we also have Microsoft, Google, Meta, and even Starbucks earnings today. Starbucks,
the big four.
Yeah, Starbucks we throw in, but you have huge tech names that are reporting earnings today. And if you get a scenario where Jay Powell says something that spooks the market and the market sells off, how does that translate to these earnings? Because these companies are going to report ridiculous earnings. Like Google has a projection that's just shy of $100 billion for the quarter. It would be the first time ever.
Like a lot.
It is a lot.
That's a lot.
Yeah. It's a big number.
It's no 5 trillion.
No,
that's the new number.
No, that's
5 trill.
That's the new goal for all stocks, is to get to 5 trill. But yeah, it'll be crazy to see. I mean, the markets are calm right now, but that could change pretty quickly here over the next couple of hours.
It sets itself up very, I don't even know if you want to say nicely, definitely will be interesting for intraday traders, scalpers, very short-term duration traders, because the order of events, the PEMDAS, if you will, of these events throughout the afternoon, they are all about 1 hour apart. And that's only interesting because you get the Fed announcement. That's at 1. What is it 2 Eastern time? 2 Eastern time, 1 Central. You get that markets will have a snap reaction from all the algos. You have the rest of that 30 minutes or so of speculation. And then you get Fed Chair Powell's commentary after that, in which he has his own language but will respond to questions. And so it's a little bit uncertain of when or if he'll answer definitively any question there. And then an hour, couple hours later, depends on when he stops talking, but we'll run right into some of those earnings. So you have the potential for a lot of back and forth, as look no further than last Fed decision, where you did have a bit of a fake out with the announcement and with Powell's commentary, saying two different things, or the headline takeaway being two different things in the form of rate cuts on schedule, and then Powell saying maybe not so fast. And so if we get that kind of potential, then I think earnings very much still are in play. But you're right, there's also that risk that a dark cloud commences over whatever redonkulous numbers they report. Guidance is back in now? Everybody's doing guidance?
Yeah.
Okay.
Yep.
So that's a fun number.
They can't do that every time. They only got one time where they were like, can't tell you anything.
No guidance this time, please. Yeah. One skip.
Yeah, so we got the VIX up a little bit, 25 cents. I mean, these percentage changes mean nothing.
Right.
I mean, the VIX at 16, 25 cents, whatever. VIX futures down today. Markets are calm, so not too surprising. But I think if there was more uncertainty around what to expect today, maybe you would have seen a little bit of a bump in these VIX futures. But we're still in contango, healthy contango, 1 point between these contracts. It flattens out a little bit as you get into 2026, but market is telling us nothing to see here. If we look at SPX expected move for today, that's another interesting point. 33 points for the rest of the day. So this also tells you that the Fed announcement shouldn't have too much of an impact on the market. Now, we've seen that be completely wrong before. I think it's really going to come down to the narrative. Everyone knows we're getting that 25 basis point cut,
right.
But what is said afterwards at 1:30 Central, I think that is where the market could shift. But yeah, it's going to be crazy. It's going to be wild. If you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You can throw in your trade ideas, questions along the right-hand side chat. Just looking at the futures markets before we dive into the Forex markets. Only things down over 1% today, Bitcoin and Ethereum. Sad. We need those things to rip.
Very sad.
Yeah. But seeing some movement to the upside. If we flip this, we've got live cattle. A lot of people were begging for us to do live cattle trades yesterday. Couldn't do it. Thomas wasn't on. Can't do it without Thomas.
You can't.
You need the blessing of Mr. Westwater. Silver to the upside, 1.5%. Crude oil, gold. So an interesting bid in some energy and precious metal products. But everything else kind of just chopping around, as you might expect, with Fed announcements on the horizon, earnings trades on the horizon. Speaking of earnings, we got, again, Starbucks after the close today. $5, $6 expected move on an $84 product. That's decently high. Microsoft after the close today, 24 points on a $500 product. Not high at all. That's less than 5%, which is very low for tech earnings. Google, similar story. 16-point expected move, $270 product. That's really low. I guess it's not too crazy.
Could be worse.
Could be worse. We've seen lower. And then Meta, $750 product, 50-point expected move. This is the highest of the three, just by a hair. But yeah, Meta's the most expensive. Microsoft's expensive too, but I think Google gives you the most flexibility, as it's a $270 product. You can do more, but Meta, Microsoft, I think I'm pretty much pigeonholed into like a calendar spread, which I don't mind because I would rather be smaller in terms of size this time around because there's so much on the horizon, especially when place to trade like before the Fed announcement.
Mm-hmm.
I might not. I might just look at the trades.
Okay.
We can look at trades and see what the YouTube chat has to say. But I think this is an environment where, because you could get some movement in the markets, even though it's not projected from the Fed announcement, I think it makes more sense to place the earnings trade closer to the end of the day today, just in case these products move. If there's a huge sell-off or a big rally, and now all of a sudden your calendar spread that was out of the money goes in the money, not a great scenario.
Without earnings factoring into it at all.
Yeah.
Great point. So, of course, a little product agnostic, just looking for some earnings action. Is this a heavy enough slate for you to perhaps skip the individual names and go straight to, just NASDAQ, QQQ? Mm-hmm. Is that on your radar checklist to do? Just because you called out two of the four might be too expensive, constrain you in some way or manner, wouldn't stop you all together because you always find a way. But would this be a product that gives you a little more flexibility and still kind of gets the the whole idea from what might happen this afternoon?
Yeah, I think that's a great point because especially if you're looking for long premium trades. If you're looking for short premium trades, I think you go to the direct names because you're getting a big IV boost.
Sure.
But if you're looking for long premium trades, like diagonal spreads in the Qs or like just straight up long options, if you're hell bent on one direction or another, that's where you can go to get lower implied volatility, much lower implied volatility. Mm-hmm. Like the Qs have low 20% IV, which is nothing. You can get a lot of gamma leverage there. And just looking at the current makeup of the Qs, if we look at Meta, Google, and Microsoft, Google is 3% of holdings, actually almost 6% of holdings if you consider Google and Goog. Meta is 3.5%, and Microsoft is 8%. So carry the two, and you've got about 20% of the NASDAQ.
That's pretty good.
Reporting today after the close. So I actually kind of like that, maybe better. If you just combine all three, go to the Qs, do one trade.
But you make a great point about the nature of earnings plays in general. Is if it is just for short premium, then you're right. A lot of that goes away with the indice. But if you have any sort of directional bias and are constrained in an expensive single name and want to get perhaps long premium, then I agree. Maybe this is the way to go.
Yeah, and if we look at, so today we've got those names, but then tomorrow we've got, let me sort this by volume. This is much easier to look at. So on the 30th, tomorrow after the close, you have Amazon, Apple, and I think there was one more. What am I missing? Apple, Amazon.
There's ServiceNow. No, that's today. Does that matter?
Yeah, Apple, Amazon.
Let's see, I've got.
There's just so many. Coinbase. Apple, Amazon, Coinbase.
Eli Lilly.
Lilly.
They in there?
Yeah. So Apple and Amazon make up another 13%. Mm-hmm. So about half of the NASDAQ is reporting in the next 2 days. So I kind of like that.
And so with that, that would take, if we're looking just at QQQ, you'd go to the weekly to get all of that? Or would you even consider just doing, a 1 day and checking in tomorrow, see if anything categorically changed? Is it worth getting that granular? Or I guess I can't see a narrative in which. Do you see a narrative in which any of these really cancel out, or are we of the thinking that if anything is to the downside, if anyone has bad news, that might tug everything down?
Yeah, and I think it's more in play if we get a sell-off from JPOW.
Okay.
If we get a sell-off from JPOW, I think it scares the participants for these products for earnings.
Mm-hmm.
And if there's any slip up, you could see these stocks just tank. But if not, if we get a continued rally today from JPOW, and then we get earnings crushes from these companies, and they all rally, that's where you would get, yes, your supernova. That's where you would get your big rally to the upside. And just looking at premium here, so like if you wanted to go to November, for example, keep things a little cheaper. If you did like the 635 call in the November monthly, and then you sold the 2-day, which is the Friday option, which would encompass today's earnings and tomorrow's earnings after the close, you're getting 11 points of implied volatility for 2 days relative to 25 over the next 23 days. So you're still getting a good boost in implied volatility, 32% reflected in the 2-day cycle, 23% reflected in November. And if we look at the value here, you could do something like this, like a 635, 645, 10-point wide diagonal, pay a little bit over the intrinsic value on that spread, but you would have no issue if you got up to 645, just because there's still so much extrinsic value in the November long that you don't run into issues unless you get a huge blowout to the upside.
Interesting.
Which is not projected. But yeah, I think something like this is in play. Or if you wanted to go more long term and just encompass the whole move, you could do something like a 635 December and then sell the November monthly.
Sure.
So this would be, I would probably make this wider. I would probably do like a 635, 650, pay just under the width, and just go, go for the home run here if you're doing longer term. But yeah.
So you'd widen it out just for risk reward?
Yeah. If I'm going longer term, I usually go wider because you can get a similar cost, around $1,000, but you can make it wider. And then if you wanted to make this trade smaller, you could do something like a 640 calendar. So, or like a 645, something like that, where you're selling the 2-day at the expected move. This would be a 10-point rally in the Qs. And if you bought the 645 in November, you're looking at $800 in cost for the 23-day option, $200 cost basis reduction, so just over 20%, and you're paying about $600. So, and if we look at the curve analysis, if we push this to Friday, you will see this assumes you get all this premium from the short option. We can actually crush this implied volatility a little bit. Let's bring this down like 2 percentage points. I don't see this going below 20.
Sure.
So here's a theoretical representation of getting all the premium from the short option, crushing implied volatility in November by 2 percentage points. If we get a non-move, you're still going to be profitable on this trade if these things pan out. But if you get your rally, you can make 100% return on capital on your $600 product or $600 trade. So I think I'm going to throw this on regardless.
Yeah.
I think I'm going to throw this on just as like a macro trade.
Okay.
And then we can go into the individual names and see if anything speaks to us. But I kind of like this just to have this on.
So from a management perspective, you mentioned single name stuff you might not put in until after Powell speaks. If you're putting this on right now, is there a very quick know when you're wrong, take this off? Like, could you see a scenario when later today you would take this off and then just attack this maybe tomorrow with more things shaken out? Or what are you looking for in terms of time horizon here?
Yeah, I think you can. So let's say JPOW takes a stand, things don't pan out, market sells off. you would likely get a lot of this premium in the 2-day out of it already, even though it'll hold on to some value because it does represent the implied volatility for earnings for these companies. But yeah, I think you would lose a little bit, but if you wanted to exit, this short option would help you hedge that. I think I would probably still hold it.
Okay.
And if anything, I could move this out to next week, maybe turn into a diagonal spread, something like that. Because I could probably create a 5-point wide diagonal spread here if we just look at the value of the 2-day relative to the 8-day or 9-day for next week. Right now, these options are trading for twice as much if you go out to next Friday. So, yeah, I think there's things you can still do. I wouldn't go to the November 23 day or the November monthly just because you create a vertical spread, you slow down the trade, unless you were going much wider. But it's going to be hard to do that if you're doing it into a sell-off anyways.
Right.
I'm going to throw this on just to have a macro exposure instantly filled. Don't like that. Macro exposure to all of the earnings reporting this week, just a slight upside trade. Selling the 2-day, which encompasses all of the earnings announcements that are happening this week, and then buying a lower implied volatility 645 call in November. And yeah, if we get a rally up to 645, we can make a couple $100, $500, $600 max if we hold it till Friday.
Nice.
Fun stuff. All right. There's no positions.
What? That must mean one of one things.
The FX gods have blessed us.
Graced your hand.
Yeah.
The golden mouse you have.
All you have to do is just forget. Place the trade and forget.
Oh, man. What our good friend Mikey Butler is referring to is the move on the U.S. dollar, Canadian dollar today, looking at the board. That's our big mover of the day. Actually, I mean, same move in Australian dollar. But what we had today was a Bank of Canada decision early this morning, already with the tailwind of Canadian dollar strength yesterday and starting the week as well. And that brought your short U.S. dollar, Canadian dollar position back into the green after 3 weeks of pain, and you're out.
Yeah, I think I held it. I think I put it on like here.
Yeah, very nice.
Actually, no, I put it on here into this rally.
Yep.
Maybe around here because I had a basis of 138 initially with 5 micro lots. Threw on another 5, I think, around here. And then I threw on another 5 when we were up here. So I had 15 micro lots with an average of like 139.
Gotcha.
I think it was literally like right here.
Yeah.
We got this move, net profitable by $15. But yeah, that was the only remaining position I had.
Yeah, so this one now I think is interesting from a tape action perspective. We're through kind of the recent lows and the trading range that we've seen since we had that breakout rally. And there's not real, support. Maybe we get back into the range that we were prior to that, but there could still be a lot of room to fall here. You have some event risk in the form of JPOW and the FOMC today that could take any sort of technical analysis out of the question, at least for now. So this one a little bit more in no man's land, but having this move today on the heels of the move yesterday, this pair's the Canadian dollar's got some momentum, as even though they cut rates today, they said that might be all the cutting they need to do. Previously, the kind of red flag warning was their employment, their job, labor data, not in a good place, employment up to 7%. Now, less concerned about that. Inflation looking good around 2%. Even with the tariff back and forth, they said they do see some uncertainty ahead. Their GDP growth projections still looking just under 2%. So Canada might actually have it after all. We'll see. But coming off of some highs dating back to, I think, April or maybe February, Canadian dollar was kind of the first to be affected If you zoom out a little more, I think so we've definitely been higher on some tariff spooks, but yeah, this pair presenting, perhaps a nice range and at least more optimism for the Canadian dollar than we've seen in recent weeks. So I think your friend Nick Batista is long this pair. I haven't seen him or talked to him today. I've been ducking him intentionally. But yeah, that's the big mover of the day. Other than that, Australian dollar also getting a lift as commodity currencies rise, in particular the Australasians on the heels of President Trump's Asian tour. Got a successful trade deal with Korea. What does that have to do with Australia? Not much, but all signs pointing to an amicable deal with China coming up, I believe, tomorrow morning we'll know. So there's still some event risk there. I was reading a Financial Times article, I think, and they're saying that Trump and Xi need to meet face-to-face so they can really size each other up and see who's going to back down. And reading that, I was like, this might be a little more dicey than we might be pricing in. But at least, I'd see the most likely scenario is kick the can down the road, no increased tariffs starting in November. So that's lifted the Australian dollar back above 66 cents. We've got a little more room to run if you're looking at recent history, but a lot of congestion around this 66 cent level. So if you're a range trader and this starts to stall, it's a pretty interesting discussion today, I think we have, with looking at these pairs. You have a lot of U.S. dollar. The most popular traded pairs all have U.S. dollar as one of the two components here. You have an event like the FOMC today, and you can either choose to involve yourself before on a speculative basis, or come in on the heels of the news in a reactive basis. We are not the algo bots that synthesize information as soon as it's released. I'm not, at least. I don't know. You might be quick with the mouse, but there is still some potential profit to be made, and it sets yourself up for a question of what pair do I look for, what do I actually care about, and you have a couple interesting ways to think about it. I would think about it. Let's open the dollar-yen pair. So this is one where, because of recent developments, it's come in. Let's zoom in a little bit just on the range since we had that new prime minister announcement. We've been above 150, dollar strengthening here to some multi-month highs, but we've got a pretty nice range setting up here now, just around 152. So the recent range, 153 to 150. We're a little bit in the middle of the range, and what this tells me is if I am reacting to news, we'll get the initial jump one way or another, whether it's good for the dollar, bad for the dollar. But what this tells me, if I'm in the middle of a range, is perhaps there's a little less congestion or support resistance noise in hopping onto momentum. So here, if we get a statement that is bad for the U.S. dollar, we could get an initial move from 152 all the way down to around 151. That would be a big move, but we've seen bigger. And so that could tell me that even though it feels like maybe I missed the move, if you're looking at a historic price action, maybe there's still a chance for me to get in on the selling and hold this all the way to its recent low of 150. And conversely, if this move jumps up to 150 half or even higher, maybe there's still some room for me to hop aboard and take it to at least the recent high. So that's how I would think about a possible case for pairs that are in the middle of a range and trying to trade this reactively. Whereas if you go back to the watch list, and we're thinking kind of longer term positioning, then you could look to something like a dollar Swiss franc, perhaps, where you're looking to hold this position maybe longer term. This one's still, a pretty big pop today, but still at the bottom of its recent range. And so if you're looking to hold this for a longer duration, then perhaps already.
This is how easy it is.
That's pretty quick. Yeah.
Before your sentence was
Yeah,
over.
no, you were in.
Smash.
Bing, bang, boom. No ding, though. I'm working on the ding. But then you could start to factor in, is this a cheap level? Because if you're thinking about it from a very short term, yes, trading something at the bottom of the range perhaps maximizes your risk reward more than picking something like a dollar yen that's perhaps in the middle. Whether this all happens as recent history commands, of course, not actually indicative of what happens, but it does give you a good sense of contextualization. So here, if you're picking a pair that's at a recent low or high, then you might have exposure, if you're correct, to greater risk reward. But I wouldn't necessarily think about a cheap price level unless it's something you're holding longer term and perhaps dollar cost average into it, like you did with that Canadian dollar.
Yes, dollar CAD.
And so that's how I kind of unpack what dollar pair to look for when you're thinking about, because the other bottom line is if you go back to the watch list, New Zealand dollar here, the biggest spread, but the other important consideration, liquidity. If you're staying in this popular U.S. dollar section, liquidity on the actual announcement, spreads will widen, with that increased volatility. But these aren't the pairs where you'd necessarily be worried about getting burned just from a liquidity standpoint. You'd have to go down to, U.S. dollar, South African rand, the peso, some of those more exotic emerging pairs for that to be a real problem or consideration, liquidity that is. And so you kind of have a lot more optionality here in picking kind of what exposure you want, what kind of dollar exposure you want, if the price level is enticing to you. That's how I would think about it. What
I like
do you think? And then, also, if you want to sit out this Fed event, the central bank bonanza continues. It's not over. Tonight we've got a Bank of Japan meeting, and so if you're trading that dollar yen, even on this announcement, I would definitely be cognizant of a rate announcement at 11 p.m. tonight from the Bank of Japan. Nothing expected from them, cut or hike, but with a new administration, perhaps there's something in the language that surprises. Despite all the recent headlines, a lot more data out of Japan recently than we've had. And then tomorrow morning isn't in the European session, like a lot of Euro data comes out at 2 a.m. and it's like, what am I going to do with that? We have an European central bank decision, but that comes out at, I believe, around 8 a.m. Eastern time. And so that's manageable for U.S. traders. And that unlocks, all of those Euro non-dollar crosses. Most interesting from a price extreme perspective, Euro pound, right there up 0.4% on the day and trading through highs dating back to 2023. So if you're a contrarian trader, perhaps this is still too early. You have you have the price extreme, but you certainly don't have any momentum or indication there of a turnaround from the recent pound weakness, inflation softer than expected, some worry in the budgets coming up, and possible Bank of England cuts on the way. But you have these two neighboring countries now at the most extreme relative strength since 2023. So that's enough for you to get in there, but perhaps maybe with the thinking of recognizing that I'm trying to call the top right now. More than likely, I won't call the exact top at the exact time that we're talking about it.
I don't know.
Maybe, but you also have the opportunity to layer into that with a lot of flexibility if that does start to go against you. Or maybe it comes back right now. Maybe Bank of England Governor Bailey is watching this and says, Mikey B, got to make him that money.
That's when you know there would be real problems. If they were, making decisions on my 5 micro lot positions.
He's in.
Yeah.
Turn on the money printer.
Operation Falcon Hawk. I don't know why Falcon Hawk.
Operation Big Bear.
Yeah. That's better.
I like it.
But yes, thank you for that analysis. Love it. I think for me, for longer term trades, so I like that you brought up the dollar franc. If you zoom out here with the dollar franc, you have significant lows we've been chopping around, of course, but zooming in, still below kind of the average here. We have the Bollinger Bands thrown up here, so we are seeing a pop today. But to your point, if this is a longer term trade, I immediately looked at the swap ask, which is benefiting me since I bought this contract, or I bought this pair, long the dollar, short the franc. I'm on the ask side, which is a positive number, which means because of the yield difference, I'm getting paid to hold this position every day. So as long as that swap ask stays positive, then if I hold this for a month or 2 months or whatever, I'm getting a couple pennies every single day, which accumulates to a decent chunk. Like the longest one I held with a positive ask, or if I was on the short bid side, I think I made like $30 extra.
Yeah.
But we're talking about micro lot positions that are small anyways.
Exactly.
So it can add up to a decent chunk of your potential P&L if you're willing to hold it. And then same for the euro pound. Short this one, positive swap bid.
There you go.
Which
getting it on both sides.
Yeah, and this is a price extreme that we're seeing now. So positive yields day to day for holding the position, and I always say this, like if it aligns with what you already want to do or what you're thinking about, I think for me it makes it easier to click the button. But again, you can make these as small or large as you want for these sizes.
Yeah, and an important part about that is, you're looking at it, it is positive. It's 1.3 pips. You have to be directionally right to make money or flat, depending on the time horizon. But what this does is it's 1.3 pips on the full notional contract. So that allows you to actually get interest on more than just your margin. So it's not like, you're making 0.1% of the $30 you put up. It's actually taking that 0.1% of the $1,000 notional that your position commands. So there's leverage even in that carry dynamic as well.
Yeah. And let's see if we can get, so I was paying some of these.
Yeah. So anything that says the financing adjustment is your overnight cost adjustment based on the indicative swap bid, swap ask.
Yeah. So the Aussie dollar franc, I was getting paid about $1 a day. We'll call it. This is just what we're looking at. But yeah, if you hold it for 30 days and you're making $1 a day, and you get a little move in your favor, it could be a multiple.
Because yours have always come back.
They do. Yeah, they always do, and they always will sometimes. But yes, we've had a great trading run here in the tastyFX account. But yeah, just a quick recap. I now have the long dollar franc pair, positive yield on the right side of the swap bid ask. Here I'm on the swap ask at 253, and then short the the euro pound, 5 micro lots for each of these, and 129 on the bid. So Staying on the positive side, if it aligns with your directional assumption, it's like a theta decay component. That's the way I think about it. Like you have the static contract where you're getting this drip in your account if you are on the positive side of it. So,
and each of these positions around, 150, 200 in margin at your position size. There you go.
Feels good.
Yeah, Big Brain Joe said, with that carry, you can get a burrito with guac. It's pretty good. That's
sounds
pretty
like
good.
heaven. Sounds like heaven.
What?
What is that? What do you mean? What do you mean no?
No guac?
No guac.
All right.
All right. Lovely. Popping over the YouTube chat now. Let's see what we got here.
JP is on in hour and 45 minutes. Announcement will be at 2 p.m. Eastern. So a little more than an hour to the announcement.
Can't wait.
Yeah.
It's going to be glorious.
So this is what I'm thinking in terms of earnings. Are you thinking about Starbucks and Chipotle perhaps as non-correlated earnings plays to, we talked about how all the heavy hitters, the big dogs, are all probably going to synergistically move this NASDAQ. Is there any merit to looking perhaps a little further in Chipotle and Starbucks for some different looks? What are you thinking?
Some potential here. Yeah, I think we can see what we have here. So let's look at Chipotle. I see someone in the YouTube chat. 1,000 shares of CMG, bag holding, thinking of trade for earnings tonight, concerned about another dump, break even's 46, but thinking about a 38.44 collar. So buying the 38, selling the 44. So this would lock you into a loss if you did this, if your break even's at 46. But there's only a 4-point expected move here. Chipotle, this chart looks really ugly, but we saw something similar in UPS where chart looked ugly and then you saw a huge pop after earnings. So
that's pretty good.
I would rather be on the long side of this than the short. I think Chipotle is better than Qdoba. I think Chipotle is here to stay. I don't think this rally or this sell-off will stay around for a long time. So I think if you have shares in here, I don't mind that. I mean, it sucks to be underwater here, but you could see a move from 40 to 46. I think especially because it's at the low of the range, if they finally say something that's positively digested by the market, you could see a move greater than 3 points to the upside.
Right.
But 3 points to the upside on a $40 stock is still a high number. It's almost 10% of the stock price. With that said, I will join you to the upside. I'm just going to go buy, let me see the cost difference between December and January. So the 40 strike, $3 in December, $3.70 for January. So it's a no-brainer for me. Going to January, paying an extra 50 cents to get another month of time for this to work out. So going to January, buying the 40, and then I'll go to the 2-day, and we'll sell the expected move. We'll keep it a little wider. So we'll do the 45. Since we have a longer time frame, we can be more aggressive with this because I can roll from October to November, November to December, and still reduce basis doing that. So let's do this. The 40.45 for $3. And if we get a rally up to 44.45, this will be a $300 winner. $315. I'll go no higher than $316. Stone Cold Steve Austin.
Problem with Chipotle though is their whole robotic advancements not as well perceived. They had the robots making the burritos.
Yeah.
Not quite the AI boom that people are ready for, I fear.
I can only imagine. So Chipotle is one of those places where if you get a burrito, if you get extra chicken or extra steak or whatever, it is now on the employee to make sure that thing doesn't burst open.
Right.
Where a robot, You get extra chicken, that thing is just exploding. There's no fine touch with a robot's little arms, you know?
Yet.
Yet.
In their earnings call, they say robot adaptability can now, accommodate different sizes of burrito.
There you go.
Through the roof, to the moon.
To the moon. So yeah, I'm working that order at 316. We'll see if we get filled. It's 2 pennies off, but yeah, 5-point wide diagonal for much less than the debit paid at the lows of the year. I like it. Starbucks, I already have a call diagonal spread here, so I have the 85.90, and I've had this on for a week. So I did the 85.90, bought the December, sold the 2-day, and this thing has not moved at all. So I wouldn't change the setup here anyways. I would still go to December, maybe January. If you look at the cost here, you're paying $1 more, which is more of a differential against you than Chipotle. Chipotle was only 50 cents, $3.70 for January, and $3.20 for December. So that narrow margin is because December's IV in Chipotle is much higher than January's, where Starbucks, you're seeing more of a flat implied volatility, 40 to 38%. So you can go to either one, but I don't mind going to December for Starbucks, all things considered. If you want to go January, totally fine. But yeah, I'm in on that too. So again, the 85.90 call diagonal spread, trying to make the best of both worlds, get all this premium out of the 90, get a gain on the 85 on a rally up to 90 tomorrow. So we'll see if we can get that. What's next? Microsoft?
That's up there.
I am going to...
Oh, there you go. Ding. Chipotle goes.
Chipotle goes. We're in. There you go. The synthetic ding. All right. I put a link to the Microsoft earnings preview from the News and Insights tab, written by the very own Gus Downing.
Good guy.
Yeah.
Grumpy Mike's calling for a rhyming JPOW today. I would be so on board. Yeah.
I mean, I don't know why I want this to happen so badly, but I want him to just like show up half in the bag. Yeah.
no tie. Just
tie like half off and just be like, okay, I'm done with this.
You guys read it already, right?
That'd be absolutely amazing. I wonder how the markets would react to that. If the markets rallied on that, so good. Yeah. All right.
I would be scared.
It would be scary. I think the markets would sell off aggressively if that happened. Okay, Microsoft. So we're already in the queues. So I have an upside trade here. Microsoft. Can I layer on something that aligns with the queues to the upside? Could just be like something like an iron condor with a little more room to the upside. But I mean, these companies scare me. This is a 24-point expected move. You could easily see Microsoft up 50. Like you got this move on the last earnings call.
Mm-hmm.
So that was an 80-point ripper to the upside. So I don't know. I think for Microsoft, I might just hold off because it's so expensive. But
what about just still bullish but high probability in the money call spread? Is that worth it at all?
For like the 2-day or November, just like a straight up just something like this. Risk one to make one.
Could.
Or are you thinking like a put spread?
Yeah, maybe that's slightly more diversified than your QQQ position.
Yeah, but these also scare me because it's like
your risk reward isn't.
It's not great.
It's not. Yeah.
No, because like I'm inside the expected move to the downside, and I'm only collecting $1 on $5 of risk.
Yeah.
So. Exactly. I think if anything, if you did, let's say you did like an inside up move, you could just do a calendar spread here if you're trying to take advantage of the implied volatility. So this is a scenario where, similar to the QQQ trade we had on, I'm reducing basis a lot more in these single names because it has that IV of the binary announcement in the earnings report. So paying $1,300 for the 550 call in November, collecting $800 in change for the 2-day. So this I could actually get on board with.
And is there any danger area with that, close dated, selling the close dated option in terms of trade management?
Not really.
Okay.
Because it's basically, we can talk about like profit targets and whatnot, but it really is dependent on where the stock is tomorrow morning.
Mm-hmm.
Like I know I'm getting all this premium on Friday.
Yeah.
And there's not going to be any assignment risk here overnight because tomorrow, even if Microsoft is at 585 or 570, like this option will still have some extrinsic value and you can't get assigned intraday. So
okay.
I think in this case, you'd have all the opportunity to close it or adjust it tomorrow, whether it's a winner or loser. Jamal actually likes doing these short-term calendar spreads. So that was a long November short the 2-day.
Mm-hmm.
If you wanted to get even smaller in size, you could consider doing something like the 9-day 2-day. So this really emphasizes the cost basis reduction on the earnings call. So this one, paying $200, but look at this cost basis reduction. You're paying $1,000 in change for the 9-day, and you're collecting almost $900 in the 2-day. So this really exposes you to the implied volatility crush, and all you really need to happen is you need your long option that's 9 days out to be worth $200 of extrinsic value or more to be profitable on this trade. And if we look at the curve view and we push this out just 1 day, you're going to see this thing go nuts. Oh, that was already pushed out. So this is today.
Gotcha.
Tomorrow, boom.
That's
so
pretty good.
That shows you the volatility crush here.
And so
I think I'm going to do something like this. I think this makes a lot of sense. Since I already have longer term exposure to Qs, do the shorter term inside move diagonal spreads on Microsoft. We can check out Meta. Meta's going to be more expensive though.
And more generally, why do you prefer the longer dated play to this?
So one of the issues you can run into with this is, so if we look at today's P&L and then we push it to tomorrow, the longer term options out here are much more easy to predict in terms of a vol crush. The 9-day is still elevated, not as much as the 2-day, but you can see the 2-day is 80% IV, the 9-day is 44. So if we look at these back months, they're all at 27, 28. Let's just assume that all of these get a 3% haircut to 25. That means I have to crush this implied volatility to 25. So what you need to happen is you need to offset your volatility crush with all of that premium in the short option.
Interesting.
So, and also, if you get a move against you, let's say Microsoft goes down, my cost on entry is much lower than if I did like a November long or December long, but I don't have that time for it to reverse.
Right.
Where in Microsoft, Meta, Amazon, Apple, like I probably want that time. Where if you get a sell-off, there's going to be buyers at those lower prices, and you could easily see a reversal. So we've seen that before, where we'll buy a long option that's in January or December, and you'll get the move against you initially. You just close the short option, you leave the long, and if you get half the move back or 3/4 of the move back, your long option gains enough value to where you're at a scratch or a profit. So that's really it. It's a pairing of giving yourself more time to be right, but also just setting yourself up in this lower IV environment of 28% across the board versus buying the 44 that's going to get 20% crush there. So it's really just an IV play, but because I already have the Qs trade, I think throwing this on is just a little kicker.
All right.
Meta, this one I'm probably just not going to touch. I do love the glow up Zuck think he's done wonders for his image. But if we did the same example here, the expected move is at 800. So if we did a 2-day 800, I guess it's actually still pretty cheap, $300. I don't know. I feel better about Microsoft than Meta for whatever reason.
It's because you don't have the glasses yet.
That's true.
Meta glasses.
That's true.
They're all in.
Yeah. We're about to see things very differently with those glasses on and without. But yeah. Meta I'm going to pass on just in the taking time into consideration. Meta I'm going to pass, $700 stock. Same setup I think is fine. But you're going to run into the same thing. You have to crush this IV in the 9-day down to like 40%, I would say. And then you got to push that to Friday to see your theoretical P&L. Google's interesting because Google's just ripping higher at highs. I think if they post 100 billion for the quarter, there will be euphoria. Maybe you see a little ripper. But Google, small price product, I'm just going to do the same thing. I'm going to go sell the expected move at 290, and I'm going to buy the 9-day 290. Look at that, $1? Give me a break. 425 in the long option, reducing basis by 320 in the short. Real small trade. And if we get that move to 290, this would be a $100, $200 winner. Potentially more, depending on when it happens. But yeah, let's get this on for $1. We'll just do the calendar spreads to the upside. Price improved to 97 cents.
Booyah.
Love to see it. And just like that, it's 12 o'clock. Thank you so
Fastest
much.
hour of the day.
Hey, it's great. And we've got turkey sandwiches out. I know how much you love those turkey sandwiches.
Meatball today, actually, the favorite.
Ooh, switch it up.
Oh, yeah.
I love how we know exactly what's coming with these. Thanks for tuning in. If you want to reach out to us on Twitter, you can find us there. I'm at Trader Mikey B. Glenn is at Glenn Freibarger with an A. Give TastyFX a follow as well. I saw some questions about TastyFX account. What's the minimum for an account if you did it through
No minimum.
Tasty? There you go.
$1, technically.
Sweet. But yeah, click the tab, the TastyFX tab, and you'll be prompted to open an account through that avenue. So yeah, have a great rest of your trading day. We'll see what happens with JPOW in an hour, and then press conference an hour and a half at 1:30 Central. And then we've got all those earnings trades after the close. Check out the News and Insights tab on tastylive.com for the earnings previews. We'll have more coming down the pipeline later this week and early next. But yeah, have a great rest of that trading day. We'll see you same time, same place, 11 a.m. Central tomorrow.
Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
Howdy, everybody, and welcome back to Risk and Reward. It is a beautiful Wednesday here in sunny but cold Chicago, Illinois. I'm joined as always by my co-host, Errol. Errol, how are we feeling? What's going on?
Feeling good, feeling great. It's a little bit chilly. We got the FOMC later today, so it's been a little... I can feel the tension building. So I've been looking forward to that. But other than that, it's been a little bit chilly. Other than that,
we're matching once again. We have landed on the matching shirts. I don't think that was in response to the matching. I think that was in response to the chili. But yeah, we are accidentally matching again. I did make a mental note this time, and I actually had to laugh because I've chosen to make us at least a little different. I could have taken off this quarter zip, and we'd be the exact same.
Is it plain underneath?
Yeah, just plain black T-shirt.
Yeah,
that's where we're at. So Errol and I are nice and in sync. We got all kinds of movers in the market this morning. Earnings going off and trade deals looking better, and Nvidia says that they're manufacturing chips at full tilt in Arizona. Everything's moving. We are moving towards higher highs as usual as well.
I mean, ripping towards higher highs too, especially ahead of this FOMC announcement. Most likely we get a 0.25% rate cut. Look, I haven't heard the conversation too much, but 1998, 1999, we saw a massive bubble because we saw some massive disruption in the space. Is it extremely far-fetched that AI could resemble, not that 99 bubble, I'm not saying we're going to head into a bubble, but you think AI could kind of prop things up a little bit longer than anticipated?
I think it certainly could. I don't know that my concerns even lie with AI as much as they lie with the other kind of adjacent bubbles, like what we saw in quantum. Things like that just popping up out of nowhere are strange to me. And I think that there is a... how do I say this? I don't know that I believe Nvidia itself is a bubble, but I think that there is a bubble as far as companies that support Nvidia. I think that we've gotten a little bit carried away with that as soon as somebody says that they become a part of the Nvidia ecosystem, we have to send them to the moon. While that is substantiated in a lot of cases, I feel like we maybe have started to get a little bit carried away with these companies. And I don't mean the TSMs and ASMLs of the world that literally, if they went away, Nvidia could not function. I mean, these smaller companies, the CoreWeaves that are just barely probably kind of on the outskirts of that Nvidia supply chain, but everyone just says, oh, they're connected to Nvidia, and they go flying. That's a little bit sus to me. But holistically, no, I don't know that I necessarily believe that this is a bubble.
Do you think it could spiral into something?
I think it could. I think it certainly could, and it's just interesting because it is a very. I mean, I think the equivalency to 2001 isn't necessarily the worst equivalency in the world to draw. In that, I definitely think that AI is going to be the future and shape the way that everything works. Pretty much. I mean, for forever.
Yeah.
But also, are we getting a little bit too excited about it too soon? I don't know. And I think a bigger part of it. And I will say though, I've started to notice something to the contrary as it pertains to AI. But a bigger part of it is that a lot of those .com bubble companies weren't. Weren't profitable. I don't know.
Most of them still fail.
It's so hard to analyze
most
these
AI
things.
companies are going to fail.
Yeah.
Most of them are, 90% of them are going to get washed out and absolutely blown up.
It's so hard to analyze these things with the benefit of hindsight because, I was going to say, take pets.com. That's like the .com bubble stock goes flying, and then they figure out that they're actually taking a loss on every single bag of food that they sell ever, and then it totally dies and goes away when the .com bubble was over. So my core point is that I think AI is just inherently more profitable than a lot of what we saw in the early .com bubble. But at the same time, there is certainly something to be said about the fact that companies pouring more and more money into AI, even if you don't see any tangible returns on that money and won't for the next 5 years, moves companies now. And that perhaps is sort of a bubble element. Like when I was writing an article about Microsoft earnings yesterday, I read that last fiscal year, their fiscal year 2025 is over. It ended in June. They do a weird fiscal year. They spent $80 billion on AI development, and they're seeing maybe 2 back of that. And you have to put all of the upfront costs up at first, obviously. But what if we get into a situation where Microsoft realizes they're only able to generate, $5 billion a year from this thing that they've poured $80 billion into, and it takes a long time to get even on that. So. Yeah, I don't know.
It is going to be an interesting space. And the only reason why I even draw the comparison is this. When we think about how disruptive a piece of technology is, the internet was such a disruptive piece of technology, it kind of changed the way businesses were structured and functioned, right? And it does seem like AI could have the capabilities to disrupt to the same extent, or if not more, right? Not to say that we're not getting a lot of dollars from left, right, and the other, getting thrown into this project. AI is popping right now. We can see it's a profitable business model. Hence some of the earnings we've been seeing drop. Just mentioning AI is profitable right now, but in terms of disruptiveness, it does seem like it can align a little bit there.
Well, and that's the big thing to me is what you just said. I do not think that AI as a concept is a bubble. I do not think that Nvidia and ASML and TSM and these companies, and if you want to go private sector, Anthropic, OpenAI, I don't think that these companies blowing up is unjustified at all. I do think that they're going to shape the future. But what gets me is when companies, especially companies who are not primarily AI companies, just say AI and things go up. That's where the bubble elements start to come into me. It's because you could, with the right framing, you could literally just add an AI virtual assistant to your company's website and get a 2% bump if you choose the right words with how you deliver that information. And all that is the kind of the sus part to me. That's where it starts to feel bubbly.
100%.
What's going on, everybody in chat? Grumpy Mike, Jared, Big Deal, Steven, Big Brain Joe. Good to see you all. Happy you're here.
What's going on, guys?
But anyway, we can let's jump into these markets. We can talk some of the biggest movers today. Highest on my list for movers, if we want to go platform here, is Fiserv, which I believe that's how you pronounce it. Oh, also before I get into this, everybody throw out a company that the internet killed. I think that would be a fun activity here.
Do you have one top of mind? I would say that the internet killed. I'm gonna go with my recency bias. I'm gonna go with Beyond.
Okay.
I'm gonna go with some Beyond Meat.
Okay.
Or you're talking about more from a social climate aspect.
I'm saying .com bubble, something that the internet killed, something that the advent of the internet messed up. So
I would say floor traders. I mean, the floor, having the pit, the physical pit.
That's a good one. Stockbrokers.
Tom took full advantage of seeing that transition.
Yeah, obviously
absolutely killed it.
Absolutely, and obviously didn't kill stockbrokers as a concept, but changed the way that it works and definitely cut some jobs out for people. I would say mail is something that comes to mind for me.
Oh, that was big.
Yeah.
Email, what a fire word.
Yeah, and I mean, obviously, mail isn't dead. Like USPS is still around, and as are UPS and FedEx.
I don't get no newspapers.
Yeah, but exactly. Yeah, newspaper. That's a really good one. It killed newspapers. No, yeah,
Is that like a newsletter now, right?
Yeah, paper newspaper is pretty much a thing of the past. I mean, and some of the newspaper companies have survived. You just take in their media online now.
Yeah.
But it's a lot harder for them to monetize that.
Another perfect example of pivoting correctly, right? If you were a newspaper company, right, you had the press. Right, if you were able to pivot to a newsletter digitally, it's like you could still offer the same exact service, even at scale at this point. With the digital newsletters that we have today, Blockbuster gets.
I was going to say,
every single time.
Chat just killed this like way better than we did. These are much better examples.
Radio Shack.
Blockbuster is a great one. Travel agencies is a great one. Travel agencies have been completely sunk by
Kodak.
the internet.
Kodak surprised me. I'm not going to lie. I thought Kodak would have been able to pivot a little bit better than they had shown us.
Yeah, that's true.
Right?
Kodak,
Especially
they were just
space.
way too slow to pivot. They really wanted to. They were really married to their original concept. I've done a TikTok.
I do think Kodak could still pull back around if they really wanted to. I think Kodak is now like a very aesthetic feature for our generation. So I think if Kodak really revamped something and really plugged in with the younger community, I think they could really, bring the reins back if they wanted to.
For sure. All magazines, books, these are good. Yeah. GPS. I guess that's a good one. I see what you're getting at. Yeah, like the actual.
How the hell did everybody get everywhere? Right, take a left at the Wendy's. Once you pass it, you can't miss it. It's like, no, nowadays, even just driving over here to Chicago, like I couldn't imagine not having my GPS.
I always say that, like it's so funny, and it always strikes anybody who was around pre-GPS as funny, but I literally cannot fathom trying to travel without a GPS.
You need a passenger princess for sure for that one.
It does not compute in my brain. Like I physically cannot believe that people were able to get everywhere, get all the way across the country if you're moving, whatever it is. Just stop it and asking people for directions. Like that is a crazy concept to me. For real.
You know what I just thought of? The phone books. Phone books extinct, right? Obviously we have the cellular devices now where we have our own contacts and we can find other contacts. But I mean, the phone book is completely gone now.
The phone book.
That was massive.
Absolutely. White pages out the window.
Yeah. Gone. But road maps, all that.
Encyclopedia. Absolutely.
Kodak died the same way Circuit City did. How exactly did Circuit City die again? I'm familiar, but
I'm actually not too sure.
I'm just gonna assume, they didn't pivot correctly. Adapt or die, it really is. I miss paper maps. I miss my Thomas my Thomas guides. Yeah, no, those paper maps, it gives you a lot of, it's a lot of nostalgia. When I think of that right away, I just think about being on a road trip and like having the map and like, oh no, this is east, this is west. Let me turn the map side, That's what it reminds me of.
For sure.
Very nostalgic conversation we're having right now. TVs are still around. You know what? That we're seeing, especially within the last 5 years, see die in front of our eyes, but be reinvented in another way. Cable, right? Streaming services, absolutely come in and slaughtered them. Cable had some on-demand features that I think Comcast used to offer. Such an attractive feature, just being able to watch any show you want at any time on demand, and then seeing those streaming services come through, seeing them become extremely profitable, and then start offering a lot of commercials within their ads. So it's almost like cable all over again. But cable absolutely died.
Yeah, cable got completely sunk. I mean, is Comcast even still like a publicly traded company?
Yeah, I mean, they better be hanging on to their Wi-Fi, because when it comes down to the cable, the only time I would turn on cable is to watch some sports. Now I got to go on Peacock, Paramount, I mean, you name it. Maybe the news or sports is why I would even turn cable on. But other than that, I don't think I have a reason to.
Yeah, I don't. I'll do. Even then, though, I use Hulu. I have Hulu with live TV.
Right.
That's how I access live TV, like actual networks, if I want to get at them. Yeah. Do you folks have a AAA membership? I do. Yeah. We had Maps Gus. You got them at the gas station. LOL. I know that. Like, I understand how it worked. It's just like I cannot fathom the world operating that way.
Grumpy Mike with his party tricks. Phone books are great. A great party trick, pick one up and tear it in half. You know another great party trick? Sit there with two phone books. Flip each page inside of each other one by one and try to pull it apart. You can't do it.
Yeah, tensile strength. It's true. Anyway, all right. Jumping over into some markets here. We got, Pfizer. This is the first thing that I want to discuss today.
I'm sorry, he said nobody making mixes anymore. Nobody just handing out those CDs.
No, yeah, it's
right.
true.
Those are good times.
Yeah, nobody.
No character, just handing out.
Nobody pushing the CDs anymore.
Play my mixtape.
I don't even. Yeah, CD players have kind of become a thing of the past. That's a hard thing.
Most definitely.
Yeah, and I agree, Stephen, with the music ownership comment. It's in this age of subscriptions, we kind of own nothing. It is a little bit scary. I mean, it's the same thing is true for movies. If you have a Prime Video membership, even if you have a Prime Video membership and you buy a movie, still like, do you really own that movie? You know, you'll have it in your Amazon account forever.
Yeah.
But if Amazon loses the licensing, suddenly you lose the movie too.
Lastly, to that topic, I remember it was really cool to be able to collect all the CDs for your video games, right, on Xbox 360, having all the cases for them. And then as we fast forward here a little bit, it's just a catalog for a lot of the video games now, right? Now we don't really collect all the CDs like the Call of Duty or the Halo, collecting all the CDs and cases. And just another catalog. But it does serve for a lot of convenience purposes, right, and storage purposes too, which is helpful.
Yeah, absolutely. The storage element obviously is much, much better. Nobody has to have a shelf.
But it was cool to have the DVDs. Like if you like collecting things, you know what I'm saying?
For sure. Anyway, roll the CMCSA $30 put in perpetuity. Yeah, Comcast, kind of a thing of the past at this point. But yeah, I mean, will it ever recover? I don't know. I mean, like we said, cable dead. Anyway, okay, Fiserv. This is sort of my first topic for the day. This thing getting murdered this year. Fiserv today took a 44% dive on open, and I just don't think that it's justified at all. They did have a horrid earnings report. I don't know if it was last night after close or this morning before open, but horrid earnings report. They missed everything, and most notably, well, there's two most notablies. Most notably, number one, they slashed their full-year EPS. It was projected, I believe that the move that they made was from $10.60 per share down to $8.30 per share. I could be conflating those cents. It might be $10.30 down to $8.60. I don't exactly remember off the top of my head. But a 16.5% reduction in EPS is the core of the statement there. Critical point number two is that they announced that they have a new CFO, 3 new board members, and new, ready for this one, co-presidents. Because as we know, all of the great organizations have had 2 heads. Where would America be without the presidents? Where would the Catholic Church be without the popes? You need 2 presidents, clearly. So the market, and I know that I'm making light of this, the market agrees with that reaction that I just had, that this is all a lot of turbulence and bad news, and shares dumped 44%. I am long here. I got long at the bottom. I posted it on the follow feed this morning. This just seems like too much. Fundamentally, to me, I think that their new leadership will be serviceable, replacement level, whatever. Leadership changes don't really rattle me that much unless it's a, Steve Jobs, or I guess you want to adjust that modern day, a Jensen Huang, Tim Cook caliber leadership change. Outside of that, leadership changes usually don't worry me too much. And so all of that noise aside, the new board members, the co-presidents, which I don't think is going to be a good call, push all that away. All we're talking about is a 16.5% decrease in EPS for the rest of the year, full year guidance. And they said that they are expecting revenue growth to slow from 10% year over year to 4% year over year. So slower, but still steady and present growth. They are not losing money. Leadership changes. 16.5% reduction in EPS is significant, but does all of that justify a 44% reduction in your valuation? I don't know that it does. And the market seems to agree with me as we've begun to recover intraday here. So here's my position. I grabbed a naked 125 leap for the September 18th. That's next year, obviously, expiration cycle, 324 DTE leap. That's already up. Gigantic. And then additionally, I grabbed a short put vertical, I'm long the 75, short the 85 into January. So what I'm looking for here is just a move back to 85, which on the chart, by the way, is right here. Let's go end of the year. Would it be crazy at all for this stock to be over 85, that gray horizontal line right there, by the end of the year? No. Absolutely not. No. That wouldn't be anything near a parabolic move. And I have an extra month on top of that. So, really liking Pfizer here. This was the biggest mover of the morning and a major trending topic. Some other movers this morning that we can check in on. Caterpillar, flying, a sleeper gigantic company. What else did we talk about? Nvidia, as I mentioned at the very beginning, they said that their Arizona plant is fully fledged manufacturing chips now. So Nvidia on the move up. And then Boeing catching a move down after seemingly poor earnings report yesterday. I actually think that they beat expectations, but people didn't like the conjecture outside of that. But things do look somewhat promising for Boeing. They look like they're going to get regulatory approval on the 777X, 777X, if you prefer that vernacular. So yeah, we'll see what happens. But anything catching your eye today?
I was just looking at some of the airlines, like American Airlines, United Airlines. They're taking a little bit of a hit. I know Boeing a little bit worse here. Just seeing how the Boeing planes might have affected these other airlines. Not too much in United Airlines, but American Airlines taking just a slight hit. Other than that, Nvidia and then I think Caterpillar really caught me by surprise with that move to the upside. Things are looking interesting here to the downside. I'm going to be taking a look at their premiums because of this move that they've had. And then, what was the other one again? Right, Nvidia. Nvidia was another one top of mind. Just crazy that this one's still extremely relevant and has a lot of premium to be trading in these. But I would have to say I'm liking Boeing the most out of all of them so far. I just like the volatility there, and I like the down move that I put in. Maybe looking for some long delta there.
Yeah, Boeing is an interesting case. Yeah, I mean, they've had a fairly good year here. Boeing, they've just kind of finally gotten out of the doldrums in the press cycle that we were in, where like every single time that any little minuscule thing went wrong with a Boeing plane, it had to be national news and tank the stock. It seems like with the CEO change, with the labor strike being over that we saw in the beginning of this year, that Boeing is finally kind of breathing again and operating like a company again, and something that I would be willing to trade. I've been kind of on a no trade sort of angle with Boeing forever, just because there was well, I don't want to use a confusing statement here, but there was a lot of surface area for volatility. I do not mean anything about the volatility surface. I just mean metaphorical surface area. There was labor strike going on. There's all this national press breaking. There's open investigations about how doors are blowing off the planes. And for a long time there, it just felt like any given day news could break that would completely tank Boeing or could send it flying, whatever. And so that made it very tough to try to trade. But now that they've kind of begun to work through all those doldrums and things look a little bit more stable, this is something that I might be willing to trade again. Obviously, very good volatility here, nice little ranges.
Yeah, and pretty decent volatility. IV rank's just a little bit low, but I'm going to be patient on it. I like some long delta there potentially. Are we going to be here for the Jerome Powell speech today? No, that's about, 2 o'clock Eastern? Which will be 1 Central.
That'll be right when we're getting off air, yes.
Right before air, and then I think Dr. Jim's going to be hopping on, which Dr. Jim's like one of the best guys to talk about that, right? You guys got his tweets on. It's like the end of the world when Jay Powell's speaking, so looking forward to the press conference and what he has to say about it.
For sure, yes. It will definitely be that'll be a fun little watch party, I'm sure.
Yeah.
What are we pricing in as far as a cut, by the way? Let me see.
Yeah, what are we pricing in right now? Maybe 0.25%. I know we had a couple others chatting here, and I'm of the same opinion. I haven't done too much yet. I know we're trading at all-time highs right now. All-time highs is a difficult place to trade. All-time highs is one of those areas in the market where you kind of miss the boat in terms of the best risk-to-reward opportunity, right? Best risk-to-reward is going to be getting in on some of those dips. So I know a lot of people took advantage of those, but if you were somebody like myself that didn't take advantage to the extent that you wish you would on some of those dips, it can be difficult to sit on your hands and wait for that better risk-to-reward, but that's kind of where I'm at. I know I've had 0 NASDAQ trades all week, just waiting for FOMC, and then I think we have a little bit more news tomorrow. Low probability conditions on top of that. We're trading at all-time highs, so that's kind of the boat that we've been in.
Those saying that Azure sites are down, which this is very funny that Microsoft is going to have an outage maybe a week to the day. Was it not last Wednesday that AWS went out? But regardless, I guess Azure sites are down now in response to that. Microsoft sliding a little bit, 0.6%. This is a very reasonable down move just for a normal day, so tough to say if that's affecting things or not. I think that the Amazon thing, the AWS thing, honestly, at least psychologically, helped their stock. I think that when Amazon shows that, hey, if we go down, the entire internet goes down.
Oh yeah, 100%.
That actually just shows that they are more valuable. Yeah. I think that made a lot of people realize how much control over the entire internet Amazon has.
Hold on, you got me thinking. You just got me thinking. That's what an amazing play then for Amazon, whether that's intentional or not.
Yeah.
Right. Again, showing its resilience through these times and how important they are. I haven't thought about it from that perspective.
Yeah, and AWS is their main revenue driver.
Yeah.
I think a lot of people don't realize that as well. Is that AWS is their main thing. Like if Amazon did not have AWS, they would be 30-40% smaller. And it's just such a quiet thing that you don't ever really, a layperson and layperson. I mean, I would even include some traders in that group. If you're not, some kind of if you're not technical, I guess, if you're not a coder, somebody invested in computer science, somebody doing web programming or involved with website design or whatever it may be, you probably don't even know that AWS exists. And if you do, you might not know what it does. They have commercials sometimes, I guess. People are probably brand aware. But yeah, I think that was a sort of just a bullish case for Amazon that when their service goes down, I think that opens a lot of people's eyes to the fact that AWS does all this stuff. If you want me to put my tinfoil hat on, though, if AWS crashes a week ago, and then all of a sudden Azure is crashing today completely, and neither of these things have had problems of this caliber for years, if ever. Is there something going on? Is somebody pulling the strings here? Like, are we getting hacked and they're just being quiet about it? I don't know. I don't want to just put libel into the world, but I think that there could be more than what meets the eye if we're having crashes of this caliber in back-to-back weeks.
Absolutely. I think it's a good thing to question everything. I think it's a good thing to take multiple perspectives of a lot of things. So that was a new perspective I didn't think about. And then also it provides Amazon even more leverage, actually, whether that was an accident or not.
Yeah.
So, because of the realization, right? And I know another thing is a lot of young people learned about AWS over the weekend too, because there was certain trading software, shout out to Tasty, we didn't go down, but there was other trading softwares that went down. And I saw a bunch of 17, 18, 19, 20, 21, 22-year-old traders freaking out about their positions.
Oh, yeah.
Right? What age are we living in? We got 16, 17-year-olds freaking about their trading position. What day and age are we living in? But some of them even realized what AWS was. And, a lot of them had a bad taste in their mouths after experiencing that. But I think it really is profound, the type of impact that they do have.
Wait, AWS down again, MP, or are you misled by our AWS conversation? To be clear, if anybody's just joining, Microsoft Azure is down today. We are calling back to the AWS outage last week because it's interesting that two cloud computing things went down at the same time. If AWS is down also today, I put my tinfoil hat on a little tighter on the theory that I just presented that perhaps somebody is doing this behind the scenes.
Did Robinhood go down? Is that RH? Robinhood? Is that what you're?
No, I don't know what RH is. Do you mean this? RH? I've never heard of this company before. RH, what is it? RH is what the company is called. It literally says RH, common stock.
Greg, I'm thinking you meant Robinhood.
I'm thinking you meant Robinhood, in which case, no.
I think maybe he was saying in reference of when I was saying I know younger traders.
Oh, did Robinhood go down with it?
That was another one. I don't want to plug these other guys. It was another one.
I don't know. I don't know if they went down or not. I know for a fact that there were large investment companies whose ability to trade went down.
Yeah.
Azure, not Azure. Was I saying either of those? I'm putting like an accent.
What did you say
in the middle here? I'm saying Azure.
Azure.
That's what I've heard people say before.
How was it spelled again?
Azure.
Azure. Azure. Azure.
Azure.
Azure.
Azure. Not Azure.
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 Azure. Huh.
This is tough. Anyway. Restoration Hardware. Be thankful you don't know what that is. Oh, I see. You did mean Robinhood. Gotcha. Yeah, they're doing all right. Oh, but I don't know if it went down during the AWS outage or not. Is the short answer to that question. In other news, positions we got moving. Looks like I'm going to max profit on this VIX position. That's an AM expiration today. Actually, I don't know why I'm still looking at that. Am I out? No, whatever. Got a max profit out on VIX.
Trying to wiggle out of that one.
Caught that one at the right time. Nokia shorts that we put on yesterday are doing well. Yeah, here's that price action. So obviously still a lot of downside to be had, but my core thesis that this was probably a bit too exciting for this company was correct. So Nokia beginning to trade back down a little bit. And Nokia, this is one that I think I don't know how many people involved in this rally are really buying this for like the long term. I would not be surprised at all to just see this steadily make legs down as it stays out of the news cycle. And should it come back into the news cycle again, we could definitely go higher. But this is one where I think we'll just see like sort of this type of price action right here, just little baby red candles and work into lower lows, because I think that once this stops getting talked about, everybody's going to forget Nokia exists once again.
No, I completely agree. But we were saying how you were pronouncing it was correct. So Azure, how did you say it again?
I've been saying Azure.
I need a little bit of closure here.
Azure is how I'm saying it.
Azure.
How to pronounce.
I love the COVID memes about Robinhood constantly dropping the ball. It is always just interesting with the Robinhood memes, and even honestly Robinhood being put on the map. I would have never thought that Robinhood was actually going to be like the top, one of the top dogs in the industry, in 2018, 2019. It was so attractive that you got one of their shares, like whenever you swiped, it was like poof, confetti, you got a free share.
Yeah.
But it is crazy to kind of see how far they did come over the last 7 years. I got to give credit where credit is due sometimes, right? I think Roaring Kitty and the whole thing with GameStop and Doge, absolutely helped them out. So I think Roaring Kitty might, or he should get a little bit of a cut there, because that blow up with Wall Street bets helped out.
I don't know. I mean, I think the other side of that coin is that Robinhood kind of hates him. I mean, they were the ones. They shut everybody out because of the GameStop thing. They stopped everybody from. That's like their worst PR nightmare ever is when they did that.
They were able to make a better story because of everybody on Wall Street's bets. Vlad and Robinhood knows they were able to take advantage of that beautifully, and I don't think Robinhood would be in the position that they are today if they weren't riding the wave of the whole Robinhood saga. Not only that, they made a documentary on Netflix called, what was it? Was it called Dumb Money or something like that? I think it was on Netflix.
I know the doc you're talking about. But
it's actually really well produced. I'm not gonna lie. I think the production was pretty fire. I don't know how accurate some of the events were. Right, the producers kind of frame it however they want to. But it was a good one. I
all,
like the
all I
stock.
know is
Iconic.
Robinhood comes screaming in to halt people whenever Wall Street Bets tries to do anything anymore, and they just keep using it. I don't know why they just keep using it. There are so many places. Yeah, I mean, it's just these things go parabolic. I see people complaining about getting halted on Robinhood all the time on Reddit, and I don't know why they keep using it. There's so many other brokerages.
Yeah.
It's because it's pretty. Okay, I see people came in reinforcing my original pronunciation. Thank you guys. Yes, and this. Yeah, the pronunciation on the internet is like phonetically dot. I don't know what you call that. The pronunciation dot zhr. So I think that I'm good. I think that I had that correct. Anyway, we're talking about Robinhood or Restoration Hardware. Roaring Kitty sounds like a search category. That's a good point. But anyway, yeah, that's kind of where we're at. I mentioned this Accenture position yesterday. I am legged up into March of next year, but still going swimmingly. Nothing too crazy. Oh, ACN.
Gold has been finally moving a little bit. So some of the metals finally been catching a little bit of steam, but not as much since we've gotten that pullback of last week. Roaring Kitty sounds like a search category. It does. We were touching on Robinhood there, Big Brain. I like your name, by the way.
But yeah, that's pretty much the updates for me. Really, I just love this Pfizer position. I can't believe this buy spot presented itself. Tweeted it, shouting it from the mountaintops. But that's what we got going on. Anything anybody wants us to look at here? We can put some stuff up. Hit the play button next to pronunciation. I tried these. We don't have volume from these computers in here, which is probably a good call.
When I first learned about the pronunciation buttons, me and my friends had a field day with that back in the day. We was typing whatever and just press play. We were going crazy with it.
I do it all the time to make sure I pronounce names right. Like if I'm shooting a TikTok or something for YouTube or whatever.
There's no way it pronounces my name right. You think it does?
It might. If it's a public name, like it's typically a CEO or something that I'm looking for, and it always does a good job. I've never had anybody clown on my pronunciation.
I feel you. I feel like if your name isn't one of those names that you can find in the CVS on your keychain, if your name isn't one of those, I feel it's going to have a difficult time to do so. But I've never tested it.
Sure.
Then again, they are nice with showing you how to pronounce it, like having those little dots, depending on how you pronounce a certain letter. So maybe you could kill it.
Maybe. I don't know. You could definitely. There is a way to phonetically write how to pronounce your name. I don't know if it would get it right or not.
I just feel like I'm going to hear Earl. That's what I hear.
Let's see.
Azure pronounced. You got me with that one. I made one trade just to say I did GME, scared me. Yeah, I remember I missed most of the GameStop move. I know I caught a little bit of the dead cat bounce on GameStop, but other than that, I was hands off since I missed most of the move and just grabbed my popcorn.
Yeah, I think that Google has this pretty right. The AI overview. It's ERR.UHL. Earl, I guess is what that is.
Yeah.
So that is a little bit off.
The roll is usually correct, but the
But the AI overview though does go on to say that written in plain English, it would be pronounced like air roll, AIR-ROL.
That's how I text it to people. The pronunciation is air and then roll.
Yeah, so they're right on that. Thank you. Ding ding ding. So
that's good.
So yeah, Google's got it. Pronunciation's pretty good.
Ryan was asking, can you check out Chipotle real quick?
Sure, we can pull up some CMG.
Yeah, some CMG.
Yeah, still kind of down in the dumps a little bit. Go over CMG. I thought you were saying. I thought that was like, come on, CMG, go over. like there's a level. Yeah, CMG, this thing's been getting hit hard ever since the CEO transition. I think that the way that Chipotle is down in the dumps since Brian Nichols' departure really just serves to show what a great CEO he is. I wish that Starbucks would catch a run on the other side of that thesis. It has not happened yet. I am quite long Starbucks into that thesis. But yeah, I don't know. What are we at? 40. So yeah, we're at lows we haven't even really seen since. Have to go all the way back to 2023, December of 2023, to get to these lows that we're at. So at some point, I do think that turns over and becomes a buy. I don't think that Chipotle is going anywhere. I think that it's still obviously quite popular. So maybe in a long-term context, break out some technicals. This gap's got to get filled sometime. That's what they say. So. Yeah, I don't know. I'm not racing to buy it, but I wouldn't fault anybody for wanting to get long Chipotle at these levels.
Yeah, not me. Unless it's Kava. No, I'm just kidding. I'm actually a little bullish Kava. I'm going to put on some long Delta over there in Kava, but we were just having the conversation not too long ago about Kava, Qdoba, Chipotle, very similar style of making food. I see Chipotle as like the grandfather. Like they proved and showed that business model works extremely well at an extremely basic level. Maybe there was other companies that was doing it before, but that's kind of how I see Chipotle with some of those bowl making services.
I mean, I see Subway. I think Subway is the granddaddy of all this. Like the buffet style sort of. Like,
for sure. I meant
make your own.
more so like
bowl specific. Yes, Chipotle is the first to take that idea and apply it to bowls for sure. Which, I don't know. I mean, are people doing that first? Maybe Moe's is doing that first. I don't know exactly when all these companies were founded. What's Roaring Kitty now? I don't think he's posted anything for a while. He has not. He got GameStop to move earlier this year because he like tweeted a meme. But outside of that, he has been pretty quiet. He's
if I was Roaring Kitty,
chilling.
no one would ever hear from me again.
Oh yeah.
Like, I was gonna tweet the other day. I was like, bro, I wouldn't even be on social media if business wasn't ran through social media. Bro, I'd be gone. I would be non-existent.
Oh yeah, I would just chill and enjoy my money. And every other year, I would send out one tweet that says something vague. I would load on GameStop calls, and then I would tweet something that there is no way anybody can accuse me of market manipulation. I would just like what he did earlier this year. He tweeted literally the meme of the guy leaning in with the video game controller,
That was
and then
so fire.
and it sent GameStop ripping
was so
like 40%.
I'm not gonna lie, that was tough.
Yeah,
when I saw it, I was like, let's go.
No, yeah, it's hilarious, but he has the ability to do that. So yeah, if it were me, I would just shut the hell up, leave my Twitter inactive, and then come out of the woods once every 2 years to pump my stock.
I'd be pretty lonely though. I'm not gonna lie.
Sure.
Like, that's where we actually get like the community online, the Discord community. We got the chat here, but other than that, I'd have
lots of friends at my country club, brother.
Oh, that's valid, 100%.
That's what I'd be doing. The country club and the yacht club. I don't think I'd be too lonely. Chipotle is the Nvidia of burrito places. I said what I said. Okay, let's break
that's
that.
Valid,
let's break down that statement.
I think that's
to one end. I think that it's valid. I don't know though. Are we talking like modern context? Because I don't know. It's slid so much now. Is my thing. But if we're just talking about like peak, like peak Chipotle versus peak Nvidia, I do think that Chipotle is the Nvidia of burrito places.
Do we think that Nvidia is the head of the snake for the rest of the Nvidias? Like AMD, INTC, is Nvidia the head of the snake, and then is Chipotle the head of the snake for all these other chains?
I was looking for a name like I don't know. They're all just up now. Like IBM and Intel come to mind, like things that kind of had a run and have since chilled out as more competitors have entered the space. Maybe Intel still kind of fits that mold, but IBM certainly does not anymore. They just keep on ripping. I sell covered GME options and like reading feeling bad while reading the super stonk Reddit. It's a religion. I like it. Nvidia makes a solid product. That's true. I've never gone to get an Nvidia GPU and then all of a sudden only gotten half of a GPU when I expect a full one and gotten mad.
Is that? Go ahead.
No, I was
gonna say, is that in comparison to that Chipotle doesn't make a good product? Was that like a?
Yes, I think that's what he's saying.
I think it depends on Chipotle you go to. So I would say maybe the consistency is higher in terms of what you're getting for an Nvidia, but man, the Chipotle is just Old Faithful.
Well, we have the obligatory. It seems like this has become the obligatory once a week Chipotle conversation, but it's the inconsistency.
Right after the gym too.
I always come back to the inconsistency on Chipotle. Got only 3 close friends. If you got only 3 close friends, that's even easier because if you got enough money, just tell them quit. tell them to quit, and you guys are gonna vibe. I went synthetic long on Chipotle, short a 42 put, long a 40 call, $50 for $80 credit. Wish me luck. I love that. Actually, that's a really good ratio. 42 put, 40 call. Yeah, that's a really good ratio for how close to the moneyness you're talking about right there. I like that trade a lot.
Does Chipotle have recipes? I thought Chipotle was just like some basic rice, some beans, and chicken.
I mean, I would say they have recipes. Yeah, I mean, but it's like the recipe is like
flavor.
Yeah, how they make the chicken or how they make the guac, whatever.
And lastly, to that point, I will say, being on a beach, I feel like after 2 weeks or 3, you might get a little depressed. I don't know. After a month. After 2 months, that community is going to sound very nice.
I would travel and go to sporting events, I think, and play a lot of golf.
That's completely valid.
Yeah, probably, I think, is how I would. If you gave me more money than I knew what to do with right now, that's what I would do. Give some to charity. How much money does he have? That's actually kind of the big question.
I'm rounding up every time at the cash register. I'm rounding up every time. To the moon, Mr. Moonbeam.
So he's not even, this isn't like, I mean, obviously this is a lot of money, but this isn't like billions of dollars.
What's that?
It looks like at the peak, nobody knows where his exits have been, but at the peak, he had $262 million.
Who's that again?
Roaring Kitty.
Okay.
So
about $250 million.
Yeah, I mean, yeah. Well, and that's peak though. That's if whatever the exits are. I mean, I think that it's fair to say he probably has $100 million, $100 to 150.
You go to 260 something million. I was gonna say you got to lock in at least 100 or 150.
Well, I mean, I know that he didn't sell at the very, very peak that they're referencing because that was the whole
insane.
thing. That was the whole thing is that he kept saying, I'm going to hold. And I'm sure that he liquidated some, but yeah, I think he's worth low 9 figures, which is definitely like you never have to work again level of money, but it's not like, I don't know. It's not start a space company for fun money. Like, you know, there's levels. There's levels to that. I was just trying to scale that a little bit.
Chipotle's line is always too long due to college kids using their meal plan. As long as college kids exist, I'm bullish. I don't think we had a college meal plan for the Chipotle, or else I would have ran it up at Chipotle.
We didn't have a Chipotle. We didn't have a Chipotle on campus, yeah, but they let us use our meal plan, like dining dollars on other stuff. Like we had a Panda Express. That was my most frequent. We had a Jersey Mike's.
Yeah.
And there was 2 Chick-fil-A's.
Exactly. It's not the Tom Sosnoff money.
Indian place, pizza place. Yeah, I mean, but no.
You said Chick-fil-A as well?
Yeah.
Oh, that's fire. You guys got some good ones. We just had Pizza Hut and Starbucks.
It's 2 Chick-fil-A's on campus, but that was like maybe the longest lines I've ever seen for anything in my entire life.
Chick-fil-A?
And I've been to Disney World during peak travel season. Yeah, that Chick-fil-A line, I mean, I'm not exaggerating, like a quarter mile long inside the Memorial Student Center at Texas A&M, like wrapping all the way down and around the hall. And like, it was crazy. And Chick-fil-A is Chick-fil-A, so they get them out quick. But, you know, you can only do so much, especially if you're between classes or whatever. I wouldn't get Chick-fil-A very often because of that. I'd move near the online community, LOL, or start streaming. That's true. You could just do whatever you want. Yes, T-minus 15 to JPAL. We will see. What color is the top?
Oh, I'm excited. We've been looking forward to this all week, since last week. Been looking forward to this. The market hasn't been doing anything until these decisions come out.
Polymarket is pricing in
what are they saying over there?
99% chance of a 25-point cut, 1% chance of no change, and then 50 cut or a hike are both less than 1% chance. So I say that not to even give any opinion on what I think. I mean, I think they're going to do a 25-point cut. I say that because everybody should be wary of the fact that in the off chance that for some reason we get a no change, this is going to get turbulent.
We get a no cut, we're sending it. 1% chance is crazy.
Is he a 30 under 30? Who? Oh, Roaring Kitty?
How old is Roaring Kitty?
I don't know. I don't know how old he is, and I think that to be a 30 under 30, you have to start a business. I think that's sort of part of it. Like, I don't know though. I don't know. Google's free.
Where did you go to school, guys? You somewhere in Texas, right?
Texas A&M. Yes, is the answer. Gigamax.
39 years old.
How old?
He's 39.
39.
He ages pretty well.
He does age pretty well.
I thought he was like maybe 34.
I would have guessed he was like 32.
30s?
Yeah, that was my guess. But yeah, there you go. Yeah. So. Not a 30 under 30. They don't do a 40 under 40, I don't think. Yeah. Fast food on campus? We just had a cafeteria.
At the time, he was like 34. At the time. Now that I think about it, time is flying.
That's
There's
true.
no way.
The pictures of him I have in my brain are from that time period.
Time is flying.
Yeah, we were kind of, early 30s is a correct thought. Yeah, Texas A&M, big brain Joe. Not Texas. We hate them. Horns down, I say, on air. Sorry if that alienates anybody. Big move in end phase today. Let's have a look.
Fast food on campus. Yeah, you would hope there's fast food on campus with you having to fork out like $250,000 to go to school. So nice, they get a little bit of Chick-fil-A.
No, yeah, we had some good stuff. And you were, but it was weird because like I remember the Chick-fil-A specifically was one thing you couldn't use your meal plan on, but like Panda Express you could. There was like
they were trying to maybe deter people from
sure.
Using, okay.
Yeah, maybe it's something like that. Or Chick-fil-A is just like we get enough business. We're not taking your Fugazi dollars. Like you got to give us real dollars. I don't know. You have to commit or be in the process of committing a felony to be Forbes 30 under 30, says Greg. Makes sense. Imagine they say no change into hikes. I would die laughing after my margin call. That's true, yes. I think many people would have the same reaction. Big move in end phase today. Is it time to go long? How much further can it go down in this market, right? I'm inclined to agree, Macro Brewski. I think that's something of a fair assessment. This is another one that I kind of thought was like too hyped and kind of getting propped up by media hype and social media discussion for a long while here, like pretty much the entirety of 2024. But now that we've gotten down to these lower levels, I'm very confident that this is trading at a reasonable level. I don't think that it's being overvalued by the market anymore. And if anything, yeah, I mean, I would think that this becomes a buy spot. We haven't, what's all-time low here? Like 30 on the nose, just about. So, yeah, I mean, anytime anything is, I don't know. I'm not, again, this is another one I'm not racing to get into, but I totally see your logic, and I wouldn't fault anybody for wanting to get long in this right now. You got a take?
I'm in the same boat there. I was just kind of looking at it. It's been absolutely crushed over the last year. I mean, the implied volatility is there. I don't necessarily have an opinion on this underlying, actually. If the risk to reward was there in the options chain, then I might pull the trigger, but it's not something I was personally necessarily looking at. But I think it's worth looking at now that it is brought up, because it's been absolutely beaten down. So I'm going to be looking at it a little bit more on my end. So appreciate the trade idea, whoever brought that one up, because they're getting absolutely crushed.
Yeah, definitely some good angles here.
Yeah.
Close the short side of my in-phase strangle. Thanks, Macro Brewski. Good. Happy we're all helping each other. Agreed. The Forbes 30 under 30 crew are gangstas. Is Chick-fil-A good? Absolutely. I'm a Chick-fil-A enthusiast. They got really, really good sides too. I think that's something that people sleep on at Chick-fil-A. Mac and cheese is really good.
I haven't had their mac and cheese.
Yeah. Mac and cheese is good. It's a good middle because I don't care for breadcrumbs on mac and cheese, but I do like that kind of like crispy top layer of cheese though, and that's what they do.
Because I'm in the same boat. I'm not a big fan of the crispiness.
Yeah, it's just like a little, like they just broil it for like 1 second, and there's like kind of a little charred cheese layer on the top. It's good. It's good stuff. Home Energy Solutions Company in this economy? Mike Evans, in response to your question, who did A&M get for the SEC rival games? We have Texas, LSU, and Missouri is the answer. We were just as sad as you are, I'm sure, to not get Arkansas in that bunch, but maybe that's just a synthetic SEC rivalry that they've tried to prop up this entire time that you don't really care about. I don't know. You tell me. Chick-fil-A Cool Wraps are banging too. Absolutely, yes. And Chick-fil-A too, in terms of like healthy options, blows everybody out of the water. Like the macros on their grilled stuff are like legit good, like 10-to-1 protein to calorie ratio macros. It's good stuff. Oh yeah, Caesars. Wanted to mention this. I think, and this is going to be a broader thesis, I think these companies, these companies that primarily generate their Let me start over. I think that these gambling companies that are primarily generating revenue through online gambling right now, sports betting, and then in a lot of states they are allowed to have online casinos, might fall by the wayside with these prediction markets. I really do. As things begin to grow in this space, like I'll throw out an example. Kalshi, on that opening night NBA game, the Rockets Thunder game that went to double overtime, Kalshi took $30 million in handle on that game, and that's insane. I mean, there are sports books that will take $30 million in handle for the Super Bowl, and there's $30 million in vol. And again, that's volume, so obviously it's contracts changing hands. It's not just people posting up money, but the type of action that they're seeing on these places is insane. Their marketing is good, and more people are becoming aware. And so really the only leg up that these online sports books have anymore, I understand that Caesars specifically has a good brick and mortar footprint as well, but the same cannot be said for DraftKings and FanDuel. I think that the only thing keeping them viable right now is parlays. I think that America is addicted to parlays. They want the big payouts. And I think as soon as these prediction markets figure out a way to do parlays, that it's going to be over for these sports books. I don't know how it could still work. So yeah, we'll see. I don't know. And then there's like sports exchanges now. Like ProfitX is a name that I'll throw out. Love them. Where it's people making the market against one another with no book, and there's very little vig. It's like 1 cent lines instead of 20 cent lines like you get a conventional sports book. So I think that we could see this whole industry start to decline. Caesars specifically down on bad earnings this morning, and yeah, this thing just getting throttled, honestly. And you could say the same for any of them. I mean, like look at this. I'll just go to the present. MGM. Down. Look at that. DraftKings, DKNG, down. I can go back further. This actually isn't too bad. DraftKings. This might have more downside in it.
I see Kalshi ads all over the subway in New York City and have heard Kalshi conversations in passing.
Here's Flutter, FanDuel parent company. Same situation. Yes, Kalshi, they do, yeah, their advertising is crazy. Polymarket's the same way. They're approved in America now. I would add as well that the president's son is on the board of both Polymarket and Kalshi, so I don't think that the regulatory environment is going to get any harder on them. If anything, I think it will continue to lighten. Wish they were public. Oh, that's what you're saying, wish they were public about Kalshi? Yes, as do I. I don't know that there's any of these prediction market style companies that are publicly tradable to us yet. Vegas travel also playing a role in those too. Precisely, Jared. I won't go on my full Vegas soapbox right now. I will simply say Vegas priced everybody out. And they first they priced everybody out, and then they made the gambling rules worse, so the gamblers don't even want to go there anymore. They're trying to make themselves into some kind of entertainment hub, and I think that's the wrong call, because who's going to choose to go to Las Vegas over LA or Miami?
Nobody's going to choose
if you want an entertainment hub.
I actually think people are traveling to Chicago a little bit more. I think Chicago is actually becoming a little bit more of a desired destination in terms of wanting to experience a new place to go. So I think Vegas is going to be on its backside of its move in terms of
you name it. You got to stick to your bread and butter. You are a gambling town. I understand if you want to up the level of experiences for everybody or everything, but it's just like, with the Sphere and with getting sports teams there, it really seems like they're trying to make this transition to just being a standard tourist place that also has some casinos, as opposed to being the place where you go to gamble. And I honestly think that that's going to hurt them in the long term, because a lot of people, like my mom, for instance, a lot of people just have the perception that Vegas is just terrible trash, and they never, ever would want to go there.
Without Vegas and what it is now and the branding behind it, why wouldn't I just go to Arizona? Why wouldn't I just go to, why not?
Yeah.
You see what I'm saying?
And those places have a ton more natural beauty, too. Right. I mean, it's like they don't have the leg up on anybody. They don't have the leg up on location. They don't have the leg up on weather. They don't have the leg up on natural beauty. It makes no sense. What they have the leg up on is gambling.
The dome.
They got the Sphere.
No, 100%.
And they got the Sphere.
To the point where they're trying to dive into entertainment, got the Sphere and all that, but completely agreed.
I know. I'm sure that whoever was the contractor that built that Sphere, their phone has been blowing up ever since. There'll be another one of those soon. I would venture to guess.
Yes, sir. Yes, sir.
Love me some air horns. 7 minutes and 30 seconds until the big decision.
Oh, I'm ready.
I will say, I'm excited to see what happens in the market and be able to have a little bit more freedom to feel like I can trade without this thing hanging over my head. But at the same time, this is the least excited I've been about a Fed decision in a long time. I feel like it's kind of a foregone conclusion.
Yeah.
It would be very exciting. Well, exciting might not be the word. It would be very interesting if anything except what's expected happens. $500 to see the Wizard of Oz at the Sphere is too much. Precisely. Yes, I just agree. They're trying to only appeal to the very highest level demographic, and I think that the very highest level demographic would rather go to LA, is kind of my thesis on this whole thing. There is no natural beauty in Vegas. Yes, absolutely. Mother-in-law indicator says short Vegas. We have F1. That's true.
I think F1's pretty fire.
But so does Miami, though. And again, I return to that point.
Ryan on the producing team got me interested more in F1. Had a couple questions for him, but I think he was getting into the Netflix series.
Yeah.
So I gained a lot more respect for a sport when I can learn a little bit more about it. It was the same way it went with hockey.
Yeah, Drive to Survive is the greatest thing that F1 ever did for their fandom.
Was that is that the content on Netflix?
Documentary? Yeah, okay. That's what made them blow up. Comcast is still alive because NBC is still on. That's true, and NBC just landed that contract with the NBA, so they're not going anywhere too soon.
I still can't believe Chauncey Billups is getting cooked the way he is. Throw back to your childhood superheroes or superstars. Austin and Montreal.
Oh, F1. Also, yes, those also have F1. You're right. I can't believe I forgot about Austin. I've been to F1 Austin. Anyway, but yeah.
F1 would be so fire to go to.
It is cool. I don't know. Yeah. Me personally, I have a mustache hair in my mouth. I'm sorry this is unprofessional, but I'm dealing with it for 2 minutes. F1 to me, though, honestly, isn't really as exciting as IndyCar, as crazy as that is to say.
Yeah.
Let me rephrase. If you're a racing purist, F1 is the best product that you can get. And if you're watching on TV, it is an excellent product. But if you're just a guy like me who doesn't care a whole lot about racing and just kind of wants to go and have a few beers and listen to some loud cars, IndyCar is for you. It's closer. There's always people passing each other. That's the main thing that puts me off of watching F1, and it has gotten a little better as of late. But there was a 2-year stretch there where it was just I can tell you 10 minutes before the race starts, Max Verstappen wins by 10 seconds, and it's just not even fun to watch. And the cars are physically different from one another. That's another thing in IndyCar. All the cars are virtually the same specs. So it just I don't know. But I've been to both. I enjoyed both. F1 Austin, worst parking situation I've ever seen in my entire life. Still.
Yeah.
It was absurd.
Completely agree. No, excited for this FOMC decision here. Going to be happening in about 4 minutes. Dr. Jim will be on here soon to cover it all. And then we got the press conference 30 minutes after. So it's going to be exciting to look forward to.
Absolutely. Also, closing remark, I love Vegas. I say all this because I love Vegas. If anybody lives in Vegas, I'm not talking crap to you specifically. I love Vegas. I wish I could go more, but I have been priced out. That is why I'm so passionate about this issue.
I'm not a big fan of Vegas. If you live in Vegas, I'm not a big fan of Vegas, but I still love it.
But anyway, yeah, I guess that's about all we're gonna have today.
Cool.
Yeah, AI and gambling. I guess is the theme of today. A little bit of Pfizer sprinkled in the middle. What's the difference between F1 and Indy? F1, the main difference, and again, I am not particularly involved in either sport, so take this with a grain of salt. The main difference, to my understanding, is that F1 tracks change every race and not ever an oval. And F1, the cars also can all have different specs, and some teams just inherently have way better cars than other teams. IndyCar, they drive in an oval, and the cars are more standardized. So it's a lot more variance. Random people just win all the time. Only car sports I find thrilling are Russian dash cam montages. Anyway, yeah, that's all we're going to have for today. Everybody, good luck with your positions through the JPAL meeting. Do you have any closing remarks? I didn't mean to cut you off there.
Just prepare for the most dramatic FOMC rate decision going on right now in 2 minutes. So if this is the last, I love you all. Yeah, there we go.
Yeah, we have no idea what's going to happen here. Just anything could happen, this rate decision.
Stealing Dr. Jim's thunder.
So much uncertainty. Gus, go to national parks when you're in Las Vegas. I go to lots of national parks. And yeah, and then it is beautiful in terms of its accessibility to all of the national parks, both up into the Pacific Northwest and south into Arizona and west into California. They're all right there. So that is a good point. I will give you that one. Anyway, all right, that's all we're going to have for today. Thank you guys so much for being here. We love you all. Could be Mike, Big Brain Joe, Dan. Who else we got? Wolf, Ash. Who am I forgetting here? Tom. Steven, we love you all. Thanks for taking the time. Ariel and I'll be right back here tomorrow, same time, same place, 12 o'clock p.m. Central Standard Time. Be sure to come hang out with us. Good luck with the FOMC, and we'll see you guys soon.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Jim Schultz, and this is From Theory to Practice. Welcome to the show. Welcome to the broadcast. Welcome to the end of the world edition of what it is that we are trying to do. John, let's go right into the markets because the Fed just dropped the interest rate decision that is unlike any other interest rate decision to come before it. Now, I don't know what it was. You guys got to help me out. What was it in the chat? Because I see a market that does not like it, obviously. Even the S&P is only up 13. That's pretty much a red day. NASDAQ only up 98. That's pretty much a crash. Boomers only up 145. Guys, this is not good. Guys, this is not good. We need a minimum of 75 basis points. We know that. We need a minimum of a 75 basis point rally before things start getting really, really interesting indeed. Gold and the metals just got a little bit of a bounce. All right, so I don't know what's going on out there, but man, silver just popped like 30 cents. Gold just popped by like 20 bucks. Guys, what's going on out there? Are we back? Is QE Infinity back? Like, help me out in the chat. I need to know. Hold on, where are you guys at? So Mr. Pillows, appreciate you. Fed cuts 25 basis points, says it will stop shrinking the balance sheet. QE Infinity. Man, where is my Infinity symbol? There it is. QE Infinity. So QE Infinity is back. Man, the punch bowl is back. Let's go, baby. S&P 500, 9,000. Forget 7,000, 8,000. S&P 500 ES futures 9,000 by the end of the year. NASDAQ 33,000 by the end of the year. Gold 6,500 by the end of the year. You heard it here first. That is obviously what is on the docket. So all right. So now, I mean, we're gonna watch the markets. Look at my SPX butterfly. Wow, it's actually doing okay. Hold on. Look at this. I forgot about this guy for a second, but look at this. So this SPX butterfly. So now all of a sudden, man, it's almost like markets move and things change. So things have turned around a little bit. So if we look at our butterfly that we put on yesterday for this event, it's right around a scratch now. So I'm going to so here's what we're going to do, because I'm going to get super distracted. Once we start doing these earnings calls, I've got a list here. Amelia has done all of our trades for today. So if you guys have any issues with what we are going to put on, you can take it up with her, man. Like, I am completely absolved of all responsibility of what we end up doing with these trades. If you're brand new to the show, welcome aboard. I'm glad that you are here. But Amelia May, she is my intern. She is my assistant. She does all of my trading analysis for the program. She is also my almost 6-year-old daughter now, and so she's doing a rather nice job with all the things that she's doing. But that's what we're gonna do. We're gonna do Chipotle, Google, Meta, Microsoft, and Starbucks. So we've got to do all those guys over the course of the next couple of minutes. We got to try to keep the account above zero here with the Fed number and things of that nature. And then at 2:30 or 1:30 Central, whatever, 2:30, you guys have to tell me. What hue purple tie did he go with? We know it's purple. That's a given. Now I need hex colors. Now I need RGB values. Like, you guys help me out in the chat, because obviously I'm with you guys. I'm not watching it. I don't have my little side, TV monitor with the Uncle Jay, stepping up to the podium. You guys are going to need to come up clutch when it comes to that. So, all right, let's go ahead and let's see here. What do I want to do? Man, I can't believe it, though. I really, really can't believe it. I can't believe that we're still here, to be honest with you. I mean, I see you guys in the chat. Daniel Perkins isn't sure. I'm not sure either. Ash Finn, I see you, my friend. Anderson Homestead in the house. Anderson Homestead talking about some B+ humor. You are going to be disappointed, my friend. You are absolutely. You got to play within the expected move. Like, have you not learned anything? In the Tasty universe, we play for inside the expected move, not outside the expected move. And the expected move, of course, on any given day is C- to B-. You're going B+. That's like a 2 standard deviation move at a minimum. So I wouldn't necessarily kind of bank on that guy. But let's go ahead. So let's do these earnings plays. So what I want to do is, let me see here. I see you guys in the chat, though, man. Look at you guys, man. I see CK's in the house. Man, GV22 in the house. Look at this. Alex in the house. Demi Moonbeam in the house. Greg Lutton in the house. Greg Lutton, I finally wrote you back, my friend, right before the show. And so hopefully you got that, or if you didn't get it yet, it is waiting for you in your inbox. Let's see. Wolf in the house. Man, Big Deal Donuts. Man, look at you guys. Grumpy Mike in the house. Man, let's go. So, all right. So the markets they're a little muted, to be honest with you. I expected a little bit more. I expected there to be a little bit more action. There's been a little back and forth that I haven't been able to watch the tape, like I might do otherwise if I wasn't, on the show with you guys. But it looks to be the market reaction appears to be a wee little bit muted. The metals are moving, though. The metals are moving significantly. I mean, gold just dropped 30 cents after rallying 30 cents. Gold just dropped $20 after rallying $20. And so, man, who knows what to believe out there. It's almost like markets move and things change. So let's go ahead and let's get into some of these earnings plays. So this SPX thing, well, actually, hold on. I'm obviously in a personal fast market right now with the FOMC going on and prices moving around so much. Let's go to SPX. So what I'm going to do here, I'm going to put on, because I'm going to get distracted. I even got distracted about telling you guys I'm going to get distracted. Let's go ahead. So we bought this butterfly for $4.30. I'm going to put in an order. If I can get rid of this thing for $7, I'm going to take that. So if this guy just dings at some random time throughout the show, that would be amazing, of course. And we'll just let it play that way. Obviously, if it's still on by the end of the show, then I will look to manage this guy one way or another between the end of the show and obviously the end of the market day at 4 o'clock. Understanding that the nice thing about SPX is it is cash settled. So that just means if I forget about it or I miss an opportunity or whatever, and something sneaks in the money and it ends up being good for me, that's okay, because it's just going to be cash settled at the end of the day, which simply means it's going to get marked to market in my P&L, and it's just going to be a cash transaction. It's not going to be, there's no assignments. I don't have to worry about, having some share position in SPX or anything of that nature. That's just not going to happen with a product like SPX. So that's what makes SPX such a nice product when it comes to doing things in like a 0 DTE world or like a 1 DTE world, because you don't have to worry about the assignments if like something gets in the way or life kind of happens to you and you forget about that position or what have you. You don't necessarily have to worry about that. So for SPX, let's put this guy in for $7. And we'll see what happens. I mean, it may never hit. It may hit. I mean, time will tell on that guy. Sorry. So that is that's SPX. Let's now turn our attention to, okay, so the metals are rallying again now. And so, yeah, the metals are moving and the market is really not. You've got bonds are actually down. What's volatility doing? Volatility is down a little bit. Volatility futures down 20 cents. Volatility spot VIX is actually up about 20 cents. And so, man, this is fun. Man, this is fun. I haven't gotten to do this with you guys. It's been years. It's been so many years since it's been a Wednesday at 2 o'clock with you guys. Like, man, we're doing it. Like, we are in the middle. And this is not happening anywhere else, by the way. So for those of you, the 600 people that are watching the show right now, like, man, nobody else outside of us knows this is even happening. Like, nobody else is even aware this is going on, but you guys are, because you're watching the Tasty Live Network live on the spot, man. You're part of the show. Man, look at you guys. That's awesome stuff. So let's go ahead and, okay, so I'm going to do all 5. We're going to do Chipotle. We're going to do Google, Meta, Microsoft, and Starbucks. Let's start with Chipotle. Okay, guys, we're not going to overthink this. We're not going to overthink this at all. We are going to fight back against the P&L Open Bros. And so they've had their way with us the last couple of weeks, last couple of months with this Chipotle position. But I feel like this Chipotle up 5 cents today, this is the start of something bigger. This is the start of some good things to come for Chipotle. Now, does that mean fresh chips? Let's not get out over our skis here. Like, let's not get carried away. No, of course it doesn't mean that. But could it mean something else? Could it mean some new products? Could it mean some new services? Could it mean some new whatever? I think it could. I think we're going to find out later on tonight on the conference call for Chipotle. So I think we're going to play Chipotle to the upside alongside our 100 shares. So I'm going to keep the 100 shares. We're keeping that in there. That is the OG Chipotle position that we are just going to maintain probably for some number of years to come. But for now at least, we're going to chill in the 100 share position for Chipotle. Let's go into the trade page. Let's go. I'm going to go all the way to the December cycle. So we're going all the way out to December, 51 days to go, just in case this doesn't work the way that it's kind of drawing up in my head, which does happen from time to time. I'm thinking, you've got a really nice IV rank going into earnings. That's not that unusual. Normally around earnings, IV ranks are quite high because everybody's getting ready for the potential explosive move in the stock from the earnings itself. And so it's not that unusual to have earnings higher, or implied volatility higher going into an earnings number. So we're going to take advantage of the IV rank being higher right now by going into the 51-day cycle, December, and I am just going to sell a put. So that, ironically, is what got us into this mess because we sold a put in Chipotle for the earnings last time, and that's what essentially, led us to finally taking assignment on the 100 shares. Now it's just part of our core position. It's essentially, it's in my will. It's in my, my final will and testimony. Is that what it's called? It's in all that stuff. And so Penelope has very clear instructions as to how to manage this position, since we're probably still going to have it on long after I'm dead and gone. But here, let's get something for Eli. Let's get something for Amelia, right? We've only got one short put. You only need one person to manage that. But if we've got two short puts and they're both in the money, now all of a sudden you've got to get a couple people in the mix to kind of manage that guy. So let's sell this 40 put. This is going to be the at the money strike. We are going to fight back against the P&L Open Bros. We're going to sell this 40 put. We're going to be able to do it for about $2.50 here in the December cycle. And of course, if Chipotle does rally on earnings, then we're going to be in a really, really good spot. If it crash, boom, bangs again, then that's not going to be super amazing. And we'll deal with that tomorrow. And so, and again, this is not even my trade. These are not my ideas. These are all Amelia May's trades and ideas. So let's go ahead and let's put on Chipotle. Let's sell this put. 255 looks like that's going to be your mid price. The buying power is only the buying power is only about $800, and so that's nice. So $800. All right, so we got Chipotle in the mix. All right, great. So we are long 100 shares and short a put, and so there you go. And again, if you're new to the show, I see a lot of people are tuning in today. That's amazing. That's awesome. I hope that you're surviving the Fed number, and I hope you're able to, kind of just climb into the bunker and just stay there. I would stay there for a while. Like, I think the minimum, I would be quarantined for probably at least 48 hours. Like, I wouldn't try to push the envelope and roll the dice and be coming out 12 hours later, 24 hours later. Like, I would not do that. I think your minimum 48 hours. So that means you're coming out right before the market closes on Friday. So you're in there now, hopefully. Hopefully it's all equipped with all the things that you need. You got your Wi-Fi, right? You got your pre-workout. You got all the things that you need. You should be locked and loaded and stocked for 48 hours. If you're not, then that's your fault, man. That's 100% on you. But here's Chipotle. You should be playing this to the downside because, again, if you are new to the show, welcome aboard. You should fade everything that I do. Don't let any conviction, don't let any confidence fool you. I am not very good at this when it comes to picking direction for earnings. I'm very, very bad at this, but I still keep trying. I still keep going for it. And one of these days, man, we are going to hit a streak. We are going to hit the hottest hot streak you've ever seen. We're going to rattle off like 17 in a row, and I'm just going to take everybody down. And I'm going to wait. I mean, I'm not going to go out of my way to do this, but this is, of course, how it's going to happen. It's going to be after you guys have faded me for so long and made so much money. You're going to be like, wow, this really is safer than a UST bill. Like, wow, this really has taken 6 to 9 months off of, my road to financial independence. Like, wow, this is amazing. And then everybody's going to be roped in, and then boom, we're going to rattle off like 18 straight. And so that's probably not right now. I know that it's not right now, but it could be soon. So there's Chipotle. Okay, let's see. Let's go to Google. So Google, G-O-O-G, you could do G-O-O-G-L if you wanted to. It's the same stock, essentially. You've either got Class A or Class C. And I have an eye on the clock, by the way. It's 2:15 right now. You guys let me know at 2:30. I need to know. What color purple is it? I know it's purple, but I need to know what kind of purple is it. Again, is it more like maroon or is it more like lilac? That's what I need to know. And so you guys got to help me out there in the chat on that. But let's go to Google. So Google, I really think that you go into the trade page, you go to the 2-day cycle. Again, guys, we're just going to keep this very simple. We're going to keep this very, very straightforward. If you can't beat them, join them. Right? If you can't beat them, you join them. So what does that mean? You play to the upside. You party every day. I mean, even today, S&P's up 4. I mean, what did Powell say? He probably said something not so great. Doesn't matter. Mark's still up. Doesn't make a lick of difference. And so we are going to go with a very, very simple, straightforward, long call spread to the upside. So I'm going to buy at 270. I'm going to sell at 280. And we're going to pay about $4.30 for this. Man, after the market closes today, the fireworks are going to be crazy. I mean, it's going on now. The market is selling off now. Now, all of a sudden, you do have the S&P is only up 3. NASDAQ only up 50. Very interesting. Metals are kind of hanging in there a little bit. Gold is 4,000. Silver, I don't have silver on my screen. Where's silver at? It's probably a little bit under 48, like maybe 47.80, 47.75. Yeah, 47.80. So it's hanging in there. It's down a little bit on the number, but I guess everybody's waiting to see. Again, is it more like maroon or is it more like lilac? I mean, that's what everybody's been waiting for all day anyway. It's not the statement. We knew what was going to happen with that. Like, we knew what they were going to say. They were going to basically say the same thing they've said forever. Like, they're going to delete a couple of things here, add a couple of things there, maybe make some comments about, government shutdowns and not being able to lean on the imaginary numbers like they normally can. They'll probably say something like that also, but everybody just wants to know, like, what color did he go with today? And so if I go into Google, though, if we do a long call spread, this is a very simple way to take a directional shot. This is a very simple way to play the upside in Google or any other stock for that matter. And again, if you can't beat them, join them. If you can't beat them, you join them. It's very simple. It's very straightforward. So we're playing Google to the upside with a long call spread. So 270, 280 is going to be the long call spread in question. So let's clear the drawings. We'll push this guy out, because I want to get to the other three, and then I want to get to you guys, of course. All right, so Google is in. So we are bullish on Chipotle. We're bullish on Google. Let's go to let's go to Meta. Let's go to the artist formerly known as Facebook. Meta down $4 today. That's got to be a typo. That's got to be some kind of bad quote feed or something. Meta's down today with the NASDAQ up. Google's up. Let me look at the other heavy hitters. Look at Apple. Apple up $1.30. Look at Amazon. Amazon unchanged. Amazon had a lot of layoff news, I think. Was that this morning or was that yesterday? I'm not sure. What's Netflix is down, basically unchanged. You've got Tesla up 28 cents. Snapchat is up 8 cents. Man, they're still solvent. That's unbelievable, man. They'll just give stocks to anybody. They'll just give companies to anybody. I mean, man, I can't believe that. That's unbelievable. $7.80. Wow. So if I go into Meta, guys, don't overthink this. There's no reason to overthink this, right? If you're trying to overthink this, you're doing too much. If you're even trying to think this, you're borderline maybe doing too much. If you can't beat them, you join them. If you can't beat them, you join them. Meta to the upside, of course. Why wouldn't it be Meta to the upside? And so we're going to go into the front week here, and we're going to go with the tried and the true. We're going to go with the patented, the tested, the Betty Crocker expected move butterfly. That's it. That's all there is to it. Like we've been doing this on the show forever. I think we've held our own when it comes to these. Again, I don't have any stats on these. It might be interesting. Maybe for next year or something. That should be something we should track. Because I don't know. I think I've done okay on butterflies. I think I'm net positive, but I don't know for sure. That's just my own personal biased feeling. And so that may not be worth anything in your neck of the woods, and I wouldn't blame you for that. But I'm kind of thinking, you look at the expected move here. It goes up to right about 800. It doesn't get much more feng shui than that. Why don't we go ahead and anchor our short strike right there at 800 and then do maybe, I don't know, a 30-point wide butterfly? I mean, that's what Amelia's got on the paper. Amelia said, Dad, I think a 770, 800, 830 butterfly in Meta looks really, really good. And I said, hey, who am I to argue with you? Who am I to argue with you and your brilliant 5-year-old mind when it comes to trading? Like, sure, you barely have any idea what's going on and you don't even know how to pronounce most of the strategies, but you're doing an amazing job. You're doing a great job. Just keep going. So let's go ahead and let's do a 770, 800, 730, or 770, 800, 830 butterfly. And that's going to be what? 372. Look at that. That's 372. I mean, they're just giving this stuff away, man. They're just handing these guys out on the street corner. 372. That's crazy stuff. So let's go ahead and it's 2:20 now. I got my eye on this clock. I got my eye on the clock, and I got my eye on the chat because I'm waiting for you guys to hook me up with what my man is rolling with. I'll probably be in the chat at that point. But all right, so this is going to be our meta play. Again, if you can't beat them, you join them. 770, 800, 830 in the 2-day cycle. It looks like we can do it for maybe 370. Can't do it for 370. Might have to do a little bit more. Let's see here. We'll do 376. See if we can get filled. All right, so I got filled at 376. Beautiful. So we're in on that. Let me check on my SPX. Okay, so look at SPX. It's 447. We've got our order in at $7. And so it's really, everybody's waiting. Everybody's waiting for the pressure. Everybody's waiting for the purple. Like, I understand. I mean, I'm waiting for it too. And so, all right, so we did Meta, we did Chipotle, we did Google. We have two more. We have Microsoft and Starbucks. Let's do Starbucks. So Starbucks, again, if you guys are brand new to the show, I am maritally obligated to play Starbucks to the upside. I don't have a choice. I don't have any say in the matter. This is not even Amelia's call. Like, it is in like our prenuptial agreement. It's the only thing that's in our prenuptial agreement, actually. It's, till death do us part. Like, I'll love you through sickness and in health and all that kind of stuff. And Autumn communicated to me, like, look, listen, I know you're in finance. I know you're this. I know you're that. But you got to be bullish on Starbucks. That's the only rule I have for you. And I'm like, okay, that's not too bad. Because, I don't know, have I ever told you guys the story of how I met Autumn? I don't think I have. This is a perfect time for it. It's not like there's anything else going on. So I met Autumn. I've told this story no fewer than 237 times. But here's number 238. So I met Autumn in the summer of 2006, and it was right at the end of like June 2006. She was working at a tanning salon, and I was trying to get a little bronze on myself. I had a little Tony Batista in me, some 20 years ago. And so I went in there one day and asked her out, and somehow, I totally fumbled it. It was really, really bad. I'll save you guys from all that. Maybe I'll tell that part of the story another time. But I fumbled it, but she said yes. So she said okay. She said yes, whatever. She didn't seem super excited about it, but I kind of wore her down a little bit. Similar to how I got Tom to hire me at Tasty Trade originally. He originally said no like 4 or 5 times, but then eventually I just kind of wore him down. And so I wore her down too. She said okay. Well, we went to coffee at Starbucks on July 1st, 2006 for our first date. We have been to Starbucks or some other coffee establishment, but usually Starbucks. We have been to Starbucks on the first of the month ever since. We called that our month anniversary. We are now at however many hundreds or thousands in a row. We have not missed a single month in, I guess, 20 years now, almost 20 years now. And so for that reason alone, I am maritally obligated to play Starbucks to the upside. I'm really glad that I did tell that story because I don't know that I've ever told that story on this show. And so that's good. It's good that you guys now know that. So for Starbucks, let's see, let's go back in. Let's do something to the upside, man. We've already got our 100 shares. And so there you go. Let's go ahead and let's go into the 2-day cycle. Let's do some instant pain and instant gain. Let's do an 82.86 long call spread. This is a very simple risk one to make one. Very simple risk one to make one, right? We're going to pay $2 to potentially make $2. Again, we are trying to add more bullish exposure to the upside in Starbucks. And again, this is not necessarily my choice. I am obligated to do this. So if it doesn't work out, you guys know who to blame. The same person you can blame for the internet flickering yesterday. But apparently the second talking to has worked because look at that internet, man. It's crystal clear, crystal clear. And so that's good stuff. And so 82.86, let's go ahead and push this guy out. And then I want to do Microsoft too, and then I'm going to get to you guys. Let's see here. Let's do, man, we are getting dangerously close to 230. All right, so we got filled on Starbucks. All right, Microsoft. Here you guys go. Microsoft. Again, don't overthink this. Don't overthink this. You might be thinking, if you can't beat them, join them. That's old news, man. That's old news. That's 2000 and late. This one, gotta be to the downside. Gotta be to the downside. And it's so obvious. It's so clear, right? Has anyone used Microsoft Teams before? I have to use it for work. It is atrocious. It is absolutely atrocious. I'm not even sure if I'm allowed to say that, but everybody knows that it's true. Man, it is the worst product ever developed. Microsoft Windows, not too much better in its own right, is what I meant to say. And so for Microsoft here, I'm kind of thinking we go a 2-day cycle. We try to collect ourselves from tripping over our words there. And I'm thinking we do a downside butterfly, right? I'm thinking, again, why would we not dance with who brung us here? Why don't we just go with the tried, tested, and true downside butterfly, Microsoft, $540. Amelia wants to do hold on a second. So Amelia wants to do, this is interesting. So Amelia wrote down downside butterfly, question mark. It looks too expensive. I was like, oh, that's interesting. Let's look at it together. So if I go in here, let's see. If I buy a 535, I sell a 510, and I buy a 485, let's say. Wow, look at that. Man, that is expensive. Look at that. $8 for a $25 wide butterfly with 2 days to go. That's very, very, very expensive. Normally, I'm looking to pay $5 or less for these butterflies. And usually when you go out 25, 30 points wide, even sometimes 35 points wide, you're usually around $5 or less. But man, this Microsoft butterfly is extremely expensive. Amelia was right. Man, that's some really, really, really good analysis on her part. This is too expensive. You're not leaving yourself. Oh, wait a second. Oh, you know what? Hold on. Oh, okay. I need to double up on the one that I'm selling. Okay, it's still pretty expensive though. Still $6. At first, it was $8. That was actually a credit. I wasn't even looking at that. $6. Now I've got it right. 1 by 2 by 1. We're long a 535. We're short 2 510s. We're long a 485, and it's going to be $6. Man, that's still pretty pricey. So I still think Amelia's analysis was spot on here from the standpoint of, it's just not leaving us enough room to make a big splash. And we may not even want to make a big splash per se, but we would like to, have a chance to make some kind of profit on the position. And usually when it comes to butterflies, you want to be mindful of how much you pay, because remember that the difference between the width and what you pay is of course going to essentially draw a line in the sand in terms of how much you could potentially make on the strategy. Now, to get the full max profit, the theoretical max profit, you can't usually get that because you'd have to go all the way to expiration and pin the short strike. That's really, really difficult to do. But, you want to leave yourself as many possible ways to be right as you possibly can. Yeah, I don't like this one. I really don't like this one, but I do like a bearish play in Microsoft. So actually, I'm going to pivot and I'm going to do something a bit simpler. Let's just do a 545, 535 long put spread, and let's do a 42.5, 32.5. Yeah, we're going to pay about $5 for it. So I'm paying about $5 to make about $5. This is a much better risk return in my eyes, even though the butterfly was about the same price with the potential to make a lot more money. A $25 wide butterfly is not that wide for a $500 stock. I mean, you really still kind of have to thread a needle to be right on that strategy. And so I didn't like the way that's set up. Now, if it was priced at $450, we'd be having a very different discussion. Like you saw the butterfly in Meta, like that was only $375 or whatever. That was a much better setup in my opinion. So for this one, let's just keep it simple, buttoned up. We are going to play it to the downside, but I'm going to do it with a long put spread. So let's go ahead and let me do this. It's 228. Oh my gosh, I can't believe it. Like it's time. All right, so there's Microsoft. So, okay, I gave you 5 earnings trades to fade. If you fade all of those, sight unseen, don't even think about it, you're hitting 80%. You're hitting 80%. I'm at least 11% sure of it, that you'll hit at least 4 out of 5. And so, all right, let's go into the chat. I want to see you guys, man. I see you guys. Let me try to surprise and delight some people. I see you guys, and I also see the clock. We are like 1 minute away. Man, somebody help me out. Somebody help me out with people saying gold is pulling back hard. I see that. Let's see, where are you guys at? I see final approach. Gold is pulling back hard. I see that. Yeah, gold is back to 91 now, 39.91. Silver's dropping too, I would imagine. Silver, 47.70. That's a decent little drop. I mean, we'll see what happens on the conference call, and obviously the tie color, because the market has since gotten its legs under it. Russell, not really. Russell kind of back to right around unched on the day. And so I see you guys, but I'm going to wait. I'm going to wait 1 second because he's about to walk out. And when he walks out, I just need a color. Oh, actually, no, I need an RGB code. That's what I need. I need an RGB code for what he is for what he's wearing. But I see you guys in the chat, man. Look at this. Let me see if I can grab somebody in the middle. Scramble Everything says, Dr. Jim going to live stream the FOMC presser. That would be great. New content pushing the Tasty Live boundaries. Maybe we'll do that next time. Where like I'll have like a little earpiece in and I'll be listening to Powell and I'll comment on everything he has to say. I don't know, maybe we'll do that. I'm not really a macro guy though. We kind of need like an Ilya Spivak for that. I mean, I can obviously comment on his attire and I can comment on things like that, which, speaking of attire, it's 2:30, right? It's 2:30. Where is he at? Where are you guys at in the chat? Oh, Griffin Jones is a sequin tux. Yeah, that would shock the markets, I think. That would definitely do some things. Barefoot. Yeah, that's so funny. Let's see. I don't see anybody yet. No, Danish Dynamite says you went with the pumpkin color orange bow tie. You liar. We all know that's not true. That would be amazing, though. That would be so amazing. Sometimes he's a couple seconds late, and so he likes to build in the drama. But, there it is. Lavender? Up and down says lavender? Did he really go lavender? Like, really? So he went with the lighter purple? He went like lilac lavenderish? Oh, it's too funny, man. It's just too funny. Somebody said vibrant purple? Yeah, purple tie, light purple. There you go. Mauve. Anderson Homestead says mauve. Jay Hawkeyes gave me the vibrant. He gave me the RGB code. That's some good stuff. Man, solid purple, Griffin Jones. Oh, man, it's too funny. You guys are too funny. Let me go back to the beginning now, though. Man, I appreciate. Look at you guys, man. You guys are going to make this. You're making YouTube think this is really something. And I appreciate you guys for that very much. But let's see. HK's in the house. What's going on there, HK? Ashfin in the house. What's up there, Ashfin? I appreciate you, my friend. Thank you for being here. You're part of the core position, man. That's some really, really good stuff. Anderson Homestead waiting for the B minus humor or B plus humor. Let's go, Dr. Jim. Again, I would not be playing for Alice to have the expected move. I think that's a mistake. Big Deal Donuts, appreciate you. Ariel and Gus, as always. I'll see you guys next time. Yes, E and Gus are doing an amazing job on the previous show that is now before mine. When Chris comes back, I think that we'll probably get back to more normal scheduling. I think. I'm not exactly sure, but we'll see. Let's see. Scramble everything. Dr. Jim, I've been late to the power hour all week. You mean the Dr. Jim power 3/4 of an hour? But I've upped my blueberry intake and made it today. I hope August loaded up at the store so she doesn't forget to pay the internet bill. August. Oh, you mean Autumn, my wife? Oh, it's so funny. She's gotten April, she's gotten August, she's gotten Autumn, she's gotten all, Annabelle, she's gotten all kinds of things. It's really, really funny that people routinely kind of call her something that she is not. And we always get a good kick out of that. But Wolf in the house, what's up, my friend? Big Deal Donuts, say your prayers and kiss your loved ones. I mean, that's it. I mean, I'm shocked we're still standing, right? Again, I don't know that we are. This could be Lost Season 5. Like when Lost Season 5 happened and they started doing Flash Sideways, like, did you really know what was going on? No, you didn't. Nobody knew what was going on. And so that could be happening to us right now. It's one of those things where you don't really know it's happening until it's over and done with. Like you don't really know you're experiencing it until you're able to look back and say, wow, that was a pretty wild ride. And so that could be happening to us right now. Let's see, Dan Ducarn, NEE, do you have any thoughts, Dr. Jim? Maybe sell a call vertical. Man, let's take a look at it. Market's getting a little bit of a bid. Metals are getting a little bit of a bid. I mean, everything, it's back, baby. It's back. It's 100% back. Whatever Powell said, man, the market's like it. Again, QE Infinity, it is 100% back. NEE, Next Era Energy. I'm not familiar with this company, but that will not necessarily stop me from getting involved. What if we go to December and, the markets are a little bit, they're a little wide, a little wider than I would like, but still it might be doable. I've certainly done worse before and I'll do worse in the future, I'm sure. If you look at the liquidity, 3 stars on the Tasty liquidity meter. Okay. What are you thinking there, Dan Ducarn? You're thinking of selling a call vertical? So that would be like, if I sell like the 82.5, 87.5. Okay, see that? Okay, so this is a little bit tricky. It's simply because of the pricing, right? Like I love the way you're thinking about this. I love the way that you're kind of approaching this strategically. The problem is you can see right here, I started with the at the money strike. Like we are snuggled up right on top of the stock price, right? I could not be any closer to the stock price. And we're actually just barely getting 1/3 the width of the strikes. Usually for, vertical spreads, when I'm selling them, I like to be at more like 35 or 40%, generally speaking. And the reason why I like to do that is because I know that with a defined risk strategy, you don't have as many adjustment opportunities. Like when I sell a vertical spread, I'm not going to have as many opportunities to adjust like I might with an undefined risk strategy or some other strategy. And so I like to control my risk on entry a bit more diligently than I might with other strategies that I know there's going to be more opportunities to reduce the basis down the road if it comes to that. With a short vertical spread, you're not necessarily going to have those opportunities. And so I kind of like to be more buttoned up on entry. So when I look at this, I'm starting with basically the at the money vertical spread. And man, that is just not a great price in my opinion. Some people might look at that and say it's acceptable and say, I'm going to go with it, whatever. It's not enough for me. I would need that to be for the at the money spread. I need $1.85 probably. I'd much rather have like $2 or even more than $2. And that will happen a lot of the time. But sometimes with the pricing and the volatility skew that may or may not exist in the marketplace, the pricing dynamics are such that it's just not a great risk return trade-off in my opinion. So I'm going to pass here on good old Next Era Energy, but I appreciate you there, Dan Ducarn. I appreciate you very much. Let's go. Oh, we got our SPX. Wow. Oh, look at that. The market just took a dive. Whoa, everything just took a dive. What happened, guys? Did Powell change his tie? Did he just change his tie mid-speech? Did he just do it mid-presser? That's the only thing that makes sense here. Right now you've got silver. Look at silver. Down to 47.60. Look at gold, 39.80. Man, look at the markets. Absolutely getting taken out to the woodshed. Is he pulling the rug on everybody? There is no way. There is no way. Is this even right? This can't even be right. Guys, let's all do a computer restart. Let's all do some control deletes. There's no way this is right. There's no way that the E-mini S&Ps are down 17. Like you guys have seen that fear greed gauge, right? Like right now it's extreme fear. You don't even need to see the gauge. I can tell you this is extreme fear in the marketplace, right? We are almost 25 basis points off of all-time highs. Like this is not good. This is not good at all. You've got silver crashing, gold is crashing. Man, what's volatility doing? Volatility is, man, what did he say? I'm very curious now to know what he said. This is so interesting because everything is going down. Everything is kind of going down together. Wow. Crazy stuff. You got the VIX up 80 cents now. And so, man, what happened? Did he go with the pumpkin orange bow tie? Mid-pressure. Oh, wait, we're back. Look at that. Market's rallying. Metal's rallying. Silver's still getting crushed. But, okay. All right. So we got some movement. Pretty interesting stuff. But let's see. Ashfin. Oh, you guys are talking about Bloom Energy. Yeah, I've seen that come through my email inbox a couple times. Let's see. Grumpy Mike is in the house. Stephen Bivens sharing with the group that it has been confirmed that Dr. Jim commands a majestic and towering presence of 6'7" at least. This may or may not have included the stage. Yes, I think it did include the stage without question. But I appreciate you, my friend. I'm 5'9", 5'9.5" usually, and so thank you, Stephen Bivens, for corroborating that with your presence there at the Detroit show. And so thank you, my friend. Daniel Perkins in the house. Let's see, where am I at? I'm scrolling a bit too aggressively. Let's see. Dan Ducard, remember, watch the futures. The first swing direction is usually the correct swing. No. We all know that is not right. We all know that the first 9 moves are suckers moves. The first 9 moves, I mean, those are Johnny plays. It's that 10th move. The 10th move is the actual move. Everybody knows that. Dan, I'm a little disappointed that you don't know that. Like, you can't do the first move. You can't do the second, third, fourth, fifth, sixth, seventh, eighth, ninth moves. The 10th move is the move. Like right now, we are right around that 7th or 8th move. I mean, the metals are getting taken out. The market's getting taken out. Man, I don't know, guys. This is not good. And so let's see. Night moves. The Federal Reserve should be ashamed of what, my friend? I mean, maybe a lot of things. But let's see. Dan Ducarn says it will swing the other way. Fake out. Oh, okay. You faked me out. I think you faked me out with the comment. Nicely done, my friend. That's a good job right there. Oh, and then rip back on the third swing in the final direction, then usually chop. No, well, it's usually that 10th. The 10th swing is the final swing. And so let's see. I see Brian Dowdy's in the house. What's going on there, Brian? Brian says, hey, Dr. J, lots of warnings today. I don't know which ones to play. There are so many, but plan on doing Google or Microsoft. Well, there you go, man. I gave you the playbook. I gave you the tried and true. Like I showed you the road to paradise, right? It is the opposite of everything that I've done. And so Google, I'm on the upside. You need to be downside. Microsoft, I'm on the downside. You need to be upside. It really, really, truly is that simple. And so, man, EBS&P is down 28. Man, we should have held that SPX butterfly. We should have went for more than our $7. I mean, obviously hindsight is 20/20, right? I mean, hindsight's batting. Roman Anthony's batting 480. Hindsight's batting like 450, right? So it's pretty good. I mean, it's not Roman Anthony. It's no Anthony for that matter. But it's still pretty solid. And so, yeah, we should have went for more. EBS&P is now down 35. Wow, that's crazy. That's crazy. I mean, I don't know what's going on out there, but it's not good. Did he decide to hike rates like mid-conference, like mid-presser? He was like, all right, just kidding. We're actually going to hike them by 25 bips. And so, man, this is, wow, we got a little something going on out there. It's pretty interesting. And so let's see, where are we at, though? Let's see. Ash Finn, we are indeed surviving the most critical Fed meeting of our lives. Again, we were lulled to sleep there for a second. Like we all kind of thought, all right, I'm good to go. Like I don't have to worry about anything. Au contraire, mon frere, you got a lot of things to worry about. You got a whole lot of things to worry about. And so that's what we are living in right now. And so let's see. Where am I at? Big Deal Donuts. Let's see. Sam L, happy FOMC day. Can't believe you're here with us instead of in Uncle Jay's secret gym, spotting his 25 bips curls and dry scooping rate hikes. Yeah, he's dry scooping something right now. Because again, I mean, NASDAQ down 65. Wow. Man, that's really, really crazy stuff. And so let's see. Brian Dowdy, hopefully Autumn paid the internet bill. She did. Danny Moonbeam, end of the world. That's correct. Oh, Kiosh. Hey, doctor. It's so good to see you after so very long. I was gone. Welcome back, my friend. I'm so glad that you are here. I'm so glad that you're here, part of the show. It is only because of you guys that we can do what we do. So thank you guys so much. I really, really, really appreciate you guys just so very much. And so let's see. Joe. I see Joe in the house. Greg Lutton. Man, I see TSC in the house. Man, let's see. Lobo Doe's in the house. What's going on there, Lobo Doe's? ZB is down. Let's see. Big Brain Joe. Whoa, look at that open P&L. No, don't look at the open P&L. Now, you must be new to the show. We don't look at the open Pinot. We barely speak of the open Pinot. And so again, right, the best strategy here is this job. Just do one of these jobs. You don't have to worry about it. I mean, obviously, we'll keep the green ones. But the other ones, nah, don't worry about that. Doesn't matter. Because all kidding aside, it doesn't matter. Because again, if you're managing winners early, I know it obviously matters to some degree, but if you are managing winners early, all your P&L opens are going to usually be red, because the big green ones, or even the modest green ones, you take them off. They don't stick around. And so it's kind of not really a fair, comparison, if you will. EME S&P's down 40 now. NASDAQ down 100. Wow, that's crazy. And so, but thank you there, Big Brain. Appreciate you being here, my friend. Let's see. Where am I at? Danny Boom, money is free again. Yes, and it will also be worthless. Money is free but worthless. And so I'm not exactly sure how we're supposed to deal with that. But we'll do our best. And so let's see. Night moves. Notes to get below 112, please. Oh, you got a ways to go on that. Well, no, not really. I mean, you've got about a point or so on the old ZN right there. And so it's down a little bit now today. EME S&P's down 40. NASDAQ down 105. And so, man, I don't know. He really pulled the rug on everybody. That's really, really surprising. Samuel, the future of the market hinges entirely on what hue of purple tie Powell picks today. That's correct. Lavender means rate cuts. Royal means pain. Nice knowing you, Doc. Man, it was nice knowing you too, my friend. Again, don't be sad it's over. Just be glad it happened. Don't be sad it's over. Just be very, very glad that we had a chance to do this together. And so I really appreciate you guys. It's very clear now that the apocalypse is here. And so we will be signing off here in a minute for the final time. Danish Dynamite, what's going on? Alex, what's going on? He says he bought too much bottled water. No, you didn't buy enough. You thought you bought too much. I hope you didn't sell it on Craigslist when the 2 o'clock number came out, because you need it now. Like, you 100% need it now. And so, but Joel James, Dr. Jim, Wolf earnings are tonight. Forget this, man. I'm not doing this. For my last trade ever, not doing Wolf. I'm not going out on Wolf. I'm okay going out on Chipotle. I'm okay going out on Starbucks. I'm okay going out on Microsoft, Meta, Google, whatever. I'm not going out on Wolf. I'm not going out on like Snapchat. Like, I'm not going to do it. I'm not letting that be my headstone. Like, no way. There's no way. But Joel James goes on to say, jokes aside, a 2 DTE. Oh, Roblox. Okay, you pulled one. You pulled it over on me there for a second. Sell 2 puts at 115 and buy 1 put at 120. I like this trade. Okay, yeah. So a ratio spread, but it isn't clear to me what happens if the stock goes below 115. Am I assigned 200 shares? No, you would not be assigned 200 shares. So I only have about a minute left in the show. But I can answer this for you really quickly. Market's rallying a little bit now. For Roblox. If you buy, did you say the cycle? I don't know that you did. Oh, 2 DT. Yeah. So it's just, for earnings tonight. Okay. I got it. If you buy a 120 put and sell a couple of 115s, you're going to do that for a little credit, right? Yeah. $1.63 credit, which is not too bad. So if the stock rallies, you'll keep your $1.63 or whatever. But the basic idea here is, you have 2 puts at the 115 strike, but only one of them is uncovered. Only one of them is extra. Right. So the first put at the 115 strike, so to speak, is covered by the long put at the 120 strike. So if Roblox goes down below 115, then the long put spread will be fully in the money, but those two are offsetting each other. And then the extra short put, that's where you would be assigned potentially. So you would potentially be assigned 100 shares. The first short put at the 115 strike will get kind of canceled out, if you will, or washed away by the long put that's at the 120 strike. So hopefully that helps a little bit. But I got to go. I'm out of time. I can't believe it, man. We survived. Maybe. I don't know. I'm not exactly sure. But anyway, we did it together. Like, whatever we did it together. And man, that was super fun. So I'm looking forward to the next one. If I can ever help you guys in any way, though, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
It's option jive.
It is time for an option jive. Nikki, with the E-mini S&Ps up 17. Go.
Option drive. Let's do it.
Why
leverage?
Go ahead.
Yeah, leverage ETFs. Why leverage ETFs struggle over time. What do you think about these leverage ETFs? You ever trade them?
No.
A couple times here and there?
A couple of times here and there over the centuries, the decades that I've been trading. but never the first thing I look at. Probably if I've looked at them, it was something from a confirm and send question.
What's your assumption? Yeah, for sure. Yeah, I think these are definitely on the secondary tier of our trading, especially on like a day-to-day basis. You want to take a short-term hedge, these will help, and you could definitely trade them that way, but definitely not a long-term position here. So let's get into it here. So while stocks keep setting records, another corner of the trading world is quietly exploding. Leveraged ETFs, there's been a ton of new ETFs launching, 2x leverage on single name stocks, 3x leverage.
Almost a crowded field now, right?
Oh, I mean, there's more ETFs than stocks in the stock market. So there's more.
Oh, that's crazy.
There's more ETFs now, not just leverage ETFs, but in general ETFs.
In its totality.
Than there are single name equities. So, I mean, it's a good gig. If you're the bank, you take 0.5%, to make these junky products.
Sure.
And
it's a good gig if you
can. And people parked $120 billion, So in just a decade, their assets have grown to over $120 billion in these leverage products. Much of that growth began after 2020 as investors saw amplified exposure to a strong market recovery. So, these worked in COVID. So people are kind of hanging on to them, keep using them. So, but let's take a look at some of these and just kind of dissect what's really going on here. So next slide here, small group of funds dominate the space. So products like TQQQ, SOXL, and SPXL. A lot of these these three are kind of the top traded, track the broad-based indices such as the NASDAQ and the S&P 500, and they give you a 2x to 3x daily exposure to price movements in these stocks or in these ETFs. So, that sounds amazing when markets are up 30%. Why wouldn't you want 3x that?
Sure. You'd be almost 100%, right?
Most are bullish products, and they're intended for short-term trading and account for a majority of the leverage ETF assets. There are bearish ones. SQQQ is one for the short NASDAQ. Those charts, you'll see there's a ton of drag to them because of just how they're structured. And we're going to get into that more here.
Some people in IRA accounts, obviously not at Tasty, that can't get short options, call options, use these ETFs as a way of doing that. And then I see it, then I see its, viability, in a small way. Go ahead. You can always make a strategy that gets you short, but whatever.
Yes. Next slide here. Since 2022, a new category has emerged. These are the leverage single stock ETFs. So now you have not only leverage to the S&P 500, but you can do single names like Tesla and Nvidia and MicroStrategy. They've quickly grown to about $40 billion in assets, representing roughly 1/3 of all leverage equity ETFs. So a ton of these. On the next slide here, if we jump to that, leverage single stocks. The stock ETFs are most active in areas tied to technology, AI, and digital assets. These are high volatility. You get these leverage products are typically on things that have relatively high implied volatility. Here's some of the more well-known products here. Tesla and Nvidia remain the most traded, while new funds are experimenting with covered calls or structured strategies, which I don't know if they're attracting more sophisticated traders, because a lot of us know how to do this ourselves. We want to do a covered call in Nvidia. But it definitely looks really awesome to get these big fat dividends and, all these things that are incorporated into these ETFs. But there's certainly some things to keep in mind with these, which we'll get to as we move on here. And that's just a list of a bunch of the bullish ones. There are bearish ones to these too. But why would anybody do that in this market?
That doesn't work.
That doesn't work.
Everybody knows that.
But these all track day-to-day price movements to whatever the leverage is, or some of these with the covered calls are a little bit more unique. Getting on to the next slide here, the concept is straightforward. A 2x leverage ETF should move twice as much as the underlying stock in a single day. For example, if the stock rises 5%, the ETF should rise 10%. This daily leverage can produce attractive short-term gains, but it introduces significant long-term risk. Here's just a comparison of Tesla's daily price moves and average price moves. And then you can see Tesla, TSLL on the other side here. It gives you an idea of just like kind of the distribution of these price movements. And we'll get to that on kind of the next slide here if we move to slide 6. In practice, the results often differ from expectations. For instance, Tesla stock rose about 22% this year, yet its 2 times leverage ETF fell about 7% even after the dividends. And that's because the moves, and we're going to dig into this more, are not dependent on the long-term move, right? So the stock being up 20% doesn't mean that the ETF that tracks at 2x is going to be up 40%.
It's so misleading because you would think if you were just looking at it that that's exactly the way it would be, or that's what you would want with the amount of buying power and everything else that you're using here and the risk that you take.
But it's based on the day-to-day moves. So if you have slow moves or grinding moves or really big downside moves that are then kind of stair-stepped higher, you're not going to
never get back to even.
You could never get back to even.
I mean, you can, but it's so freaking hard.
Yeah, the stock has to be significantly higher. So you're really relying on short-term big moves if you're trading these products. So getting on to the next slide here. Leverage ETFs are designed to deliver 2 to 3x a daily return of their underlying index, not long-term performance. So these are meant to be and are built for day trading, short-term trading, 1 week maybe if you want to do that sort of thing, binary events. These are not like buy and hold assets. Even the cover call ones you're going to see are not really buy and hold because there's a lot of drag to it. There's a lot of redemption and rebalancing. And a lot of these products are swap based. So there's fees there and there's management fees. A lot of these really, really do underperform. So each day the fund resets its exposure, compounding gains and losses separately. This is why these products don't match to the actual underlying itself. Understanding this daily reset is essential to knowing why results diverge over time. Basically, every day you're realizing that move. If you are holding it long term, so you're getting 1% today, 2%, 2% today, down 10%, and then now you need to make 20% on the next move to get back to even.
Even, right.
You need to double whatever your downside is.
Make $1 million, spend $1 million, you're down $1 million.
Yes.
Really what it comes down to.
Yes. So next slide here, this is kind of an example, and this doesn't look that horrible, but you do this, this is a 3-day look.
Yes.
You do this for 300 days and you're at zero.
Houston, we got a problem.
Yeah, so daily compounding means that volatility can quietly erode returns. In markets with frequent ups and downs, its volatility decay causes leveraged ETFs to underperform even when the underlying index ends up higher. This phenomenon is also called drag. And so on the left side here, you look at Tesla returns, down 3%, then up 6%, you're 6.3%, you're back to flat, you're back to 100. So you're net zero after the 3 days. On the right side, the 2x leverage, you're down 6%, and then you're up 12.6%. You're still down 10 cents, which is what, 5% or 50 basis points on the initial $20 stock price. So you're flat on Tesla, but you're down 50 basis points, and that's after 3 days.
Right.
So if you do that 100 times, you're down to zero. Your investment is zero, but Tesla might be at whatever the same starting price is after that, 100 days. And so this is the effect of the drag, and really the fact that the downside moves when the asset gets smaller, the upside moves from there are less of an effect on, it takes you more to get back to even than it does on the down. The down moves are bigger than the up moves.
Yep.
With these leverage ETFs.
Well said.
So the next slide here, leverage ETFs and leverage single stock ETFs are designed for short-term trading, often just hours or days. These are really just like short-term hedges. Like to your example, if you're in an IRA account and you're a little bit spooked by the earnings and FOMC today, and you want to hedge, you go and buy some SQQQ. Like that will hedge you for this week to some degree.
Sure.
Market goes down and you're going to make money there. If you think that in the next 12 months, there's going to be a 50% drawdown in the NASDAQ, the SQQQ is probably not going to work for you unless it happens in the next month.
That's right.
If it happens 8 months from now and you've been holding SQQQ this whole time, you probably don't make any money.
You don't make any money.
Yeah.
I mean, it'd be very hard pressed to make any money.
Yes. So, that's a big problem here. So leverage works only in steady one-directional rallies where gains build up on themselves over time. One of the classic examples is kind of the Volmageddon experience that we had in 2017. XIV volatility was down basically every day for 2 years, and it was free money. And people were like, why are you not trading this? Why this is every day volatility's down 10 ticks. This thing goes up $2. It's every single day. And then all of a sudden you have that one pop in volatility and those products go to zero. And that's a little bit of a different situation, but these leverage products, that's how they work. You want the stock or whatever it's tracking to grind higher, and you just have to keep in mind that, that 10 or 20% down move wipes out all of whatever that up move was.
So once again, it's about timing.
It's about timing, of course. So the next slide here, slide 10. So across these major leverage single stock ETFs, and we're looking at just the 2x onlys here, almost none of them consistently achieve their intended multiple over time. That is not a surprise. I mean, these products don't intend to track long-term performance. They are built for 1, 2, 3 day type moves and performances. When outperformance does occur, it is typically short-lived and driven temporarily by market conditions rather than sustained compounding gains. So these are due to, high volatility and big moves in one direction. They're not because there's an investable thing here. Yep. This is just a short-term trade. And so you can see a lot of these, just owning whatever the asset was is better over a long period of time.
Last one, takeaway.
So the last one, and then we'll get to the open here. So leverage ETFs are designed for short-term strategies, not buy and hold investing. And when you're trading the options here, you should also keep this in mind too, because the volatility on these options is going to be a multiple of the multiple. So if you're looking at a 2x leverage ETF, the options are going to trade to a volatility of 2 or 3x the actual asset itself. So it's not like buying, leveraging on the leverage is going to be very expensive. And a lot of those, you really need, if you're buying calls on TQQQ,
you need that move today.
You need the 3x move. You can't really get the 2x move because they're priced for that. So daily resets and volatility make long-term tracking of these products really unreliable. And of course, you got to have proper risk management, and clear time horizons are critical here when you're trading these instruments. You can't buy and hold these. I know that even a TQQQ in the last couple of years has looked really great. And that's really because the downside moves are shorter lived than the V bottom upside moves. And that's really what you need. If we grind it higher back to flat, you'd be stuck in the mud and it would stink.
Even though you were eventually correct.
Yeah, even though you're eventually correct. So you need if you don't get the V bottom, you're dead in the water.
This smile as a dad, very happy with your performance here today. So good job out of you. You really did great. We're going to take a quick 90-second break.
That was nice. That was cute.
Come back right after this with the opening bell next. It's Tasty Live. Son, you know what that means. Time for a little bit more Tasty Live. That's right. With what's your assumption? Here we go.
I'm gonna roll.
S&P's up 19.
I'm gonna roll up puts in Shopify. I have a strangle there. I'm not gonna be super aggressive here because the stock has just gone straight up. So I got the 150, 170 strangle now. I just rolled up the from the 140 to the 150 puts. I probably should have done this yesterday, but to be completely honest, I have not been looking at that one. And the BE trade, it's back to 127, so we're getting closer to kind of where we got.
Yeah, it's up.
We need volatility to come in there.
You need volatility to come in. We were talking about what volatility would do in BE, and it doesn't look like at this moment it's really come in that much.
Yeah, tiny.
Front month is still 146. Back month still 129.
Yeah.
You look at the NOV positions here. The markets are too wide in here too. Son, you look at these positions, and they're
they stink.
260. They're horrible.
Yeah. Cool.
All right.
Let's do it. What's your assumption? Trade ideas from you, the viewer. And we got some from Reddit too. Our Reddit trades have been freaking bangers. VST, that short put. That was a good one.
Very nice.
First one here. Let's do it. CRM, Jerome in Miami. CRM currently down $2. This is one of the dogs. It is in the the Dow too. So it's dog of the Dow.
Yes, it is. Yes.
Bullish short term, assuming CRM will pop off with Now earnings. So now ServiceNow has earnings today after the close, I believe. Yes.
It does. You
are
right.
That's a much less tradable underlying $922 stock. So, a little bit wider markets there. So you're bullish CRM, buy the CRM 265 calls straight up for this week.
Wow.
Home in Miami.
Wow, they're testing you.
Wow.
265 is a stock at 250, and he wants to buy it for this week. Let's just look at the math here. If you look at the 9-day, December 2nd is earnings, but if you look at the 9-day options here, the 265s are a 20 delta. Markets are a little wide in here too, $1.46 to $1.78. So you'd be paying $1, let's just call it $1.60 for something here. If you looked at the 55-60 call spread, which is out of the money.
But they want to do this for this week.
Well, I'm going
265 calls are 40 cents. They want to put 40 cents on them.
Oh, they want to go to the complete 2-day options.
How about this? I think we can play into this.
You want to play it to the upside. You don't have a problem with this.
Yeah. A little bit more strategically. What about if we sell the 240 put in November, the monthly, 23 days?
Okay.
So it's about a 30 delta put, right?
Okay.
So you're directional. You're certainly directional.
Yeah, I'm putting it up here on the screen. Go ahead.
You think we pop on the Now earnings, so maybe you buy the 255, 260 call spread in the weekly for this week.
Oh, for
so
this.
you give up $1. Yeah, so you do this. It's a stupid.
Yeah, it's a stupid. Just because you're long, and not because you're long.
The Super Bowl is what we should call it, but once upon a time we called it the stupid because you're doubling up.
And if you were doing short, it would be a stupid. What call spread do you want to buy?
You buy the 255, 260 call spread in the weekly, and you pay $1 for that, or around $1, right?
You're selling the
$1.35.
255
for the call spread.
Oh, for the call
spread. Yeah, you give up $1.
You're paying $259. Yeah.
I can jump to my platform here to just kind of show what this risk profile looks like. So
sure, why don't you do that? That's good.
You essentially you're selling this put to finance buying this $5 wide call spread, and it plays into Jerome's assumption that 265 is a lotto ticket. You want to buy the lotto ticket for 40 cents, no problem. Go for it.
You do have unlimited upside, but this is their assumption.
Yes.
I mean, I don't have the same assumption as them, so I'm trying to make something a little bit more strategic that fits their bullishness.
So if it happens, we will certainly, participate in Jerome's assumption here.
Yes.
This way, if you're wrong, Jerome, we've got a little more time to be right here. We're selling premium down at lows. Volatility is relatively high. There's no earnings coming up until after the expiration. So it's kind of just we're with you.
Yeah.
But with a little bit,
a little bit of a caveat.
Yeah. I put that in 10 cents above the mid price and got filled. So if you are doing that trade, I did it at 265. You probably can get 275.
Yeah, I mean,
maybe
the natural bid, natural offer is about 60 cents wide. So, I don't know where you're going to get filled in this, but 265 is where you got filled.
That's 10 cents above the mid price now is at 262. It was 255, but it's going to move. You got $1.
I would go in, listen, you have time at home to do this. Go in at, you credit higher, 280, 285, and just walk it down until you get filled and play beat the Nick.
Yes.
So that is credit you receive, the better you did this trade.
Yeah. And we will no longer call it the stupid. We will call it the Super Bowl.
Super Bowl it is.
Stupid is mean.
Stupid is
stupid. And we're not mean.
We're not mean. That's right. That's right.
All right, 1 for 1. We're with you, Jerome. Next one here.
And that was Jerome Powell, by the way. I did that for you. Gold bullish, GLD. What do you want to do here? Gold has rallied. I hope you did this yesterday. It's up already 1%. $4 on GLD /GC up 37 bucks. What do you want to do?
So this is from, I'm going to say Chris on Reddit. Put credit spread. They're looking at
Cristo. He's probably Greek.
Oh, yeah, there you go. Cristo.
Yeah, Cristo.
Put credit spread, 251, 246. So you're selling a $5 wide put spread. Short strike is around the 30 delta. Okay, risk for a smaller account with around a 70% pop. You had a great idea into the move today. You got a little bit of an up move today in gold. Gold up about 1%. We're above that 4,000 handle. Definitely a smaller sized account trade. I like it. Had a decent pullback after the rocket move up. Might be a nice buy the dip. Stay with the overall trend. I like it. I think if you're in a smaller size account, this is certainly something you can look at. It obviously stinks at the stock that gold is up, or GLD is up $4, gold up, a little over 1%. You don't want to, you wish it was lower.
I do.
Into this.
I do.
But I can play into that. I currently have a little bit of upside long delta here with a crab trade, where I sold some premium in November against long delta and long premium in December. What do you think about adding a little diagonal spread here to kind of play into this?
You could do that.
I was thinking like maybe
I wish you did it yesterday.
Yes,
of
course.
We did this segment yesterday. It's not Cristo's fault.
Yes. Just because you got some call skew here.
I like it.
I'm thinking like the 380 in December, and then you sell the 395 against it in November. You do the whole package about it's $6.48 debit, and it gets you about 22 long deltas, which is kind of similar to what your delta would be if you were selling the 30 delta put or around there. You like it?
I like it.
Bless it.
I like it. I give it my blessings.
Yeah, good. Oh, 649. We're in.
Ooh, beautiful.
And this will hedge us against your junky iron condor that you put us in.
That's become a bastardized iron.
I mean, your roles.
Sell the top, but buy the top, sell the bottom. I told you I'm the world's worst.
It's a new regime. You could take some directional exposure sometimes.
You think so?
Yeah, you can. So? It's okay. This market moves fast. Sometimes you get bailed out. You got to have some direction.
Yeah. Thanks for the hindsight. I appreciate it. Nobody's a better hindsight trader than you. Actually, I met a better hindsight trader than you, but I'm not going to mention him right now.
Next trade here. CMG, what a dog this thing is.
What a dog.
Have you looked at CMG?
CMG has not participated in anything.
Anything. It's dead. After
ID
the
rank
split,
of 67 is good. It has earnings after the market closes today.
I think this was a bad split. This was too much of a split. You got to be at the 100 mark. The 100 mark is the sweet spot where you can get some volatility in those options, where it's tradable. I think here, I think it was a 50-1 split they did. Because I think it was like $300 or $3,000, $4,000 stock at one point.
Horrible.
I think it was a 50.
But lower since the split.
Something like that. Stock hasn't moved, and you don't have the gamma aspect to it. It's just like, so bullish CMG. Okay, this is Kevin, Charlottesville. Price back to 2023 levels, due for a rally. CMG
it's due.
Earnings after the close today.
Yes. What do you think here?
What do you think about?
Unlike gold, this has not had a move that's going to change your opinion here.
So what do you think about a little bit of a wheel strategy here? You got earnings after the close today. It's a $40 stock. It's a pig. It's kind of like Verizon. Like we traded Verizon, long stock. If you're bullish here and you think, you know what, I'll buy it if we're at lows again. 52-week low is 38 and change, 38.30. You say, I'm going to buy it there.
Okay.
You could sell the 39 strike put for this week.
2 days ago.
Trades at $1.
Expected move is $3.30. It's trading at 40.5. Let's say you're halfway between the move.
Yeah.
You're getting a credit of around $1 and change. So if it moves lower with 2 days to go, how much premium is going to be left in that put? Not a lot, 50, 70 cents, something like that. So you're looking at straight. Yeah, I don't hate it. You got to
take stock, and if it goes lower, you can take stock. You sell the at the money call, and you say, okay, we get back to 40, we're out.
All right. Your brother would be happy that you're making this trade. He's a big Chipotle fanboy. I'm not a fan, but
I'm not a big fan of Chipotle either. I mean, I think you go to a local Mexican spot and get some real food.
Yeah.
This is
no bueno, as
we're gonna get filled at
my friends would say.
115 here. All right, we're gonna sell a 39 put. We got filled at 116. We'll hold that through the end of the week to wheel into that. Show that whole process too.
Very good. All right.
Assuming it goes down, I'm hoping it goes up. Because then I don't have to do anything.
Showing you love.
CMG, we're in. Short put.
Awesome.
Potential wheel.
Even the S&Ps near their highs up 22. 23.
Cancel crash.
Cancel crash.
LE, is that's not lean hogs, it's cattle, I think. Yes, live cattle. They were limit down for 2 days.
Yeah, this is not. If I'm going to trade a commodity, and I stink as the world's worst commodity trader, I am not going into lean a live cattle here, as it is one of the biggest. It's like going into nat gas as opposed to oil.
Wasn't Pete in the live cat? Didn't he do a stint in the live cattle pits? I know he's been around in like all of the.
It's like live cattle. What do they call those? Cow pies. He was everywhere, all over the. Yeah. He was like one of those.
Isn't there some trade where you do the
Widowmaker?
No, the Widowmaker. No, but with live cattle, like you trade like soybeans as the feed or something. One of them, or corn.
There's the crush. You can do soybean meal versus
meal, but then you do it with the hogs and the live cattle.
Yes. Pete would do all of those things to us. Not
Yeah, we're gonna have to bring him back for that. Speaking of, I hear Lil Birdie saying that Closing the Gap Futures edition might be back on some capacity.
I love it.
Soon.
I love it. That'd be awesome.
CME. So we'll see. Teresa in Switzerland. We are going to pass on these. It's just a little bit past, our brain power. Next slide. So we're going to pass on the lean hogs, or on the live cattle. I'm sorry. Roblox. All right. Bullish. Ooh. Roberto, south side of Chicago and the Netherlands, because they're certainly not the same places. Those two places, big difference.
No.
October 31st. So we're going Halloween, spooky season. Earnings play, selling the 30 Delta puts expiring end of the week. Oof. What do you think about this?
Roblox. I don't know. $132 stock. Great IV rank in here.
The 2-day 30 Delta puts. Have you looked at them yet? Don't look. What do you think?
Say again?
The 30 Delta puts in the 2-day.
Oh my God, I wouldn't know how to price them. What's the monthly implied volatility in there? Can you give me that?
Oh, you got the monthly is about 90%.
What's the implied volatility there? Like
in the 2 days
or something?
230% implied volatility.
Oh my God, these puts are going to be $8, $7, $7.50, $8.
$5 at the 30. Yeah, $5-6.
2 days?
2 days to go.
What strike?
Like the 120 puts.
Oh, 120. I thought you said 130. Sorry.
No.
Sorry. 130s are 868.
Yeah. But if you look at like in the monthly, they're $8. I mean, you're right.
Yeah, unbelievable.
What do you think here?
Expected.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Hello, everybody. Well, it's Tim and Duke. here to talk about charts. And we have got the penultimate FOMC out of the way. So one more of these confounded things left for 2025. As expected, universally, they cut a quarter point. So that'll solve all our problems. And the thing that, so the quarter point came, the cut came, and the market was just like, it didn't even move. What did move the market, it seems, was during the press conference, Powell basically said that another rate cut in December is not absolutely guaranteed, and that freaked people out. So at the moment, the ES, the RTY, the YM are all red. Not much, but I'll take it. It's my favorite color. And then earnings are going to come over the horizon. We've got this afternoon Google and Meta and Microsoft, and then tomorrow afternoon we've got Apple and Amazon. So it's going to be quite the barn burner. On a short-term basis, just looking at the past couple of days, trading days, even the past 12 hours or so, on the ES, we've got a pretty clean line of resistance that Powell press conference line sliced right through. And so that's acting as a good barrier right now. So all in all, a good day. Most of my shorts are in the red, which is cool. And there's a lot of great setups out there. And I'm cheerful enough that I'm going to stick around after this show, going to hang out with the lovely Liz and Jenny to talk about a couple more charts there. So if Duke will allow me to use my right hand, we'll jump into the charts and see what's what. So here is the spider. And our old wedge friend is doing its job. And importantly, we have a bearish engulfing pattern on yesterday's doji, and we have stayed persistently below this line. So it's doing its good job as resistance. And that's all just terrific. And of course, what it's waiting for is earnings. If for whatever crazy reason the earnings disappoint, that would add some desperately needed fuel to the bearish fire, which is more of a matchstick at this point. And the only real red alert would happen if by some crazy chance we cut below this level, which is was the breakout that we leaped above last time. So yeah, it modestly bearish right now because we're at lifetime highs on an intraday basis today. We have a bearish engulfing pattern at the moment, and so looking good for the spider. And I'm still modestly positioned, not as much as when I came into the week, but about 100%. And that is to say, not using any margin. So that's kind of medium for me. If I'm, red-eyed and bearish and crazy, I go up to 200% almost. But as it is now, still pretty mellow, medium. The diamonds, kind of the same idea. We've got 2 red bars in a row. Yesterday and today are both looking like a weak close compared to the open. We've also stayed below the wedge on that one, so that's looking fine. And the small caps, the IWM, have not broken their peak from back on the 15th at any time. And the past 3 days, we've been engaging just in this slight softening, as you can see, like so. The thing I'm watching for is, can we break that trend line? That trend line is in place from April 7. I have scooched it down a little bit to be more conservative, anchored to this level here. So as of the moment, the jury is still out on this. This has not broken its own uptrend. The really interesting ETF that jumped out at me today was the emerging markets, EEM, because with the Trump Asia trip going on now and the Argentina election, it's like the era of good feeling for international equities, and that's reflected in the EEM. And if we look at the entire history of this, we can see, similar to silver in a way, we had a lifetime high way, 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 way back in 2007, and that was beaten slightly in 2021 during kind of the final months of the COVID multi-trillion-dollar mania. And then we are getting close to that level again now. And that level specifically is right up here, not that far away. So I went ahead and shorted, this is my largest position, shorted EEM earlier today with a stop just above that peak up there. So we'll see how that goes. I also say I was listening to the press conference. One of the more amusing things Powell said is because you would never guess a Fed conference would be AI. It's almost like a consumer electronics show, the way they're talking. Everyone's asking about AI, particularly with the tens of thousands of jobs that Amazon's about to torch thanks to AI. But one reporter asked about the stock market levels, and Powell rather amusingly responded that, "Oh, we don't look at that. We don't set asset prices. Really? You know, there's no dual mandate. That's your single mandate to keep that as high as possible." So it's just risible answer. And it's like, "Oh, we don't look at stock prices. Goodness gracious me, give me a break." That is what the Fed is all about. So ridiculous. Some people believe it, I suppose. Anyway, back to the charts. The bonds are not loving life right now. They are down about 0.75%. They have not cut above that long descending trend line. So here again, the jury's still very much out. So interest rates are inching higher, and the whole, these FOMC kabuki theater things are a bit silly anyway, because the market already exists for interest rates. The interest rates are already established. You've probably seen those overlays where it shows like the predominant interest rates and then the federal funds rate sort of like catching up with it or down with it these days over the course of time. So it's a lingering, very predictable afterthought. It's like every 6 weeks, let's catch up with the market, what the market's already done. So in this instance, I guess his mention that, no, it's not necessarily going down again, has rates on the rise once more. Nvidia, another lifetime high. The first $5 trillion company in history. Up today again, almost 3%. What can you say? I mean, it's the economy, the stock market, the worldwide stock markets, all dependent on the AI bubble at this point. Absolutely. And Nvidia being the king of kings in this respect. $5 trillion. 10 years ago, if you told somebody that this maker of computer game graphics cards was going to be $5 trillion, they would have trouble believing you, but it is the fact. Other semiconductor zones here, Micron, MU, having another good day, up almost 4%. Just a rocket ship. Look at that. Just tremendous since April. Triple-digit returns over the past 6 months, just all over the place. AMD, also on an intraday basis, lifetime high and probably a lifetime high close, about a 2.5% gain there. So semiconductors absolutely ruling o'er the land. And we can see this in a very broad sense with SMH. And as I've mentioned before, SMH is a little unusual since, unlike a lot of other big ETFs, it has never broken those April 7, that April 7 trend line, this little orange line right here. On the contrary, it's broken above its wedge. And so that is, I suppose, if there's any bears left, they might call that an overshoot of it. Or if you're feeling more bullishly inclined, it's a breakout. And the wedge has now become support. So semiconductors seem to basically be catching not a downtick in sight. More broadly, with the cubes, this is the QQQ is barely up right now. The NQ itself is up 32 points, which is about 0.1%. We're still below the trend line. That is this key trend line. All of them are April 7 anchors. And we're just mushed up against it. So clearly, this is absolutely dependent upon those 5 multi-trillion-dollar market cap companies that are going to be reporting over the next 25 hours, for better or worse. There's a couple of stocks, apropos of none of this. They sound the same, but have very different fates today. One of them is Fiserv. Fiserv is down almost 50% today alone. It is a wipeout. You can see right here, like so. It was actually signaled pretty decently by a topping pattern right along like so. It's not award-winning. It's not perfect, but it's not bad. And in slope charts, I've been tracking this, but there's the topping pattern itself. And that preceded a whole series of kind of shock events here, 1, 2, 3, 4, each of them bigger than the last. So Fiserv, just a staggering drop. On the more happy side of things, there is Flowserve, which is up over 30%. Tremendous day for FLS, and it looks like not a lifetime high, but it's getting there. It's been consolidating for years in this range, but that looks like a pretty nice strengthening of that particular security. Gold, precious metals, is not having quite the dynamism that we've had over the past few days. Some days it'd be like up or down triple digits. It's a little more mellow today, in spite of the Fed. At the moment, the gold contract is off a few dollars. It seems to have found some measure of stability at these price levels, just below that psychologically crucial $4,000 zone. As I've mentioned, what I'm hoping for is a real pummeling of this to a more attractive level, not for gold per se, but for palladium and precious in general. And as I said yesterday, 3,500 is probably too low, but a few hundred more dollars would do the trick, I think. 36 or thereabouts. As we look at silver, it's actually up about 0.5% today. And as I've been mentioning, over the course of its long history, we've had 3 instances where it's been about $50 an ounce, and it seems to poop out each of those levels. But I do think ultimately it will be able to cut past that and go into just a whole new realm that's never been seen before with respect to precious metal strength. That's where we can get into the idea of like $100 an ounce or something like that. So that is a eye-poppingly well-formed cup with handle pattern. The miners are up a little too, and they've had a drubbing lately, but they're finding some level of stability here. I don't think the selling's over. XME looks particularly vulnerable. I mentioned this yesterday. We cut below this trend line last week, and the past 1, 2, 3 days have been persistently below that broken trend line. So that still looks like an appealing bearish position if you believe the precious metal selling isn't done. My door is getting eaten. Okay, as far as palladium goes, we did seal this gap yesterday. As I keep mentioning, I'm hoping / thinking the selling's not over, and the wonderful entry point would be something like around there, around 115 or so. So we'll see if we can do it. For whatever reason, we'll see if we can get another nice bashing down to that level where there's much, much more support and underground supply, if you will. Keeping an eye on the time. How are we doing there? You know what? Let's just take a super quick look at those big 3 mega caps that are reporting after the close. I don't have any positions in any of these or any really strong feelings, but let's just do them the honor. Meta has basically been grinding around for months. It's roughly the same price. It's not much of a different price now than it was in June. No clear pattern there, just very range bound. And I'm sure a lot of folks will be interested, like, how's your AI investment going? Because it's been a big one. Alphabet is very well positioned. It's a very strong chart. Of the 3, I would suspect this one is the most prone to a nice lift there because it's a very, very clean, strong chart over the past, all year long, actually, and certainly the last 6 months. And as far as Microsoft, this one's kind of vulnerable. This is the lifetime high back here, which was, I suppose, the prior earnings event. And we got close yesterday, but not quite. So this one has a much, much tougher row to hoe in order to leap to a new lifetime high in that instance. But as I say, no positions, no particularly strong opinions, just of the 3, Alphabet seems the best poised to me. Okay, bottom of the hour, and I'll probably see you in a couple of minutes. And thanks for coming by, and good luck this afternoon.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tasty Trade. Make your move.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Everybody, and welcome to Last Call. We are so lucky to have Tim Knight with us again. Thank you, Tim, for coming on.
The crowd goes crazy. The crowd goes crazy.
Yeah. Just
we love it, Tim.
The Hump Day special will make it every week.
I love it. I love it. No, you really are a crowd favorite. I mean, it was. I was watching the chat before because while you were talking, and you get two thumbs up. 2 thumbs up. Everyone loves you.
Thank you.
And I think they're jealous that we have a direct line to you and can ask for symbols. So they may be sending us symbols to send to you.
For a little while, like years and years ago, Tom and Tony would have me on from time to time. And Tony got obsessed with what he called the awkward handoff, which I never really understood. And so finally we gave up. But
I know why, because they would be like, hey, what's happening in Meta? And I don't think you're charting, and I know you're not, you call yourself a chartist, not a technician. I believe that's correct. Charting the earnings are the wild, wild west. Just like I listen to Google. You think Google might lift, but not on earnings. That doesn't necessarily mean that, right?
Yeah, no, it's funny because I'll often get a pleasant surprise, like, oh, one of my shorts is falling hard this morning. It's like, oh, they had earnings, that's why. So I don't really, I think what you folks do, and as I'm probably the least sophisticated trader amongst the entire staff and all your viewers, is maybe focus in on like earnings plays. And whereas I'm more of a swing trader, like I'd love to hold in a position for weeks or months based on a longer term pattern. So
for sure. That's why we're friendly fire. All right, Tim, we are very happy to have you, so we don't want to hold up too much of your time. So what do you want to talk about today?
Well, you sent me a list of about 10 symbols, and I looked at them, and 3 of them kind of grabbed me because they're all related in the same industry, and they're also all located like where I live, Tesla, Lucid, and Rivian.
All right.
And in whatever order, I've definitely got an opinion.
Okay, let's jump into the platform. And can I pick the order?
Yeah, we're already in. We're already in the platform.
Oh, we are? I can't tell that. Okay, we're in the platform, so I'm going to pick the order, and I'm going to go Tesla.
Okay.
Tesla first.
Okay, so
Tesla. This is for my son because this was his first purchase of stock was Tesla.
Oh, okay, cool. Yeah, as a stock, it is really a phenomenon. And what's curious to me about this, and this is nothing to do with the chart, is that all the sort of narrative should mean the stock's getting pummeled. I mean, I saw an article just this morning about like Elon's political leanings have cost them 1.2 million unit sales. Tell the chart, it doesn't seem to care. And so this the stock has been sort of subject to his political leanings, but that's kind of shaken off now because it went up until mid-December.
I think it was right here, Tim, and you can correct me if I'm wrong.
And then fell really hard as he sort of fell out of favor, and then sort of like the healing began. And I've said for years that this might outdo Nvidia at some point if the whole Optimus FSD thing really catches fire. So clearly, I mean, there was like during COVID, there was like 20 EV stocks out there, and it's pretty much now Tesla and a few little bitty survivors.
Yeah, a lot of them didn't survive.
And yeah.
One day, Liz and I met someone on the road. It was one of our road shows. And Liz, do you remember what he said? He said, if Tesla hits...
yeah, I do. He said if Tesla hits 420, which it did here, and it did here, he said if Tesla hits 420 and stays above it, it's going to 620 immediately.
Well, it's I mean, long term, it is just really been terribly resilient and a very robust stock, no matter what's been flung at it. I kind of fell in love with them back in 2012 just because of the car, because that's when I got my first Model S. But there's huge uncertainties with respect to the because if you hear Elon talk, he's literally talking about like 100 million robots being sold, et cetera, in a year and all that. And there's this $1 trillion pay package and all. I mean, I wouldn't buy it now and I wouldn't short it now. It's to me just kind of a phenomenon where you just stand back and be amazed.
Just stand back and watch. I like it.
Yeah.
Okay,
what about Rivian? Because I've always loved the look of the Rivians.
That is like exactly, totally. And here, I don't know what it's like where you live, but here in Palo Alto, like 6 months ago, I never saw them. And these days I see several a week, and they've got this gorgeous showroom over at the Stanford Shopping Center. I've always thought they were a very beautiful vehicle. The funny thing about them, if you look over the long term, is that it always sort of like bases and then slips. It can't seem to kind of get off the mat. They're very much of a money losing company, and they're laying off now. They're laying off hundreds of people. They're based here in Palo Alto. So on the one hand, just on the surface, like, wow, that's why Tesla has ignored the truck market, I don't know, but they have. So they sort of left this whole field open for them. And they've got these gorgeous products that seem to be growing popular. But as far as a money-making enterprise, it really hasn't gotten its act together. But it seems, I mean, if you said you've got $10,000, you buy one of these for the long haul. I'd actually kind of probably go for Rivian because I think percentage-wise, it probably has the best prospects.
Okay.
All right, I like it. I like it. Of the three, I only have this one. I know, Liz, you have this and Tesla.
I've got them all, Tim. Now, what's the stock symbol for Lucid?
LCID.
Actually, I do not have Lucid. I used to.
No, I don't.
What is this?
That had to be a benchmark.
That's a data error, and that happens. I mean, as the world of financial data hasn't changed for decades. There's always dirty data, no matter where. So it just comes with the territory. Okay. In any case, this company I think has a much weaker business model than Rivian's, because basically their business model is for those who want a Tesla but hate Elon a lot.
That is their business model.
That's their business.
Yeah, that's why Tom sold his Tesla and bought a Lucid.
Okay. And the thing is that they, unlike the Rivian, are not an attractive vehicle, in my opinion. And
I don't know that I've ever seen one.
Yes, they're in the mall. There's one in the window. When we were in the mall with Annabelle and Lily, we saw the car through the window.
Okay, let me rephrase. I've never seen one on the roads.
Here's the easiest way to understand it. Tesla is to Lucid as Oreo is to Hydrox. Nobody wants the Hydrox, but they're very similar. So if you look at a Lucid, it's sort of like it's not as nice a Model S. And like I say, it's really more of a statement than anything else. I read that they actually are going to be doing the FSD thing, the full self-driving thing themselves, and they've also got some kind of deal cooking with Uber, I want to say. So on the business front, there's some news coming out, but you can tell by the chart, it's just kind of a gasping for air. And so, as I said, for a fixed amount of money for the long haul, I think Rivian will be the winner.
All right, Tim. Well, you've heard it here first. Tim, Thank you so much for coming on. I would say we'd love to have you on, but we're down to 18 minutes and we have a lot to do.
All right, thank you so much, Tim. We're begging you to come back next week, and we'll send you some symbols.
Any day the market's down, I'll be a cheerful participant. Doesn't even have to be
All right, thank you very much, Tim.
All right, see you guys later. Bye.
All right, see you in a little bit. Okay, so now, Jenny, let's just pop in the platform real quick and take a look at this. This has been, no, I didn't see it down, but you said it was down as low as 40, right?
I saw SPOO's down 40. Now, again, we were traveling, we were live from the SIBO today. We were traveling in between. I glanced at my phone a couple of times, saw SPOO's down 40. That was the lowest I saw it. Maybe it got a little lower. But
so when the quarter point came out, it really didn't move. SPOO stayed down. I mean, they were staying there and staying there and staying there and staying there. So when I got back in here and I had seen them only down like 10, I was like, oh, okay, nothing has moved.
Not until Powell started speaking, and when he said they didn't know if they would lower it anymore in December meeting, and someone asked about how the market was kind of already pricing in a cut in December, and he said, we don't think they were all at odds. Like the committee couldn't agree on lowering it in the December meeting. So that's when they dropped, and that's when I thought I saw them go down 40. Now, this is the lowest I've seen bonds get. I did at about like 118.07 sell put spread in ZB. But this right here at 118 level is about the lowest I've seen.
So before everything came out, this was 118.12, and now they're 118 even. They're just about teetering with that 17 handle. This is the lowest I've seen.
And they've been ticking down a little. Oh, you were on the weekly chart.
Oh, geez, I was like, what's happening? Okay, there we go.
Oh, so
hold on, not 2 days. I need 1 day.
Yeah, 1 day. So I saw the put spread. I don't know. I just went
I'm in. You know what, Jenny? I think that's a good thing to do today. So let's go to the 23-day. I know we probably should go farther out.
No, I did you got to go up. I did the 117, 116. No, that's 23-day. But if you go to you're right cycle. I was just said the 117, 116, or you're not going to get enough.
Okay, 117, 116. You're getting 265, and it's a $10 wide. So I'm going to ship this. Then we have a bond trade in. Taking advantage of a little bit of the down move. I do want to get filled in this, so I'm going to take this down a little bit.
Oh, yeah. I only got 14. I got like #14.
And we're filled, so that's good.
So 16, we're in a better situation than I was.
So that's pushed out, and Jenny will push it to the other side. We'll do that after the show. So that's interesting looking at bonds. But I will tell you, what's funny is the NASDAQ is keeping its wings up. SPOOs are only down 10. And
I don't think that CRM trade was, that CRM trade maybe filled after our show. Oh, no.
It was in there. That got pushed out.
Okay, got it.
Yeah, that's okay. So that got pushed out. Now we were going to take a look at some earnings trades today, so I'm going to go straight to there. Our YouTube, the Impatient Bulls selling zero DTE puts came out today. I encourage everybody to watch this. It was really good. Tomorrow I'm going to package them together, so you can watch one, then the other, and springboard off of each other. But I did want to go back to our earnings for today.
Okay, so earnings, there are a lot. Meta, Microsoft, Google. I know we were looking at this earlier and we said there's so many in the NASDAQ, you could just play the Qs, and we can just play the Qs. But I brought back I haven't done a crab in a while. I know the crab, like Nikki and Mike created the crab. I ended up doing a crab in Google, and it wasn't that expensive.
So Google's the least expensive of those 5. And so springboarding off of Tim Knight, because he said, I don't know if you watched at the end, he said this is the one that might go up. Now, I want to say for the record, and I need to give him like carte blanche, his charting has nothing to do with earnings.
Right. Yeah. You heard him say like longer time frames. He's looking at longer time frames. I thought if I wanted to have some trades in on earnings, because you're going all the way from stock trading 273 and you're all the way 290, you can make that. You don't have to buy something $5 away. You can buy something much further away.
Well, I just wanted to show this. So this is, okay, so set me up with what you did, because I want to make sure we get this in. We've got 13 minutes. So this is just a crab. I just went 290, 295. You sell 2, you buy 1, right? So we're taking in, and I'm going to delete that other leg.
Like the concept of a crab, the one you buy, because it's like you do a ratio spread, but what you make, you just don't want to lose if it goes up. So if we're going to buy the 275 and we have the short 290, that's $15 wide. So we can make $15 on that spread. So you can make your width between the other two at least $10 wide, at least 10.
So $293. But the problem is it's not changing, Jenny, the only reason I kind of went nearer term, it's not changing the credit you're getting that much. So take a look at this. It's going from 205 to 435. And then you're ensuring that you're making a lot more money on the upside.
Okay. So yeah,
the only reason I was looking at that. When I glanced and I saw all of these were about $2, then this is the adding of risk. Talking through this, if Google gaps up past 300,
you won't lose. You won't
lose, but you won't make money. Here you will.
Right. I was trying to make it as cheap as possible. And then if it skyrocketed, not lose, if it blew through. But you can set it up any way you want to set it up.
Let's split the difference. We'll go smack dab in the middle of those two, because we're paying $527 for this. Now we could be out $527 if it goes down.
If it goes down, we could be up $527. If it doesn't move, we won't, because we've got that. It's a positive theta trade. You can see the theta on this, $157. We've got a lot of premium coming out of the weeklies with that ratio spread.
I mean, SPUs are only down 6. How crazy is that? I'm going to ship this, so we're in something in Google. It's a defined risk trade, so we're in that as well. So that's a crab trade in Google. Now, I know the boys will spend a little bit more, and they'll go farther out in time with the ones that they buy, but we're trying to keep them pretty inexpensive.
I was just trying to find something like reasonable. We've got big products with earnings. Meta, Microsoft, Google. They're all big products.
And it's kind of why we were thinking about this on the train, but we wanted to wait until after the FOMC meeting. Now, the ironic part, that's still very expensive. You can do the 0-day, 1 day, and that doesn't make any sense.
No, I really don't mind I really don't mind just having the Google in, maybe a put spread in Microsoft. I can't remember in Qs what we were looking at, or we were looking.
We were looking at a diagonal in Qs. We were looking at a diagonal in Qs, but it was going to be a very cheap, very expensive diagonal, because if you're going to go, let's go 1 day, what would be next week? 7 days?
So you can't do the 0-day. Well, yeah. So you're going to sell.
Yeah, you want to do the 0-day, and then
you getting anything? Oh, you're getting 80 cents.
You're getting 80 cents. Here you're spending $6. So take a look at this diagonal. This is kind of conceptually hard to wrap your brain around. You're $5 wide and you're paying $7.35. I would close that up right away.
You have to do the 0-day, 1 day.
Yeah, and even then, did you see how expensive it was, Jenny? Watch this. It's very expensive. You're getting 95 cents here, and the 1 day, it's still it's $6 wide, and it's over. You're paying $3.64.
All you're doing is getting that 636 call in the 1 day for $3.60 instead of $4.50. So that's all you're doing, because in the 0-day, it's gonna. But it's not necessarily true because the 0 day, and I would say I don't recommend this trade because the 0 day, these people can exercise
early. And keep an eye on this. That's the one thing too. This is going to move because it's open for 15 minutes longer than those big ones. So I don't want to do that. I'm glad.
I don't want to do that. Because when the news comes out and the earnings come out, if we sold that call in the 0 day, that we'd get exercised or we'd be assigned on it if everything's up and the Qs are up. So you've got to be careful with anything in the 0 day because they have until 3:15 to exercise.
That they do. I want to take a look at a couple of our positions today. I don't think there's anything else that needs to be managed. We did have a Rivian position in, only on the heels of having Tim Knight in here. And we put it on 26 days ago and we're at 30%. I'm going to close this because we're getting close to this 14-15 call spread. We're going to take our $35 and maybe we'll put something else in Rivian.
Sure.
So that is pushed. On both sides, we will push all this stuff to the follow page.
I've got it all.
I mean, look at this. Spoons are green.
Yeah, went from down 40 to green. What else do we want to have? Do we want to have anything else in on earnings? Do you want to sell like a put spread in Microsoft or?
I'm going to take back a look. So you've got Meta, Microsoft, Google. No, Meta's very expensive. Microsoft is very expensive. CMG and Carvana now. We did something in Starbucks already. We did that during the day today. So
isn't it supposed to be now or is it snow?
I think I don't know. That is an excellent question.
Does snow have earnings?
Let's see if now it does.
Yeah,
it's now.
It's now.
Whatever now is, it's a $913 product.
And we did Starbucks. They've got earnings.
Yeah, we've done a Starbucks trade. It's right here. So we actually have, this is fine. It's down a little bit on there, but it's still very, very similar to where it is. We sold the 91 call, bought the 84 call in the 23 day. So that's an earnings diagonal.
You know what's crazy to me is the hit that crypto took today. So if I can't see on your symbol page because it's a little bit lower, but where is Bitcoin right now?
I'm going to go into, I agree with all these terms, and I'm going to go to Bitcoin is 110.
Yeah.
It definitely had a pop down.
Yeah, it really has taken a hit.
And that's why I was very confused because I don't know where this chart starts and where it ends. But when I woke up this morning, it was saying Bitcoin's up, Bitcoin's up, Bitcoin's up, and it wasn't.
Well, again, it's not like we're so used to, the bell rings at 3:00. And then the next morning at 8:30 when they open, they're looking at the last print from the day before at 3:00, where Bitcoin just kind of continuously goes, and I don't even know what time the reset is.
Crypto never sleeps, so it's pretty interesting to me. That's why I have a lot of the cryptos in because the only way that I know is by keeping an eye on the price, right? So I pulled it up here so you can see that Bitcoin USD, and it's 110. Like that's a big hit, and you can see that in our ETHA and our IBIT.
We made $50 now on our Boeing calendar, so maybe see if it's funny because when it was right at 217 and we had the 217, it wasn't even worth anything. And now it's $5 away from it and we made $50 on it.
I think it's because all the vol got taken out of the front month because it was waiting. Do you know what I mean?
So try to fill it.
Look at this. We didn't make $50. This is wide markets. You're at 115 at 265. I'll put it in, but I doubt we're going to get filled.
What, let's see, we paid $143 for it.
Yeah, but you see what I'm saying about these markets? Let me go to the positions page. Look at, we're trying to sell it for 190, which is mid-market, but it's because of this 217 in the 9-day. It's 670 at 745. So the market is 115 at 265. That's a wide market. That's not a $50 win. That's a wide market.
But if someone wants to see what their calendar is really worth, you could see that 350 in the 9-day, like mid-market of that tighter call market, 335 in the 9-day, and then minus the call in the 2-day. So 335 minus like 135 should be about 190.
It should be about 190, but you're getting wide markets here. That's part of the problem. 480 at 555. I mean, let me take it down to 185 and see, because then we'll have made $45. I don't think we're going to.
I know earlier you had kind of wanted to close this one. So if we could.
I wanted to close it before the, see, now we only have a $30 win. It's just, these are wide market, wide market, wide market.
There we go, 185. So we made $45.
That's good.
Yeah.
Let's take a look at Etsy, which we held on to, but I think
that's still, I mean, if you think about it, our risk was 140, so we made a third of our risk.
Etsy did not have the recovery that we thought it was going to.
No, Etsy down $8 is painful in my account because I've got quite a few shares. and it's painful. My little Etsy. I'm gonna have to order more stuff for my next cruise.
You're gonna have to order more magnets. Order by the
more
truckload.
coasters. Come on, Etsy.
Now, I know you were saying a put spread on Microsoft. Let's take a look at Microsoft. Now, what did Tim Knight say? Tim Knight said Google he could see going up. Which one did he say was over? I was listening to him at the end when he went off over all three. I don't remember what he said about Microsoft.
I did not hear the end of his. The only one I put in. So I usually have Starbucks in, and I put in the Google Crab. I don't have anything in Microsoft yet. I was looking at it right before we had to get on last call, and I didn't push the button yet. And I'm curious. So how much is? I'm gonna look like how much is the Crab in Microsoft?
Oh, you want to do that in Microsoft? Okay. So
well, I'm just looking. So 42.
I'm just gonna do a $2 wide.
42.
I'm gonna do a $10 wide. You're getting $7 for a $10 wide, and you can go and buy. It's $7.
It's not that much more. What do we pay? $6 for Google.
Yeah. With these crab trades, that can be a real loss. I would just like to state that for the record, especially because the way that we set them up, we're only in the 9-day. Now, I know a lot of the times the boys will go real far out in time where they're going to go to the 23-day and buy it. So they're going to be spending, well, it's only $9, it's only $2 more. But going farther out in time, you can do, you're going to pay a little bit more. So I do have Microsoft. Oh, Google, we're up already in. I do have Microsoft. I have Google. I've got Meta. Other than that, CRM has earnings, doesn't it? Hold, please. I got to make sure. No, it's CMG. I'm sorry. It's CMG. So CRM does not have earnings. Let's take a look at CMG. That's Chipotle.
I mean, I think we got 2 minutes before the bell rings.
So CMG has earnings as well. This is a $38 stock that never, ever, ever took off after it split. Do you remember? It was the fall from grace. So let's do something in here. I want to see how much diagonal is in here because it's going to be cheap because it's only $38. So if we're looking at this, it's you have a $4 wide for $150.
I'm listening.
I'm going to throw a CMG diagonal in Chipotle Mexican Grill. It's down. It's the one thing that hasn't been up after it's split. So this is saying that it's just going to come up a little bit, although this might be hit by the tariffs. I don't know that I want to put that in.
I think we're out of time. I think as far as a recap of what we did, we're probably out of time.
So today we took off our Boeing, we took off our Rivian, we did a Google Crab, and we placed a bond trade based on all this stuff. CRM we just placed today. That's why I was like, what is that? I was thinking it was CMG.
That was the viewer that we had that was really bullish in CRM. That was from what's your assumption?
Yeah, and Chipotle is one of those ones where it split and then it could not get out of its own way. That was the one that was a very, very, very expensive stock. And remember, everything was splitting and everything was rising like a phoenix from the ashes. That was not the case in CMG.
I was while you were talking, I went in my account and threw in the it's weird. I went and threw in the Microsoft Crab, but then I panicked that I had it in wrong because it was holding up a lot more buying power.
It does. It will.
And I was paying for it.
Yep.
And so you would think like, okay, if I'm paying $7 for it, it should hold up $700, and it was holding up a lot more buying power than I was paying for it.
It's already got that in there. We're not seeing the buying power right there. But that happens.
I paid only $7 for mine because I made my ratio spread in the 2-day. I made that spread much wider.
Oh, and this is me showing how if you go to the 23-day, I'm sure you're in the 9-day. That's why it's $7. Let me see if I do that. Let me see if I take it to. I just want to see for all intents and purposes of the.
Yeah. Oh, yeah. There's 737, and
then you put it in wrong because this shouldn't.
I don't know. I mean, it did use a lot more buying power than
like a significant amount more, because that's usually a telltale sign of something.
But you know how like sometimes in PM accounts it uses it's like you could do something and it uses more money for who knows why.
For no reason. No, I get it.
Because I keep checking it.
All eyes are going to be on the NASDAQ today, but I will be honest, all those things are also in the S&P 500. So these are going to move, and these are going to move after the close. So that is a good PSA. So after the close, they still have time to move and shift. And there we go. Which is why, I'm going to go to Google real quick, and then we'll toss it to the boys. Because if you go to Google, you'll still see there is still, these have not run into a wall. There is still extrinsic value in these because it's open for till.
I know, it's kind of crazy, right? So these will be, anyone who has options here, they'll still be, they'll be still going, and you can exercise or be assigned.
Did something come out? Because the NASDAQ just went up a ton. What comes out right away?
Maybe. But we're out of time because we're like running into overtime.
I know, overtime. All right, stay tuned for those boys. They always have a great show. Everybody out there, good luck with your earnings trades. And remember to trade small, trade often.
We got to come up with a new. We have to come up with a new end for last call.
Because I'm not saying peace.
It can't be, and watch the Liz and Jenny show. So we've got to come up with a new end. We'll think about it. Good luck on the earnings trades, and hello to the overtime boys. Have a good show.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex. Now available on tastytrade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
And we are back. What a Fed day it has been, gentlemen. I'm Ilya Spivak here in San Francisco. That's Dylan Radigan in Milan. Our returning champion, Mr. Mike Butler in Chicago. Gentlemen, it's been Fed day. I know I've been nerding out on everything Jay Powell had to say. How's it shaking out for you?
Well, from a Fed currency move standpoint, it's looking pretty good. At 11:30, I had Glenn on today from the Tasty FX team, and we were
Shout out
talking
to
about yes, love him. We're talking about positions that
He was
might
on this very show yesterday.
Hey, there you have it. He's everywhere. He's everywhere these days. But yeah, I put on this long dollar short franc position. It's up 25 cents, which is actually a big move because this is a really small trade. And then I was short the euro pound, which is also up today. But both of these positions, you're on the right side of the yield. So I'm short the euro pound, so I'm getting paid to hold that position with a positive swap bid. And then I'm long the dollar franc, which is on the positive side of the swap ask. So if I just hold this position into perpetuity, I'm getting paid every day to hold it. But if you zoom out here, this is where we're at on the dollar franc, all the way down here, seeing this big pop in the dollar today relative to the franc. So plenty of room to run if you wanted to hold it. And then, as from a non-dollar pair standpoint, we were just looking at other stuff.
You're practically a carry trader, Mike.
Yeah.
This is incredible.
Yeah. Well, it's funny because I was talking to Glenn. I'm like, this is the easiest thing I've ever done, this Tasty FX stuff. And he's like, what do you mean? I'm like, well, you just buy it or short it, and then you just forget. And then you come back to it 3 weeks later. And if it's not a winner, you just hold it for another 3 weeks and then see what happens. But
so this is the stuff that carry trade nightmares are made of. Because when people get hopped up long, high yielding currencies, and by the way, I don't think you're in a bad place here with your dollar franc, but what often happens in deeply risk, oh boy.
Oh yeah.
And we got Meta.
And Microsoft, both down.
Oh, and Microsoft. So when you get things like this in the indexes, carry trades tend to unwind in similar fashion. So,
what are the headlines here, though?
Got to be careful here. Let's take a look at these headlines. I mean, this is obviously huge. What's going on here? Let's see.
Well, what's the order? I mean, the line looks scary, but what's the scale on that thing?
So
we're down 60 points.
Yeah.
Which is what on like 5%?
Almost 10%.
Wow.
Yeah.
Yeah.
So
this is
expected move in Meta
looks like a thing.
Expected move in Meta was on the higher end. It was at 60 points ish, like 6, 7, 8%. Microsoft was a lot lower of an expected move. It was only about 30 points, and that's where we're at right now, down 20. But yeah, double down in Microsoft Meta. We've got Google up 288. Google, Alphabet actually, I assume that they posted the first ever 100 billion revenue quarter. We can check and see what the numbers are.
I'm looking here. Google revenue was indeed 1.02 billion.
There you go.
Versus, or 1.02 trillion rather. Sorry, 102 billion versus 99.9. This is funny. 99.9 expected. EPS of 2.87 versus 2.26. So okay.
Yeah.
Google beats.
I was wondering why the Nasdaq was still green with Meta selling off pretty aggressively and Microsoft selling off moderately, but Google to the upside about 20 points ish.
Yeah.
A little mixed bag here.
A little bit of a mixed bag here. I'm looking for the specifics here on some of these others. Let's see. See if we can get some details on these Microsoft earnings here, because that looks like the one that hurts. EPS $4.13, so they beat on the upside against $3.66 expected. Revenue is $77.7 billion against $64.5 expected. So pretty good beat. But nobody seems to like it.
Yeah, the biggest miss, Meta missed bad on earnings per share. They had a $6.67 expected EPS. They posted $1.
Wow.
And then revenue They expected 49 billion. They posted 51. So
Microsoft even beat on cloud sales, 49.1 billion versus 48.6 expected. So I mean, these Microsoft earnings are kind of an interesting conundrum here.
Yeah,
I mean, these are not bad numbers.
What's the problem? I mean, why the reaction is it? I mean,
That's what I'm trying to. That's what I'm trying to see here, because it doesn't look like what we have is really that terrible of a set of outcomes for Meta. I mean, it's pretty dire. $1.05 versus $6.67 expected. Revenue beat though narrowly, 51 billion actually, 49.4 expected. So it's interesting. It's interesting. I mean, that one makes more sense.
Yeah. I mean, we've seen this before though. We've seen a double beat and the market sells off. And I think this only happens with these Mag 7 stocks where the market knows they're going to beat or post a double beat, but it's not good enough and the market sells off. Like we've seen this before in Netflix. We've seen it before in Apple, Amazon. Like it's just the market expects so much from these huge tech stocks that if there's a number in the market's collective head and they don't exceed it, even if it's a beat, it can be seen as a negative thing. Or maybe they pull back guidance a little bit. We'll have to see. Maybe they'll dig into the conference call more detail. But yeah, interesting, ominous results here. And none of these are.
But also not universal because Google. In other words, you can't even make it a Mag 7 crisis. It's more. It sounds like the best explanation I've heard so far is that it's some version of an expectations crisis.
Yeah,
it certainly seems that way. I think
than it is, because it sounds like the performance is pretty good, actually.
Yeah. I mean, I think if you look at Microsoft, like if you look at Meta, it's very easy to say, "Oh, well, that's a massive EPS miss." Okay, fine. Yeah. I understand what that is. And it's very easy to shrug that off and say, yeah, you know what? Obviously, this is a big miss. Okay, cool. One-off thing. This doesn't poison the well, as it were. This is one company having one issue. Okay, and it's idiosyncratic. But when you look at what Microsoft is doing here, I mean, their results, I haven't dug into them clearly. I'm just looking at the top-line numbers here on the fly. But those top-line numbers look pretty good. I mean, there's nothing terrible here that I can see at first glance, and it's getting cooked. So it's clearly not just a one-off Meta thing that's only about Meta.
Yeah. Kind of a wild scenario we have here. It begs the question, what happens with Amazon and Apple tomorrow?
Yeah.
And you're seeing a little selling, you're seeing a little sympathy selling in Amazon, down 2 points after the close here. And in Apple, we'll probably see the same thing, a little bit, down a couple of cents, a couple of shekels, nothing crazy. But Amazon
it's not really spilling over into broader risk sentiment yet, which is going to be the other interesting thing. Like Bitcoin isn't really collapsing, the dollar isn't running away, so we'll see. But to your point, it's starting to spill a little.
Yeah. Ominous move indeed.
And after the Fed did what they did.
Yeah. So what is so we were talking about today, looking at the CME FedWatch tool, as we always do, staggering increase in probability.
As we do right about this time.
Yeah. Oh, wow. So we got
movement.
Okay. We got big movement. Okay. So a week ago, if we look at the December,
that's the one to look at.
Yep. So here we go. I can throw this on the screen here. So, maybe not. All right, here we go. So this is what I'm looking at. So we had 1 week ago a 4% probability that we would stay at the current 25 basis point cut that was just announced.
Yeah.
Yesterday, that probability jumped from 4% to 9%. As of right now, today, this probability is now 34%. That we stay. Wait, is this reflective of today's? No.
All right. So the current rate, as it presents itself currently, is 400 to 4.25 or 425 basis points. The pricing as it now appears is we are still likelier to get a cut narrowly in December, but the likelihood has significantly declined. So now we're looking at a 65% chance that we're going to get this cut from 375 or down to the 375 to 400 range. And the likelihood that we stay has increased from basically non-existent to 34%.
There we go.
It's kind of a mess.
Yes. And this was like 16% at 11 a.m. before he took the stand. So,
it was barely perceptible.
Yeah. So things have changed a little bit, shifting.
Yeah. Yes. Just when you thought, and I wrote about this and talked about it. I wrote about this for the blog and also talked about it on Macro Money yesterday. The two, of course, are the written and spoken version of the same idea. And it's this idea that we also discussed here on the show yesterday with Glenn, this idea that if everything is already priced for perfection as far as Fed policy is concerned, what is there to gain? Like, okay, Powell comes out, gives everybody the rate cut everybody thought. Cool. That's in the price. What's there to gain? Is there maybe nothing to gain from just realizing the expectations as they were, but everything to lose if you say even a little bit something off? And Powell didn't say something a little bit off. He came out here and made a statement. And it couldn't have been clearer cut. Like, he went out of his way to make it. He said in his opening remarks that December is not a foregone conclusion, quote, far from it. Then he said it again in the Q&A, and then he reiterated and said, I know I get up here every meeting and I say we're going to be data dependent, every meeting is live. I am saying more than that here. Like, he really pressed the point that if you're assuming December is definitely a go, but for the usual disclaimers, you're assuming wrong.
Yeah. It's quite the sentiment shift that we've seen in like a day, literally.
Yeah. I mean, he really tossed a grenade out there.
It looks like we got some fringe stonks as well. Chipotle looks like they are down a little bit. They had some movement, snapped up, snapped down. We're basically flat from the close, down a little bit, but
their EPS was in line. They missed on revenue, though, a little bit. Expectation was $3.02 billion. They delivered 3.0 on the nose, so it's a slight miss. EPS of 29 cents as expected. ServiceNow beat. Wolfspeed beat. KLA beat. What else we got here? eBay. They beat.
Oh, that's still a company.
It is. They beat EPS by 3 cents. They beat by about, it looks like $9 billion on revenue, but that was a small beat, only 3%. Starbucks missed.
Yeah.
They missed on EPS, 52 cents versus 55 expected. Revenue was steady. They beat by a hair. Carvana missed by 25%, but let's face it, it was not exactly the biggest number. It's just a big swing because EPS was expected at $1.37 and came in at $1.03, so not exactly very telling. I mean, these are just big swings because the numbers are tiny.
Yeah. I traded a handful of these. So I had a Starbucks call diagonal spread that I've actually had on for a week. That should be good. It's up a little bit, but I'll get a ton of this value in the short option out tomorrow. So this should be a small winner if we stay here. Chipotle did a call diagonal spread here, 40.45. Stock's just been beaten up, and this is such a cheap shot. This one should also be okay, even though there's a non-movement here, just from the short option premium. And then I did these like micro calendar spreads. So at Google, bought the 9-day 290 strike, sold the 2-day 290. This should be a nice winner. This is only $1 that I bought this for, but if you look at the raw value of these options, $400 that I bought, reduced basis by $325 in the option expiring Friday. So this will probably be like a $150 winner if we stay right at 290. And then I did the same thing in Microsoft, bought the 9-day 550, sold the 2-day 550. That was a $200 debit. Microsoft down 20 points. So this will likely be, I would say, $100 loser max, because this 9-day, like the net debit is $200, but the 9-day raw value is $1,000. So this 9-day option, even this 20-point sell-off here, is still going to hold on to plenty of value. So we'll see. And then Google, already talked about Google. And then I actually did one in the Qs. So I encompassed this whole week's worth of earnings because the NASDAQ QQQ ETF, if you look at the earnings from the Mag 7s reporting this week, it makes up like 50% of the top holdings. So if you do something in the NASDAQ with QQQ, you are ultimately encompassing all of the earnings reports reporting this week. And QQQ naturally has a lower implied volatility, so it makes participating a lot cheaper. So I bought the November 645 call, and I sold the 2-day, which encompasses today's earnings and tomorrow's earnings, 645 call. So just another small calendar spread there. But if we get a rally in the Qs from the other earnings and maybe a reversal from the ones that failed today, this could be a nice winner too. But it's just saying defined risk, small. I thought today was kind of an ominous day because when you have big tech stocks that are reporting earnings paired with a Fed decision with Fed speak, it just sets up for kind of a weird scenario. Do you agree?
I agree. I mean, I think there's a lot that could have gone sideways here, and the market was clearly very happy to go into it thinking all of it is going to work out. And that was kind of the thing. It's like, well, when everything is at record highs and nothing is going to go wrong, let's say that's right and everything is going to be fine. Well, there's no speculative juice to do anything with that information. It's like that. It's like Eddie Murphy. What have you done for me lately? But all the risk is on the other side. The slightest thing goes wrong, like this Powell speech, like the Meta earnings here, and all of a sudden it's, oh my God, everybody is tilted way to one side. And now you've got to scramble to readjust. So there was a whole, I would say, a three-headed monster of risk here, obviously. The Fed, the earnings, and the Xi-Trump meeting. And it didn't seem like anything terrible came out of the Xi-Trump meeting. Didn't seem like anything got announced either. So, I mean, it's obviously already overnight in in Busan where they're meeting. So it's unclear what's actually going on, but they're ostensibly sort of getting this thing going. The meeting seems to have kicked off. There's some video of it occurring. There was a trade deal that the U.S. inked with South Korea ahead of the APEC conference. That's nice. But the Trump thing doesn't, at least for the moment, seem to have done anything to disabuse the markets of the idea that both of these sides want to kind of walk back all of this animosity, at least at a kind of immediate level, and get back to a gentle boil rather than a rolling boil. And clearly on both the earnings front and the Fed front, the rug got pulled. So those assumptions were very clearly wrong.
Yeah, crazy market here. Someone calling out in the YouTube chat, Fiserv. This one got destroyed today.
Yeah.
Down 44%. Big move. Big move.
Yeah, Fiserv got taken to the cleaners a little bit here.
What's on your radar, Dylan?
I mean, I think the dollar thing looks very interesting. I like the dollar rally. I'm kind of not quite sure what to do with all this equity news, but it's hard to see how a long dollar short gold doesn't look better today than it did yesterday.
Yeah. I mean, if you sort of pull yourself back from the news and just look at the way the price action is responding, if you take a look at the ES chart, and you can look at a 15-minute chart, just real short term, you can see here that you had this range going into the Fed, this kind of overnight range. And it seemed to have a bottom, let's call it somewhere around 69.30, maybe something like that. And then the Fed comes out and you plow through that range clearly. Now you've rebounded to its underside ahead of the earnings. That makes sense. And as soon as the earnings come, you hit that wall right there. So at least 15-minute charts are fuzzy and crazy and jumpy, and I wouldn't read too much into it. But the way that this kind of illustrates where the market's kind of emotional state is, you get the sense that, oh no, that wasn't cool what the Fed did, and then the earnings were not good enough to bring you back, though you tried.
I mean,
And
but
so
it
you
seems
get
like
this-
you could easily sort of stack this up into a nice, solid, meaningful sell-off between between the rate cut expectations and whatever this is with these Mag 7 earnings, which are not good enough, obviously.
Yeah.
Those are two pillars of this entire situation, obviously.
Yeah, I mean, I think more so than the NASDAQ, which basically rebounded more ahead of these earnings. That makes sense. I mean, why would people lean into NASDAQ shorts just after the Fed before these numbers came out? Obviously, we're going to, I think, see some follow-through on this, at least in the early minutes of tomorrow's markets, to kind of let the cash equity volume sort of adjust to whatever this is. But just looking at the ES futures here on this short-term chart, you get the sense that you had a kind of range carved out before the event risk, and your net response here was you've leveled down.
Yeah.
And that's why I sort of went in. The moment Powell said the magic words, the moment he said, I know I come out here and say the same thing about every meeting is live every time, and I'm saying more than that now, I put on a bunch of SPY put verticals immediately. And
Long
so
put verticals.
We'll see. Long put verticals, yeah.
Bearish. Bearish put verticals.
Bearish, yes. Bearish. Not NASDAQ, because it was kind of weird and vol was still expensive and you couldn't get clean 2-to-1 risk reward. In SPY, you could, like straight direct. If you went 51 days out, you could get, and I'll give you the actual levels that I have here. I've got the December 19th, so 51-day options here from basically at the money, 684 down to 675. Not a huge move. You could get perfectly 2-to-1 risk reward. So basically risking $300 to make 600. And I did that as soon as Powell basically came out and said, just in case you didn't hear me, I need you to hear me.
Yeah, some of these stonks are...
Then he said, my name is my name, dropped the mic and walked off.
I'm just waiting for him to show up half in the bag, tie loose, and just being like, this is my last time you'll see me on this pedestal. Yes. Meta continuing to retreat here down to 685. We're looking at a 15-minute chart. Microsoft catching a bid, only down 10. That's going to create a big vol crush if you were a premium seller in Microsoft. One of those situations where you'll probably see premium contract on both sides, even though it's down 10 points, except for maybe the longer term options. Shorter term options will lose a ton of value on both sides. And then Google, the strongest of the bunch, selling off a little bit from the highs, but still well within the implied move here, only up 15 points, and the projection was over 20. So we'll see what the rest of the market brings. Don't we have another rate decision? Am I correct in that overnight?
We do. We've got the ECB that's due. We had the Bank of Canada earlier before the Fed. They cut rates as expected. Also, interestingly, going into this, the Australian dollar has had quite the ride. If you're a follower of all things FX, the Aussie has been on something of a roller coaster here. There was some inflation numbers out of Australia that came out hotter than expected overnight, 1.3% on the quarterly, 3.2% on the year-on-year. The expectation was for 3%, so stronger. Core inflation higher. And Aussie jumped on that, basically on the idea that the RBA is not going to be pacing Fed cuts or anything like it. And then, of course, the Fed came out, pulled the rug out, and the Aussie is back to basically where it started. It's essentially flat to slightly lower on the day. So all of its CPI gains got taken away. The Canadian dollar is another interesting one here. The rate cut as expected, so down by another quarter of a percent to 2.25. Not really anything here in the guidance that seemed to dramatically jump out. We do see that headline inflation is hovering around 2%. Inflation isn't really running away on tariff conditions. They did talk about structural damage caused by the trade conflict as being consistent with an annualized 1.6 contraction in Q2 GDP. So obviously Canada is feeling the pain here, though they still expect GDP to expand by 1.2% this year, 1.1% next year. So it looks like maybe we got standstill from here. So they'll pause now. And if you look at the Canadian dollar, it's a similar story. So they get the cut, they give the guidance. It seems like it'll be a hold in December for them. The Canadian dollar rallies. and then the Fed comes out and it gives it all right back.
Yeah, this is the pair that I was short. I think I shorted it right around here, around 138.8. And then I threw on another micro lot here, and I threw another micro lot somewhere up here. So my basis was like right around here. And then we finally got the washout yesterday that got me into slight profitable territory. So I closed the whole thing. But yeah, these have been fun.
I'm slightly short the Canadian dollar through the futures at 71.91. So basically like right around here. And if you look at dollar CAD, it sort of makes sense because this is the former range resistance that exactly where you're pointing, acting as support. So I'm basically long against that, essentially looking for that top that we've breached to hold.
I like it. Dylan, are you more, you said Amazon last week was your tried and true.
Amazon is always my favorite right now of the Mag 7. And if anything, I'm more optimistic for Amazon now that there's a little bit of a mess.
Yeah.
Granted, Amazon has come back a bit. You can kind of see that, if anything, my opinion on Amazon has been validated by the past couple of weeks. But, my hope would actually be, because I didn't put a very big position on it, just did some put spreads sort of halfway up that, somewhere in the middle of that recent ascent. But if anything, I would be optimistic that maybe we get it gets kicked around a little bit on just in the backwash of this Microsoft Meta reaction, and you can actually get involved with it. But again, also they've got their own numbers coming out. My whole hypothesis on Amazon is that they have a massive sleeper inside of it that's ready for a gap higher. And obviously earnings is an opportunity. We saw it with Google, we've seen it with Apple, we've all seen all these names, Tesla, on and on and on and on. That this exists, right? That these companies, however big they may be, are capable of these mega gaps. And you can even see on that Amazon chart going back however many months that is, there's that one big gap up. But also if you go in front of it a little bit, you get the gap down. It goes both ways. It's a sharp blade. So, but yeah, I think Amazon is the most interesting of the bunch on a risk reward basis right now. All of that could change. I don't know what the Microsoft chart looks like right now, but I don't mind Microsoft. Granted, I haven't flipped through whatever came out in this earnings report that caused the stock to behave like this. But I don't mind the stock a little bit cheaper. And obviously I'm not alone, because you could see, whether after that initial sell-off, it's already brought back a third of its lost territory. So I don't think it's a bad thing to get Microsoft a little cheaper.
Yeah, I think you'll see this in a lot of stocks where even if there's a bad earnings report, even Meta, like Meta's the worst of them. Catching a little bit of a bid now, but Meta, if we just look at what this gap's going to look like, let's say it opens at 700. If we go to a year to date, we're going to be opening at the bottom of its range where it was trading at before it got to the point we're at now. So I think you could very well see us open at 700, and a couple weeks later, you could see it bid all the way back up. This is just the nature of these massive tech companies that everyone wants to buy, to Dylan's point, especially when you get a big discount like this on an earnings report. They didn't have the best earnings, but I think when you look at these earnings reports and you see a double beat and the stock go down, I'm more inclined to buy that dip than something where there are issues that are being shown.
And they're like, ooh, the robots don't work after all.
Yeah. Uh-oh.
All this money we're spending, can't do it. Can't do it.
Never
anymore.
mind.
Yeah.
Never mind.
But yeah, I think Amazon and Apple, and I think what you'll see tomorrow in both of these, if we look at Amazon, 15-point implied move for this week on a $230 stock, that is just over, it's like, call it 6-7%. But when you compare it to the rest of the year, it's a huge chunk. 15 points relative to 23 through December, 28 through January. So I think you could see this implied volatility get bid up a little bit more, especially now that we've seen a little bit of two-sided action with the earnings that came out today. And then Apple, this one is really low implied volatility for the stock price, $270 stock price, 8-point implied move. That's super low. So, but if you're buying options, if you're doing diagonal spreads or calendar spreads, Apple is interesting because it has virtually no implied volatility relative to this earnings report we're going to get. Amazon, a lot more implied volatility across all of these cycles. So it'll be more expensive. And these actually are similar price points. So if we just look at Amazon, what's the 240, what's the at the money option trading for? $1,100 in December for Amazon and $1,100 in Apple, but Apple is 40 points higher in price. So same option cost, but Apple's 40 points more expensive. That just speaks to the implied volatility boost that you're seeing in Amazon relative to Apple.
Which is interesting, right? Because Apple's had a pretty decent rebound here around that idea that there was that report I want to say about a week ago, maybe a week and a half, about relatively strong iPhone sales for the new models, and that there was some concern that maybe they wouldn't go. There's been tons of concern around goods uptake in general, because of course, as we heard from Powell today, as we saw in the CPI report, goods inflation has significantly ticked up because of these tariffs, and spending has been kind of curtailed, especially at the higher kind of luxury end of things around that. But the report was, listen, this is fine. These things are selling. It's great. That marketing campaign with the crazy zoom distance, that clearly seems to be having some kind of an effect. I was certainly impressed. Somebody took a selfie from around where I live in San Francisco with the Golden Gate or the Bay Bridge kind of far, far, far behind him, and then took the photo and zoomed in, and you could see the Bay Bridge in granular detail, though on the zoomed out picture it was maybe a speck. So obviously impressive. So one wonders to what extent this is another one of those buy the rumor, sell the fact kind of things for Apple. I think it's a pretty good shot that they have solid numbers. But the question is, does the market already know that? Did we already shoot that shot?
Yeah. I think Apple's at the high of its range. Amazon's climbing back. So I'm more inclined to live and die with Amazon versus Apple. I think it's just hard. It's obviously harder to buy into the highs that is printing pre-earnings. Like, this is a pre-earnings pump, as we call it. Amazon doing a similar thing, but not yet at highs that it's already been to. So we'll see. Looks like E-minis and NASDAQ catching a little bit of a bid here. Meta at 700.
It looks like it's steadying a little. This will be very interesting for how this is going to play out overnight and into the cash equity open.
Definitely. Yeah, Microsoft's only down 9 points now. It's reversed almost the entire sell-off. Love to see it.
That's the one you'd expect to
ridiculous when you think about it, especially because it's, again, the market, the amount of money represented by that amount of movement. You know, I'm seeing it's a statement of the obvious, but
yeah. Well,
it almost makes you wonder if somebody is like a fat finger, like if somebody just misread the number.
Yeah. Well, that's like this move here. This is the craziest move I've ever seen in my life for any earnings announcement. It was. Their earnings were after the close on this day, gap down from 285 to 265, so 10% haircut. And then once the trading session opens, reverses the entire earnings move, gets back to basically where they closed, And then the next trading session just vaults higher. It's like, what is this? How do you sell off 10%? It's like literally a fat finger misread. It's like sell off 10% and then, oh, we read that wrong. Let's actually goose this thing up to be over 300. It's crazy. I've never seen anything like it.
What about short gold on the back of strong dollar, more disciplined Federal Reserve?
So I added into this position earlier.
Added into the short position or the long?
Added into the short position, and this time I was in the know on the 1 ounce futures. Unlike the first time I did it, where I didn't even know, and so I had to do it with GLD. This time, since the 1 ounce futures exist, and you can basically do with them as you would with a microcurrency contract like an M6E or an M6B, it's sort of a very comparable thing, especially M6E, where the margins are a little bit higher. I just straight up sold one of these things on the bounce. If you look into a 4 hour chart here, you can kind of see the logic. So you get this break, and then you get a bounce and backfill. And once we sort of started that bounce and backfill, I didn't, of course, get the absolute top of the bounce. I never do, and I don't think anybody consistently does. But once you sort of got that first green bar off the bottom and you started to grind against that area of friction there, I just sold one and basically said, okay, well, let's see. Because the Fed is not going to give the markets anything more dovish than they already think. All the risk is on the other side. As it turns out, that's exactly what's happened. So we'll see if it lasts. That's a whole other question. I mean, Xi and Trump could decide to throw water at each other, and this thing could go off the rails. So we'll see.
A couple of squirt bottles.
Yeah. I mean, get these guys some super soakers, let them out into Busan, see what goes down, see who wins.
That'd be incredible. If that's how we solved international political issues with a couple of super soakers. But yeah,
for every direct hit to the face, you got to give up one thing on your list of demands. Like, oh, export controls, those are gone. Shoot better.
Better than killing each other's young men.
That's
right.
True. That is true. Much better.
If you must spike the super soaker with some lemon juice, fine, to make it interesting. Make it sting a little. Okay.
But it doesn't. But at least you're fighting with each other instead of using the children of poor people in Russia or the children of poor people in America to go murder each other.
Endlessly preferable, the super soaker solution. And we could make content out of it, which is what we do now.
It would be the biggest event of them. Imagine if it was, whatever, who pick your favorite two world leaders, Putin and Trump.
You could sell Trump sneakers at this thing. It'd be great.
Super Soaker Showdown.
Sponsored by
Square Garden.
Yeah. Sponsored by Truth Social.
3 billion people watching.
Trump could even do it in the Trump shoes to show how superior they are.
Oh, man. It would be the biggest marketing ploy in history.
I mean 3 billion
this is the president for it. Come on.
I hereby challenge you to a Super Soaker Showdown.
Let's do it.
In exchange for 20 years of rare earths mineral rights.
Yeah.
Put it on the table.
Trump catches one, export controls on Huawei, goodbye. She catches one, okay, rare earths got to come over.
Incredible.
Let's figure this thing out.
I think the 15-minute chart actually is what I'm looking at now. Looks cleaner now that we've got some time under our belts here.
Yeah.
Google's hovering around 288. Microsoft 530. Well inside the expected move downside, and then Meta still sub 700, but it caught a bid after getting as low as 680-ish. So, we will see what happens on the open. We'll definitely get some overnight movement. And then we've got Apple, Amazon, and a handful of other earnings tomorrow. If we look at the earnings watch list and sort it by date, take a look here. Apple, Amazon, Coinbase. That'll be a fun one. First Solar.
Yes.
CBOE tomorrow or Friday morning. But yeah, Apple, Amazon, Coinbase, those will be the three that I'm focused on tomorrow. For sure.
Yeah. I mean, Apple, Amazon, obviously. I mean, I think probably the biggest kind of most interesting thing in my mind is, do you actually get any kind of a run in anything at all as you go into tomorrow's session, considering the market obviously knows that these things are coming after the bell? Because if you get some sort of follow through and the market doesn't essentially demand, like, okay, listen, you have to wait for these things. If there is not that, then that would be a pretty emphatic sort of point of conviction where the market would go, look, we've made up our mind. This is it. Whatever Apple and Amazon say, good for them. But sentiment has either turned or hasn't. So that'll be very interesting to watch, I think. How the cash equity day works out tomorrow and whether the market ultimately decides to either shrug this off or not, that'll be interesting. I think if I had to guess, I would say they don't make a decision. They wait. And that might actually be an interesting mulligan opportunity. If you thought that sentiment was likely to weaken from here, you probably get a bite at the apple tomorrow. Because the market's not going to want to make up its mind. Not yet.
Yeah. Just hit refresh on the FedWatch tool. We got another 4 percentage points of probability for December that we are at 37540. So 68%, almost one standard deviation. But yeah, a lot of uncertainty.
Not negligible.
Yeah. Uncertainty.
Not negligible.
Uncertainty across the board here.
Yeah. I mean, did Bitcoin just tip the hat again? Because Bitcoin was weak going into this and seemed kind of weak need, especially if you look at the shorter term charts. It was kind of starting to roll into these announcements. Did Bitcoin essentially hint again, as it has recently, where sentiment was going to go, or is this just an incidental kind of a thing?
It's a good question because it's been down all day. Ultimately, there hasn't been much of a bid except for right around 130, which is interesting. 130, big sell-off, then you caught a bid and you closed above where we were right at 130. So, I mean, this thing is always going to be volatile. I think now, like if you're trying to buy into Bitcoin or if you're trying to layer into like Leaps and IBIT, like this is the time that I'm looking for to do that, where you have nobody talking about crypto or very few people talking about crypto. You've got 50% IV, which is, I mean, a 47 IV rank doesn't necessarily tell the whole story because we've seen IV in here significantly higher. But yeah, it's having a hard time staying afloat. But that gives you opportunity. If you believe that Bitcoin will eventually be 200K, 300K down the road, these are the sell-offs you're looking for to layer in. And then you just need that euphoria week or month where everybody's buying in. It's all over the news. Like it's going to happen again. It's just a matter of why and when.
Yeah, I mean the real question is sort of how disconnected is this thing from broader narratives. it seems like basically, at least since the beginning of this year, let's not get ahead of ourselves, but at least since the beginning of this year, Bitcoin has been mainly just a reflection of risk sentiment.
Yeah.
And so it's looked basically like NASDAQ.
Mm-hmm. Yeah.
And if that's what it is, then it's less so a thing unto itself
Mm-hmm.
and more so just the NASDAQ on steroids.
Yeah.
Because it's not a currency hedge and it's not a store of value and it's not a technology. It's a speculative chip.
Yes, that's exactly it.
Well, we did have Ryan from the Tasty Crypto team on Monday, and we always walk through implied moves, Bitcoin dominance relative to Ethereum, Solana. We looked at correlation, and interestingly enough, the 2-week correlation was super strong to the S&P and NASDAQ over the last 2 weeks relative to where it has been over a 1 month, 3 month, year-long period. So we are, in the last 2 weeks, we have seen a much stronger correlation with the broader indices. If that tells you anything. But I mean, there will obviously be times where it decouples.
Sure.
And there will be times where everything's ripping and everything's selling off. But yeah, for the most part, if you look long term, it does have a positive correlation with the NASDAQ and E-minis, more closely related to the NASDAQ, just based on the nature of it. But yeah, it's absolutely
not surprising.
It's absolutely on steroids. To your point, I mean, it will have higher implied volatility than the NASDAQ. Period.
Yeah.
So yeah, if you're looking for a more, and that's really the question is like if you have a portfolio and you're dividing it up into pies, it makes sense to have exposure to Bitcoin solely because of the asymmetric risk opportunity and the implied volatility of the instrument. It doesn't mean you need to be like 70% Bitcoin unless you have laser beams for eyes. But yeah, it makes sense to have in your portfolio.
I wouldn't recommend it.
Yeah, it makes sense to have in the portfolio, even if you don't think it's really going to go anywhere. It's more about just sizing correctly to be like, okay, I'm not sure this is really going to take off, but if it does, I want to be in that for the ride because it's going to be great for the portfolio volatility in itself.
Yeah. Yeah. I mean, I don't have it, and I don't have it really for sort of stubborn reasons, because I don't think it is in the slightest sort of structurally what its proponents think it is or want to think it is. And the longer it lives, the longer we learn that it's not. Like, it was supposed to be some sort of a way to transact outside of the purview of governments. Well, no, not anymore. It was supposed to be super secure and impregnable to hacking. No, not anymore. It was supposed to be private and anonymous. No, not anymore. So all of those things, by the way, were true, but they also kept its liquidity very, very low. And the trade-off to getting liquidity, which is what you always needed for this thing to be less volatile and more of what the proponents wanted, so more people could adopt, the price of doing that was giving up a lot of these other things, because you had to make ETFs and futures contracts and get regulators involved and all these things. So what's the proposition now? Not for crypto, the technology. I mean, that's, I think, a separate thing. But for Bitcoin, the token. Other than there is speculative interest and a desire for alternative value. And so it's basically just become a risk asset.
Yeah. I mean, crypto, the technology. Ryan, actually on Monday, we walked through liquidity pools, which is one of the cooler aspects if you really get into it, where you can basically stake the crypto you own and create windows of ranges where on the lower end, you become more long that product. On the upper end, you become long a stablecoin. And in between that range, you are basically porting in your wallet, and it allows you to participate in the liquidity transactions, and you get gas fees for it. So it can be an amazing yield generator if you have a good amount of crypto, and you can select which liquidity pools you're in. And of course, the technology's been enhanced dramatically. But from a real-time standpoint, tastytrade, now you can deposit and withdraw with stablecoin, which is huge because right now, if you have it connected to a bank account, just like any other place, you have to wait for the funds to settle. It's like another day, just like any like transaction where you're not paying for the instant fee. You have to wait a day to get the funds, et cetera, et cetera. Whereas stablecoin, I did this last weekend. I used stablecoin to deposit on a Saturday morning to my tastytrade account. Funds are available. You can trade it for the futures open. So like in what other world can you do that outside of a stablecoin world where let's say it's a Sunday night, the markets are down or up 100 points and you want to add funds to participate, it has to be through a crypto vehicle right now for you to get it immediately.
Mm-hmm. Yeah. I mean, as long as there is demand, those things will work. And as long as you own a bunch of crypto, which, by the way, that's the other thing that this thing isn't. People said it was supposed to be decentralized. It's incredibly centralized because like 10 people own most of the market. Obviously, I'm exaggerating, but it is an incredible skew for who owns most outstanding Bitcoin. It's like you could barely fill a bar with this amount of people. So that's the whole thing. Like as long as there's demand to borrow those holdings, yeah. And if there's not, there's not. But with that, our producers are rightly telling us to wrap it up here. That's out of time for overtime, everybody. Don't go anywhere because I've got the post-mortem on the Fed coming up on macro money right after this, as well as what's about to happen with the European Central Bank, what the Bank of Canada just did, and just generally the macro landscape. So don't go anywhere. And we'll be back for this conversation in just 23 hours' time. I'm Ilya Spivak in San Francisco. That's Dylan Radigan in Milan. Mike Butler in Chicago. Sit right there. I'll be right back.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Let's play! Shaky, shaky. Come on, let's play. I got a good feeling. I got a good feeling. Yeah, I love this life and I'm living it up. You can't stop this dreamer. I'm a mad hatter, call me one of a kind. I'm a true believer. I got a good feeling. 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 Yeah, I'm up with the sun, soaring high as a kite. Call me an overachiever. Leaning off of that edge, don't need a green light. I got that fever. I got a good feeling.
We had everything going for us today, but did the Fed just break the stock market rally? That's the question on the minds of investors after Jerome Powell pulls a surprise bit of communication and the markets do not like it. We're going to figure out exactly what just happened and what it means going forward. Macro Money starts right now. Welcome to Macro Money. This is Ilya Spivak, head of global macro here at tastylive. Boy, did we have a day today. The markets were going into the Fed policy announcement expecting that the rate cut that they had anticipated was essentially a foregone conclusion. As it happened, they did get that rate cut, so the markets weren't wrong there. But as we discussed yesterday on this very show, the likelihood seemed to be that the markets were so priced for perfection that any little tiny bit of a disappointment could get them in a bad way. And we got that today. And it seemed like the Fed chair really meant for that to be understood with the level of gravity that the markets took it. Now, certainly, it doesn't look like the Fed chair was hoping for a sell-off, and I certainly wouldn't suggest as much, but he certainly wanted to tell the markets something different than what they had benchmarked in their expectations. And that is certainly what we ended up getting today. Because, of course, looking at how all of this ultimately played out, we have a very significant revision of what the markets think is coming up next for monetary policy. And that has absolutely reflected itself in how these assets performed. So what we'll start with here is a look at the price action. Let's jump there immediately and take a look at what happened. As we can see, a little bit of a soggy response from the S&P and the NASDAQ. They ultimately don't go anywhere. S&P finishes basically unchanged. NASDAQ a little bit higher. That's in large part around expectations that we still had these earnings reports, which we'll take a look at in just a second, from some of the big tech names on the menu before the markets closed. And so obviously with those after the bell, nobody really wanted to jump out too far in front. But the initial reaction to what the Fed did was certainly negative. S&P fell, NASDAQ fell, and everything kind of felt like there was a level of disappointment with what the Fed ultimately unveiled. We can see that clearly in the rates. The 10-year up 2.5%, 2-year up more 3%. The long end, the 30-year actually was the least changed of the bunch, thankfully, because that's the one where I actually have exposure along the bonds, and so indirectly short the yield. Gold fell. The dollar strengthened across the board, up meaningfully against the euro and the yen. Bitcoin showed where risk sentiment would have gone, perhaps, if not for expectations for these earnings. That's off 2.3%. And crude oil managed a little bit of a recovery, but that's, of course, in the wake of this aggressive jostling in crude oil. Last week, of course, we had a big rise, 7.6%. This week, we've recovered a little bit after a good deal of that rise started to come off the board. Apparently, the markets are not as concerned about sanctions on Lukoil and Rosneft as maybe they were initially, and maybe they're not as concerned because what we end up with is still this meeting between the presidents of the U.S. and China on the menu, and perhaps there is some degree of conversation about maybe this meeting will give us an opportunity to reset some of what's annoyed crude oil. Obviously, these sanctions around Rosneft and Lukoil hit at companies doing business with them, and the largest buyers of Russian crude are, not surprisingly, China and India. And so maybe there is some sort of a grand bargain to be had with Xi Jinping around giving them some degree of a dispensation on those imports. So we don't as yet have a convincing sort of rally here, and crude oil, although it's up a little bit today, is on the whole seeming to unwind or be inclined to be unwinding last week's gains. And so far, no sign that this little rebound today changes that story. On to the Fed, the policy statement here, not terribly controversial. You'll notice the change here in the language from available or from recent data to available data, because of course the government shutdown continues and there is no data, certainly not in the volume that Fed officials would want to see it. We get the sense that the economy has been expanding at a moderate rate. Job gains have slowed. We see here that there's a very clear kind of distinction being made that the unemployment rate edged up but remained low as of August. Of course, we would have had the September NFP number by now, but we don't. And the Fed still seems to be signaling here that more recent indicators are consistent with these developments. Inflation has moved up since earlier in the year and remains somewhat elevated. No big shockers there. The COT is on the menu as might have been expected. 0.25 percentage point. Once again, the Fed is saying that risks to employment have increased in recent months. And we've got a pair of dissents here. So Jeff Schmidt dissenting in favor of holding rates unchanged this time. And shock of shocks, Governor Stephen Miran dissenting in favor of a 50 basis point cut. So we know who the hawks are. We know who the doves are. Shocking this is not. But sort of your usual suspects, people like Chris Waller, people like Michelle Bowman, they have been advocating rate cuts, but they were with the majority, with the consensus on a 25 basis point move. The real action-packed part of this came from what Fed Chair Powell said at the press conference. Here's some of the choice comments. Data before the shutdown show the economy could be firmer. Labor demand has clearly softened. Balance of risks shifted on employment, so we went to a more neutral stance. This is all familiar stuff. Fed's been saying this for months. Here's where the kicker is. There are different views about how to proceed in December. In fact, they are strongly differing views. And here's the punchline. A further rate cut in December is not a foregone conclusion. Far from it. Now, the Fed chair reiterated this multiple times. Moreover, when asked about it again and again and again in the Q&A, he said, look, I come out here after every meeting and I tell you that each future meeting is live and we're data dependent and we're not going to do anything unless the data supports it. And that's sort of the usual song and dance I do. I am saying more than that here. As if to very clearly tell the markets, listen, I know I always give you the same disclaimer. This is not the usual disclaimer. You all think there's a 90+% chance that we're going to cut again in December, and I'm telling you it's not that high. So that's really what the markets responded to. Adding on, he's saying September and today were risk management cuts. That's around that changing balance of risks on the labor market. And that's not the case going forward. We don't know what data we will have in December, but if there's a significant change in the economy, we'll pick that up. Optimistic. But here's the key. What do you do if you're driving in the fog? That is, you don't have data. You slow down. In other words, you don't just keep cutting if you don't know where you're going, because the data is not showing you. There's a sense from some, and perhaps Powell was including himself in this calculus, of saying, let's pause. And there's a sense from others, Stephen Mirren, let's go ahead. There was a couple sporting comments about AI, but that was hardly the main story, saying basically it's not the same kind of bubble as the dot-com bubble, et cetera, et cetera. And it's obviously a big driver, AI investment, a big driver of growth. Yes. Thank you, Jay. We know. So pretty straightforward there. But we can see what this immediately does to Fed policy expectations. We saw perhaps even the possibility that we might get a 50 basis point cut at this meeting. Well, that's clearly off the table. And instead, what we're looking at is a much more even spread in the case for a 25 basis point cut. We're still better than even odds here, north of 60, but only just so. Whereas now there's a non-negligible over 30% chance that we're going to stay put in December. And of course, that lines up with what the Fed ended up giving us. Now, they have 3 cuts on the forecast, but how did we get to these 3 cuts? Well, we took the median of this, which was 2 cuts for this year, and we spiked it with this. I'm not going to say this is Stephen Mirren's dot, but you be the judge. Very dovish sort of disparity. And so it was by a very narrow margin that we ended up with 3 cuts here in this forecast, which is what 3.6 represents. We still have the disparity into next year. Of course, the markets are more dovish than the Fed is here. The Fed is saying a 1/4 basis point only. But it looks like this conflict here between a majority that thinks 50 basis points this year is enough and this outlier, it looks like that conflict is now front and center. And you can see we got a little bit cooler on Fed rate cut expectations for this year. We've still got 64 basis points on the menu for next year. That's still in excess of what the Fed is saying. This is about 2 cuts and a slightly over 50% chance of a third, about a 55-ish% chance, 56 of a third. So slightly better than even. But we can clearly see that the dovish extremes here are giving it up. And we can see also that we don't really have a very strong reaction, but this now is the key question. Can we get this easing at the same time that stocks continue to power higher? And obviously, we saw today was ultimately a kind of very small day for the S&P, so we don't really see a big wiggle there, but intraday, the markets really didn't like it. For the dollar, clearly this has been a boon, and the dollar has made a higher high here. As a matter of fact, we're looking at the highest levels since July for the dollar's average against its major counterparts. So this seems to be working fairly consistently In fact, the dollar seems to be on this march higher, whether Fed policy expectations get worse, that is more dovish, or better for the dollar, that is less dovish. And so the dollar just seems generally strong. In fact, it hasn't made a lower low since July. So it seems to be minded to go higher. Over the next 24 hours, we're going to get a policy announcement from the ECB. No big changes expected there. In fact, no changes from the ECB really on the menu, even going into next year. Just 10 basis points with a slight easing bias, but not really anything of substance expected to occur there. Looking further on, we'll see, of course, what the ECB may or may not do. But as it stands, at least for now, it looks like they're in a holding pattern. We had a monetary policy announcement from the Bank of Canada overnight. They cut rates as expected by 0.25 of a percentage point. No big surprise there, but the guidance seemed to actually veer a little bit on the hawkish side, at least in relative terms, whereby it seems like the December meeting for the BOC is probably not going to bring us further easing. And so with that in mind, we have a little bit of a rally in the Canadian dollar on this. There it is. But of course, once the Fed comes out, it gets slammed right back down. And so ultimately, we still end up holding whatever this former support become resistances, and the trend down continues. The strengthening dollar continues. On the earnings front, a miss for Meta. Very much in line with expectations, and better for Alphabet and Microsoft. Microsoft sells off anyway, though the numbers end up being solid, but it comes back quickly. Meta gets shellacked. So we'll see how that ends up looking like when the cash equity open comes tomorrow. Alphabet ends up doing well out of the numbers. And of course, we have Amazon and Apple after the close tomorrow. As far as positioning is concerned, I've added a little bit of bearish exposure here. I am, of course, still very much long the US dollar. I've been short gold by selling calls here for a few days here since the beginning of the week. I added to it by selling the 1 ounce gold future, so I still have that. And the risk-off exposure I had going into the Fed was just this put vertical on Bitcoin through the IBIT ETF. I have now added a bunch of SPY put verticals as well. You can see I've put 2 of these spreads on. Looking for some sort of a risk-off follow-through from here. Still long the long end of the bonds, and still short crude oil, looking for that to continue to retrench after last week's bounce. And that is macro money for today. As ever, we are here right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, usually looking at the Wall Street close and where things may go therefrom. Also writing for the news and insights portion of tastylive.com. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. Cboe is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the Cboe's SPX pit. Watch Liz and Jenny live from the Cboe, only on Tasty Live.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, well, we've got Dan, of course. And Dan, I'm also excited to say, special guest, fan favorite, Greg Magadini, Director of Derivatives at Amber Data. Greg, great to have you back on the show.
Yeah, absolutely. Thanks for having me on.
Thanks for coming on, my friend. And if anybody has a question for Greg or wants to just type some crazy stuff into the chat, get over to the Tasty Live YouTube channel and, pop out the chat. Join us here. We've got a lot to talk about. Greg, we've got you on the show here on a day where I think I broke the microphone. I'm going to have to hold it. But we've got you on the show on a day where there's some volatility. We've got some questions. It's Uptober, of course, but we're down on the month right now. There's a couple days left, but curious to get your thoughts here post FOMC. Of course, what you're seeing in the options market, some trade ideas, and really where do you think we go from here into year end? What those catalysts might be. But first things first, and Dan, please jump in at any time. What's your read post FOMC? I mean, this isn't exactly what we were looking for.
Yeah, so we got a quarter, 25 basis point cut, which is 98% expected going into FOMC, so no surprises there. And then Federal Reserve Chairman Powell said, December is not a foregone conclusion of another 25 basis point cut, which was kind of expected by the market because in September they projected that in the dots. So I think that's a little bit of the hawkish tilt. But we also have a pausing of quantitative tightening. So, in crypto, it's very common to hear about the Federal Reserve prints money. That's not quite the whole story. Quantitative easing is printing money and then buying securities. So that adds liquidity. But as those securities mature, that money comes back out of the system. So it's like sterilized money printing, so to speak. So pretty much after 2020, the Fed balance sheet kind of exploded higher, and they've decided to let the securities mature and the liquidity come back out of the system. So I think the Fed balance sheet hit something like, a little over $8 trillion, and now we're at 6.6 trillion. And the liquidity profile feels a little tight, so they decided to stop the maturing methodology to shrink the balance sheet, and instead, as securities mature, they'll recycle them into short-dated treasuries. So the balance sheet size will stay the same. I think that's the bigger picture. I think that's actually more important than 25 basis point rate cut. Now, Fed Powell has been very data dependent for a very long time. Obviously, the data releases due to the government shutdown are a little bit sporadic and less reliable and delayed or not released at all. So I think that's probably part of his reasoning, but we'll see what the market does. Obviously, stocks are at all-time highs, so it's a little bit hard to just want to cut rates again. It's not like the markets are crashing and he's trying to support the market. And then we'll see how the labor market sort of shuffles out. Obviously, inflation has been less scary than expected with tariffs. We didn't get sort of retaliatory tariffs from neighboring countries or countries across the world. And we've kind of gotten deals, especially like recently in Asia, being worked out. And so I think that's sort of resolving itself in terms of the inflation picture. We see oil constantly go lower. Oil's been weak. That's been helping regular CPI stay lower. So I think there's a lot of reasons why the Fed is maybe punting the December 25 basis point cut. And so the market reacted sort of accordingly, so to speak.
Yeah, I agree with you, though. I think the bigger piece here is the end of the quantitative tightening policy in December, which arguably then brings the Fed back into the market as a buyer versus letting those those bonds mature and not reinvest the coupon payments. And so maybe then, ultimately, like, what does that mean for people in terms of how do you think about this? Would you agree that it's generally liquidity positive, where if you have the Fed kind of back in the market in that sense, it might free up some flows or just some liquidity from your primary dealers or some of your financial institutions that maybe otherwise would have been some buyers of that debt? The Fed kind of steps in and plugs that hole. Is that the right way to think about it?
Yeah, that's how I like to think about it. And so it reduces sort of the squeeze in very short-dated rates and overnight rates for like repo markets. The last that I read, I'm not an expert on repo markets, but the last that I read was that the repo collateral was more expensive than sort of the Fed funds rate. So it's not a fun position to be in if you're in that front end of the curve and you need liquidity. So you're just kind of paying out money to find that liquidity. So I think that's part of the tightness story. And then doing or pausing essentially the reduction of the balance sheet, I think, is a good sign. So in my mind, the liquidity profile is very bullish for crypto and hard assets, gold, silver, all that good stuff. But obviously we have some counterflows in crypto. We have this 4-year cycle. The last 4-year cycle peaked November 2021. So we're kind of approaching those dates. And the idea here is that as we go in like a little past halving, people get very positioned long because the supply of issuance every block is reduced by 50%. So that's kind of a bullish catalyst to get long. And in about 12 to 18 months later, everyone's positioned long, and that's kind of ends up being a short-term top. So we had IBIT, we had a lot of institutional buyers get into the market. We've had essentially like one of the best ETF debuts in 10 years. One of the fastest growing ETFs in terms of inflows and volumes, and one of the most actively traded options in the market on top of IBIT. Now currently sitting neck and neck with Deribit in terms of flows. So if positioning is any indication, we had some of that positioning going in. So I do think there's kind of two offsetting features here. The macro liquidity profile, which is for the most part constructive, minus today's maybe negative surprise. And then we have sort of the traditional crypto cycles, which admittedly, those are so predictable. I have a hard time believing that they'll stick around forever, but it looks like people are still trading that 4-year cycle.
Yeah, I want to hop in on that narrative real quick, because there's a lot of talk, especially if you follow, seasoned investors in crypto, that the 4-year cycle is not, it's kind of fading, right? Because the market structure has changed, right? If we think about last cycle, that 2021 peak, what happened? We had this Terra Luna blow up, these kind of fake, Celsius, FTX, some of these like big blow ups happened because people were levered up and sort of there wasn't that clarity around regulation. There wasn't the ETF. So there's some argument there that given the ETF, given the institutional flows, given some of the regulatory clarity, 4-year cycle is not something that is true anymore. And, I wonder what your thoughts are on that, given the macro setup. And then, I don't know. I'm kind of in a weird spot because I do think we're toward the end of a cycle. But I don't necessarily see any massive leverage or fraud or any of this in the system, right? So we're just range bound. So maybe that's it. Maybe it's just kind of like Bitcoin ranges for a little bit until we break out again,
No, it's going to blast off.
Yeah, see, Ryan's on a totally different. Ryan's in like has the most crazy delta positive view that IBIT and Bitcoin's going to go crazy. But I just wonder, what are your thoughts here? What are the catalysts?
Yeah, I think that's a great point. So to Ryan, to your point, sort of the 5 sigma right tail risk, I definitely think is a probability, at the very least, worth hedging out to own at least some units here at the tails, just in case we get hey, all the G20 countries are deciding to buy Bitcoin on their balance sheet and underpin their fiat currency with Bitcoin or something of the like. That can definitely, 4x it in 3 days type of deal. So I think that risk is real, and I wouldn't want to be on the wrong side of that scenario. But in terms of the trends that I'm seeing, if I just jump to these charts here, I do think overall the picture's bullish. I think the 4-year cycle, I totally agree with you, Dan. Like, there's a lot of fundamental structural reasons in the market microstructure why that definitely wouldn't play the same way as it has in the past. And we've seen that in the vol market. But if we look at this chart here, I think there's great ways to structure trades. So we had the October 10th, essentially like liquidations meltdown. To me, that meltdown definitely showed a little bit of froth in the market. We had as big of a, at least market cap adjusted, big of a meltdown as COVID's crash, as the FTX bankruptcy for a random tariff tweet threat that moved the market 12%. So that sent vol spiking higher. But if I look at the trend since the beginning of the year, as people have been trading IBIT, so IBIT options launched in November of 2024, as that has come online, we've seen a structural decline in volatility for Bitcoin. And I think that trend continues. So this, to me, is a momentary pop. It's a great opportunity to essentially structure a long delta, short vol, and then, if you're doing the short vol side, maybe just buy those cheapies, like 1 delta options, just in case we get the Ryan scenario, just to make sure you don't get run over on the crazy right tail risk. But I think my base case scenario, looking at the data, is still a grind higher. So if I just kind of go through a couple charts here, obviously we can see the spot vol correlation. It was really driven by the October 10th sell-off. That's sent vol a lot higher, just as the orange line. And then we can see the blue line, which is spot prices crashing. And we can see here on the scatter plot, really the most recent 25 days are really dominated by that negative spot vol correlation. But what I think is really interesting is if we look here at the term structure of volatility, we went into backwardation briefly, but we're still kind of relatively flat for the most part. We can get into a steeper contango if vol comes in at any shape. If it comes in anymore, we should get a steeper contango based off sort of this chart. And if I look at the term structure right now, I think there's kind of a couple things to keep in mind. One is I do expect a parallel shift lower in vol. And then if we actually start to steepen a little bit more, we could look at IBIT term structure. Right now, if we look at those end of year options, that's really the point where we start to roll off that term structure. So to me, there's, broken wing butterflies on IBIT seem pretty interesting. You buy the 70 call, you finance that by selling a couple 80 calls, and maybe you buy, 5 110s just in case, all for end of the year. And you structure a trade like that as volatility continues to drop, if we essentially kind of recover here and rally into the year end, you're going to kind of roll down this term structure. Your 2s that you sold to finance the 70 call that you own, the idea is that, we rally to 150K, that 1 call's in the money, those 2 shorts are at the money-ish, and you kind of collect that whole spread. So that's kind of the way that I'm thinking about it. And then if for any reason, let's just say China and the US don't come to agreements on some sort of deal and we crash, that call structure essentially has no sort of downside. It has a little bit of residual downside risk, slightly delta long, but you're not going to get hosed if there's any sort of a crash risk, and then you still have bullets in the chamber to essentially buy that mega dip or do another type of trade structure if we do get that mega dip for whatever reason. So in my mind, that's kind of the most favorable structure that I see here based on how vol is lining up.
Greg, outside of what we got from the Fed here today, obviously we have the upcoming discussions between President Trump and President Xi Jinping. Do you see any other catalysts that drive us higher into year end, or kind of what do you think would be behind this if we do get that grind higher, that move that you're describing?
Yeah, I don't see any other clear catalysts besides sort of the overall environment. So obviously equities are going very, very bullish right now, driven by AI. Risk assets are on. Gold has pulled back recently, but gold has had such an astounding move this year. Same with silver, same with platinum. The hard assets narrative seems to still make sense to me. And then, I still believe that overall theme of liquidity easing, both domestically here in the US, but globally, we're seeing rate cuts across nations, across the G20 countries. We just had a rate cut in Canada. I think recently a rate cut in the UK. We have the BOJ decision today, which is expected to leave rates unchanged. So, and they're pretty much near zero already. So I think that's kind of the bigger picture catalyst. And if we look at market caps, Nvidia is $5 trillion today. All of crypto combined is about 4. So there's still a young asset class, so to speak, for crypto.
When you put it that way, it fills me with hope. Though hope is not a strategy, obviously. Yeah, I think you look ahead at the meetings here. They've kind of floated some things. You've seen the move in the rare earth related names here in the market, and that might be a sign that you're going to get some concessions there. And so some of the prices have come down as that pressure's been taken off. But yeah, I wonder, what would be the response in the market here if in fact you do get a rollback of these 100% tariffs that we have, you get concessions on rare earth exports, you get some deal around, IP and where the U.S. concerns are there as it pertains to kind of China stealing U.S. tech secrets or IP. And if you come out of that with, even if it's just a 6-month kind of truce, I think it would be pretty bullish, and ultimately think that you would see flows, from some of these EM funds that probably have just been sitting on the sidelines waiting for some clarity as to what happens next. You see some of that capital deployed, and I think, generally pretty positive for risk on sentiment. Maybe that's where you get the new Bitcoin all-time high sooner than later.
Yeah, absolutely. I mean, ultimately, no one can predict the future for sure, but I think laying your chips down in a way that has some sort of upside exposure that's hopefully premium neutral or very premium cheap, caps some of that 5 sigma right tail risk with some cheapies, and then if things go the other way and crash for whatever reason, the ability to make a move in that situation and not be tied up and jammed with the position is sort of the best way to take advantage of sort of any scenario that is thrown at you, so to speak.
Yeah, one of the ways that I was looking at playing it, and just pretty plain vanilla approach here, but I'm just looking at something like November 75 calls in IBIT. They're trading at 30 cents. And obviously you can sell something against that, or you can put on the trade that you were talking about where I think you're out in December. Correct me if I'm wrong. But even if you look at, okay, could we get to new all-time highs? I think the 75 strike is the equivalent of about 130,000 in Bitcoin. And so that's what, $4,000 or $5,000 above the prior all-time high, which I think was just a couple of weeks ago, right? So this stuff moves pretty quickly. To me, it just seems like whether this happens or not, and correct me if I'm wrong, but it just seems like it's cheap to have some of these trades on in the event that, we do see some of that. And you can see some of the scatterings of positions that we have here. But this is one that I'm talking about, just that 75 strike, and it's it's about a 50% implied vol, and I think you're talking about the term structure and seeing vol come down a little bit. But I would argue that in the event that you do get a short move, that vol versus where we've seen it go at times might be cheap.
Yep, that's a good point.
So, a lot of ways to play it. We're bullish into year end. I don't know, what else are you seeing out there? Whether it's Coinbase stock, Circle, where else are you active?
Yeah, Circle's really interesting. So we just saw a ton of paper go up on the 385 November 20, I think November 23rd. It's about 23 days till expiration. I forget the exact expiration, maybe November 21st. But those 385 calls, they have about 50,000 contracts of open interest. And I think that was really interesting. All that got traded essentially in one day, maybe 2 days, but we had someone come in, buy a ton of opening paper for those 385 calls. Today Circle's 130. This thing's got 3 weeks till expiration, give or take. Obviously, we have an earnings cycle through that. But I thought that was kind of an interesting bet. I think the total premium was slightly over $1 million that was paid. It actually shifted the whole vol curve. That once that trade came in, vol repriced higher across the surface. But to me, that's really interesting. So the way that I like to think about, what's a trade that I can play in Circle? Obviously, I'm essentially long-term bullish Circle. I think the current business model is at the model of Netflix mailing out DVDs, but the broader picture is Netflix streaming, and I think Circle could be the cash of the future in a lot of ways. But one of the things that I find interesting, that I feel comfortable holding through multiple earnings cycles, is sell the 55 puts for January 2027, use that premium to buy 300 to 445 call spreads. Right now it's trading at a slight debit. Last week, I think you could put that on for premium neutral. But that's a really interesting trade. So it's about, a little over a year out. Worst case scenario, you get assigned at $55 a share on Circle, but that's essentially a built-in 3-to-1 risk reward, because Circle can go to zero and you lose $55, or Circle can go to 450 and you make $145. So that's essentially, give or take, 3-to-1 built in. And if Circle does nothing, that's fine. Let the premium all roll off. But that's an interesting type of trade, especially when you see someone buying 3-week paper or 1 month paper when they put the trade on for the 385 calls. I don't know. That just seems like either someone doesn't know what they're doing, or someone knows exactly what they're doing.
Somebody knows something. They always know something.
Do you think that's not like a hedge or something? Like, do you think there's got to be like another side to that trade, right? Like, why would you just go and buy, if it's a sophisticated player, would you just go buy those deltas? Like, that just seems weird.
So if it was like part of a spread, I wouldn't expect vol to react across the surface the way that it did. If they're selling some other paper against it, but the way that this completely shifted a lot of the volatility premium. Maybe they're shorting the shares against it. But
that's what I was thinking. Like, maybe they were short the shares against it, and this is just kind of like their hedge,
Yeah, that seems kind of a funny hedge to me, though, because you're essentially like shorting shares with the 1 delta options that are really not going to give you any protection. I mean, over the next month, we can rally to 250, and then your hedge just expired worthless, and you just got hosed on the shares on a rally. So I don't know. It's interesting.
Yeah, that's a good point. I don't know, something to take a look at, because that seems unusual.
I'm going with somebody knows something. This is going to explode higher. We're not bullish enough, guys. Let's go. Greg, really quickly, I don't know if I had the right example up for the trade idea, but you were talking about selling the 55 put in January 27. So that's 443 days out, and then buying the 300. It was at 300, 345 or 300, 400 call spread.
300, 445.
445. Okay. So if anybody wants to follow along with that trade idea, 445 takes us all the way to the bottom of the screen. And there we go. So obviously pretty wide market. Market's closed right now, but the mid price that we have, at least on the screen, it'll change tomorrow morning, is $1.78. Yeah, nice return there in terms of, your max loss. Obviously, if Circle goes to zero, I don't think anybody is calling for that here, but your buying power is probably the better way to look at this. Buying power of about $2,000 here on a one lot, and your upside max potential profit, as you mentioned, all the way up, is a little bit over 14,000.
Yep, and to me, like that type of trade, that's like really a built-in 3-to-1 risk reward, where if you lose, you can get assigned to shares, and like if you want to own the shares, you get to own the shares.
At 55, yeah, not bad.
Yeah. So you can take assignment and you wait it out a couple of years. If it's an investment, which is kind of the way that I'm thinking about it. But this is a great way to get that upside exposure without missing the train. But at the same time, if you're not trying to buy mid-range where we are today, this is a great way to essentially sort of be on both sides of the tails.
See, that's what those are the setups that I love, especially with crypto related stocks, because I take the example of Coinbase back in 2022, 2023, right? Like it went public in 2021. I think it went public around $300-400 a share. And then post FTX, post Terra Luna, post that collapse, there was a real overreaction thinking that Coinbase wouldn't have a business, when if you were just in the space paying attention, you realize like how strong and how important this company is, especially for U.S. financial services. The stock went down to $55, $40. I mean, that's like a full, I mean, to your point, investing, like I'll own that at $40 and wait until the market comes back, right? And I kind of see similar setup in Circle. I mean, I haven't dug into the business model. I don't think, I don't necessarily know that we're getting a huge blow up like we did last time. But to your point, if you think it is DVD, Netflix selling DVDs, maybe, there could be a pullback or something. You could get it under $100. You can get under $80. That seems, and hold it, because it is an important company. It is a really solid. I mean, U.S. dollar coin is only going to get bigger, right? Stable coins are the future. So, picking that up at $55 a share and holding it is not a bad, idea.
Yeah, exactly. It's one of those business models, how do you really call the true valuation?
Right.
The best that I can come up with is, what's the market cap? Market cap's about 30 billion. What else is 30 billion market cap? Dogecoin. Okay, what do I think is more valuable, Dogecoin or Circle?
Right.
I can think about it like that. Well, what about ETH? What's that market cap? Oh, $400 billion. Okay, well, if Circle is worth, let's say, a third of ETH because a ton of the transactions are USDC, blah, 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 to put Circle at about $100 billion in some, in some universe. And, there's your $450 a share right there.
And I think you look at just growing stablecoin market cap across all chains, primarily ETH, but we're well over 300 billion now. I think we've talked about probably at $1 trillion sooner than later, end of this decade sort of thing. But you also look at within that, the market cap or the share of the pie on the USD side is increasing as well versus US dollar tether. So certainly more people adopting it and obviously to the benefit of Circle. But Greg, one more question for you from the chat. This comes to us from Steven. Any thoughts on strategy, MSTR, MicroStrategy, whatever it's called, MicroStrategy stock going into earnings?
Going into earnings, no earnings plays per se. I continue to think like strategy is going to underperform. I also think these treasury companies, we kind of got to watch out for death spiral cycles. So I think strategy is well positioned. I don't think they're a death spiral catalyst. Their entry price is $74,000 a share on Bitcoin, or $74,000 a coin. But we have treasury companies that launched recently that bought ETH. Then we have treasury companies that are buying Solana. Then we have treasury companies that are buying SUI. And the more we go down sort of the altcoin trail with treasury companies, the more susceptible we are to a nasty pullback that forces the treasury company to sell coins to pay debt, or they can't refinance debt and they go BK. And now, under conservatorship, all the coins are sold. And then you kind of get this domino effect. I'd rather just own the coins. It's like when I'm trading gold, like everyone tries to outperform gold by buying the miners, and they always underperform gold. So just buy the gold is kind of how I like to think about it. It's more of a direct play, because otherwise it's kind of like adding another component of variance, and it's like a complex component of variance that I find less interesting. And I've talked about this before, but if anything, I like selling out of the money calls, like far out of the money calls on MSTU, especially because you have that 2x tracking error. And that 2x tracking error really pays off in high volatility assets. If something drops 50%, you have to rally 100% to break even. So that's even more compounded the crazier vol is. It's less important something like TBT, where the treasury volatility is call it 12%. But if I look at Bitcoin volatility at 40%, then that's crazy. And then if I look at other DATs that have 2x ETFs where the underlying volatility is higher, then that's even more true. So that's the type of trade that I think is interesting with the MicroStrategy complex.
One last question for you, Greg. Put you in the hot seat. Rally into year end. Do you think we see outperformance here with Bitcoin market cap dominance, or do we potentially see ETH outperform Bitcoin if they all go up together?
I think we're still in the Bitcoin phase. I think Bitcoin is a cleaner, hard money, digital gold narrative. And I think that's still what's leading right now. Obviously, we've had a pullback in gold. We've had a little bit of a pullback in silver. But this is like the best performance in gold that we've seen in decades. Silver, same thing. And so this pullback is just normal in my mind. What's abnormal is the massive rally we've had from $2,000 an ounce not too long ago to 4,400. That's pretty massive, especially in an environment where rates are pretty high, because there's a opportunity cost to owning gold is that it's not a yielding asset, and it still outperforms so strongly. So that's really where I see sort of your thesis, Ryan, about the massive upside move, which I think is definitely in the cards, and I think it makes sense to own some cheapies, just to have that risk on.
Yeah, I guess one last question then for you. When you see what's going on in gold, I mean, is that cause for concern? Does it reflect that there's something broken, or is it just that, if we've been talking about for some time and others in this space, is it just like the rest of the world's waking up to the debasement trade?
I think it's not something that makes me rest at night.
Yeah.
It's gold hanging out and just going sideways. That's everything is fine environment. Gold trending like crazy higher is not something, I don't know what it means, but I think it's no surprise that we have a pullback as the administration's flying around the globe and kind of shaking hands and kind of getting things all in order again. I think that's a good sign. It makes me feel good that gold is selling off in that sense. So yeah, I'd rather see the US dollar reign supreme, so to speak, than gold. But yeah.
Awesome. Dan, over to you. Final last words.
I don't know, Greg. I want. How's that Japanese yen trade doing for you?
Yeah, I mean that trade continues to work. Yeah, I just think it's just worth having that on. Just real quick to answer your question, Dan. So the contango. So you can trade the dollar yen, which is just the FX pair. But if you look at the CME futures, CME has a yen future, and so it's quoted as the inverse is quoted in yen dollar. But what that tells us is that if you look at the future that expires in a year, it trades at about 3.5% higher than spot, and that's really capturing the yield differential between U.S. rates and yen rates. And so that makes it really interesting to own it because there's to short it, to own dollar yen or to short the yen, because there's positive carry to that short. And because FX is such a low volatility type of instrument, you can buy the put on the yen for cheaper than the contango roll down. So essentially you have free yen gamma because your theta is offset by the decay in the futures contango. So it's kind of an interesting trade. And that's one of those things that you can hedge by being long treasuries. So you kind of have a risk parity trade. And owning treasuries is a convex trade. Owning puts on FX is a convex trade. And if they're both positive carry and both convex, it's hard to beat that.
Right. Yeah, no, I thought it was interesting. I think, a little bit outside my realm. I think I'm a little bit more simple. I like that MicroStrategy move a lot more than this, but the way you explain it is simple enough for somebody that is a futures trader or, Forex trader and understands that. So I definitely will be checking in with you to see how that goes.
Fantastic.
Cool. Well, Greg, we'll leave it there. Thank you, as always, for coming on the show and sharing your insights. Before we let you go, though, where can everybody find you? Where can they sign up for the Amber Data newsletter that you write? It's a great piece every week. I suggest everybody subscribe. But if they want to do that, where can they find you?
Yeah, thank you. So you can find our newsletter with weekly commentary around macro and crypto volatility. You can go to amberdataderivatives.substack.com. And if you want to check out some of these charts, you can sign up for a free account at pro.amberdata.io.
Awesome. Well, dude, thank you again for joining us here today. We will talk to you soon. Dan and I will be back next week on Monday. Until then, I'm Ryan.
I'm Dan.
Peace.